Considerably higher oil price this morning, up by 3%, 90.82. What kind of impact will that have on European stocks? Let's have a look at the European futures picture with that in mind. And maybe this is something, it's already impacted the European bond markets, concern around inflation pushing yields up a little this morning. And what does that mean for European stocks? Well, the futures picture does look a little negative, down by around 0.3% on all of these markets. Last week, the focus was, yes, on higher energy prices, and that actually pushed energy stocks up quite considerably. So up by around 3.7% in last week's session. Let's have a look at some of the individual stocks we're watching. Everything to do with the UK will be in focus as Andy Burnham is going to become the Prime Minister. And is he going to give any further clues? Not a great deal of granular detail on any policy just yet. Ryanair certainly in focus on the back of their profit miss against expectations. The oil price taking its toll in the first quarter. So we'll certainly keep an eye on that one in the aviation sector, where we're seeing quite a bit of M&A activity, of course, now. AI and data centers also in focus. There's an Italian business called Prysmian, which is a cable maker. They've signed today €5.5 billion optical cables packed with Molex. That is often talked about as one of the ways that you can play AI trades here in Europe. So let's think about that. So European equity markets then opening up this morning. And as we've mentioned, the futures picture looking kind of negative. So we are expecting a little bit of downside movement here. But with the higher oil price, perhaps the London market won't be the place that we see it. Perhaps that will be an area of resilience. And so oil prices are up over $90 a barrel. And so we'll look for that to be the case. In terms of the European energy stocks then, we are seeing some movement higher this morning, up by around 0.8%, it would seem. Technology stocks also moving higher by around 0.4%. So not a great deal of other movement to the upside, but that's where we have some movement higher. And you can see that actually the FTSE 100 is one of the worst performers this morning. So it's not as if this is all a resilience story about the FTSE 100. So the CAC 40 is down by 0.2%, the DAX down by 0.3%, broad negativity, but not by much across these European equity markets. Looking at sectors then, and it does tell an interesting story about energy. That sector is pretty resilient, up by 1.2% this morning. Technology, as I say, up by 0.4%, but that's it. Those are the only areas of green I can see on my screen. To the downside, travel and leisure is by far the worst performing sector, and that's where we find Ryanair. That particular stock is down by 6.7%. Deutsche Lufthansa down, perhaps in sympathy, down by 2.5%, and IAG also negative. So that's having a broader impact on the travel and leisure space. The numbers out of Ryanair this morning you can see in that regard. Let's quickly check on what's going on with gilt markets. We've talked a little bit about the rise in bond yields that we've seen in Europe this morning on the back of the higher oil price, and that has, no surprise, spread to the gilt market. And actually we're seeing a bit of a more significant move, but really not that much. 4 basis points higher at the 10-year horizon. 2 years, yes, 4 basis points higher there. So we're seeing similar moves, perhaps of a slightly greater magnitude in gilt markets versus the rest of Europe. Let's put all of that together this Monday morning and talk to Paul Jackson, Global Market Strategist for EMEA over at Invesco. Paul, very nice to speak to you this morning. Thanks for coming in. We've got a couple of competing dynamics. It seems that we're not quite sure what to do with the AI story this morning. Energy stocks are higher on the oil price going higher this morning. But on technology, we're not quite sure what to do with that theme. Technology quite resilient, it would seem, in the European session. But we have an ongoing conversation about Chinese competitive threats. What's front and centre for you when it comes to the European equity market space right now?
Morning, Anna. I think the important thing is probably what's going on in the Middle East and what happens to the oil price. We'd had oil coming down really nicely, which I think took the pressure away from central banks to tighten. Now we've had the rebound, and I think depending how far the rebound goes, it's already impacting bond markets a bit, but I think that could have a bigger effect on stock markets via anticipation of what central banks may do over the coming weeks and months. So that's where I'm really focusing, because it potentially could still change the growth outlook.
Yes, and so some cyclicals had started being talked about as being quite attractive, given we'd seen oil prices come down quite a bit, and then there was an urge to rotate into other themes other than AI, and so cyclicals were being seen as quite positive. Does this resurgence of the oil price on the back of escalation in the Middle East, does that lead us to question the rationale behind going into cyclicals at this point?
Yes, for sure. I think if we go back to March, well, the first couple of months of the year, it was all working out very nicely. We were looking ahead to the global economy, accelerating, cyclicals were doing well. The AI theme had gone to the background. Then we had the war starting with Iran, and all of a sudden we put into question the global economy, which means that you're looking for those growth themes. And AI is that classic growth theme, non-cyclical. That again has faded. Prices probably went too high. It's faded. You've had some correction there, but all of a sudden, I think if you're questioning economic growth, then these growth themes will come back into focus. So that may help out the AI and technology sectors in general.
Yes, yeah, we have been questioning where we are on the tech trade, haven't we? And we've seen big profits accumulate to Nvidia, and then the hyperscalers, and then memory companies. And now, are we sure? Do we have any visibility about where those profits are going to accumulate next? Where in the tech stack? Where in the complicated supply chains of these businesses?
Yeah, but it strikes me that we're seeing sort of successive tsunamis. As you say, we had the hyperscalers, then we worried about the amount of investment they were doing. So, okay, let's buy the people who are selling the goods to the hyperscalers. So that was your semiconductors and computer manufacturers, particularly in Asia. Perhaps the next wave is going to be the people who sell the components to those suppliers, to the hyperscalers. So you're just moving further down or up the supply chain, whichever way you want to look at it. And so perhaps those component manufacturers in places like China could be the next story.
And do you think higher interest rates are, well, the expectation around higher interest rates, one assumes, is given a boost by this higher oil price? Is that a European story? Does that extend to the US? Or are higher rates in the US about something else, about AI and the resilience of the US economy?
No, I think the higher potential inflation story is a global story, so it will impact the US just in the way that it will affect Europe and Asia. So far, I've got to say, the reaction of bond markets and stock markets to the rise in the oil price, I think, has been pretty calm, and I worry that if the oil price stays where it is or goes higher, then we may see a delayed reaction coming through. But no, I think the inflation story is global. Whether we get to energy shortages, that's then a different story. The US is then different to Asia and Europe.
Yeah, and what are you expecting, Paul, when it comes to the US around interest rate hikes? We have heard from Kevin Walsh. He's pushed back on the idea that he just wants to focus on the trimmed PCE, but he has cited it in the past as being a useful gauge, although he said he doesn't think any of the inflation gauges are very useful right now, hasn't he? So maybe we're waiting for all of these task forces to report. But you point out that the trim mean PCE has been trending up a little bit, and so where does that leave us in the sort of narrative around Fed hikes?
Well, I think the bigger problem for the Fed has been the core PCE measure, which has been trending up since October, and actually the trimmed mean has not followed that upwards. But my observation is that historically, when they reconverge, which they tend to do, that reconvergence tends to be the trimmed mean moving towards the core PCE. So whichever measure you use, I think the Fed probably does have a bit of an inflation problem. Inflation, core inflation, whether you look at CPI or PCE, has not come down to target and seems to be moving in the wrong direction. that could argue for rate hikes. But to tell you the truth, I think the Fed still, in its heart of hearts, has an easing bias. So I think it's going to take them something to switch to tightening. So personally, I think they're going to be sitting on their hands for perhaps the rest of this year.
And Kevin Walsh has pushed back at the idea that there's political influence on his decision-making, saying he's very independent. But being stateside in our conversation makes me think about the midterms. And we haven't perhaps talked as much as we might have done in any other year about the impact the midterms are going to have, because we've been too busy talking about the war in the Middle East and the AI boom. What are you expecting from the midterms in terms of the effect on markets and where we go?
Well, that's a tough one. Historically, if you look at the performance of US assets during the year of the midterm election, it tends to be pretty poor. Assets don't do terribly well. But then in the year following those midterms, you get better performance, better than in an average year, and you get better performance, particularly in the riskier assets. So S&P 500, S&P 600. The interesting thing is that this year, stocks have already done very well, and the small caps, the S&P 600, for example, has had a really good year. So I'm wondering to what extent there is already a pricing in of these increased guardrails around the White House that will come after the midterms. Markets, for once, perhaps welcoming the idea of some sort of gridlock. No decisions are better than decisions and actions, the sorts of actions that we've seen in the last 2 years.
Yeah, and where does that leave all of the broadening narrative then, Paul? Does that mean the broadening narrative is intact because people are looking outside the United States for various reasons and looking at European stocks, or the higher oil price and nervousness around cyclicals means that, no, this isn't Europe's time?
I think the broadening is intact and has been intact this year. When you're looking at AI-related stocks, the action really hasn't been in the US. It's been out of the US. It's been in Asia. Within the US market, small caps have been outperforming mega caps. So you've been getting broadening to that extent. And if you look at performance this year, banks have been doing reasonably well, especially in the last month or so. Telecom stocks continue to do very well, which is a sector that just kind of sneaks through without being noticed. So I think there is a reasonable amount of broadening already happening. And as I was suggesting, even within the AI theme, you are getting rotation. Mega cap hyperscalers to the Asian suppliers, and like I say, possibly going to the component manufacturers.
We saw Citi upgrading their call on Chinese stocks to overweight, and I'm thinking about the conversation I had earlier on in this program about Chinese competition on the AI front. You've talked about the boom in Asia tech. Of course, that's been in support of the US tech boom, even if they've been fighting over the profits maybe in different parts of the supply chain, but they're all in the same supply chain, whereas the China story is a little bit different. How are you expecting, how does that complicate the AI narrative, do you think?
First of all, I like the Chinese market. I think it's still one of the few markets out there, the big markets, that is good value, that is cheap. The cyclically adjusted PE is still well below historical norms and a long way below what you see in the US and even Europe. Secondly, there's lots of interesting technology stuff going on in China. Just the way that they use technology on a day-to-day basis is really impressive when you visit. But they've got all sorts, robotics. China really leads the way in robotics. It obviously led the way. It's dominating the global solar panel industry. It is now dominating the global EV industry. I think bit by bit, China is moving up that value-added chain.
Yes.
And so I think that tech in China is still going to be an interesting story. So yes, I have been overweight Chinese stocks for some years and remain overweight. Okay,
Paul, thank you very much for joining us. Paul Jackson, Invesco EMEA Global Market Strategist, and thinking about ways to play China stocks, takes us to Hong Kong, where a nice red headline across the Bloomberg terminal tells me that the Hong Kong Exchange is considering longer stock trading hours, including drum roll, scrapping the lunch break. This is very much an effort to take it into line with other global exchanges. The exchange is also considering an after-hours session to catch the early US activity, potentially between 8 p.m. to midnight over in Hong Kong, which will be limited to a handful of larger stocks. That's an interesting one to watch. The exchange said it is reviewing opportunities to bolster market accessibility, including these trading hours. They are also looking for feedback. So if you have any feedback on the absence of a lunch break, be sure to make it known. Let's get back to the here and now on the markets as we are seeing them open up 12 minutes into session here in Europe. And let's have a look at the core six. We've got a bit of a mixed bag actually coming through here. The AI theme, as represented by Schneider Electric, is flat. ASML is up by 0.6%. In the more defensive sectors, Novo Nordisk up 0.2%. Nestle is down by 0.9%. Luxury, modest moves. Rheinmetall in the defense space, pretty flat this morning. A few other aviation stocks to focus in on, or some aviation stocks, I should say, to focus in on. Ryanair, Lufthansa, IAG, all being shaken really by what we've heard from Ryanair. The company reporting numbers today that came in for the first quarter below expectations, and oil prices certainly very much a theme there. I spoke to the Ryanair CFO, Neil Sorahan, a little bit earlier this morning. We discussed how the company is handling higher jet fuel costs and more.
There hasn't been any shortage of fuel. I think there was some concerns about that earlier on in the year. No difficulty at all on that front. As I said, very well hedged at $67 a barrel, 80% of our fuel hedged, but importantly, 90% of our dollar requirements hedged out to the end of this year at 115. The 20% unhedged, we don't know where it'll go. It had dipped after the MOU was signed. We were already hedging into FY28 since the conflict escalated over the past couple of weeks. The price has spiked again. I think it's over 90 on Brent, which means it's well over $100 a barrel on jet fuel this morning. But we're better hedged than everybody else. I think a lot of capacity is going to come out of the market this winter, and I think inevitably you may see some airlines go to the wall.
Any sense that people are booking a little further ahead? You know, they changed their behaviour when the war started, booked very last minute. Any sense that that's changing at all?
I think they're hoping to get a bargain at the last minute, but the reality is if you book close in, you're going to pay up. So my advice to everybody this morning is to book now as quickly as possible, or you're going to end up paying significantly higher fares closer in.
Yeah, you said this morning you're not giving any guidance because you have no visibility. What is it in particular you can't see?
It would be unusual for us to give guidance this early in the year in any event, but we've even a little bit less visibility and a lot of uncertainty around the 20% unhedged fuel. I mean, we would typically give profit after tax guidance in our Q3s. It's our Q1 numbers.
Yeah.
So it's far too early to give that.
A few other things I just wanted to ask you about then, Neil. One of them is, obviously, we've seen a bidding war taking place for one of your rivals, for EasyJet. What do you think is going to be the end result here? Is EasyJet going to remain what it is right now, do you think? What are you planning for in terms of the competitive environment?
I think, we've been talking about consolidation in this industry for many years. We think ultimately we'll end up with 4 large players, with Ryanair being the key point-to-point and 3 flag carriers remaining as the key players. It's inevitable. I think that happens within the sector. Whether it's Apollo or Castlelake or somebody else buys EasyJet, capacity, to my mind, will come out. I think some of the assets will be used for other purposes.
Benefit, you think?
I think ultimately, consumers are going to see pricing going up. We're going to see capacity coming out of the market, and I don't think this will be the last of the consolidation. I think this will actually probably push further consolidation within the sector. There's already a number of weaker carriers who are struggling with fuel at the levels they're at. They're not very well hedged. They don't have the dollar cover in place. And I think you'll see some casualties on that front as well.
Lizzie Burden's in Downing Street. Any message for a new Prime Minister, Neil, in the UK?
I think he has a phenomenal opportunity to grow tourism and to grow jobs in the UK by getting rid of APD in the first week in office.
That was the Ryanair CFO, Neil Sorahan, ending there with a message on UK politics. Coming up then, markets keep a close watch on Andy Burnham as he prepares to take over as the UK's next Prime Minister. We will discuss the outlook next. This is Bloomberg.
Technology is embedded in every aspect of our lives, and that revolution is playing out in real time. From finance to defense tech, AI to entertainment, from the road to the stars. Bloomberg is bringing you the stories of companies and people that are pushing tech to new frontiers and the politics reshaping global tech markets. I'm Ed Ludlow, live in San Francisco, and this is Bloomberg Tech. Every weekday, only on Bloomberg Television.
Get your fixed income fix. Watch Bloomberg Real Yield every Friday at 12 p.m. Eastern, right here on Bloomberg. Context changes everything.
What happened was you were out.
Welcome to Bloomberg This Weekend. I'm David Gura.
I'm Lisa Mateo.
And I'm Christina Raffini. We're tracking breaking news today from Wall Street to Washington.
Let's start overseas.
Bloomberg This Weekend, bringing a little Bloomberg into your weekend routine. Watch, listen, stream.
From our studios in New York and San Francisco, our expert hosts have the data and analysis about the companies you know and the startups to watch, plus the interviews you don't want to miss. Watch Caroline Hyde and Ed Ludlow on Bloomberg Technology, the only daily business show dedicated to tech, right in the middle of the trading action. 11 a.m. on the East Coast, 8 a.m. in the West. Only on Bloomberg Television. Context changes everything.
Bringing you up-to-the-minute geopolitical news whenever and wherever it happens. I'm Tyler Kendall in Geneva, Switzerland, and this is Bloomberg.
Welcome back this Monday morning. This is the opening trade, and 20 minutes into our European session, we're seemingly on the back foot, and the FTSE 100 actually faring worse than some of the other markets, so not getting too much resilience from the higher energy prices, which is lifting the energy sector. So the energy sector is up by 1.3%. Technology also firmer, up by 0.4%. But elsewhere, we have travel and leisure, basic resources, consumer discretionary, moving a little bit lower this morning. Now, let's talk about UK politics. Andy Burnham is set to become the UK's next Prime Minister today, the 7th in just over a decade. As the country awaits his arrival at 10 Downing Street, traders and investors are weighing how a Burnham premiership may impact markets. Let's think about that with Bloomberg Markets Today editor Moena Coniam. Good morning, Moena. So, I mean, we keep hearing him speak, and I'm not sure we have a huge amount of detail, more detail to go on as to what policy will look like, what his top team will look like. What any new movement in the markets today? I saw that bond yields, gilt yields, looked a little higher than the rest of Europe in terms of the scale of the move this morning, but not by a huge degree.
No, and that is actually pretty consistent with what we've seen when oil prices have risen due to geopolitical circumstances. The gilt market is particularly sensitive because the UK is particularly sensitive to energy shocks. So I don't think that that's necessarily telling us a huge amount about how markets are viewing what we're expecting today. I think largely because we don't know a huge amount. I mean, there's probably is a little bit of uncertainty baked in there, but it's not necessarily pronounced where we would expect it to be. Overall, I think who is going to be Chancellor will be crucial, and that is something we don't know. I think polls are now leading towards Shabana Mahmood, which has been seen as a slightly more market-friendly choice than Ed Miliband, who, when we did our markets pulse last week, came up as the least market-friendly. So there was a little bit of relief when that started to seem it might be the case last week, but that's really not based on a huge amount of confirmed information. Burnham said on Friday he hadn't chosen yet, so I think that's something we will be very, very closely watching to see what happens.
And no doubt we'll be watching when he comes to Downing Street later on today. He will be speaking to the nation, no doubt, and talking talking about his hopes for the future. But there again, it would be unusual for there to be a lot of policy detail. So the first clues we might get will be these key appointments. But then I don't know whether Shabana Mahmood, should I expect any movement in markets on the back of that? Because yes, she's pretty well known as Home Secretary, but very unknown in terms of Chancellor credentials and opinions and views and voting history when it comes to economic matters.
Absolutely, it's not somebody we associate with a particular sort of economic agenda. There hasn't been a lot of coverage of that, and so I think what is said and what policies are announced will be crucial. I think it's important to note that Andy Burnham has said he'll stick to the manifesto pledges, which means a certain number of taxes can't be raised. And so far, he said he's going to stick to the fiscal rules as well. So that should give us some reassurance. He has, however, where he has given some direction of policy, it's been obviously very centred around devolution, home building, nationalisation of Thames Water, and doing more North Sea oil drilling. Aside from the latter, I think there's not very much clarity about where the money for extra sort of cost of living supports, which has been indicated he might want to do, is going to come from. So there will need to be some policy announcements on the economic front to explain that, and I think that's what we'll be really closely watching.
Yes, I wonder if we're watching that personal allowance and taxes relating to that. Something with his interview with The Times makes me think that could be an area of focus. Morwenna, thank you very much. Thanks for joining us. Bloomberg's Morwenna Coniem. One of Andy Burnham's immediate challenges will be responding to increased tensions in the Middle East as far as it affects the UK. Brent crude jumped after the US and Iran escalated hostilities, including the targeting of vessels attempting to transit the Strait of Hormuz and an attack on a key oil facility in Kuwait over the weekend. Let's get more now with Stephen Stachynski, who leads our energy coverage in Asia. Stephen, how are the latest escalations then affecting flows through the Strait, either with or without transponders?
I mean, I think essentially you could say that flows have really dropped pretty significantly and have been relatively, pretty low, if not the lowest in over a month. Because of this conflict and the risks around the Strait. So in terms of ships with their transponders on, that's essentially halted. We're seeing very little traffic, a trickle if that, going through the Strait of Hormuz. Now, dark traffic is harder to kind of watch. There are ships that are going through without transponding their location. And we are aware that that's happening, but still through our reporting, either anecdotally through ship owners or exporters themselves, everyone is taking a much more cautious approach to sending any oil products, LNG, what have you, through the Strait of Hormuz because Iran is a live threat. Iran has sent back several ships, they said, that were going through the Omani route through Hormuz just in the last 24 hours, and there are reports that one ship was also damaged through an attack. So this is something that the ship owners and the exporters are taking very seriously, and it's something that they're going to have to be cautious about going forward because it's just not a matter of potentially hurting the ship itself, but a lot of times the crew will not agree to go through, and that is an aspect that has to be considered as well.
Stephen, thank you very much. Bloomberg's Stephen Stachynski with a quick rundown of the latest developments in the Middle East and the extent to which that's having an impact on oil prices. So oil prices are up by 2.2%, $90 a barrel on Brent. Andy Burnham, just like many other European politicians, perhaps won't like that kind of headline. We're in the summer where it's hard to think about a time when you need to heat your home, but that will become quickly an issue. We'll be watching, of course, stockpiles around Europe as well when it comes to gas. So coming up, we'll get back to the UK conversation. Could the UK's incoming Prime Minister have an economic policy surprise up his sleeve? We will discuss the outlook for policy with Blonde Money's Helen Thomas. That is next, coming up shortly here on Bloomberg.
my old mentor, Roger Staubach, who told me when I transitioned, football will never leave you, but you need to leave it.
Wow.
Everyone has a dream, and a lot of dreams are, you know, my dream is to play football and play professional football, and you get the dream comes true, but it is going to end. And the day it ends, the day before it ends, you're one of the best in the world. Great. The next day you wake up, that's gone. What are you great at? And the truth is nothing, right? I'm not great at anything else.
I talk about it all the time, Steve, is this whole idea of it's not from penthouse to penthouse. And what I mean by that is you played for 15, 20 years and you're in the penthouse. That doesn't mean that you come to the business world and you're going to be in the penthouse. Now, you don't start in the third floor or the lobby. You actually have to start in the basement.
Welcome to the world of decentralized finance.
You can see the massive gains for the OG crypto coin.
The breakout we have all perhaps long awaited finally realized. We'll see if it sticks.
Bloomberg's covering all things crypto, the people.
There's no question this industry is composed of some bad actors and some good actors.
The transactions.
Volumes have surpassed $24 billion per day.
And the technology.
Stop talking about the technology. Start demonstrating the utility.
Bloomberg Crypto, Tuesdays.
You know how the market day started.
Find out how it finishes.
Public markets to private markets.
From the micro to the macro.
Covering retail, entertainment, the business of sports.
The supply chains, trade policy, how it all is impacting the U.S. equity market as we drive to the closing bell at 4 p.m.
A holistic approach to covering financial markets.
If it matters to your life, we're covering it. I'm Katie Greifeld.
And I'm Romaine Bostic, and this is The Close.
Every weekday from 3 to 5 Eastern.
Only on Bloomberg. Context changes everything.
The countdown is on. Everything you need to get the edge at the end of the market day. Get ahead of tomorrow's trading with The Close. Weekdays on Bloomberg. Context changes everything.
Welcome back. This is the opening trade. We're 30 minutes into Monday's session, and the European equity market picture influenced by a couple of different themes. One is competition from Chinese AI firms that has been taking the edge off perhaps the AI narrative of late. But the handover actually from Asia was a little more subdued than it has been, and US futures have really picked up in the last 10 minutes or so. So NASDAQ futures are up by 0.5%, E-minis up by 0.2%. So although we started off the European session in negative territory, we do seem to have recouped some of those losses. We're also dealing with a higher oil price, but even there we're getting a little bit of reprieve because the oil price was above $90 a barrel, now $89.80, so not a huge change, but it's not quite as high as it was, and maybe that is helping at the margin. So we have a pretty mixed picture, pretty flat picture for European stocks, and the FTSE 100 just underperforms a little, down by 0.5% this morning. Thinking about the UK, Britain's middle class is showing signs of buckling under financial pressure, with a share of average earners missing direct debit payments doubling since 2021. As part of a 10-year plan, incoming Prime Minister Andy Burnham is considering a wave of interventions to ease the cost of living. Joining us now to think about where that takes us, Helen Thomas, CEO of Blonde Money. Helen, nice to speak to you. And that 10-year line is one thing that comes through in this interview that he's done with the Times newspaper here in London, which is interesting in itself, isn't it? Thinking of somebody who doesn't have a mandate from the British people, but he's talking in terms of a 10-year mission. Keir Starmer talked about a 10-year plan for the UK. What do we think should be in focus for him if he has that 10-year plan?
Well, very bold, as you say, for someone who hasn't even won an election, when the last person to talk of a 10-year plan 2 years in is no longer in post. Look, he's facing all the same challenges as Keir Starmer. We know he's going to sell himself as a better salesperson. But what can he actually do at the margin? I was struck by some of the comments that he's made. I was trying to reflect, the man on the street. He's talking about going for a pint at the end of the week, taking the kids on holiday. Great. I'm sure that will appeal to a lot of voters. Fascinating your point there of the statistics of people on their direct debit payments, because there is real hardship out there. But it's the continued issue of, if you're going to ease up, you're going to have to then take back somewhere else. And I'm also struck that Burnham's main comment is we may have to ask for a little bit more. Loves that phrase. Exactly what does that mean a little bit more?
Yeah, what does a little bit more and whose shoulders does that fall?
Exactly.
So we mentioned that direct debit statistic as that's a sort of around the middle earners. Thinking about the lower earners, I was struck by this comment in his interview with The Times where he says, one thing I heard most on the doorsteps in Makerfield was frustration about the personal allowance frozen at £12,570. And this, for the international audience, is an amount of money that you can earn without paying tax, income tax. And although there are commitments in the manifesto not to increase taxes of various kinds, I mean, many governments have tried to take action at this lower end on occasion. I mean, is there fiscal headroom for him to think about unfreezing that and allowing it to drift upwards to stop the fiscal drag?
Well, it's very expensive. And in fact, it's something that Conservative governments looked at in the past. George Osborne wanted to take more people out of tax. The coalition government did.
And they did do that, didn't they? But then we had
that.
COVID and things changed.
Things changed. One of the interesting things George Osborne did was say that above a certain level, you lost a personal allowance. And that's still in place, actually. It creates a very weird incentive in our tax structure. Some people watching may well know above £100,000, you lose all of that personal allowance, meaning you are taxed immediately from the moment that you earn. So it's very expensive because it applies to almost all taxpayers, potentially to shift that. But if they perhaps do that kind of tinkering towards the top, along this thesis of who are they going to ask for a bit more? Well, those with the broadest shoulders. Could it actually kick in at £90,000? There are ways to make these sums add up. But do you know what struck me when he said that? We talked about his sales line at Man of the People vibe. Do you really think many people on the street know that £12,570? It strikes me. I'm not entirely sure that they said that, but they probably did say something like, goodness me, I'm only on this much money. Blimey, I'm paying so much in tax.
Yes, maybe that's his translation, yes, of what he's been told.
But probably signals what he's been talking to the Treasury about.
Right, which would be interesting. What do you make of the devolution plans, and what difference can they make?
Well, I was actually, very interesting at the moment. The House of Lords Economic Affairs Committee is doing an inquiry into fiscal devolution, and I was at one of the hearings for that recently. And quite universal scepticism from lawmakers that it sounds good, but where does the buck stop? So it's all very well to say that a local region might understand better how to raise the funds and spend them. But what if it goes wrong? What if it overspends? That did happen during COVID. There were regions that effectively went bust, councils that went bust, and it ends up on the UK balance sheet.
Yes.
So I think it's an interesting idea in terms of empowerment at a local level, but fiscally, I think it contains risks.
And does it suggest that we're going to see revenue-raising powers across the country expanded? I mean, we have that to some degree in devolutionary powers in Scotland and
Rachel Reeves actually has started some of this earlier on in the year, and it's to do with, for example, sort of earmarking money that's already been raised for a certain area. I think they will do a little bit more, but I think it will be quite hard in practice to pull that lever too quickly to have a massive impact.
Yeah, one of the criticisms that some levelled at Starmer was in the face of all of these U-turns, they said, he just doesn't want to disappoint people. He's not very good at disappointing people. Do you think we will get a sense of who Andy Burnham is prepared to disappoint at any time soon?
Well, he will have to, because to govern is to choose. If you don't, you're out of government, as Keir Starmer found out to his cost. And I think the key issue for Andy Burnham now, he's done a good job of convincing his Labour MPs to get to this point. Now he has to convince Labour voters and the rest of the country that he can do something for them. But let's just do the context here. Labour went from 34% in the polls at the general election, collapsed, lost almost half of that support. Now they're climbing back a bit. They're around about 23 percentage points in the polls. Can his agenda, which he calls business-friendly socialism, Manchesterism, really appeal beyond this segment of the electorate that are, let's face it, socialist-leaning in their inclinations? And that is his real challenge in a very fragmented electorate and a multi-party system.
Yes, and he talks about the policies being distinctly Labour. And I wonder, I talked about this with Simon French at Panmure Liberum earlier about the international context here, because actually we are in a world where internationally we see a lot of government intervention in markets and in industry and in all kinds of areas that maybe 10 years ago would have raised alarm bells, which are now quite normal. And I wonder what that international context does to this government's ability to intervene in markets. You know, they've got bold ambitions, for example, reindustrialization.
Yeah, and talk that the actual business ministry could be expanded to be a ministry of industry. Although, you know, so far Andy Burnham's speech that we heard on Friday, it was rather a throwback, talking about, you know, the end of the last 40 years, and he thanked a lot of politicians from the past. But as you said, you know, we're in a new world now. Look, the Overton window of what is possible shifted dramatically under COVID. In terms of state intervention and in terms of the public saying, well, if you could pay us to stay at home, if you could then sort out a vaccine, why can't you solve inflation? And I think that every government is struggling with that in the West, but the bill comes due in the end. And it appears to be quite difficult so far for politicians, perhaps from an older era, to explain these new challenges that are being faced.
OK, Helen, thank you very much. Thanks for joining us. Helen Thomas, the CEO of Blonde Money. Now, the future of Andy Burnham's policy remains in focus, including what he could do to support industry. Let's get back to Farnborough Air Show, where the world's leading aviation companies are gathering today, of course. And let's get to Guy, who's on the ground there. Guy, good morning once again. So what are you hearing about the future of the aviation industry in the UK? Is this going to be a story that Andy Burnham is going to want to tell?
Well, he's going to want to talk about the idea of how he is going to boost defence spending and do it at the same time as managing his other priorities as well. It's going to be a similar story across much of Europe, ex-Germany, I suspect. Europe wants to rearm, Anna. It needs to rearm. How it pays for it remains an open question, and what it buys remains an open question as well, because the key issue is the UK may be a little bit of a different case here, but most of Europe wants to rearm, but it wants to do it with as much domestic kit as it possibly can. And that brings into tension the North Atlantic story. How does Europe rearm? Does it have capability gaps that it can fill itself? Or does it need to turn to the Americans and talk to companies like Boeing, where I'm sat now, or Lockheed Martin just down the road, or all of these other big companies that have the scale to deliver maybe what Europe needs? So Andy Burnham's going to face some really interesting challenges. He clearly needs to spend more on defence, but he's got a lot of spending priorities right now. How he delivers upon that remains an open question, but there is clearly a need to spend more money. I think the question and the tension here at this show is going to be on what that money gets spent and with whom. Can Europe deliver this capability, or are they going to need to turn to the Americans? And that, I think, is the question that I think maybe gets resolved here a little bit. And some of the partnerships that you're going to hear about over the next few days will, I think, be hugely significant in solving that tension.
And what else are we looking for then at the air show, Guy? You say you're talking to Boeing. That makes me think of commercial aircraft as well. Usually there are lots of commercial aircrafts being ordered, aren't there? But you want to make sure that they're getting the right attention when those orders are done.
So it's interesting, actually. For the first time at this show, and REAP, which is the kind of the big defence show that normally happens side by side, isn't happening this year. There's a lot of military kit here. The focus has definitely shifted. But there's some really interesting stories around what's happening on the civil side. But you take a step back, you listen to what Ryanair has been saying this morning, what Neil Sorahan, the CFO, was saying to us a little bit earlier on. There is an oil price, and you've been covering this morning, at $90 a barrel. You've got a consumer that's still in okay shape, a consumer that still wants to fly, particularly over in the United States. But the headwinds are gathering, and $90 a barrel is challenging for the airlines. It's a huge input cost for those businesses. How does that get reflected in future orders? We've seen very strong orders over the last few years. Does that get sustained, I think, is going to be one of the key questions. And what type of aircraft are they going to be ordering? Fuel-efficient aircraft are certainly going to be in demand, but is that going to be balanced against a more cautious consumer going forward with oil prices at where we are now?
Guy, thanks very much. Guy Johnson, of course, on the ground at Farnborough Air Show. And Guy will be speaking to the Boeing CEO, Kelly Ortberg, at 9:15 a.m. So stay with us here on Bloomberg TV for that really important conversation. Coming up then, we will be speaking to the CEO of a European startup focused on discovering new materials for use in semiconductors. What difference can AI make when it comes to discovering those new materials to remove some friction from the supply chain with regards to AI build-out? That interview coming up next. It's a European story around AI, so stay with us. This is Bloomberg.
you a different president from your father?
I have to be. It's a different time. There's fundamental lessons that I still hold close to my heart. But in terms of the practical things that you do, very few of those things apply any longer.
How is Mom?
She's
in her 90s.
Yeah, but I always say she's 95 years old. She didn't get the memo. She doesn't believe she's 95 years old. And she's still very active. I mean, I still get calls from her, and she says, you need to do this, you need to do that. And she doesn't let her age hold her back.
Does she try to advise you, even as president of the Philippines?
Constantly. And, you know, I always learn something new with my mom. In my family, she's the real politician. And she's a natural. My father was an intellect. He was a statesman. And we always said that he lived in his head. You know, he was very, very, very deep thinker. That's where I learned. My mother, on the other hand, she has this uncanny ability to connect with any kind of person. Any person she runs into in the street, kings, presidents, anyone, her childhood friend, she doesn't know how to fight. She's very bad at conflict.
From the world of politics to the world of business, Joe Matthew and Kaylee Lines deliver news, insight, and analysis live 2 times a day, every trading day. Balance of Power at 1 and 5 Eastern, only on Bloomberg.
Bringing you up-to-the-minute space news whenever and wherever it happens. I'm Ed Ludlow at NASA's Kennedy Space Center in Florida, and this is Bloomberg.
Welcome back. This is the opening trade. We are 45 minutes into a European session that has European equity markets overall pretty flat, but that is an improvement on where we were at the start of the trading day. So we did see a little bit of downside movement, perhaps to do with concern around technology in the Asia session, Chinese competition for AI models. Maybe that is part of the nervousness. Certainly there was nervousness around a higher oil price, and some of that is being unwound. And as a result, we're seeing a better optics on these European markets. US futures are pointing higher now. Interesting lines coming out of Iran just in the last few minutes, and these have allowed the oil price to pare some of its earlier gains. So the oil price was above $90 a barrel. Now we're at 88.70, so just pairing a little bit of that gain this morning. Iran saying that it received proposals from mediators in the war with the United States, which is interesting when we're looking for clues that these two sides are either directly or, in this case, indirectly still in touch with each other. So that at least takes the edge off perhaps some of the tit-for-tat escalation we've seen over the weekend. And Iran saying earlier that the MOU is only worthwhile if all parties are committed to it, which strikes me as interesting, as they'd previously said that they were the deal was over, that they backed away from the MOU. So we're watching all of these lines and the nuance that's coming out of Iran this morning. So let's put that to one side and think about where we are on the AI story. As global demand for semiconductors continues to grow, British startup Cusp AI is looking to use AI to improve the production process. The company has just raised $450 million from investors, including Jeff Bezos. The startup is also launching its AI Materials Foundry, as it's called. That's a coalition that includes tech giants such as NVIDIA and Meta, and it's all about discovering materials for chips more quickly, more cheaply. Let's bring in Chad Edwards, co-founder and CEO of Cusp AI, with us on set this morning. Chad, nice to speak to you. Thank you for being with us. So let's start with the basics. You're raising some money. What are you planning to do with it?
Yeah, so the raise today allows us now to scale our team globally across the US and also APAC. So we've announced today the presence of both an office in both regions, so in the US and Singapore. So it allows us to expand the team and the reach of our company, but it also enables us to train larger domain-specific models for material science, and therefore will allow us to have a much greater global impact on some of the topics that we started to cover. So semiconductors, of course, is a very big focus for our company, but in addition, we work on things in the energy transition as well as in climate technologies.
Yes, it seems to be semiconductors that's getting a lot of the headlines at the moment, given everybody's scrambling for sort of AI capabilities. So faster discovery of materials for chips. Tell us why that is so important in an industry where there are lots of pinch points in the supply chain.
Yeah, so not many people think about this or spend time thinking about it. The entire semiconductor industry is a material science problem. From the very beginning of the value chain with companies like ASML, who produced the lithography machines, from the silicon wafers, these are the things that actually constitute the basis of the chips, all the way through the process is a material science challenge. And so at each step, we are bottlenecked in that semiconductor value chain by material science. And the way we've discovered materials over the course of the last 100 years has been very much based on trial and error and serendipity. And so if we can come up with a new way of discovering materials, which is what we've done here at CUSP, we can accelerate every step of the value chain in semiconductors. That allows us then to have more efficient, more productive, and more powerful chips.
And the geopolitics of the supply chain, perhaps not your primary area of focus, but thinking about it, does that mean that for Western businesses, they have to rely less on the materials coming out of China, rare earths, for example? Is that part of its appeal to Western chip companies?
Yes, it's not been a specific focus for us as a company, but one thing we've seen from the market and the way our customers are coming in is to say, hey, can you come up with an alternative to replace ruthenium or iridium, some very precious metals where the supply chains reside outside of the Western world? So we start to see that in an inbound fashion, but it's not been a major focus.
And what about the competitive landscape here? Because you're doing this, other businesses have talked about doing it, and I know Google DeepMind with Deep Pockets, they've talked about getting involved in this kind of material science discovery. Is that a competitive threat, or are you just glad to see this sector open up with an AI focus?
Yeah, so when we launched the company 2 years ago, we were one of the very first out to market, and there were literally less than a handful of people or companies in the space. Fast forward 2 years, we almost see a new entrant almost every week in the space. So the space has just completely exploded, and that's from startups as well as the big frontier labs like the likes of DeepMind. And from an honest perspective, I think that's validation for the space. If we were the only company still, fast forward in 2 years, that would be much more of a concern. So I see this as good validation. They see the opportunity. And of course, Jeff Bezos has his own startup in this space now called Project Prometheus, which is also in a very similar space. And so he also sees the opportunity as well.
You're a very young business to be raising such a lot of money and to have the value that you now have then, Chad. I know you've got some very experienced pioneers of modern AI within your sort of advisory body or advisory board. So Jan LeCun, Geoffrey Hinton, notable names with quite a bit of experience. How does it feel to be growing quite as fast as you are as such a young business?
Yeah, it's incredible. The energy behind the company right now is incredible. I mean, from the talent that we're able to attract and retain within the company, obviously the capital that we're attracting and the quality of the investors, the projects that we're seeing come through with customers, and ultimately the impact that we're going to have. It feels like the wind's really behind us in our sales right now. So, yeah, we've grown very quickly. We're nearly 100 people in 2 years. So there's obviously an ingestion period that happens as you bring more people into the company, but we're trying to do that in a very sustainable fashion.
Yeah, and you mentioned that semiconductors is only one part of what you're focused on, although, yes, for obvious reasons, gets a lot of attention. What about on the, but energy resilience is also an area we talk about a lot, given what's happening in the Middle East and lots of European countries trying to improve their resilience there. I mean, what are you doing in the climate field and in the energy space? Yeah, so in energy specifically, we see a lot of demand from solar companies. So we now have multiple solar programs ongoing. And of course, if we can discover a new material that goes into the next generation of solar cell, even if we can just get a 1% improvement in efficiency of converting sunlight into power, that has a huge potential for the world. And so that's just one example. We have programs working on new hydrogen fuel cell technologies. And then more on the climate side, we're working on carbon capture, which of course is a bit of a frontier bet, but something I truly believe the world needs more of. And in addition, we're working on problems like PFAS removal. So these are forever chemical removals from water. So a broad spectrum across energy, environment, and electronics. Okay, Chad, thanks so much. Thanks for coming to talk to us and bringing us the story behind CUSP AI. Chad Edwards, co-founder and CEO of CUSP AI. Let's look ahead to some of the potentially market-moving events that we are focused on this week. Today is Monday. Not sure I need to remind you of that, but Andy Burnham is set to become the UK Prime Minister. Plus, there's the Farnborough International Air Show. That's getting underway. So these two focuses of our broadcasting a lot this morning. Tomorrow, Tuesday, we'll get UK unemployment data, Germany's ZEW survey, so some macro inputs. That doesn't stop there. Wednesday, we'll get UK CPI and bumper earnings from some big tech players. So Tesla and Alphabet are going to be reporting over in the United States. So the middle of the week, we certainly have a big tech focus. What does Chinese competition look like is an area we will explore further. The ECB delivers its rate decision on Thursday, and on Friday we'll get back to the data with European flash PMIs plus UK retail sales figures. Thinking about the UK, let's focus in on that theme as we bring this hour to a close. Andy Burnham set to become the country's 7th Prime Minister in just over a decade. As incoming leader, he'll inherit a range range of social and economic challenges as a number of questions about his cabinet and policy direction remain outstanding. Lizzie Burden is on the beat trying to discover the answers to many of these questions around his top team, around his policy choices. Lizzie, what do we know then about Andy Burnham's economic policy and who will be Chancellor? All of these very unknown right now.
Yeah, me and the rest of the world's press, Anna, it's absolutely heaving here at Downing Street. Literally journalists on top of journalists stacked here in the street, waiting for the turn of prime ministers behind that black door. But in terms of the economic policy, look, Burnham said that he's going to stick to the 2024 Labour manifesto because, of course, he's a takeover prime minister, and that means that he's bound to the fiscal rules set out by Chancellor Rachel Reeves. He's got to commit to the triple lock, which guarantees an annual rise in the state pension, and it means, most importantly, he's hindered from pulling the three main levers of tax: income tax, national insurance and VAT. So that's a difficult fiscal squeeze. He's also got a bleak economic backdrop. We report that Treasury officials, once he goes through that door, are going to hand in some updated forecasts that show lower growth, higher inflation, oil potentially going as high as $150 a barrel because of the Iran war, and therefore higher interest rates. So a lot to deal with for his new Chancellor. The front runner at the moment appears to be Shabana Mahmood. That reported by the Financial Times. You saw the market soothed by that report, and indeed our Markets Live Pulse survey showed that Ed Miliband, the alternative, the energy secretary, was the least market-friendly option. Only 5% of votes going to him, but Mahmood only getting 11%. There could yet be a surprise when it comes to who's going to be the Chancellor, so seeing will be believing when the appointments start walking down Downing Street later on this afternoon.
And what else is in Andy Burnham's in tray then, Lizzie?
Well, he'd like to focus on the domestic. Wouldn't all prime ministers, but particularly him as former mayor of Manchester. But of course, the foreign agenda is going to grab him, particularly Donald Trump, and a huge question about what his relationship will look like with Trump. Starmer known for his softly approach to the White House, but Burnham says he's going to be more upfront. A huge question initially regarding the US-Iran war is Burnham going to allow that continued use of British air bases if the US starts striking civilian infrastructure? So there's that. There's also the real desire to focus on devolution for Burnham, and then there's all the problems that plague Starmer, the welfare reform question, the fiscal squeeze, immigration, all of which he needs to solve before the next election.
Yeah, absolutely. Starmer showing that even with a big majority, getting your will through Parliament was not easy. Lizzie, thank you. Bloomberg's Lizzie Burden. Guy will be speaking to the Boeing CEO, Kelly Ortberg, at 9:15 a.m. That's coming up in around 20 minutes, just less than 20 minutes. So do stay tuned to Bloomberg Television for that. That is it for the opening trade. The Pulse is up next with that important conversation. This is Bloomberg.
Every weekday, Bloomberg puts a spotlight on a different aspect of global finance. Flows, funds, and the forces shaping markets on ETF IQ. The future of money with Bloomberg Crypto. The players behind major transactions on Bloomberg Deals. Rates, risk, and the cost of capital on Bloomberg Real Yield. And personal finance, retirement, and wealth management on Bloomberg Money. A different topic every weekday, only on Bloomberg Television.
It's a multi-trillion-dollar industry. We'll show you what's happening in ETFs like no one else. ETF IQ, Mondays on Bloomberg.
Trading day is about to start.
And you're already looking for that edge.
The opening trade brings you everything you need to know as markets open across Europe.
I'm Guy Johnson.
I'm Anna Edwards.
And I'm Tom McKenzie.
This is your opening trade.
Only on Bloomberg.
Technology is embedded in every aspect of our lives, and that revolution is playing out in real time. From finance to defense tech, AI to entertainment, from the road to the stars. Bloomberg is bringing you the stories of companies and people that are pushing tech to new frontiers, and the politics reshaping global tech markets. I'm Ed Ludlow, live in San Francisco, and this is Bloomberg Tech. Every weekday, only on Bloomberg Television.
Welcome to Bloomberg This Weekend.
Breaking news today from Wall Street to Washington.
Earnings season is underway. We're going to get some key reports.
Everything you need to know before the markets open on Monday.
Bloomberg This Weekend, bringing a little Bloomberg into your weekend routine.
Guys, buckle up.
Well, Andy Burnham is set to become the UK's 7th Prime Minister in just over a decade, but questions remain over his policies and his cabinet. Inflation concerns return after Washington and Tehran exchange more strikes in the Middle East. Washington confirms that 3 U.S. troops have been killed over the past few days. And of course, don't miss our interview with Kelly Ortberg, the Boeing chief executive, coming up shortly from the Farnborough International Air Show. So happy Monday, everyone. We had a big week last week on the markets, and it continues into this Monday morning. Now, of course, we're all eyes on what's happening in the UK, given we have a new prime minister, but we also saw this sell-off in chip makers pausing at the start of the week, in which big tech earnings will be key, of course, to try and understand whether these stocks remain volatile or will regain some momentum from here. So we have Alphabet kicking off reporting for hyperscalers. And then, of course, I'm looking at Brent 88.68, surging a touch to the highest level since the first half of June, as U.S. and Iran engaging in a series of tit-for-tat attacks. So for the conversations that matter and the insights you need, let's get started.
Newsmakers and market movers. This is The Pulse with Francine Lacqua.
Well, good morning, everyone, and welcome to The Pulse. I'm Francine Lacqua here in London. Now, Andy Burnham is set to become Britain's 7th Prime Minister in a decade today. He'll be hindering a cascade of challenges that have felled his predecessors, with a number of outstanding questions about his cabinet and, of course, policy direction. Well, for more, let's bring in our Daybreak Europe anchor, Lizzie Burden, who joins us from Downing Street. So, Lizzie, what can we actually expect today?
Well, Francine, the world's press are gathered to watch Starmer out, Burnham in today, and it has been a remarkable journey, a bloodless coup in the Labour Party, but he is set to become Prime Minister, the first since 1963, Alec Douglas Home, to come from outside the House of Commons and straight into Downing Street. He's the 11th of the past 19 British Prime Ministers to take office without an election. He's got a working majority of 166 MPs, and 90% of them backed him to become Prime Minister. So today we're going to expect the same choreography that we've become all too familiar with over the past decade. Starmer will give a farewell speech here outside that famous black door. Then he'll go to Buckingham Palace to tender his resignation to King Charles. The King will then invite Burnham to formally form a government. Burnham will be back here. He'll be at the lectern setting out his policy objectives, and then the ministers will start filing down Downing Street as the cabinet appointments begin. The crucial one for us, of course, is who will be the Chancellor. The front runner according to press reports, is Shabana Mahmood. Let's see if that's confirmed, because there could be huge reaction in gilts and sterling if it's somebody else like Ed Miliband, who was formerly thought to be the front runner. Of course, he is the Energy Secretary.
Lizzie, thank you so much. Lizzie Burden there outside number 10. Now, rising energy costs will be one of the key focuses for Andy Burnham. Joining us now is Isabel Mateos-Hilago, Group Chief Economist at BNP Paribas. Isabel, thank you so much for being here. I mean, look, we look at the UK, and this could, I don't know how much of the focus will be on the UK, given it's also a big earnings week. But what are the main challenges that the new Prime Minister has to face that will actually decide whether investors go in or not?
Good morning, Francine. Yes, I think he's got a heavy agenda in front of him. I think the good thing is he hasn't made any lofty promises, and so in a way he's got a relatively free hand to choose his priorities. I think the risk for him is that the international agenda is going to dominate immediately. Already we're facing potentially a new energy price shock, which is going to call for how can you ease the cost of living. That was already one of his agenda items. Now it's going to be harder, and of course he's under tight surveillance from bond markets in particular. I think the issue of bringing back equity investors, frankly, is going to be that's more of a long-term issue, and the UK hasn't done so badly, but the immediate question is going to be how to keep the bond market in check. And I think that's why there's been so much focus on who's going to be the next chancellor, because he hasn't said very much about policy plans, and so people default to personnelist policy. The reality is we really don't know. I think he's understood that he's under close watch, and that's why he's vowed to stick by the fiscal rules. Nevertheless, how do you boost growth without touching the fiscal rules? That's going to be very tricky.
I was going to ask you, actually, is there really a way of not touching the fiscal rules and kickstarting growth that has, frankly, been anemic in the UK?
So I think, look, at the macro level, it's going to be very hard now. There is flexibility somewhat within the fiscal rules to tweak the allocation of spending between different items. But I think probably if he wants some quick wins, it's not going to be aiming to, shift growth from 1% to 1 and some decimals. It's going to be making people feel it a bit more among the Labour electorate, because there's been a real disconnect. It's very striking. I spent a lot of time looking at the Eurozone and looking at the UK economy. Frankly, they're not that different. If anything, the UK economy has outperformed in some dimensions, and yet the narrative here has been consistently negative, one of poor performance. And so I think he can try to, take what's good and try to shift a little bit where the growth is felt in the country, and that could help him move forward with a longer-term agenda.
Isabel, going back to the oil price, because, the Lacqua household, I'm putting everyone on a train to go to continental Europe in August because we were concerned about the price of oil and the fact that we were running out of it, or certainly for planes and jet planes, jet fuel. Where are we? Because it's unclear whether we've looked through it, whether, demands, is it that that China's using much more Russia demand? Should we worry now or not that it's coming back?
Well, where are we, I think, is the number one question for everybody watching what's happening in the Gulf. And that's what central bankers meeting this week and next are also going to be asking. The reality is inventories have been depleted. Compared to the last round of skirmishes in the Gulf, and actually when you look at the so-called crack spread, the price of products, diesel and jet fuel, they are at record highs. So it's not just that crude oil price has gone back up; it's that this crack spread is very tight, and that reflects tightness in the physical market. So we're at risk of prices really moving much higher in order to bring demand down. We haven't really faced that until now, but that's why the question of where is this escalation going is so important. The previous rounds of skirmishes were resolved relatively quickly, but this time we don't really see a de-escalation path, and neither side is messaging that they're keen to keep talking. So I think markets are going to get tighter and tighter, and maybe that's what will ultimately put pressure back on the two sides to talk.
Isabel, thank you so much. Isabel Mateos-Hilago from BNP Paribas stays with us. We'll come back and we'll talk a lot more about earnings and some of also what we're seeing in the U.S. economy. Coming up, we're also back at Farnborough International Air Show with Kelly Ortberg, the chief executive of Boeing. Don't miss that interview. It's coming up next, and this is Bloomberg.
stocks. Watch Bloomberg Real Yield every Friday at 12 p.m. Eastern right here on Bloomberg. Context changes everything. From our studios in New York and San Francisco, our expert hosts have the data and analysis about the companies you know and the startups to watch, plus the interviews you don't want to miss. Watch Caroline Hyde and Ed Ludlow on Bloomberg Technology, the only daily business show dedicated to tech, right in the middle of the trading action. 11 a.m. on the East Coast, 8 a.m. in the West. Only on Bloomberg Television. Context changes everything. Welcome to the world of decentralized finance.
You can see the massive gains for the OG crypto coin.
The breakout we have all perhaps long awaited finally realized. We'll see if it sticks.
Bloomberg's covering all things crypto, the people.
There's no question this industry is composed of some bad actors and some good actors.
The transactions.
Volumes have surpassed $24 billion per day.
And the technology.
Stop talking about the technology. Start demonstrating the utility.
Bloomberg Crypto, Tuesdays. Bloomberg Surveillance covers the latest in global markets and the political events that influence your world. Join Jonathan Farrell, Lisa Abramowitz, and Anne-Marie Hordern every weekday morning at 6 a.m. Eastern, only on Bloomberg.
Major event in the air industry calendar as the Farnborough International Air Show kicks off today. Well, Bloomberg's Guy Johnson is there with the top guest. Guy.
Francine, thank you very much indeed. Yes, Kelly Ortberg is here at Farnborough, the CEO of Boeing. Great to see you.
Good to see you.
Thanks for taking the time. Look, Kelly, you're 2 years in, nearly 2 years in, as CEO of Boeing. Company feels like it's in much better shape. The share price is well off its lows. You've ticked a whole load of boxes. Are the priorities beginning to change? It feels like a company that's kind of shifting to offense, to kind of getting on the front foot.
Well, we're turning the corner. I tell my team we haven't quite finished turning the corner. We've got more work to do, but I am pleased with the progress so far. We're ramping up production across many of our product lines. Markets are very strong. So our backlog is very strong. So our story is really focusing on executing that backlog.
Okay. The administration, the White House, has given you massive support over the last 18 months. The President certainly had your back. Do you think the company would be where it is now, that kind of progress that you've made, without that kind of support?
Well, I think the execution focus is really on us to go improve our overall performance, build trust with our stakeholders, restore trust with the regulator. And I think that's more what Boeing has done for themselves. The president has been very helpful in sales campaigns. Balancing trade, the best way to do that is buy a bunch of airplanes. And so we've been a beneficiary of that. He's been very helpful to the whole aerospace industry.
So you're in a good place right now.
Yes.
So what's now?
Well, we still have to ramp up higher. So we're at 47 a month now on the 737. We have aspirations to get to 63 a month rate. We're at 8 a month rate on the 787. We want to go to 10 later in the year and then higher next year. So we're investing in new capacity, new facilities so that we can continue this rate ramp. The backlog is there. The market is strong. So it's all about delivering more airplanes.
You say the backlog is there, the market is strong. You like the economy right now? The consumer looks good, particularly in the States. The consumer wants to fly. The airlines are certainly saying that. But you've got Brent this morning at $90 a barrel. You've got the ongoing conflict with Iran. Kind of just give me your flavor of what you're seeing in front of you in terms of what the macro picture looks like.
It's a super resilient market. And while we always see perturbations here or there, regional perturbations, which we're seeing now, we forecast that the market's going to continue to be strong. Traffic continues to grow. We just came out with the new forecast for overall aircraft growth, and we see 44,000 airplanes in the next 20 years. So this isn't a market that moves quickly, because you have to make orders for aircraft well in advance, and we think that the demand is set for our aircraft going forward.
One of the things that's certainly driving the economy right now is the AI boom.
Yep.
A lot of money's being spent.
Yep.
Do you think it's going to be worth it?
Oh, yeah, I do. AI is critically important to us. We're working with AI to either improve our back office processes, help us with our design processes, whether it's software or hardware designs, and also embedding AI capability in our services and our actual product going forward. So I think AI is going to really change the way we do our work, and hopefully we can go faster and provide better products as a result of the AI.
One of the things that often goes hand in hand, is with the AI story is the robotics story, like advanced robotics. It feels like Boeing is a perfect place for maybe that advanced robotics to find a home. What do you see in the future for that? Can you build airplanes without people? What impact is it going to have? What does it do in terms of your ability to manufacture?
Today we use robotics to help us build the aircraft, but the real opportunity to really utilize robotics is going to be when we go to a next aircraft, because in many cases you have to change the design to allow for the automation. And I think that the real step function in automation will come with the next generation aircraft.
Okay, we'll come on to when that is in just a moment.
Okay.
But in terms of how you utilize that, how much of the aircraft do you think you can build? Like how automated do you think this process can be?
I think we can make a step function in automation. Depends on what particular area of the aircraft, but certainly we can automate the whole assembly of the aircraft in a big way.
Okay, you bring up the issue of the next generation of aircraft. When am I going to see it?
Don't know yet. The market is not quite ready for the new airplane. The customers are telling us, let's focus on the existing product. We'd like to see better durability of that product in the marketplace.
Yep.
And as I mentioned, we've got big backlogs, and they're looking for us to deliver on those backlogs. We are studying a new airplane, and we'll be ready when the market's ready.
So this is the replacement for the current 737.
In that
family, kind of the narrow body, kind of end of the spectrum. Your friends in Toulouse think early next decade. Do you think that's a little early?
I think the market will tell us what the right timing is of that. It's not today. Whether it's the end of the next decade, we'll see.
Okay. Are you in a position now that you could make that happen?
Probably not now financially. I'd say we need another couple years as we ramp up our production, improve our positive cash flow, and pay down some debt. And that's our plan, and we're accomplishing that plan. So in a couple years, we'll be ready to take on that challenge. I don't think the market's going to quite be ready in a couple years, but we'll see. We want to be ready when the market's ready.
Okay. But your sense is that that's at the back end of next decade?
Yeah, in that neighborhood, I think so.
Okay, let's talk about engines. We'll talk about current engines and maybe future engines. Let's start with the future engines. Larry Culp over at GE tells me that it's going to be an open fan system, unlike the jet engine that's flying over us right now. Have you made a decision on what you think that the next engine is going to be? Because this is going to be kind of critical to what that aircraft is going to look and feel like.
No, we haven't made the decision on exactly what the next engine is going to be. We're studying all sorts of technology, including the GE technology you're talking about, and we'll make that decision at the appropriate time.
Okay. Let's talk about defense, because that feels actually, for the first time actually I can remember a long time, Farnborough feels like it's more focused on defense and the outlook on that side than it is maybe on the civil side. Can Europe rearm and do what it needs to do without the big American prime contractors, the OEMs, like Boeing? Can it do that? Europe wants to do its rearmament program with its own capability. Do you think that's possible?
I think in certain areas it's possible, and it's going to take time. And so I think that we're going to still have opportunities to participate in the market as that capability gets built up here. I don't think that they can afford to do it everywhere, so they're going to have to pick their spots. What we think is we'll have to partner more to address the markets in Europe, and we're willing and ready to do that.
What does that look like?
Well, it looks like joint ventures, partnerships. We're partnered with Rheinmetall, for example, to bring the MQ-28 into Germany. We're partnered with BAE here in the UK in trainer aircraft. So that's what that looks like, partnerships with in-country companies that have capability, and we can bring our capability and address this market.
Do you think there has been a paradigm shift, though? Do you think there has been, are we in a new world now in terms of the long-term trend? Europe has not prioritized its defense industry for many years. Has that now changed?
Yeah, I think it has. Budgets have increased significantly, and as budgets increase, the opportunity will increase. So I think it'll take time, and our plan is to work with countries and companies to to address the market as the market transitions.
Does that mean M&A, or does that mean the partnerships that you're talking about?
I think it's predominantly partnerships right now. It may lead to M&A later, but I think for right now it's mostly going to be partnerships.
And where do you see the opportunity for Boeing in that?
Really, all of our product lines, I think, have application, whether it be our rotary wing platforms, our E7 platform is another important program here in the UK, our MQ-28, our training airplane.
Yep.
So we've got a lot of applications where that capability just doesn't reside standalone here in Europe. So I think we can partner with European companies and bring that capability into the market.
And in terms of where the challenges lie within that, over the last few years, we spent a lot of time talking about the civil supply chain. Does the same problem exist in defense?
Yeah, in many cases, the defense supply chain is pretty common to the civil supply chain when you get down into the tier 2 and tier 3. So we are in an environment where both markets are growing at the same time. And that's going to constrain the supply chain. And we're spending a lot of effort and money helping our supply chain be ready as we grow. They've got a lot of work yet to do because rates are going to continue to increase at both Boeing and our competitors.
So just to wrap things up, you feel like the company's in a good place. So we've got earnings coming up in the next few days. But in terms of what you have delivered thus far, you are comfortable that you've made the progress that you've needed to make?
Yeah, absolutely. We're making progress. I feel good. Our employees feel good. Our customers are feeling better about the Boeing company. Our regulator, if you just saw, just recently gave us a delegation for ticketing our commercial airplanes. So we're restoring that trust step by step, and I feel really good about where we are.
Kelly, it's been great to see you. Thank you very much indeed for giving us some time this morning. We really appreciate it.
Okay, thank you.
Kelly Ortberg, the CEO of Boeing. Francine, in London, back to you.
Guy, thank you so much. Guy Johnson there and Kelly Ortberg, the Chief Executive of Boeing. And of course, Guy will be all day at the Farnborough Air Show. Guy will be speaking to the biggest players in the business, including Guillaume Faury, the Airbus Chief Executive. Don't miss that interview, 9:30 a.m. New York time, 2:30 p.m. London time. And that gives us a very good picture and idea of some of the rivalries between the European group and the Boeing. Now, still with us, Isabel Mateos Ilago, Group Chief Economist at BNP Paribas. Isabel, thank you so much for sticking around. When you look at, some of the forces that were, talking, it was Iran, there's U.S., China, but there's also this, underlying earnings question about AI. How does that impact the economy?
Well, for me, the underlying story is this CapEx cycle, CapEx super cycle, you could call it, which is happening in AI, but it's happening in defense and airspace. And I'm sure you're going to hear a lot of very bullish CEOs all day telling you that their order books are full, and it's infrastructure and it's electrification. And so it's actually quite broad-based. And this is what we saw in PMIs last month. Of course, we'll get a new set at the end of this week, but I think we're going to see a confirmation of that in earnings, that it's not just AI, actually, that across the entire economy, mostly manufacturing, but not just, you're seeing a lot of dynamism, despite Iran. Now, of course, if we get a new leg to that energy shock, that could challenge a little bit that narrative. And I think market watchers and economists are going to be listening very closely at how the corporates are gauging the rest of the year. But for now, everything we see in the data is frankly pretty strong, and again, a testament to that resilience in the economy, despite the energy shock and despite the uncertainties.
But so is this really based on CapEx? So is it infrastructure spending, and is there a real worry, a real risk that it doesn't materialize in terms of revenue, and so then there's a big correction, but also that the economy will be left in this funny place?
So there's a question around AI revenues. Who does it accrue to at the end of the day? Is it the semiconductor companies? Is it the model companies, the hyperscalers? Is it China? Is it the US? I think that's the number one question. And right now, earnings expectations for all of them are sky high, and there's a likelihood that not all of them will deliver. I think that's the question and why the market has become so touchy about any narrative that challenges this story of who does the rent accrue to, and we had an illustration of that last week with this new moonshot model, which suggests that, oh, well, maybe you're not going to need as many semiconductors and you're not going to need the US models quite so much. Having said all that, I think we're clearly in the build-up phase. The entire world is building AI infrastructure, and so I think all the companies that are involved in that are going to benefit. But, you know, are the current earnings expectations exactly right? I think one needs to be cautious about this. But the important point to me is it's actually not just an AI story, okay? That is, and we see this in Europe, where there's much less. There are some companies involved in the AI supply chain, but mostly not. And you still have defense, you have infrastructure, you have energy transition, and all of that is happening at the same time. So the resilience, I think, is actually much more broad-based than people assume when they think, oh, it's all an AI story.
What do you think about when we think about risk or pressure points?
Well, one is clearly inflation. It was very dramatic the way oil prices came down and central bankers relaxed, and you were in Sintra and in X, and all of a sudden the ECB governing council members were like, oh, well, maybe we're done, and you know, that might have been premature relief. If we see central banks having to deliver the rate hikes that are priced by the market, or even maybe go further, that could take some air out of the earnings story that has been, you know, powering stocks. Of course, if we were to see shortages of diesel, that could really hit manufacturing very hard. So we have to remain very watchful of you know, the geopolitical risk and the energy and inflation dangers. But for now, the base case remains one of resilience and central banks having to deliver some hawkishness, but, you know, not above and beyond what's currently priced by the market.
Isabel, what are you expecting from the Fed?
The Fed is going to keep talking hawkish. Our expectation is that they wait until the other side of the midterms to start hiking, and that then they will hike 3 times. No. But the risk is that they decide to go early, and it's very striking how pretty much all the speakers that we heard from last week said they're either ready to hike now or willing to hike if inflation doesn't come down very soon. So, you know, we don't expect them to move in July, but let's see. If we don't see an off-ramp in the conflict in the Gulf, and therefore the risk of energy inflation spiking is real, they might decide that it's safer to move now.
Isabel, thank you so much, as always, for joining us. Isabel Mateos Ilago from BNP Paribas. Coming up, Andy Burnham becomes a new UK Prime Minister this morning with a cascade of challenges ahead. We'll have plenty more on that next. And this is Bloomberg.
Take a look under the hood of the business of Formula One.
Hi, I'm here to see Pierre Gasly.
Welcome to my workplace.
Do you feel pressure?
Massive pressure.
He's
is the best example that we can be very proud of the past to look after the future.
From the iconic brand setting the standard.
Oh boy.
Can you imagine Ferrari without racing?
No, and I say no, no, no.
To the newcomers forging ahead.
I grew up my whole life racing against the boys.
This global phenomenon continues to chart new territory.
This was a tennis court 8 days ago.
I can't even believe that. And the speed of the business has never moved faster.
My career might stop, but I'd still be driving something.
Yeah. Probably very fast.
Yeah.
This is so exciting!
This season, we're along for the ride.
Know how the market day started.
Find out how it finishes.
Public markets to private markets.
From the micro to the macro.
Covering retail, entertainment, the business of sports.
The supply chains, trade policy, how it all is impacting the U.S. equity market as we drive to the closing bell at 4 p.m.
A holistic approach to covering financial markets.
If it matters to your life, we're covering it. I'm Katie Greifeld.
And I'm Romaine Bostic, and this is The Close.
Every weekday from 3 to 5 Eastern.
Only on Bloomberg. Context changes everything.
Key investors, top executives, global innovators. Join me for in-depth conversations with the biggest newsmakers on the day's top stories. Insight with Haslinda Amin, only on Bloomberg.
Bringing you up-to-the-minute geopolitical news whenever and wherever it happens. I'm Tyler Kendall in Geneva, Switzerland, and this is Bloomberg.
Good morning, everyone, and welcome to The Pulse. I'm Francine Lacqua here in London, and these are your top stories. Andy Burnham is set to become the UK's 7th Prime Minister in just over a decade, but questions remain over his policies and, of course, his cabinet. Inflation concerns return after Washington and Tehran exchange more strikes in the Middle East. Washington also confirms 3 U.S. troops have been killed in recent days. And Kelly Ortberg, Boeing's chief executive, tells Bloomberg its next-gen aircraft are not due until towards the end of the next decade, as the company is just not yet financially ready. So, the resumption of U.S. strikes against Iran has thrust incoming UK Prime Minister Andy Burnham into a potential day-one decision on how far to back the U.S. military campaign. Let's return to Lizzie Burden, Bloomberg's Daybreak Europe anchor, who's at Downing Street. So, Lizzie, what do you think Burnham's relationship with Trump will be like? A lot of people want to know how the two men will get along or not.
Of course, and Burnham says, Francine, that he's going to be upfront with Trump. I can't imagine that he would go as far as a Hugh Grant Love Actually moment, but certainly something in contrast to the softly approach that Keir Starmer took himself. One of the key questions, you mentioned the US-Iran war, is going to be whether he's going to keep allowing US troops to use British air bases if American troops start striking Iranian civilian infrastructure. But there's also the question of Ukraine. Civil servants expected to advise Burnham to keep the leadership position when it comes to military support, keep the pressure via sanctions on Moscow. And then it comes back to the fiscal. There's still the dilemma of how to ramp up core defence spending to 3.5% of GDP by 2035. That is going to be crucial to showing Trump Burnham is really willing to put his money where his mouth is when it comes to defence.
Lizzie, thank you so much. We're looking at some of the global challenges, and of course, there's a lot to also do, at home. So let's get more with Anand Menon, Director of UK in a Changing Europe, and Adrian Woolridge, our Bloomberg opinion columnist. So thank you both for joining us. So we also went through, some of the things that Andy Burnham needs to do at home. So there's no transition period in the UK. You literally go in, you start. Does he focus externally to all the things that are happening in the Middle East, or does he just have to make sure that he gets his party on side? Adrian?
Internally.
Internally is the one thing he needs to focus on.
Absolutely, because one of the reasons why Keir Starmer became so unpopular was he was perceived to be over-concerned with the rest of the world and spent more and more of his time as he went on foreign relations, collecting the Légion d'honneur and the rest of it. And I think it's really the domestic side that he needs to do. After all, he's a new Prime Minister.
But how does he do that?
Well, I mean, partly it depends on luck, doesn't it? Because we are at the whim of an international system that is increasingly unstable. He's got to hope and pray that things quieten down, that the Strait opens again, that oil prices come down. But at home, I think he's got a majority of 160. It is very, very possible that if he comes in with a plan, he can do some drastic things that start the UK economy growing again. I think the key thing for Andy Burnham is to focus on a few key domestic priorities and show the British public that finally we have a government that's willing to tackle our long-term economic problems.
But can he do that within the fiscal constraints? Because you still have the bond markets and you know, the fiscal constraints.
No. I mean, the fiscal situation isn't great, obviously. He's going to have to think carefully about how to raise revenue. There's been talk that, for instance, they're going to try and end the triple lock on pensions as a way of raising some money. They're going to have to find a way of generating income. But I think at the same time, with a majority this size, there is a real opportunity for a new Prime Minister to come in and actually tackle some of the issues. He's talked about social care. That has been a blight on our system for decades so far. So we'll have to wait and see whether he comes in ready and willing to tackle some of those challenges.
There's a bigger question as well about whether he can do it within the Labour Party constraints. Right. Is the Labour Party, it's a party of welfare claimants, it's a party of NGOs, it's a party that gets very upset if you take difficult decisions about how to improve productivity. Can he persuade them in the way that Keir Starmer certainly couldn't, that they need to sacrifice short-term things in order to get long-term productivity growth?
Adrian, where do you think Keir Starmer went wrong? Because I know it's the Prime Minister's moment. Andy Burnham is just starting looking at number 10. But if we don't understand exactly where his predecessor failed, it's going to be difficult for him to learn lessons.
Where he really went wrong, first of all, was backing down over relatively modest improvements in the welfare state, in the welfare system, reducing the certain dependencies that people had. And when he showed that he was willing to back down over something small, everything else followed from that, I think.
Do you agree?
I do agree, yeah. I think what that whole episode showed was A, a degree of political weakness, and B, I think a degree of political naivety, because the Prime Minister proved unable to tell a story that appealed to his backbenchers. There are ways of selling welfare reform. What you don't do is go to a bunch of Labour backbenchers and say, we need to save money, we're cutting welfare, which was the narrative that they came out with.
But so what is that, personality? Was it a temperament problem? Because we know he also lost staff within number 10. Again, you know, Andy Burnham will look at the slate that Keir Starmer left him. What does he do differently?
I think it was partly a temperament issue. Remember, Keir Starmer was selected to be the anti-Boris Johnson. And in that role, he was in many senses perfect, wasn't he? He was a serious, loyally technocratic person, as opposed to Johnson, who was essentially the opposite. It turned out, though, that having someone with no real political vision, with no ability to tell a political story, isn't ideal when that person becomes Prime Minister.
Prime Minister Burnham, does he have that? I mean, it's storytelling, it's persuasion, it's keeping the party together and being able to sell it to the citizens.
He certainly has it when it comes to dealing with his inner staff. When I went to see him once a few years ago in Manchester, and you could get the sense that the staff really liked him and really worked with him very well. I think he has it when it comes to talking to the Labour Party, giving them a sense that they have a story. We don't know whether it's too nationally at the moment. I think one interesting test would be about defence. At the moment, we're being told a story about defence that we need to increase to 3.5% of GDP. What does that mean? We're given no sense of why, what the threat is, what we need to do about it. In Sweden, which I think is a very interesting case, everybody gets through their door, every single citizen gets through their door, something explaining the nature of the threat, particularly from Russia, how they need to prepare for it, how the world has changed. Unless we do that, all of this stuff will seem just like a burden rather than like something that we need to do.
How's the devolution going to go?
Well, I mean, he's made great play of it. And he's talked about setting up a number 10 in the north. The north for Andy Burnham seems to mean Manchester, which itself might cause some problems for him, for people from the rest of the UK. I think it is absolutely and obviously the case that the UK is over-centralised, and that accounts for some of the problems we've had. Whether or not he should spend what will be just under 3 years before he has to call an election worrying about changing the machinery of government rather than substantive policy, I think that's an open question. And the final thing I'd say is, of course, when an English Prime Minister starts talking about devolution, hackles raise automatically in Cardiff and particularly in Edinburgh, where they're saying, we are a devolved government, you don't get to tell us how to structure our country.
There's another problem with devolution as well, as I think, is it increases the power of the citizenry to resist change. If you give people, there are a lot of veto points in our system, that just adds more veto points, and some of the improvements in productivity, house building, need to be actually imposed from the centre. I mean, it's an unfortunate paradox, but you need to have an ability to push things through, and devolution may help that, but may well hinder it.
Number 10 in the north, does it help with growth for the country, or does it help with voters?
It's a gimmick.
You agree?
To an extent, yeah. I think the way we have so few details. I mean, the striking thing about Andy Burnham is how little we know about what he intends to do, and he's becoming Prime Minister in a few hours' time. I think there is a case, and a serious and sensible case to be made, for devolving more political and fiscal authority outside of London to the regions. Whether having a prime ministerial office in Manchester is the way to do that, I think I'm less certain.
I mean, what do citizens want? I mean, this felt to me like a direct play in trying to placate Farage and actually get vote. You know, they're getting ready for a general election. When do we know if Andy Burnham is the right guy for this?
The right guy, I mean, I think he is very good at mobilizing his core base. He's very good at telling a story. He's much better than his predecessor. I think he's probably the right guy for a general election. Whether he's the right guy to be running the country is a different question.
It should be the same question, though, shouldn't it?
I mean, to an extent, yeah. I think in answer to your question, what people want is they want to see the economy growing. They want to see median wages that have flatlined since 2008 going up again. They want to see public services improving, and that will be the real test. It might turn out that Andy Burnham turns out to be a really lucky general because, of course, his accession to power coincides with the strange disappearance of Nigel Farage, who's hounded with all these stories about payments he's received, and Reform have come down in the polls from their peak in last August. And at the same time, the other challenge from the populist left, Zach Polanski, leader of the Green Party, is, at a minimum, far less ubiquitous on our airwaves these days than he was when he became Green leader. So it might be that Andy Burnham has become Prime Minister at what is quite a good time for him.
So imagine if he won the World Cup.
No,
I know, well, you didn't do too badly. We didn't do too badly against France, so maybe that gives him also a little bit of a boost this week. What kind of cabinet does he have to form? So does it have to be loyalists? The Chancellor is extremely important in this, but does he have to please the markets or please Labour?
He has to please the markets, I think, first. I think he can please Labour in other ways, but I think when it comes to choosing the Chancellor, he has to please the markets first and foremost. The broader cabinet will be a difficult balancing job, but I think he can please his backbenchers without going for a very left-wing progressive cabinet, I think.
I think there's a tension there, isn't there? I mean, ideally, if you're asking me what he should do, he should keep people who are familiar with their brief and done a good job in position. The reality of politics means that's going to be very, very difficult to do because he has to sort of give rewards to his allies and make sure that his friends are getting the jobs they expect. I think the cabinet this afternoon will be Andy Burnham's first introduction to the fact that being Prime Minister means irritating people, whether you like it or not, because some people simply won't get the jobs they want, and that will start the process of people muttering against
And he does have a big gender balance issue. I think he will have to, because we've heard the Labour Party doesn't seem to have put women into the very top job, and I think that is a rankling with people.
And who would you have kept, actually, who would you keep from the Starmer cabinet?
Well, the one thing that strikes me is, by her own measures, Shabana Mahmood has been quite effective as Home Secretary. She's got a handle on the brief. I just think in general, we've seen this profound turbulence in our politics over the last decade, that shifting ministers around is not a recipe for effective governance because it takes people time to learn their brief. These things are complicated jobs, okay? You can't just walk in and be able to do it from day one. So I tend to favour stability, but I realise that's probably why I'm not a leading politician, because that ignores the political reality of having to sort of deal with...
I agree 100% with that, except I think we need a new Chancellor. And then everything moves around after that. We can't keep the same Chancellor.
But it'd be a Chancellor that needs to be more innovative, more, how does the next Chancellor need to do? Because, again, they were kind of boxed in, right? These budgets were neither pleasing, their centre party or the right or the left. It was all a little bit of everything because they were chasing voters.
I think what we need is a Chancellor who's willing to be bolder. Rachel Reeves was pretty tentative. Some of the things she did moved us sort of gently in the right direction. This is a time for bold action. As I said, this is an economy that basically hasn't grown since 2008. It's an economy in bad need of reform. Yeah. Who knows when we'll get another government with a majority of this size that allows it to actually do things. So I think a Prime Minister, a Chancellor with more ambition is what the country is really in need of.
And who projects more of a sense of self-confidence and vision, which we didn't get from this Chancellor.
So what does business need, and also what does it mean for Europe? Too big. We're kind of like cramming these two big portfolios. But first of all, the business, I mean, the City of London, what will they be looking out for this afternoon?
Well, we seem to have a country run by NGOs and run by regulators, and I think we need to have a sense that it's also run for business. And I think business feels very strongly that it's been marginalised, that there are too many regulations, or too many fiddly regulations that are unnecessary, and there's not a sense of dynamism and not a sense of addressing productivity problems and harnessing the will of business to try and address these productivity problems. I think that Sunak was beginning to do a lot of those sort of things. I think we sort of gently go back to some of those initiatives.
But it's difficult if, I mean, you have a Labour Party that also wants to make the society fairer. So again, is there
You can't make society fairer without addressing, Paul Krugman once said, productivity is not everything, but it's almost everything. And I think that that's true here.
On Europe?
On Europe, it's interesting because we've reached a point where the previous government, or the Starmer government, the current government still,
for a couple of hours.
The negotiations it was having with the European Union over its so-called reset were proving very, very difficult indeed. I wouldn't be surprised if a Prime Minister Burnham deprioritises that set of negotiations with the EU, because his future will be decided by what he delivers domestically. And I think it is those domestic reforms where he's going to focus the most of his attentions.
Failed prime ministers retreat into foreign policy and European policy, I think, which Starmer did to some extent, and I think he will absolutely focus on domestic issues at first. They're the people with the votes.
But I mean, you could argue that actually, if you deal with the U.S. or if you need some kind of trade deal with America, then you need to play that game. Certainly, when it comes to the Trump presidency.
I don't think a trade deal with the US is particularly on the cards at the moment. It'll be interesting, as you said right at the start, to see how Andy Burnham tries to handle Donald Trump. What I do think is looming on the horizon are some difficult choices between the US and the EU that are going to confront us. Our foreign policy since the Second World War has been about not choosing. Increasingly, with Trump in the White House, with the EU acting to protect itself from what it sees as a hostile America, we're in danger of being caught in the middle. And there are already some things the EU is doing to protect itself from China and the US that are impacting us, and that is uncomfortable.
I think Britain always tends to overemphasize its importance to the rest of the world. We're not as important as we think we are. And a lot of this stuff, the important intricate work, particularly of improving relations with Europe, can be done through back channels, be done by the deep state rather than the Prime Minister.
So interesting. Thank you both for joining us today. Anna Menon, Director of UK and a Changing Europe, and Adrian Woolridge, Bloomberg opinion columnist. Now, coming up, as Alibaba launches a new artificial intelligence model, we'll get the latest on the rise of China's AI capabilities. That's coming up next, and this is Bloomberg.
Every weekday, Bloomberg puts the spotlight on a different aspect of global finance. Flows, funds, and the forces shaping markets on ETF IQ. The future of money with Bloomberg Crypto. The players behind major transactions on Bloomberg Deals. Rates, risk, and the cost of capital on Bloomberg Real Yield. And personal finance, retirement, and wealth management on Bloomberg Money. A different topic every weekday, only on Bloomberg Television.
What happened was you were off.
Technology is embedded in every aspect of our lives, and that revolution is playing out in real time. From finance to defense tech, AI to entertainment, from the road to the stars. Bloomberg is bringing you the stories of companies and people that are pushing tech to new frontiers, and the politics reshaping global tech markets. I'm Ed Ludlow, live in San Francisco, and this is Bloomberg Tech. Every weekday, only on Bloomberg Television.
The U.S. and Iran traded fresh attacks over the weekend until Washington announced a third troop death in 2 days. Now, Tehran says it will no longer adhere to the terms of the peace deal, while President Trump says the conflict is about ending Iran's nuclear ambitions.
This is a far bigger job that we're doing. We were doing a little job of stopping them from having a certain capability. Now we're just ending it. So it's really not the same thing. What we're doing now is we're ending any chance where they can have a nuclear missile.
Well, let's get the latest with Paul Wallace, Bloomberg's managing editor for the Middle East and Africa. Paul, thank you for joining us. So Iran says the ceasefire has effectively collapsed. Bring us up to speed on the attacks this weekend.
Hi, Francine. Well, we've just seen daily attacks by the U.S. and counter-strikes from Iran on places like Kuwait and Bahrain and Jordan and Iraq. And it seems as if neither side is backing down at the moment. This latest flare-up, and we're now into the 9th straight day of U.S. strikes on Iran, it's down to Hormuz. That is what the focus of this war is right now, and the focus of what diplomacy still exists between Iran and the U.S. The U.S. is trying to force open the strait and get Iran to stop its maritime attacks, but Iran does not look like it's in any mind to do that, and keeps insisting that it wants to control traffic going through that vital waterway. It sees it as a key source of leverage over the U.S. and also sees it as vital to its own national security. So we could see more escalation from here. In fact, that's what Donald Trump has threatened. He's essentially said that the U.S. is going to step up the scope and the intensity of its attacks, perhaps each day, until Iran relents. Now, in the last few moments, in the last hour, Iran has mentioned that mediators have sent some ideas to it, and one of its ministers is traveling to Pakistan today, Pakistan being one of the main mediators alongside Qatar. But details are very light at the moment, and it's unclear whether this is enough to move the needle and stop these two countries from escalating this war even further.
So Paul, I mean, I was going to ask you about escalation. Do we have any sense of where, this war goes next, and what's making it through the Strait of Hormuz?
So traffic is very much down again, and it's, to be honest, the numbers have dwindled to what we were seeing at the height of the conflict in March and early April, with very few ships going through, and the U.S. is back to blockading Iran's ports. In terms of escalation, I think the most obvious thing is you would see the U.S. go beyond sort of southern Iran and focusing mainly on military targets to perhaps bombing Tehran again and other major cities such as Isfahan. And on Iran's side, you'd probably see widespread counterstrikes if it did decide to escalate beyond Kuwait and Bahrain and Jordan and Iraq, and perhaps countries like Saudi Arabia and Qatar and the UAE being hit on a bigger scale. That's if both sides decides to escalate. There's no guarantee of that, and they may well decide to ease tensions, perhaps because of what's happening in energy markets with crude and fuel prices once again jumping heavily.
Paul, thank you so much. Paul Wallace there, Bloomberg's managing editor for the Middle East and Africa. Now, Ryanair says profit dropped by 34% in its fiscal first quarter as the Middle East conflict hikes the price of oil and dents consumers' desire to travel. Neil Soronan, the chief financial officer, spoke to us earlier.
On the availability, there's no shortage of fuel. There hasn't been any shortage of fuel. I think there was some concerns about that earlier on in the year. No difficulty at all on that front. As I said, very well hedged at $67 a barrel, 80% of our fuel hedged, but importantly, 90% of our dollar requirements hedged out to the end of this year at 115. The 20% unhedged, we don't know where it'll go. It had dipped after the MOU was signed. We were already hedging into FY28 since the conflict escalated over the past couple of weeks. The price has spiked again. I think it's over 90 on Brent, which means it's well over $100 a barrel on jet fuel this morning. But we're better hedged than everybody else. I think a lot of capacity is going to come out of the market this winter, and I think inevitably you may see some airlines go to the wall.
Okay, and let me ask you about the demand story then. We've seen some customer hesitancy in the first quarter, understandably around the war, and lots of other airlines talking about that as well. Are you going to have to try to stimulate demand? Is that going? And you've been doing a bit of that, I suppose. But is that going to have to continue?
I think it's at a slightly lower level. We're talking about the trend into Q2 being modestly down. That's a low single-digit number. It could be better, could be slightly worse. It all very much depends on the close-in bookings into August and September. And unfortunately, with people booking that little bit later, we don't have huge visibility on that at this point in time.
Any sense that people are booking a little further ahead? They changed their behaviour when the war started, booked very last minute. Any sense that that's changing at all?
I think they're hoping to get a bargain at the last minute, but the reality is if you book close in, you're going to pay up. So my advice to everybody this morning is to book now as quickly as possible, or you're going to end up paying significantly higher fares closer in.
Lizzie Burden's in Downing Street. Any message for a new Prime Minister, Neil, in the UK?
I think he has a phenomenal opportunity to grow tourism and to grow jobs in the UK by getting rid of APD in the first week in office.
Well, that was Ryanair CFO Neil Sarahan speaking to Bloomberg's Anna Edwards earlier this morning. Now, Alibaba has released a preview version of its flagship model, which it describes as second only to Anthropic's Fable 5. Chinese startup Moonshot released its own powerful offering last week. Joining us now is Matt Bloxham, senior analyst with Bloomberg Intelligence. Matt, as always, thank you so much for joining us. So when you look at the latest AI model launches out of China, should we worry?
Yeah, I think we should. I mean, also it's been a big week or so for models out of China with that Kimi K3 from Moonshot and the Alibaba Qwen 3.8 Max, which are claiming to be, as good as pretty much everything except for Anthropic's Fable 5. That's still seen as a leader. But when you look at the independent analysis, the suggestions, at least initially, are that these are much far behind. And I think significantly, these models are open source, which means that a company can take those models and adjust the assumptions and parameters for their own needs, whereas Anthropic and OpenAI, they're closed models. So I think the combination of the performance, the cost, so they're anything up to 90% cheaper than the US models, and this customization opportunity is kind of really grabbing the attention of a lot more big international firms, not just the Chinese.
So what are the big implications for the US hyperscalers?
Yeah, so I think obviously this starts to kind of raise more questions about the kind of mid to long-term market share of the US models versus the Chinese. I think, potentially along the way, if we do see a lot more US and perhaps European companies start to use Chinese models, that may kind of raise more scrutiny from the US administration. Not impossible that at some point you might see controls on the use of Chinese software come into play the same way we've seen it with the technology, because this does threaten, given that the Chinese models are knocking on the door of Anthropic, they could easily overtake them in the next maybe kind of year or so, and that I think would be a really significant shift and would definitely kind of raise concerns in the US administration.
Matt, thank you so much, as ever, for joining us. Matt Bloxham there, senior analyst with Bloomberg Intelligence. Now, let's also check on some of the futures that we're looking at in the U.S. Look, Anthropic is, of course, one of the big ones we're watching. But overall, there's just a lot of earnings to get through, and that could give us an indication of some of these valuations. Alphabet kicking off reporting from AI hyperscalers for the second quarter on Wednesday. Up next, it's Bloomberg Brief, and this is Bloomberg.
Welcome to Bloomberg This Weekend. I'm David Gura.
I'm Lisa Mateo.
And I'm Christina Ruffini. We're tracking breaking news today from Wall Street to Washington.
Let's start overseas.
Bloomberg This Weekend, bringing a little Bloomberg into your weekend routine. Watch, listen, stream.
I think the productivity increase is not going to be marginal. I think it's going to be an order of magnitude. It's going to be significant. We're working on it internally, and we're really excited about it. I could see a world where an analyst who previously covered 20 stocks could cover 200 because They are maybe managing a fleet of agents that looks at all these stocks and tracks them. I could see a world where we're able to tackle a far greater number of top-of-funnel ideas and do a bit of work on them and more accurately pick what the best 15 to 20, best long ideas in a given year are. So I actually think it's going to reshape how we do things in the long term.
One of the things we struggle with is it's very easy to get siloed as an analyst, and these are the sectors I look at, these are the tools I rely on, these are the models I've built, and for us, we are spending more and more time as a research team collaborating around ideas with multiple people looking at sectors or trying to solve key questions or things in the market. And so the ability to have standard tools that we're all using to track lots of different things, to inform how the models are trained, will be super helpful, I think, in people being able to pick up someone else's work and say, I totally get this because it's in the same vocabulary that I do it myself.
Everything you need to get the edge at the end of the market day. Get ahead of tomorrow's trading with The Close. Weekdays on Bloomberg. Context changes everything.
It's 5 a.m. in New York City, 10 a.m. in London. Good morning. I'm Bonnie Quinn with your Bloomberg Brief. Let's get you set up for the day. The U.S. strikes Iran for a 9th day, targeting military sites and communications networks. Brent crude hovers around $90 a barrel. The UK gets another new leader. Andy Burnham set to become the next Prime Minister, the 7th in just over a decade. And the rout that sent chip stocks into a bear market takes a pause ahead of a string of big tech earnings this week. Let's get a check on markets around the world, though. We, of course, had a holiday in Korea on Friday and a holiday in Japan today. Winnie Su has the latest from Asia. Winnie.
Yeah, good morning, Bonnie. We are seeing Asian stocks under a bit of pressure today. As you just mentioned, Korea is back from a holiday on Friday, so a bit of a catch down there after that broad sell-off in tech stocks on Friday. So we are seeing Kospi here leading declines in Asia, while on the other hand, we are seeing the bright side is in the tech stocks in Hong Kong. So the real question investors are asking right now is whether these cheaper and more efficient Chinese AI models are raising some concerns when it comes to the massive AI spending from the U.S. hyperscalers ahead of their earnings. Now we flip the board and take a look at the tech stocks in China, because here we have Alibaba really driving gains after the company also previewed its Qwen model, and that is, according to the company, is just second to a Fable 5 model from Anthropic. So lots of excitement there. On the other hand, the losers really is in the likes of Zhipu and Minimax as they face further pressure and competition as they have to prove their advanced capabilities as well.
So much happening in Asia. Winnie, thank you so much. Now let's take a look at Europe. Now across most of Europe, we're actually fractionally higher. We're concentrating though on the UK, where the FTSE 100 is down about 0.4%. Mostly the backdrop is oil. Brent crude was around $90 a barrel until just a few minutes ago. It's off its highs. The Iranians did say they had received communication from the U.S. mediators, and that seems to have taken some of the sting out of this market. But basically, this is going to be setting the tone. You also have gilt yields just a little bit higher. Now, they've been rising in accordance with yields globally, right? But we also have Andy Burnham coming in as Prime Minister. Keir Starmer will be making his final speech at 10 Downing Street in just more than an hour's time. And we have sterling just a little bit higher now as we expect to hear a little bit more about what policies we're going to be getting from Andy Burnham and also his cabinet picks throughout the week. Here in the United States, we are seeing futures pointed higher as well after that massive tech sell-off in the last few sessions. We'll see if this continues to hold. Once again, you can only imagine that hostilities escalating in the Middle East will impact this market, but then we are into the bulk of earnings season now as well. So as you can see, NASDAQ 100 futures looking for that index to bounce back after those massive sell-offs. We're, though, within 2% of our high on the S&P 500, it should be pointed out. Let's take a look at yields. Markets still pricing in about 2 hikes by the first quarter of 2027, and any Fed speak that we've been hearing does underline that. Of course, all of this escalation and heightened oil prices, that's adding to inflation fears as well. So as you can see, we're tending higher, but really no movement. We're at 417 on the 2-year and still just under 508 on the 30-year yield here in the US. Let's get to some individual market movers now, and for that we'll go to London and Chloe Melly.
Good morning, Bonnie. We have the chip stocks back in the green this morning after the recent sell-off, with some modest gains across the board, and investors really looking towards those big tech earnings throughout this week to see where the AI trade goes next. And so we'll see if there's going to be more momentum or more volatility there. Moving on to Polypeptide, which is up this morning. This is a contract drug maker which is in the green after getting bought by Samsung Biologics in a $1.8 billion deal. This is something that will give Samsung Biologics more access to peptide manufacturing facilities, which is going to be very important as we're seeing this growing demand for peptide medicines. And finally, over in Europe, we have Ryanair falling this morning after a huge drop in profits due to weaker demand because of that geopolitical uncertainty and also those higher fuel costs. And that's really starting to weigh on the company. It doesn't bode well for the rest of that airline sector, which will be reporting also later on in the season.
All right, Chloe, thank you so much. Chloe Melly will be back a little bit later in the hour. Also coming up this hour, Mira Chandon of JP Morgan on the outlook for the dollar. Let's start with the rapid escalation in the war on Iran. The U.S. completing its 9th straight day of attacks on Iranian military sites. Iran says it has received some proposal from mediators. Bloomberg Middle East breaking news editor Patrick Sykes joins us now from Istanbul. This really helped the market. We came off $2 on the prompt month futures for Brent. Patrick, and I'm curious, what was in this proposal, or what exactly might mediators be saying that they haven't been saying up to now?
Yeah, this was a comment just over an hour ago from the foreign ministry spokesman in Tehran. He declined to go into any further detail about what those proposals were, but he said they were through some mediators. So we presume Pakistan, which has been the main mediator throughout, but could also include countries like Qatar, that's also had a role, maybe even Turkey. But it really remains to be seen what exactly that might include. The other bit of movement on the diplomatic front was the same official saying that Iran's interior ministry would be visiting Pakistan later today. He said it was about bilateral issues, but I think it's safe to assume that he's also going to be there conveying some kind of message about the state of play in the war and these potential proposals to find a way out of it.
And casualties are mounting, Patrick. We're at 17 U.S. casualties now, and we don't fully know how many in Iran, right? But that's also adding pressure on both sides.
Yeah, I think over 50 in Iran and over 500 injured as of the last count over the weekend. But yeah, those US casualties in particular over the weekend, I think, is what we saw prompting that escalation and the initial reaction in the oil price this morning before it came off after those diplomatic comments. But it has seemed like over the past couple of days, the strikes have been escalating. The range of targets has been widening. The US focused, of course, on Iran's southern coast along the Persian Gulf, saying that that's to limit Iran's ability to target shipping around the Strait of Hormuz, but also a lot of dual use and civilian infrastructure, roads, bridges, and that kind of thing. And yesterday we saw a still under construction nuclear power plant also being attacked. So for the first time in a while, we kind of dipped into the nuclear issue, you know, after so many months where all the attention has been focused on the Strait of Hormuz. I think that was a reminder that even if they can resolve that shipping, that seafaring issue, they're going to have an equally thorny issue around Iran's nuclear program to be negotiated afterwards.
Yeah, that bears noting. Patrick, thank you so much. Bloomberg's Patrick Sykes there from Istanbul. Andy Burnham set to become the UK's Prime Minister today. He promises to restore a sluggish economy and ensure political stability. Bloomberg's Lizzie Burden is outside 10 Downing Street. So what can we expect from his speech today, at least? Never mind what's in store for us this week, Lizzie.
Well, it's absolutely heaving here in Downing Street, Bonnie. We've got the world's press stacked on top of each other, waiting for the two speeches that we'll get, Starmer out and Burnham in. And it's really a remarkable journey for Burnham, from Mayor of Greater Manchester to Makerfield MP to Labour leader. No election. He's a takeover Prime Minister, the 11th of the past 19 to be like that. But he's got 90% of Labour MPs backing him, so a remarkably bloodless coup. In terms of the choreography of what we can expect later on today, well, in just a couple of hours or less, we'll see that podium. We'll have Starmer coming out with the podium. He'll head to Buckingham Palace to formally tender his resignation. King Charles will then ask Burnham to form a government. Burnham will come back here and make his speech setting out his priorities, and then the ministers will come filing up Downing Street as Burnham appoints his cabinet. So we'll know the new enemies, those who haven't got jobs, and hopefully we should get a bit more of an idea of the policy direction, but still a lot of questions for this new government, Bonnie.
Yeah, what will be in Andy Burnham's in-tray? I mean, he has to differentiate himself from Keir Starmer, but essentially, you know, he'll be trying to find some other ways to thread this needle, right, in the UK?
Exactly. He's got to deal with the same problems that Starmer faced, like reinvigorating productivity, getting on top of the welfare bill, controlling immigration to fend off the threat from Reform UK. But as you say, to justify the need for change, he also needs to differentiate himself from Keir Starmer. So he's made devolution a priority, given that he's the former mayor of Greater Manchester. He's also talked about new drilling for oil and gas in the North Sea, something President Trump's latched onto already, although he might be over-interpreting what Burnham would be doing. And he's taking public control of Thames Water. That's something that we're expecting to come up in the first few days. But we've reported that Treasury officials today are going to put on Burnham's desk a load of very bleak economic forecasts for lower growth, higher inflation, maybe oil prices going as high as $150 a barrel because of the escalation in the US-Iran war, and therefore higher interest rates. And on top of that, Burnham saying that he's going to stick to the fiscal rules and stick to the 2024 Labour manifesto, so not pulling on the three main levers of tax, income tax, VAT and payrolls. So he's in the same fiscal bind. He really is going to have to show with his new Chancellor, whoever that may be, how he's going to fund all of this new change when he's on a shoestring just like Starmer.
Exactly. Lizzie, thank you so much. Looking forward to your coverage. Bloomberg's Lizzie Burden there outside 10 Downing Street. And for more updates on the change in leadership in the UK, you can type in TLIV Go on your terminals. Now to all the top stories trending on the terminal this morning. Secretary of State Marco Rubio says Chinese President Xi Jinping remains on track to visit the US in September. Rubio's remarks come days after President Trump claimed China interfered with the 2020 US election. U.S. intelligence agencies have previously debunked those claims. Alibaba launched a preview version of its flagship Twen 3.8 Max model. It claims that the latest version is comparable to leading frontier AI models. And Spain wins the World Cup finals, defeating Lionel Messi's Argentina in a 1-0 extra-time win. Substitute Ferran Torres scored the lone goal after Spain dominated possession for most of the game. The match took place before 80,000 fans at New Jersey's MetLife Stadium. Coming up, Boeing CEO Kelly Ortberg talks about Trump's help with sales, plans to boost production, and the flying economy. This is Bloomberg.
From the beating heart of global finance, economics, and politics, and wherever newsmakers are moving markets, Bloomberg brings you conversations that allow for deep discussions and important insights. What do you think the future is for inflation? Is this new normal? Are markets too optimistic? How do you worry about the things that are outside your control? How does the current fighting completely stop? I'm Francine Lacqua, and this is The Pulse, every weekday only on Bloomberg.
Investors, top executives, global innovators. Join me for in-depth conversations with the biggest newsmakers on the day's top stories. Insight with Haslinda Anim, only on Bloomberg.
Bringing you the world's business and financial news whenever and wherever it happens. I'm Michael McKee at Mount Everest, and this is Bloomberg.
Know how the market day started.
Find out how it finishes.
Public markets to private markets.
From the micro to the macro.
Covering retail, entertainment, the business of sports.
The supply chains, trade policy, how it all is impacting the U.S. equity market as we drive to the closing bell at 4 p.m.
A holistic approach to covering financial markets.
If it matters to your life, we're covering it. I'm Katie Greifeld.
And I'm Romaine Bostic, and this is The Close.
Live every weekday.
Only on Bloomberg. Context changes everything.
Bloomberg Brief, I'm Vonnie Quinn in New York. Boeing is working through a supply bottleneck as it plans to ramp up production of its top jets, with hopes to make more than 40,000 planes in the next 20 years. Bloomberg's Guy Johnson spoke with Boeing CEO Kelly Ortberg at the Farnborough Air Show.
We're turning the corner. I tell my team we haven't quite finished turning the corner. We've got more work to do, but I am pleased with the progress so far. We're ramping up production across many of our product lines. Markets are very strong, so our backlog is very, very strong. So our story is really focusing on executing that backlog.
Okay. The administration, the White House, has given you massive support over the last 18 months. The President certainly had your back. Do you think the company would be where it is now, that kind of progress that you've made without that kind of support?
Well, I think the execution focus is really on us to go improve our overall performance, build trust with our stakeholders, restore trust with the regulator. And I think that's more what Boeing has done for themselves. The President has been very helpful in sales campaigns. Balancing trade, the best way to do that is buy a bunch of airplanes. And so we've been a beneficiary of that. He's been very helpful to the whole aerospace industry.
So you're in a good place right now.
Yes.
So what's now?
Well, we still have to ramp up higher. So we're at 47 a month now on the 737. We have aspirations to get to 63 a month rate. We're at 8 a month rate on the 787. We want to go to 10 later in the year and then higher next year. So we're investing in new capacity, new facilities so that we can continue this rate ramp. The backlog is there. The market is strong. So it's all about delivering more airplanes.
You say the backlog is there, the market is strong. You like the economy right now? The consumer looks good, particularly in the States. The consumer wants to fly. The airlines are certainly saying that. But you've got Brent this morning at $90 a barrel. You've got the ongoing conflict with Iran. Just give me your flavor of what you're seeing in front of you in terms of what the macro picture looks like.
It's a super resilient market, and while we always see perturbations here or there, regional perturbations, which we're seeing now, we forecast that the market's going to continue to be strong. Traffic continues to grow. We just came out with the new forecast for overall aircraft growth, and we see 44,000 airplanes in the next 20 years. So this isn't a market that moves quickly, because you have to make orders for aircraft well in advance, and we think that the demand is set for our aircraft going forward.
Boeing CEO Kelly Ortberg speaking with Bloomberg opening trade anchor Guy Johnson there. Joining us now from Farnborough is Bloomberg Space and Aviation Managing Editor Benedict Kamel. Lots of optimism there from Kelly Ortberg. Benny, is that the general sense around Farnborough, or does it really depend on who you're speaking with?
Well, it does seem that right now the mood is pretty upbeat here in Farnborough. We're getting the first orders probably later today, and there's really a feeling that this is a good market. The demand is strong. The U.S. consumer, we heard from Kelly Ortberg, is still flying. There's demand out there, but at the same time, there is that sense of what's going to happen to fuel prices, how will that shape the future of aviation. And if you talk to executives here, they will tell you, well, one way to counter that is to buy the latest kit, to buy the more fuel-efficient aircraft. So they have their sales pitch here, which in some ways is supported by what's going on with fuel. And the message that we're hearing from Airbus, the message that we're hearing from Boeing is buy the latest planes. Those are the fuel-efficient models, and that's what they're coming here for. It's a big commercial event. It's also a big sort of defense event, so we'll be hearing about that, the European rearmament efforts that are happening, and what role companies over here in Europe, but also US companies, are playing, how the partnership will play out going forward. So it's a mix of commercial, of politics, of defense playing out over the next couple of days.
Guy, put it to Kelly Ortberg that the White House has been giving Boeing massive support. Is there a sense that Boeing has a little bit of an unfair advantage with President Trump, basically, as Ortberg said, making its sales pitch for it?
Yes, I mean, that is certainly the sense that, and Trump himself has called himself the greatest salesman for Boeing. He says he's single-handedly managed to give the company about 1,000 aircraft sales over the last year and a half. Airbus have quietly lamented the fact that they do not have that kind of support. They don't have that kind of person over here in Europe who would have the same sort of power to get deals over the line. Nevertheless, you know, this is always the same tit for tat that we see at these air shows, and you will see Airbus pulling in their fair degree of sales here. You will see the leasing companies place orders. You will see some airlines placing orders. So overall, it usually balances. They balance each other out. We're looking at maybe 500 plus orders across the line, both for Boeing and for Airbus. But no doubt that Trump has played an important role and has really put his finger on the scales for Boeing.
Ortberg telling us that 47 a month now is the production level on the 737. They hope to get to 63. And on the 787, it's 8 now. They want to get to 10. Are those realistic figures, Benny?
Well, they're going slowly, and I think that's one of the lessons that the company has learned from the crises that they've been in over the last couple of years. Let's make sure that we are ready. Let's make sure the market is ready. Let's make sure that the finances are ready before we take that next step. And I think Ortberg is a more cautious, should we say, leader. He's not as aggressive, maybe as some people in the market would like, but he's as I said, learned that lesson. He's understanding that it's better to be slow and to be right than to rush into something and then things that start falling apart. So they are at 47 now for the 737 model. That's their best-selling plane. They are at 8 and want to go higher on the 787. And one plane that is still not in the market, but people are waiting for, is the next generation 777, which is their largest wide-body model. So questions will come up here. When will that go to the market? People hope that it'll be in the middle of next year, that customers will finally receive that plane. Lufthansa is the launch customer for that. So in some ways, the conversation is already turning to sort of what's next? What's next in terms of the next generation aircraft? We heard Kelly Ortberg speak about that a little bit with Guy Johnson this morning, saying it's probably going to be at the tail end of next decade. So these are investments that take a lot of money and a lot of time, because these planes tend to be in the market for decades, and you need to get them right.
Yes, and it's not just the plane makers at Farnborough, the airlines, and of course the airport operators are there as well. Can't wait to hear more. That's Bloomberg's Benedict Kamel at the Farnborough Air Show. And do tune in to Open Interest at 9:30 a.m. New York time for an interview with the Airbus CEO, Guillaume Faury. Coming up, a look at what's making headlines in your front page news. This is Bloomberg.
is back to take a look under the hood of the business of Formula One.
Hi, I'm here to see Pierre Gasly.
Welcome to my workplace.
Do you feel pressure?
Massive pressure.
Ferrari is the best example that we can be very proud of the past to look after the future.
From the iconic brand setting the standard.
Oh boy.
Can you imagine Ferrari without racing?
No, and I say no, no, no.
To the newcomers forging ahead.
I grew up my whole life racing against the boys.
This global phenomenon continues to chart new territory.
This was a tennis court 8 days ago.
I can't even believe that. And the speed of the business has never moved faster.
My career might stop, but I'll still be driving some.
Yeah. Probably very fast.
Yeah.
This is so exciting!
This season, we're along for the ride.
What is going to be the consequence for U.S. markets?
We are seeing modest gains across European equity markets.
Take a look at how we're faring when it comes to Asian markets.
The trading day is about to start.
And you're already looking for that edge.
The opening trade brings you everything you need to know as markets open across Europe.
Let's talk about the significant risk transfers to find space in their balance sheet.
Hedging some of that risk.
You could look at it the other way. Obviously, this stuff is risk-weighted.
I would much rather be long than be short.
We're in a kind of sweet spot.
Very, very strong alignment.
3 revolutions in one.
I'm Guy Johnson.
I'm Anna Edwards.
And I'm Tom McKenzie.
This is your opening trade.
Every trading day, only on Bloomberg.
I'm Bonnie Quinn in New York, and it's time now for your front page news. First up, the New York Times reporting President Trump says the luxury jet gifted to him by Qatar will be taken out of service to be so-called maxed out. The plane will get additional defensive capabilities to match the standards of older jets used for presidential travel. The president says he plans to take the jet with him for his presidential library when he leaves office. Next up, the Wall Street Journal reporting the FDA has walked back its finding that Taylor Farms was the source of the Cyclospora parasite. Taylor Farms says the FDA has apologized. The agency said it was yet to identify the presence of the parasite on lettuce samples from the company, despite recent tests. And the Financial Times reporting Morgan Stanley has emerged as Wall Street's chief architect of the financing structures underpinning the AI boom. The FT says the bank has devised new debt and equity models funneling tens of billions of dollars into the massive build-out of data centers. Coming up, we speak to Meera Chandan of JP Morgan on her US dollar outlook. This is Bloomberg.
Everybody has a moment where they put into action all they've practiced, where they step up to a challenge and either succeed or fail. But what are those moments for some of the world's most influential leaders?
It was a rough and tumble world, and I thought, okay, I can rise up, I can play this game, and I did play the game.
It was great, and it was depressing, and it was disappointing.
My chair at the time sat down with me and said, "Succession starts now."
I'm Francine Lacroix, an award-winning journalist. For the last 25 years, I've interviewed world leaders, bank bosses, even fashion icons. I'm often asking about the news of the moment. But I've always been curious, who are these people as leaders? Join me for the podcast version of Leaders with Francine Lacroix. I'll start your week with conversations that explore what drives the world's most influential people, how today's leaders got to where they are, where they're going next, and how they've transformed their organization in the process.
Make decisions. A poor decision is always better than no decision.
You have to have truth tellers around you, and you have to be willing to listen.
You don't want to be setting strategy in the middle of a transaction, that's for sure.
Do it for the right reasons. Don't do it because of FOMO.
We'll also learn lessons which we can apply to our work and daily lives. Tune into the podcast version of Leaders with Francine Lacroix. Listen and watch on Bloomberg Television or wherever you get your podcasts.
Good morning. This is Bloomberg Surveillance.
Welcome back to the opening trade.
It's Bloomberg Money.
This is the Asia Trade.
This is Wall Street Week. Welcome to Balance of Power.
You're watching Bloomberg Deals.
Welcome to Bloomberg This Weekend. This is Bloomberg Television. U.S. jobs numbers are released. Bloomberg has the report under surveillance with crucial data and expert analysis at terminal speed. Nobody covers Jobs Day like Bloomberg.
It's 5:30 a.m. in New York City, 10:30 a.m. in London. Good morning, I'm Bonnie Quinn with your Bloomberg Brief. Let's get you set up for the day. The U.S. strikes Iran for a 9th day, targeting military sites and communications networks. Brent crude now hovering around $88 a barrel. The UK getting another new leader. Andy Burnham set to become the next Prime Minister, the 7th in just over a decade. And the rout that sent chip stocks into a bear market takes a pause ahead of a big week for big tech earnings. Let's begin with oil, because a 9th straight day of strikes on targets in Iran, and just a few minutes ago, a little communication from Iran to the effect that the US and mediators had reached out is causing Brent to trade off its highs. Now, earlier it was trading above $90 a barrel. We're at 88 now, and it's actually turned lower. Just under 82 for WTI. But as you can see, European gas futures continue to clamber higher. We're approaching $60 now on European gas futures. And in terms of gasoline in the United States, we're back above $4 a gallon, and that has inflation concerns back at the ready. And for that, we'll look to yields. As we can see, yields have been climbing. Not too much movement today, but we are seeing the 2-year yield still around 4.18 and the 30-year yield still around 5.07. You saw their futures pointed higher as well after some big sell-offs in the tech sphere. We'll be keeping a very close eye on what's happening in Asia. Some more models coming out of China, and also, of course, a huge amount of earnings this week. All the big hyperscalers, bar Apple and Alphabet, they've been doing worse than the median stock in the S&P 500, even if they've been doing better than some of the Magnificent Seven. Let's get to some individual pre-market movers now with this Monday's fair. We have Chloe Melly in London.
Good morning, Bonnie. We are seeing some small gains across that chip sector this morning in pre-market trading after the recent sell-off in the sector. And investors are really going to be looking to those big tech earnings, starting with Alphabet on Wednesday, to see where the AI trade goes next and whether we'll see this renewed volatility in the industry, or if those chip stocks are going to be able to get that momentum again. So that's going to be the big question this week, but we are in the green this morning. Moving on to fashion, we've got Urban Outfitters up also in the green this morning. Oh, it's actually down now, but it was up earlier when it had Goldman Sachs analysts upgrading the stock, saying that there was going to be a brand recovery that was going to boost profitability. But now we are seeing some weakness in the shares. And finally, Ryanair is also in the red this morning after recording a big drop in profit over the fiscal first quarter that was due to some weaker demand because of geopolitical instability, and also those higher fuel costs because of disruption to oil flows. And so this is not boding very well for the rest of the aviation sector. And we are down more than 7% for Ryanair in London this morning.
All right, that's quite the drop. Chloe, thank you so much. Chloe Melly there. Mira Chandan of JP Morgan, optimistic on the US dollar's outlook despite geopolitical risk. She writes, quote, a bullish dollar, bullish carry portfolio orientation looks well placed to absorb another inflationary geopolitical shock. She's co-head of Global FX Strategy at JP Morgan and joins us now. Mira, thank you so much for joining. It does seem that the dollar generally strengthening has been, the trajectory of travel, and that pretty much everything is good for the US dollar right now, from, as you say, geopolitical risk to maybe market instability in Asia. What are the challenges that the dollar might have to meet in the coming months?
Thanks a lot, Bonnie, for having me on this morning. Look, the dollar is generally speaking very well placed for the current macro backdrop, one in which oil prices, energy prices are higher. Obviously, it's an oil exporter now, so it really puts it in much greater advantage relative to Asia and relative to Europe. In terms of challenges, the key issue, I think, they're more subtle issues than just energy prices. The first one is there's a lot that's been priced in for the Fed already. We've got about 40 basis points of hikes, roughly speaking, priced in for the Fed in the coming months. And if the U.S. data doesn't really corroborate that pricing and say the Fed is on hold for a long period of time, that could be a challenge and a headwind that the dollar might have to sort of contend with. I don't think that's necessarily something that's going to materialize, but obviously it is a data contingent story. And then the second thing is if energy prices do stabilize here or do start to come off, what we're starting to see is growth outside the U.S. is starting to pick up as well. So it's going to feel very much like the middle of the dollar smile dynamics all over again, particularly the Fed's not hiking. So our own bias, as you know, is more a bullish stance on the dollar, but it is contingent on the Fed delivering these more hawkish outcomes that the market is now pricing to.
Well, we're certainly continuing to get Fed speak that leans hawkish, right, Mira? But if that does change, or as you say, if the data comes in to not corroborate some of the fears that these Fed speakers have, would that cause an instant reaction in the US dollar, and would it be a material one?
Yeah, so look, I wouldn't understate the Fed hawkishness, because if you look at our Hawk-Tough score index, we have an NLP-based pricing that ranks these Fed speeches. The hawkishness that we've seen is probably the most pronounced since 2022. So this is a big deal, and we're putting a lot of weight on that. But if we say, for example, get another soft CPI print, or if the core PCE doesn't quite, is not quite as firm as we thought it would be, then that could, take out about 15-20 basis points from the Fed terminal rate, which is worth about a couple % in the dollar. I don't think these are large moves in the grand scheme of things, but considering the fact that the dollar has been pretty much in a range for multiple quarters now, I think tells you that you're going to move potentially to the lower end of the range in case the U.S. data doesn't corroborate.
You mentioned that the dollar is well placed versus the energy importing low yielders, so particularly the euro, the Swiss franc, and some of the Asian currencies. Is that something that's going to continue on even if we see some kind of resolution to the Iran problem within the next few months?
Yeah, absolutely. I mean, one part of the call, I think, here is how quickly does energy and oil prices how much do they really mean revert? How much does the supply come back online? And I think the view out here is, generally speaking, even if we do get the Strait opening up, and as we've seen, that's not really a straight line, but even if we do see that opening up, oil prices can be quite sticky because it's going to take time for inventory builds, both on the gas and the oil prices front. So I think it's going to be steady pressure coming, pressure coming off, but it's not going to be really a collapse in the dollar here. So to me, the big game change, it's easy to sort of get caught up in the minutiae, but the big game changer here relative to say 6 months ago is, back then we were thinking the Fed's either going to be on hold or they're potentially cutting rates. And now with the way that the U.S. data has improved, with the change in the Fed's hawkishness, the point we're making is that it's asymmetric on the upside because the Fed could be either on hold or could be hiking rates, which gives the dollar itself a very different asymmetry around it.
Mira, what did you think when you saw the 30-year yield climb to 5.07? I mean, in the grand scheme of things, I guess it's not that massive, right? But it is still relative to where we've been trading recently, quite the blowout for the 30-year, the longer end of the yield curve. How much is that going to impact dollar dynamics, not in the immediate term, but more intermediate and far out term?
Look, the long end yields do matter. And generally speaking, if you look at measures of term premium, if the curve is steepening too much, yield curve steepening too much, and it's not explained by what the central bank is doing, that usually carries with it a discount on the currency. So usually all else equal would be a dollar weaker story. And you're seeing that in places like Japan, for example, where the currency has been weakening, or sterling from time to time, where you've seen the fiscal premium come back in. In the case of the dollar this time around, it's less of a concern because the Fed is actually responding in a very hawkish way. And so when you do start to see long end yields go up, that could be related to fiscal or not, but it's also in large part explained by what is going on with the Fed repricing and the Fed hawkishness. So I think that part of the equation, the fact that the Fed is hawkish, is really what should be more dollar supportive. And that's what we're focusing on rather than just what's going on with long end yields. That's not the case for Japan and may not be the case for UK later on in the year.
I was just going to ask, Mira, obviously dollar dynamics are, what's moving a lot of things right now, but there are still, individual factors in the UK and in Japan in particular that might impact those currencies. So what's more important to sterling, the new Andy Burnham policies or the Bank of England and what it does? And also on Japan, do we see intervention? Do we see the need for intervention anytime soon again?
Sure. So sterling, big day, obviously Andy Burnham coming in as PM today. There's been a lot of noise around how the fiscal situation in the UK is progressively going to worsen, how that's going to be negative for sterling. However, our view has been that sterling is going to be in a bit of a policy void, if you will, for a few months, at least till you get up to the budget in autumn. But that's not good. Details won't be announced till October, November. And what that essentially means is that sterling in the interim is going to trade off of what is more tangible, i.e. what's going on with growth right now. How is the BOE going to respond? And what we're seeing there is, of course, growth is surprising to the upside. It's tracking better than the BOE's forecast, than the consensus forecast. Sterling within the DM space is a high yielder. So I think those combination of things has kept sterling fairly resilient. We've been more bullish on the sterling side. I think it's been a great out of consensus call for us. But I don't think that changes anytime soon, even though the longer term prospects are obviously quite concerning. On yen, intervention is probably not something that's going to turn the tide on yen. I think the Japanese authorities have learned that, particularly if the Fed is potentially hiking, and it's a broader dollar environment. It's not going to turn it. So I think they're going to have to look at some other policies, and they are looking at things like the pension fund, etc., to try to stem currency.
Exactly. We've had a flurry of announcements, or at least encouragements out of Japan. Mira, thank you so much for joining us this morning. Wonderful stuff with Mira Chandon there of JP Morgan. Now to other top stories trending on the terminal this morning. Andy Burnham set to become the UK's 7th Prime Minister since Brexit in 2016. Burnham make affordability a key campaign issue as he inherits a struggling economy. He vows to make intangible and tangible improvements to everyday life. Hong Kong Stock Exchange is considering extending equity trading hours to align with most global markets. It's mulling multiple options, including scrapping the hour-long lunch break and adding an after-hour session to catch early U.S. activity. Major brokers and trading firms have been notified. Adidas sold 4 times as many jerseys and twice as many soccer balls as they did at the last World Cup. In an email to Bloomberg, Adidas said they expect event-related sales to reach around €1.5 billion. 14 teams wore Adidas gear, including both teams in the World Cup finals. This is Bloomberg.
Technology is embedded in every aspect of our lives, and that revolution is playing out in real time. From finance to defense tech, AI to entertainment, from the road to the stars. Bloomberg is bringing you the stories of companies and people that are pushing tech to new frontiers and the politics reshaping global tech markets. I'm Ed Ludlow, live in San Francisco, and this is Bloomberg Tech.
Every weekday, only on Bloomberg Television.
anything we do in Africa is going to be more risky than the U.S. I think the approach we want to take is how are we being compensated for that risk? And one of those is obviously going to be a valuation question. In our minds, valuation was a lot more attractive in Africa, even if we adjust for some of those Africa risks that a lot of Western investors see. So yes, in a lot of ways, you take some of those models that, as I said, might be more asset medium or asset heavy. There might be some more inherent risks. However, if we're saying we're adding some risk because of that kind of model, but we're now solving a core problem as opposed to maybe a nice to have solution in Africa, that might actually offset it. Where if you're solving something that people really absolutely need and can't live without, in a way that then that's a lot less risky. So again, we'd encourage investors to have a less binary view. In other words, the US isn't risky, Africa is risky. That's going to lead to a lot of complications down the road.
At 9:30 a.m., the market tells you what it's really thinking.
We beat the drum to the opening bell.
With deep analysis of the forces driving the price action.
Focusing investors on what really matters.
Where the money flows, which markets are changing.
Conversations with players shaping the narrative.
Innovative growth companies gravitate to NASDAQ.
It's not just like, let's buy the Mag 7 or AI.
That's a really compelling story.
This is where your trading day begins.
And this is Open Interest.
Only on Bloomberg.
This is Bloomberg Brief. I'm Bonnie Quinn in New York. The U.S. completed a 9th day of strikes that President Trump said were, quote, in honor of 3 American service members who were killed in Iranian strikes. Bloomberg's Kasia Klimashinska joins us now from Washington. Trump has been pretty silent, Kasia, on Iran and on his strategy. The death toll now, though, hitting 17. He'll need to make some public comments at some point, won't he?
President Trump indeed stayed relatively quiet over the weekend, especially on Saturday. On Sunday, he mostly focused on celebrating the World Cup, and he made a variety of comments, including, for example, about affordability and praising one of the grocery chains here in the U.S. for lowering prices. But he also did address this loss of life. He said that those Americans who lost their life fighting are patriots and that they died so that Iran doesn't have a nuclear weapon. The U.S. Central Command was posting over the weekend on X and said that it continues attacks against Iran, mainly to make sure that the country is not able to target shipping in the Strait of Hormuz, but also to destroy the forces that targeted the American lives. So as you mentioned, there was escalation of this tit for tat over the weekend, but we also just got some news that Iran has received some signals of mediation. Those 2 mediators, of course, being mainly Pakistan and Qatar. So we'll see where this leads. But for now, the 2 sides insist on their respective point of view. Iran wants to make sure that it is able to control the Strait of Hormuz, whereas the U.S. wants some ships to continue to go through.
And just on the domestic front, Troy Jackson seems to be on track to secure Graham Plattner's Democratic U.S. Senate nomination spot. What's next?
So you are taking me to the midterms here in November when Democrats want to take control of at least one of the chambers, perhaps the Senate, and that's where Maine looks a little bit vulnerable. Republicans have this senator there, Susan Collins, who has been attacked in Maine for aligning with President Trump. Several of Trump's policies are not that popular in Maine, so Democrats are trying to take that spot. But the initial candidate that looked strong there obviously went down after facing sexual assault accusations from ex-girlfriend that was Graham Plattner, that is no longer a candidate. So Democrats are looking for a new one, and it could be Troy Jackson, who is also a very interesting personality. He used to be a Republican, but he switched to being a progressive.
All right, Kasia with the roundup from D.C. this Monday. That's Bloomberg's Kasia Klimashinska. Brent crude off its highs now after Iran's foreign minister said it had received proposals from mediators. Let's bring in Bloomberg's Owner and in Dubai. We don't know what these proposals are, Owner, but I am curious about the Strait of Hormuz and the situation there. Is there any traffic going through?
Well, Hormuz Strait, as of this morning, remains at a standstill, Voni. There is very little traffic, if at all, that is currently trackable. We know that at least one bulk carrier did make an attempt to cross the strait earlier this morning, as well as a liquefied petroleum gas tanker that we know is part of the so-called dark fleet that's been used by Iran for its exports. But otherwise, traffic through Hormuz is at a standstill, and we have seen many attacks on a number of commercial ships over the weekend, including on Sunday. And lately, in the latest development, we have seen a statement from the UK Navy that said another vessel, which it didn't say where it was coming from, was on fire after being hit by an unknown projectile. We know that ship is still on fire and it's adrift. The fire has yet to be extinguished. But overall, I think these attacks, including this one, underlines the danger facing the ships that are trying to make a passage through the Strait of Hormuz without the approval of or in coordination of Tehran.
Yeah, if they weren't moving before, certainly these strikes will be off-putting now. Owner, thank you so much. That's Bloomberg's owner aunt in Dubai. Now to the latest on the AI trade. Alibaba shares popping after it launched a preview version of its latest model, coming as China catches up to the US in the AI race, with Moonshot AI seen as a serious competitor to OpenAI and Anthropic. With us now is Bloomberg senior strategist Neil Campling. So what differentiates all these models, Neil? We have a new one now from Alibaba. It's an iteration of its previous trend model, and obviously we had the news just before the weekend about Kimi K3.
We did indeed. I think what to look at the comparisons of these. Now, clearly, there's been a wake-up call to some of the US frontier models by China catching up quickly. The Moonshot Kimi 3 has got something called we look at these called parameters, these parameter models. Now, the one announced last Friday was 2.8 trillion parameters model. The one from Alibaba, previewed over the weekend, is 2.4 trillion parameter model. Now, we haven't got their benchmark test yet. To give you a comparison, though, Claude Mythos is still way in front. It's believed to have about 10 trillion parameter models. So it's still ahead, but I think it's still just the fact that some of these Chinese models are coming out with very, very quick advances, which is surprising many people, I think, in space.
As I understand it, though, they might be using compute resources more efficiently, but they certainly need lots and lots of memory.
Yeah, it's a really, really great point. So with the 2.8 trillion that's used in the Kimi K3, it still needs 1.4 terabytes of memory, even when it's compressed. So still very memory intensive. And of course, we know that memory supply is still restricted for quite some time until the capex can be unleashed. So actually, there's a chance that that some of these models, being very memory heavy, may stop some of the advances from the Chinese models, which again is why we need some of these benchmark testing to be released. And we should have more data from that from Moonshot and from Alibaba in the days ahead.
Yes, and we have to watch whether the US and China restrict technologies for each other, et cetera, lots to come. But Neil, thank you so much for bringing us up to speed on everything that's AI related. I do want to ask you about the IPO, though, the Moonshot IPO. So it is, again, an AI story, but it's also a capital market story. Why is Moonshot planning an IPO within the next 6 months?
I think it's partly because there's appetite for these models and investor demand, so you can come to the market quicker. Also, it's about the need for capital, clearly, because these are very capital-intensive businesses. And in fact, Moonshot over the weekend said they had to restrict some access because they had run out of compute, effectively. Now, just to give you a quick comparison, the latest stats are that Moonshot's at a $300 million annual revenue run rate. Anthropic is on an annual revenue run rate of $47 billion, just leaps ahead. Now, both these companies launched their first AI models in 2023. So that's just, Moonshot's doing extremely well, but Anthropic, in terms of actual economics, are way ahead of where Moonshot are today.
Yeah, so any proceeds from an IPO would definitely help. Neil, thank you so much. Bloomberg Senior Strategist Neil Camping there. Coming up, we're going to get you set up for your trading week. This is Bloomberg.
To Bloomberg Business Week Daily.
We got to talk crypto.
From the magazine that helps global leaders stay ahead.
What's the conversation around your company?
Bringing you insight on the people, companies, and trends shaping today's complex economy.
Planning very big things.
A new level of premium.
Plus global business, finance, and tech news as it happens.
The floodgates of innovation are going to open up.
You can't fake passion. You either are or you aren't.
Bloomberg Business Week Daily, only on Bloomberg.
Bringing you the latest business news wherever and whenever it happens. I'm Scarlett Fu, reporting from America's biggest military shipyard. This is Bloomberg.
When news breaks,
A redhead across the Bloomberg terminal.
Bloomberg has you covered.
Trump's global tariffs are struck down by the U.S. Supreme Court.
For all the context and clarity you need.
There's going to be now tons of tariff headlines until midterm elections.
Hear it first on Bloomberg.
Every weekday, Bloomberg puts the spotlight on a different aspect of global finance. Flows, funds, and the forces shaping markets on ETF IQ. The future of money with Bloomberg Crypto. The players behind major transactions on Bloomberg Deals. Rates, risk, and the cost of capital on Bloomberg Real Yield. And personal finance, retirement, and wealth management on Bloomberg Money. A different topic every weekday, only on Bloomberg Television.
Join me each week on Wall Street Week for stories of capitalism from business, markets, economics, tech, and climate.
More than what you need to know, it's what you need to think about.
This is Bloomberg Brief. I'm Vonnie Quinn in New York. Now a look at what's ahead this week. Well, we're going to get lots of big tech earnings. Alphabet, Tesla report on Wednesday, and Intel is out on Thursday. We're also going to get the ECB's latest rate decision on Thursday. And then data-wise, on Friday, we get new home sales numbers for June. Huge earnings week, though, so lots more earnings on deck as well this week, including AMC and Domino's right before the opening bell today. So here is your macro picture going into a fresh week. This is the oil picture. An hour ago, this would have been a lot higher. We did have communication from Iran, though, to say that mediators had been in touch, and that seems to have taken the edge off oil. Brent had been trading above $90. And by the way, in the U.S. now, gasoline is back above $4 a gallon. And as you can see, European gas futures are feeling this escalation as well. In terms of what's going on equities-wise, we obviously had that big sell-off in the chip stocks, memory stocks last week. NASDAQ 100 futures are pointing to what could be a bounce back. We're seeing the U.S. dollar index not do much of anything. Sterling a little stronger before Keir Starmer leaves his speech in about 15 minutes.
mind being called an ideological lunatic or a bunch of left-wing nut jobs?
You know, I've been called worse things than that.
You'd think she owned the place.
23andMe, I think, is so incredibly valuable. We're coming back.
It had that kind of detective story feel to it. You know, when you're hot on the trail of something, you know that it's very exciting.
What magazines were you reading as a kid?
I don't think I was reading magazines until I was in them.
You are on the cover of all of these.
Oh, and there's many, many more, but we just don't have time.
Why should people trust you?
I don't think anybody should trust any company or entity completely with any of this.
It's very uncomfortable. Artificial intelligence is this force that is far bigger than we are.
I want to build better businesses around these brands.
The shock will never wear off.
So you're a brother and sister running one of the most powerful companies in the world. When you argue, who wins?
No one. The way I could see AI being banned or blocked is if something really went wrong. And if something really went wrong, then maybe it deserves to be.
So is it Paradise Ahead or Gattaca?
Maybe somewhere in the middle.
We're at the epicenter of a global realignment on a scale not seen for decades. At the intersection between markets, economics, and geopolitics, a forum for sophisticated conversation. This is Bloomberg Surveillance.
Bringing you up to them in the news whenever and wherever it happens. I'm Chevrian in Seoul, and this is Bloomberg.
Make no mistake, right now within tech are on AI and everything within that ecosystem.
The only thing more impressive than the performance of semiconductors has been that volatility.
Hyperscalers are punching above their weight here.
You are likely to see some unwind in momentum.
The choice is you stay involved or you fall behind.
This is Bloomberg Surveillance with Jonathan Farrow, Lisa Abramowitz, and Anne-Marie Hordern.
Live from New York City this morning. Good morning, good morning. For our audience worldwide, Bloomberg Surveillance starts right now. Coming into Monday, oil pairing gains. The Iranians suggesting they're receiving proposals from mediators as the United States is exchanging strikes for 9 consecutive days, leaving Brent close to 90, pushing gasoline prices through $4 a gallon for the first time in a month.
There's a tug of war right now going on in markets from this feeling that we had last week of disinflation, of the worst ramifications from the Middle East coming to the fore versus the reality on the ground, which is escalating rapidly in a sense that maybe there isn't an off-ramp. Today's news really does seem to fly against some of what we heard over the weekend with Iran. Nonetheless, there are no tankers getting through the Strait of Hormuz, or almost nothing. So the reality on the ground is pressing toward something that looks like a more significant escalation.
What we've seen over the weekend is definitely a heightened escalation between these two. The United States last night as of 10 p.m., according to CENTCOM, went through with a 9th straight day of airstrikes. New York Times this morning is reporting that they're going to be sending F-16 fighter jets from Germany and F-35 jets from Britain. You can see that this continues to escalate. And what did we hear from Jeff Curry last week? You have to look at not just what's going on in the oil prices, but Jonathan, as you said, it's the product. And this morning, $4 a gallon for gasoline across the United States is a big signal.
Check out the bond market too this morning. Check out 2s, 10s and 30s. We'll start at the very front end of the curve. 2's still around 420. Can't get away from 420, even with softer CPI, softer PPI. Entering the blackout period for the Federal Reserve's next meeting, that's about 10 days away, comfortably above their policy rate. This debate is not over. The Cleveland Fed president, Beth Hammett, going into the weekend with a pretty punchy statement.
Yeah, and we've heard this from others as well, this concept that right now inflation is widening, broadening beyond just oil. They're worried about AI. They're worried about not getting inflation under control for more than 5 years. This is the reason why you have this tug of war, because on the flip side, you've seen the disinflation come through with the weakest CPI print in about 6 years coming last week, at the same time that this fight is not over. And we've heard that from Kevin Warsh as well. The hawks are still hawking on the Fed committee at the same time that Kevin Warsh isn't tipping his hat. Now we've got the ECB squarely on deck on Thursday, Do they lean into the inflation narrative and the fight inflation narrative, or do they lean into, we can wait just a little bit, maybe this is just sort of transitory?
Brent crude this morning, 88, WTI around 82. Coming up this hour, we'll catch up with Lori Calvasino of RBC on why she's upgrading tech, Steve Cook of the Council on Foreign Relations as US-Iran attacks intensify, and we'll touch base with Kay Herr of JP Morgan Asset Management as hyperscaler debt weighs on portfolios. We begin this hour with stocks higher following the worst week in nearly a month. Lori Calvasino of RBC upgrading tech to overweight, writing, we still see a path higher for US equities in the year ahead, admittedly with some twists and turns. Very likely. Lori joins us now for more. Lori, welcome to the program. It's good to catch up with you. Tech had a difficult week last week. Chips entering bear market territory. Why the upgrade into this week?
So look, we upgraded the sector last week, and we had been hearing for quite some time back in May, frankly, that investors were looking to take some chips off the table with this trade. And essentially, what we've been hearing in recent weeks is that people think that there's a bit of profit taking, momentum unwind, but that things are really more technical than fundamental in nature. And those are the kind of environments we want to step into and look for opportunities. If you look on the other side of technology, we're actually seeing something interesting on software as well, which is that valuations, which when we look across the Russell 3000 had gotten back to tech bubble highs back around COVID. They've been compressing ever since. And we're now starting to see historically low valuations on the software side. So it's not just a question of kind of looking at semis and saying, is there a potential to step in here after there's been too much pain? But it's looking at the other side of the trade as well. Jonathan, I will say the other thing, we made a number of different upgrades last week. And one of the ones that really, frankly, caught more investor attention was some commentary we made on industrials. We didn't actually make a move on it. We said we had considered it for a downgrade to underweight simply because of how expensive those valuations continue to look. And if you look at our valuation model, the tech sector has kind of moved to the middle of the grid in the S&P 500, basically around average if you look at a median multiple on both an absolute and relative basis. But industrials continues to stick out like a sore thumb. It has also benefited from the AI trade, but it is one that still has, despite some fantastic fundamentals, really does have the biggest valuation problem in the market right now.
Lori, to your point, we're learning a lot about price and positioning, given the recent price action over the last week. One of the upgrades, if we can bring up that full screen again, that graphic, the other upgrade that caught my eye is your outlook on consumer discretionary. Small upgrade there as well, Lori. What did we hear from the banks last week that really validates this move into consumer discretionary?
So look, I think we continue to hear from the financials that the consumer is still in good shape. And a number of them made a point of saying that they are seeing some resilience across cohorts. Now, maybe some of these banks, don't go to the lowest cohort that, say, shows up into the Michigan survey. But they did talk about how that strength was fairly broad-based across the statistics and across the cohorts. I think at the end of the day, we are going to get more granularity from the consumer companies in the days ahead, and we'll probably hear more things about, kind of pickiness and value consciousness and choicefulness and those sorts of things. But in aggregate, what the banks are telling us is that both their corporates and their consumer customers are still in good shape. And on the upgrade, Jonathan, we were basically sitting at an underweight, and we'd been there for quite some time. And we found that in recent months, as investors were, kind of contemplating other alternatives in the market to tech, they were kind of poking at us a little bit on that underweight. And they weren't telling me they were bullish, but they were curious and they were interested in talking about it. We did a survey of our analysts recently, and across the globe, not just in the U.S., negative views on the consumer sectors were pretty deep and rampant. And we looked at things like the UMich survey, which reported again on Friday, with inflections starting to occur. And we said, are there still pressures in the market? Of course. But is this an area we want to be underweight? It felt like a pain trade was starting to set up there, so we took that off and moved back to neutral.
Lori, can you have a stronger consumer without inflation? And this really goes to the core of your call, your 8150 call for the year. And because of the bond stock correlation that started to reassert itself, can you have that continue with consumer discretionary starting to outperform?
Look, I think that the consumer, at the end of the day, it's an important part of the economy. I think that the consumer is displaying real resiliency. And that word resiliency is something that we also hear from corporate America as well on the C-suite. And I think that resiliency is what has to continue to help us get to the 8150. That's a 12-month target. It's not a year-end target. It's not a move that we have expected to be linear. We do expect some bumps and bruises along the way, some recalibrations. But at the end of the day, we do think that, sort of the consumer hanging in there is part of that call.
With respect to inflation, though, and this is something John was talking about, Beth Hammack of the Cleveland Federal Reserve on Friday saying for the first time ever, she's hearing from companies saying you need to take action on inflation. At what point are we going to start to see that bleed into some of the valuations if the Fed seems more live, it seems more ready to take action?
Well, look, I think on inflation, there are a few different fronts you can attack this on. If you look at the consumer companies, we have seen some retracement on prices. I think the consumer staple companies in particular, they've just been jamming price down the throats of the consumer for years and finally seem to have gotten the message they have to back off. And a lot of that has come from consumer behavior. We have seen in prior reporting seasons that companies have talked about the adjustments to kind of basket size and that sort of thing that consumers have been making. I think on the corporate side, I'm really keen to see what the industrials have to say, because they have been a sector that has just pushed through price, just pushed it through consistently, not seeing any pushback. I don't necessarily expect anything to change there, but we are going to be monitoring that tone very, very closely. And I'll tell you, Lisa, as a forecaster and as a consumer of inflation forecasts in the year ahead, not someone who actually has to put pen to paper on those, I think that the street still has some work to do this summer in terms of figuring out exactly where those forecasts are headed. Because of base effects, for example, the 2Q numbers look like they're coming down pretty precipitously. But of course, we've still got gas price pressures here, and we've still got, sort of the everyday price pressures that people are living through. So I think it's sort of interesting, as a forecaster, when I plug those things into my model to see how they play through. But I think the street's still doing some hard thinking about where those are headed.
Lori, as you mentioned, gas prices getting a little bit more challenging this morning. We've crossed $4 a gallon across the continental United States. Is there a number that would upend your model in terms of your price target if gas continuously goes higher?
So gas prices are not a direct input into our modeling. Where our model for our 8150 comes from, it's 5 different models. There's a valuation and earnings model that keeps sitting sort of right in the middle that helps determine, kind of where things go. And there is an inflation input into that, which is a headline inflation number. So that's one way it could manifest. But I would say in terms of gas prices, we'd really have to sort of look through. We've got 3% inflation baked in, which is pretty well ahead of both our economists and the consensus estimates right now. The other sort of read through is on the GDP side, right? So if gas prices start to impinge on GDP forecasts, which have been moving up, Anne-Marie, like we were sort of sitting at this 2% for consensus, slightly below 2% for early next year for RBC's economists, and they've both kind of moved up to this low 2% range. But if we were to see sort of gas prices, sort of take a bite out of the economic outlook, it wouldn't have to be a massive one, but if it pushed us back down a bit, I think that's something that could impact our forecast as well.
It's nice to see a normal-sized IPO coming through this morning as well. The same thing, Lisa. A normal-sized equity capital raise here. Yeah. Just a little north of $1 billion.
Jersey Mike's sub seeks to raise, again, we're not talking about $100 billion. We're not talking about $1 trillion valuation. So it's kind of nice if you want a sub, you can know that it's actually a normal company that's coming to market to raise money. I also love that they've been doing well. They've been advertising. They have very good sandwiches. Like to see this.
Okay, good. An endorsement.
Yeah.
Laurie, just to weigh in on this, and not on the quality of the sandwiches over at Jersey Mike's, but the size of the supply that we're seeing, Alphabet, a record IPO from SpaceX, SK Hynix as well. This is small fry, considering. Laurie, I just want your opinion on supply and how that might constrain the outlook for equities from here and through the summer.
So look, I would say these issues come up from time to time in our conversations, but the reality is, we think about sort of the opportunity set that small cap investors in particular have. I'm not hearing as much, frankly, about the IPO market. I'm hearing more about the potential for M&A to start to broaden out. That's where there seems to be some excitement, in sort of that smaller end of the market cap spectrum. I think also, when we talk about these issues, we sort of think about froth in the general market. I see very mixed things on indicators across the board. If you look at the consumer conference board data on stock market optimism, things look pretty extended, right? The retail investor looks pretty euphoric on equities going forward. But when we look at things like AAII, sentiment's much more subdued. When we look at things like CFTC, positioning's not all that full. So those are how, sort of sentiment issues, kind of deal activity. Those are kinds of the issues we're hearing about. But it's really, frankly, more on the M&A side and kind of more of this muddled picture on the sentiment side. I don't really have a strong view on the supply dynamics, to be honest.
Laurie, appreciate it. Thank you. Laurie Cavacina there of RBC. We'll talk about these supply dynamics with regards to the debt market a little bit later in the program. Equity futures this morning doing okay, up by a third of 1%. 0.5% on the S&P, following the biggest one-day loss we've seen so far this month in Friday's session. A small bounce. Let's give you an update on news worldwide this morning with your Bloomberg brief. Vonnie Quinn has more. Hey, Vonnie.
Good morning, John. U.S. Central Command saying it completed a 9th straight day of attacks on Iran, targeting the country's command centers, its missile and drone launch sites, and its communications network. Iranian strikes over the weekend killing 2 U.S. service members, bringing the U.S. death toll now to 17 since the war began. The Trump administration is considering a new independent regulator to oversee AI safety. Sources telling us here at Bloomberg the proposal, developed with input from Treasury Secretary Scott Bessent, would create an agency that reports to the SEC. Spain winning the FIFA World Cup, defeating Lionel Messi's Argentina 1-0 in extra time. Substitute Ferran Torres scoring the lone goal of the game. President Donald Trump and FIFA President Gianni Infantino presenting the trophy to the Spanish team. That's your Bloomberg brief. John.
Vonnie, thank you. Can we have a FIFA-free zone when we talk about the World Cup?
I think that would be advisable.
When I was a kid, we'd just talk about the World Cup. We would never even talk about the governing body. You just talk about the World Cup. Now it's the FIFA World Cup.
I know.
It's Gianni Infantino every time you look up at the screen.
You know, I was actually at a bar watching one of the games, and there were French fans, there were Spanish fans, they were cheering, they were so excited, they were chanting, nice friendly rivalry, and every time the president of FIFA came up on the screen, everyone, it united everybody.
It's bringing fans together.
It brought fans together, everybody booed. No one Every single boo.
No one
every
likes
single
FIFA.
person.
Redefining dominance yesterday in that game. Just totally redefining dominance. Dominant on almost every metric with the exception of yellow cards and red cards.
You mean no shots on goal by the Argentinian team? Look, it was interesting to see that the loser bowl between the third and fourth games was actually much more exciting than the actual World Cup.
I find that game so ridiculous.
You know, you can find it ridiculous, but it was actually a really exciting one to watch.
Yeah, okay. We'll have more on the World Cup for you later this hour. I agree, it was exciting.
Yeah, I mean, it might be irrelevant, but whatever. Okay, but it was still.
The lack of intensity and effort from.
You mean it felt like a high school game?
For the first half. Right. Okay, let's talk about some serious issues. Up next on the program, the struggle for the straight.
We hit them very hard again tonight. This is a far bigger job that we're doing. We were doing a little job of stopping them from having a certain capability. Now we're just ending it. We control the straight. They don't control anything.
Up next, we'll catch up with Stephen Kirk of the Council on Foreign Relations, live from New York City this morning. Good morning.
Politics to the world of business. Joe Matthew and Kaylee Lines deliver news, insight, and analysis live 2 times a day, every trading day. Balance of Power at 1 and 5 Eastern, only on Bloomberg. The countdown is on. Everything you need to get the edge at the end of the market day. Get ahead of tomorrow's trading with The Close. Weekdays on Bloomberg. Context changes everything.
It's the handover of power in the United Kingdom from Sir Keir Starmer to the former Mayor of Manchester, Andy Burnham, happening right now. The outgoing Prime Minister Keir Starmer addressing the nation from number 10 Downing Street. By now, you will be very, very familiar with the proceedings because we're about to have the 7th Prime Minister in about a decade. These proceedings are becoming routine.
Yeah, which is part of the problem and start of what Andy Burnham has to start to remedy. How does he give confidence that he can rule for more than 6 months, 12 months, or, God forbid, a Liz Truss kind of 3-day situation at a time when there's huge division, and frankly, he's trying to shore up support for being pro-business, despite some of his rhetoric over the past couple of months and years.
In a few moments' time, Sir Keir Starmer will leave number 10 Downing Street and head to the King to offer his resignation. Then in the next few hours or so, we'll hear from Andy Burnham from number 10 Downing Street before he takes over as Prime Minister. Andy Burnham has said, make no mistake, I will be a pro-business leader of the Labour Party. The early outlook will be defined by whoever he selects as the Chancellor of the Exchequer. We should find that out too in the next few hours. Let's take a look at the price action. Equity futures this morning on the S&P firmer by 0.25%. On the Nasdaq 100 up by 0.6. Last week shaky. Chip stocks entering bear market territory. Some weakness out there in this equity market. Look at the bulls becoming slightly less bullish. Max Kettner of HSBC. Typically I'd get a note from Max and it would read as follows. Max overweight.
Yeah.
These are all the reasons I like risk, and these are all the reasons you shouldn't care about the risk. Second to last paragraph in this note, he gets very close to talking about a reduction of risk.
Yeah, he sees some proper emerging warning signs at this point, saying in light of this broadening, our sentiment and positioning framework has also started to flash some warning signs, saying it may well be time to reduce risk in portfolios after the peak earnings season in 2 weeks. So he's still saying not yet, but after the peak earnings season in the next 2 weeks. And talking about Kimi K3, what we heard from Moonshot last week, and a potential rotation under the surface that has kept risk kind of in this narrow range over the past month, which has given a lot of people pause.
Max Kettner from max overweight to just overweight, is it fair to say?
Max overweight
right.
to, you know...
Kind of almost there, reducing...
You know, Max right. Neutral? Does he... Max, come on,
not
tell
quite
us what
yet,
you would say.
But getting closer.
Yeah, Max worried? Max
We'll try and catch up with Max in a few weeks, and Max can sort of phrase it for us. Let's turn to the bond market. 2s, 10s and 30s. Yields up a basis point on 10s, 456. 2s around 420 still. 418.30. Beth Hammack, Cleveland Fed president, pretty hawkish into the weekend, pretty hawkish into the blackout period. The Fed's meeting, not this Wednesday, but the following Wednesday. Under Savannah's this morning, let's talk about energy, the struggle for the straight.
We hit them very hard again tonight. This is a far bigger job that we're doing. We were doing a little job of stopping them from having a certain capability. Now we're just ending it. We control the strait. They don't control anything. We're ending any chance where they can have a nuclear missile.
So here's the latest this morning. The US striking Iran for a 9th straight day in the latest show of force to reopen the Strait of Hormuz. Iran's foreign ministry now saying they have received proposals from mediators. Tyler Kendall has the latest. Hey, Tyler.
Hey, John. Well, even as we got signals from both sides that talks are still an option, this was a weekend marked by escalation. CENTCOM says the latest wave of U.S. strikes were designed to degrade Iran's ability to target commercial shipping, but also to, quote, swiftly punish the IRGC in response to the death of 3 American service members. This weekend brought the death toll for U.S. service members to 17 since the war began. And our analysts at Bloomberg Economics say they expect this week to only flare tensions further as President Trump threatens to widen the scope of strikes. Now, Iran's foreign minister said the country won't be forced to negotiate, but the ministry put out this statement saying that the diplomatic apparatus had been active in recent days. And Secretary of State Marco Rubio confirmed as much, saying that the U.S. has repeatedly gotten strong signals that Iran wants to negotiate, but that there appears to be a very big split between the hardliners that want to fight further and the more moderates in the Iranian government that want to strike a deal. And John, we really saw the split on display over the weekend as the IRGC confirmed that it halted at least 4 vessels in the Strait of Hormuz as observable traffic today remains virtually at a standstill.
Tyler Kendall with the latest. More from Tyler in the next hour. Stephen Cook of the Council on Foreign Relations writing, the current escalation between the US and Iran is a direct result of an MOU that was negotiated in haste, and it's quite weak. Stephen joins us now for more. Steve, welcome back. What is it about this MOU that made it an accident waiting to happen?
Well, the primary provision that concerns the Strait of Hormuz has two very different interpretations. The American interpretation is that there would be freedom of navigation in the Strait of Hormuz for 60 days during the period of the MOU. The Iranians believe that they get to administer the Strait of Hormuz and have taken military action to drive home the point. That's how we got here. Diplomats like to say that they can craft agreements where everybody can walk away with a win. Everybody walked away with a win from this, but continued to have the major differences over how the Strait of Hormuz, how transit through the Strait of Hormuz would occur. That's the direct result of just kind of going in and negotiating very, very quickly these extraordinarily difficult issues. The president seemed at the time desperate to end the conflict. He had threatened escalation any number of times only to back off. And as a result, his negotiators agreed to something that did not actually bring the two parties together over this crucial question of the Strait of Hormuz.
Stephen, are you seeing any evidence that there is a true debate within the regime from some of the more hardline individuals that want to keep fighting and the moderates that want to get back to the negotiating table?
You know, we hear this all the time, that there's a difference between moderates and radicals within the regime. Regardless of whether there might be a discussion between the foreign minister and the Iranian president and the IRGC commanders, the IRGC commanders always have the upper hand here. They had given Araghchi, the foreign minister, and the president an opportunity to negotiate with the United States. But from their perspective, this is the third time that Iran has been engaged in negotiation with the United States, and it has resulted in an escalation of hostilities. It's a self-serving statement. Of course, the Iranians have been firing on shipping in the Strait of Hormuz, but still, this episode really gives the IRGC an upper hand with those moderates, an upper hand they already had.
Early this morning, the Iranian Foreign Ministry came out and said the diplomatic apparatus has been active in recent days. When they talk about mediators, who are they talking about? Is this the Qataris?
Yeah, the Saudi foreign minister has been on the phone with the Egyptian foreign minister, has also been on the phone with the Qatari foreign minister, no doubt his Pakistani counterpart as well. These are the countries that have been involved in a mediation. And this is kind of a routine aspect of this conflict, that while the United States and Iran are firing on each other, third parties are trying to put together some sort of diplomatic agreement. At the moment, it doesn't seem as if the president is truly interested in a negotiation. He wants to make a point after these 3 or 4 American service people were killed. But he is always open to negotiation, regardless of what he says.
Stephen Cook of the Council on Foreign Relations. Steve, thank you. Appreciate your reaction to the sad news over the weekend, the loss of 3 servicemen in the United States, to the tension over in the Middle East. Just heartbreaking for anyone involved in that situation at the moment. Losses building up on both sides and no end in sight. Let's put it that way. You've talked about being stuck in purgatory. It certainly feels that way this morning.
And we're seeing more escalation, not just over the weekend, but the New York Times is saying that the United States is sending more aircrafts to the region. Well, that signals that this is going to be potentially a longer conflict, as it's not full-out war. It's not, because they're still hanging on to some sort of negotiation, but it is certainly not peace right now.
You're seeing the pressure in the energy market. Crude near 90, briefly breaching $90 a barrel on Brent this morning, around 88, WTI around 82. Gasoline prices back through $4 per gallon for the first time in about a month. That story not going anywhere. Coming up, Sarah Kunz, the Clio Capital, looking ahead to a big week for tech earnings. Alphabet just around the corner.
Chapter is back. We've been scouring the frontiers of science and technology to help explain the difference between the next gold rush and whatever this thing is. And in Season 2, we're upping the stakes. More danger.
Now that is some high-grade uranium mineralization.
We used to have a stable climate on this Earth. Right now, we do not.
More science.
We're pushing the envelope of technology in multiple directions. Software, hardware, chemistry, physics.
The cable is like very cold.
And more CEOs that can nail the photo shoot.
Hundreds and hundreds of billions of dollars are at stake.
While the problems are economic, the solutions are too.
And yes, we will be talking about AI.
There is a lot of humanoid hype out there.
But our future doesn't run on hype. It runs on innovation. Watch Season 2 on all these lovely channels.
From the beating heart of global finance, economics and politics, and wherever newsmakers are moving markets, Bloomberg brings you conversations that allow for deep discussions and important insights. What do you think the future is for inflation? Is this a new normal? Are markets too optimistic? How do you worry about the things that are outside your control? How does the current fighting completely stop? I'm Francine Lacroix, and this is The Pulse, every weekday only on Bloomberg.
Earnings season begins for big tech. Check it out later this week. Coming up on Wednesday, we'll hear from Alphabet, you'll hear from Tesla. On Thursday, you'll hear from Intel as well. Lisa already teed up what you could hear from the ECB. Is that a live meeting? Given this move in energy, the ECB coming up on Thursday, the Federal Reserve the following week. That's the week ahead. Here's the price action. Let's get to the board. The S&P 500 equity futures positive this morning by a third of 1%. On the Nasdaq, up by 0.6. On Friday on the S&P, biggest one-day loss we've seen on the month so far. A two-day losing streak coming into Monday. Those 2 days of losses meaning a down week. The first down week we've seen following a 2-week stretch of gains on the S&P 500. So the setup this morning, a bounce with the chip sector back in a bear market following a major run-up. Sky-high rally for the chips, up by something like 90% in Q2, which is crazy. I don't think you can call chips in a bear market. Bear market territory, sure, but when you're still higher on the year by something like 70%, it's difficult to call this a bear market. That's the equity story. Switch to the board and get to the bond market picture. Let's just sit at the front end of the curve. 2's close to 420. That feels like the center of gravity for this bond market at the moment. We just can't get away from it, even with softer PPI and softer CPI heading into the Fed's meeting a week or so away.
Well, we even heard from Kevin Warsh the fight isn't over, that this isn't mission accomplished in terms of the CPI and PPI reports that we got last week. You still have hawkish members of the Federal Reserve. We keep mentioning Beth Hammack and her discussion in a LinkedIn post on Friday, a real question about how much willingness there will actually be to take action. But ultimately, it does seem like it's broader based. It does seem like it's coming from AI. At this point, it's also coming from the energy sector. This is a moment where suddenly tensions are reigniting, and it's on the distillate products that actually are seeing the bigger gains, the crack spread actually widening out, not just the actual crude and Brent and WTI levels.
You shared the quote from President Hammack in that LinkedIn statement into the weekend. For the first time in my tenure, I'm hearing from businesses who say they think we need to take action to curb inflation.
When I was in a discussion with members, CEOs of some pretty big companies with Neil Kashkari of the Minneapolis Fed, they essentially were talking about inflation as one of the preeminent concerns for them, and they didn't see it really abating in a material way, saying there was some sort of policy response that might be required. Question is, how much control does the Fed have over some of this inflationary input, and how much is the market going to do the job for them? Ultimately, we're at a pivot point right now, especially with the moonshot Kimmy K3 and this question of where exactly the costs are going to come from, and a real existential feeling that maybe we're overbuilding on the AI side, and that could potentially deflate some of the valuations that you're seeing in the market.
They have very little control over this, and by this I'm talking about crude. Brent and WTI. Brent around 90 this morning, $88 a barrel. WTI around 82. As we count you down to the open about 3 hours away, let's get you some single names, some morning movers. Yahira has more. Hey, Yahira.
Hi, John. We start with none other than the chip stocks. They are rebounding this morning after, as you said, last week's sell-off pushed them into bear market territory, and this is coming ahead of a pivotal week for tech earnings. Google kicking things off on Wednesday, and the focus will be on AI spending, what Lisa just outlined, especially after the AI breakthrough from the Chinese startup Moonshot reignited these questions about whether these increasingly powerful AI models could be built with far less. Meanwhile, on that note, we are seeing another company push on its AI ambitions, and that is Alibaba. Shares are up 3.5% in the pre-market after unveiling a major upgrade to its flagship Qwen AI model. The company is positioning it as one of the most powerful models out there, adding to the sense that President Xi's push for China to play a bigger role in global AI, something he outlined last week in a speech, is increasingly gaining traction. And we end on Boeing. A number of headlines coming out of the Farnborough Air Show. Shares are up 1% as CEO Kelly Ortberg outlined his vision to our own Guy Johnson. He said, don't expect a new Boeing jet until the end of the next decade. Instead, the priority is getting more 737s out the door, improving cash flow and paying down debt. So the market somewhat rewarding that optimism. John?
Johanna, thank you. Thanks for the update. More from Johanna in the next hour. On our radar this morning, the US conducting its 9th straight day of strikes on Iran. Tehran continuing to retaliate with attacks on US bases and Kuwait. Crude pairing gains as Iran's foreign ministry says it has received proposals from mediators. Elsewhere, the company behind China's latest AI breakthrough is planning to go public in as early as the next 6 months. Sources telling us here at Bloomberg, Moonshot AI is in talks with investors about a potential listing over in Hong Kong. And finally, you were all watching it. Spain claiming victory over Argentina, 1-0 to capture the World Cup title. More than 15 million people filling stadiums across North America over the last few months, setting records for attendance and ticket prices. The FIFA president floating a 64-team format for the next World Cup in 2030.
Well, maybe they'll make more money, which potentially is the ultimate objective for them. I mean, the idea that they might even sell some of the leftover rings that weren't given to the team gives you a sense of just how much they tried to capitalize on the profits. That said, it was the biggest number of games, and it was the first time that we had a halftime show. I mean, this is sort of trying to take a page from the Super Bowl. Feelings, thoughts, a lot of feelings about the halftime show and whether that was something that people wanted to continue.
I love the halftime show, and last time Shakira's...
Did you?
Yeah, and well, I like Shakira. I thought she was amazing.
I was going to say, that's a select group.
And last time Shakira had a hit that was attached to the World Cup was South Africa when Spain won again. So anytime Shakira comes out with a World Cup hit, potentially it's going to help Spain. In all seriousness, Snow, I think two things I took away from the World Cup.
Sure.
One, the increase for your revenue expectations by about $2 billion. Earlier estimates, $9 billion. Okay, so FIFA is inking cash. But more importantly, I think more Americans are interested in soccer now, and that gets me excited because I love soccer.
I'm long the sport and long this country as well, and I hope you're right. I absolutely hope you're right. I think it's been a fantastic World Cup, fantastic host. America, Canada, Mexico have done a brilliant job. I'm going to get to the point in a moment.
Yeah, I know.
I think that the football's been brilliant
I can
too.
feel it.
It's been a very high-scoring World Cup. Scored the most amount of goals on record, I believe. The average goal per game close to 3, which I think on that basis is the highest since 1982. So all of those things just brilliant, very entertaining. The world's best players showed up.
But,
I get
however...
to the but. FIFA needs to stop.
Yeah, well, I think everyone would agree with that.
Everybody could see right through the hydration breaks and what it was really about. Let's get away from all this nonsense. I don't think that we want to outsource the beautiful game to the governing body to the extent that we risk doing so in the next World Cup and the cycle after that. You can see in who's winning the rights to host the World Cup, what they're trying to achieve. You can see a lot of that is for commercial reasons too. I want to go back to where we were before, where the host of the World Cup was about developing the game, getting it to a place that maybe didn't have access to the kind of ground-up football that we have across Europe. South Africa was a fantastic example of that, for instance. Taking it to places where they don't actually have stadiums, they have to rebuild it from scratch, where people aren't really living and no one's going to visit them after the fact, there's no real legacy. That we all know what that was about in the last cycle. I hope we get away from that. I fear that we won't. I hope that we stop talking about FIFA and whoever the president is of FIFA. I fear that we won't. I'm quite open to the idea of expanding the tournament, though. And that was something that I had strong feelings about at the beginning of the tournament. I didn't like the expanded format. I'm open to that idea in the next 4 years.
I think everyone would agree with you. This is the irony. Nobody likes FIFA. Everyone thinks that they're absolutely taking everyone for a ride and that they've been completely corrupt. I mean, there are all sorts of things. At the same time, exactly how are they going to be stopped? Because everybody loves the sport and shows up and pays the ticket prices. So here we are.
Here we are, precisely. The legacy for the United States, I think a missed opportunity. I really do think a missed opportunity to get more kids involved in the game in this country. I'll be interested to see what the legacy looks like in 4 to 8 years. I didn't think that 1994 was the right time for this country to host the World Cup. This was the right time. Do I think that FIFA leveraged that moment? I don't think they did at all. And the price of access into these games was, to be honest with you, just disgraceful. And when I hear descriptions of it being like, well, if it's an open market, it's a free market, it's capitalism, I'm sorry, you'll struggle to find a bigger capitalist than me. Football is not about capitalism. When a governing body has the monopoly on the World Cup, that's not a free market. Give me a bloody break, right? You know, don't tell me this is about open markets. If you and I wanted to start a World Cup and get the other nations involved to do so, you watch the kind of legal problems we'd have in trying to do that. So this isn't about open markets. They've got a monopoly on the game.
And 1.8 billion people watched, so they have got a lot of eyeballs, and they've got a monopoly when it comes to just how much interest there is around the world. They don't feel like they have to expand so much.
Monopoly on the international tournament, to be precise. Let's get to the next test for tech. Let's talk about Alphabet earnings. Due out on Wednesday, investors looking for returns from massive AI spending. Sarah Kuntz of Clio Capital writing, I don't think the second half of the year will be particularly kind. If you're waiting until things start to go up again in tech names, you might be waiting a long time. Sarah joins us now for more. Sarah, welcome to the program. What are you expecting to hear then from Alphabet? What do you expect to see in a few days' time?
So I'm not super concerned about the Gemini situation, that delay in rollout. I don't think that is a huge deal. I use Gemini. I know a lot of engineers who use Gemini. They are happy with it. It is pretty good. What I'm more concerned about is when you look at last quarter, something like half of Alphabet's net income, tens of billions of dollars, came from their on-paper shares of Anthropic, of SpaceX. That is a lot of money. And now that we see SpaceX live in the markets and we see that stock price going down and down, you do have to wonder, is some of that expectation, does that need to be adjusted down? We don't know what Anthropic's IPO is going to do, but the overall market is looking dicey. And so that's kind of where I'm interested and where I'm a little bit concerned.
Sarah, a lot of people are looking for the CapEx plans to kind of give some guidance as to what the valuations will look like for the Anthropics or the OpenAIs of the world. What are you expecting? Do you think that we're going to see a ratcheting up, a above expectation type of CapEx plan from the likes of Alphabet and from the likes next week when we get Amazon and Microsoft? Or do you think they're going to really listen to the market right now?
I think that they're going to listen to the market a bit. I don't know if they're going to truly change their plans, but I do think that right now this CapEx has been so forward-looking, and we know that companies are looking at their AI bills when they come in and saying, yikes, our bills are going up every month and the productivity is not following. So I wouldn't be surprised if we see a little bit of a pullback in the CapEx, at least right now, while the overall market is not doing great, and it's not the best time to say, surprise, what's another $100 billion among friends to spend on CapEx?
Sarah, will the market reward a below expectation type of CapEx plan, or will they punish it in the expectation that this means that maybe we've overbuilt and overspent already, and it creates this sort of downward cycle that we've seen take hold in a number of different tech sectors?
Well, I think that's the question. I think that this is going to be about storytelling. How do you tell this story? It's been storytelling on the way up, right? Most of these data centers are not built. Most of these chips, a lot of these chips, right, aren't produced. They don't actually own them yet. They kind of own them on paper. This has been sort of a paper rally, and I think it could be a paper slump. And so I think you're going to really see which of these big tech companies can hone that storytelling enough to say, we are not spending as much on CapEx, and here's why that's a good thing.
Sarah, do you think the Kimi K3 model, this potential that we learned about last week, has the potential to be DeepSeek, where we sort of move past it and forget about it, or is it real?
So I think that, China is incredibly good at tech, and I don't really understand why we forget that sometimes. They also have a tech industry that even more than the U.S. is tied to the government, and we know that there is a lot of a big soft power struggle there, and so it is really helpful to the Chinese government to say, just whenever we feel like it, we get to release a new model that says, actually, no, we do know what we're doing, and sort of yank the chain of global markets. And so I don't don't think that it's a winner-take-all market, and I do think that as long as China is getting this reaction when they announce these new models, we should continue to be expecting these new models. But the thing that I'm actually really interested in this is when you look over at SpaceX and you look at Tesla, everybody thinks that Elon's going to be able to make these Optimus robots, where China is so far ahead on humanoid robots to the extent that anyone even needs a humanoid robot. So if you believe in Chinese tech ascendancy, you should be really, really concerned about Tesla.
Sarah Kunz of Cleo Capital. Sarah, appreciate it. Thank you. Fantastic final points there on China and its hold over U.S. markets.
Yeah, the idea that you can whipsaw markets and just release a new model and say, wait a second, maybe you don't need to have all this build out. You don't need all this capacity. Just need a bit more of the DRAM, the memory chips that we produce, by the way, and you guys are behind. So, good luck to you for the next couple of weeks. Also, the thing about the robots, I love the dancing robots, the pictures of the dancing robots coming out of China. So even just from a pure entertainment aspect, I think that we all will need a robot in our lives.
They'd like you to be more impressed by the use case, the potential for them to assemble things, Bram.
I know, but I really enjoy the different...
The entertainment value.
I think that they're really... Okay. I think it would be fantastic. Have a restaurant with dancing robots, although sometimes they malfunction and they knock things over, so that could be bad.
Okay, you're thinking about this in real time? Thinking about opening a restaurant in New York with Chinese robots.
Have you seen Chinese robots in restaurants and sort of dancing and entertaining in China, and then malfunctioning and knocking things over?
Hitting plates.
By accident.
The Nasdaq down last week, largely off the back of dancing robots and other things, down by 4% on the Nasdaq last week, up this morning by 0.7. Let's give you an update on news elsewhere this morning with your Bloomberg Brief. Vonnie Quinn has more. Hey, Vonnie.
Hey, John, thank you. Secretary of State Marco Rubio saying Chinese President Xi's trip to the U.S. remains on track for September.
When you have two big, powerful countries like the United States and China, there are always going to be irritants. There are always going to be things we don't agree on. But I think it's incumbent on powerful and important countries like ours to continue to talk and have a relationship.
Rubio's comments coming just days after President Trump accused the Chinese government of interfering in the 2020 U.S. election. Andy Burnham will be sworn in as the UK's 7th Prime Minister since Brexit in 2016. Burnham making affordability a key campaign issue as he inherits a struggling economy. He's expected to highlight, quote, hope and unity in his first address as PM later this morning. Gas prices on the rise. AAA saying the national average for a gallon of regular gasoline is now above $4. Energy Secretary Christopher Wright saying the Trump administration is working to bring those prices down.
Gasoline prices today are more than $1 a gallon cheaper than they were 4 years ago under the Biden administration. And we'll do everything we can to drive them further down in the weeks and months ahead.
Wright also saying oil will continue flowing through the Strait of Hormuz with or without Iran's help. And that is your Bloomberg Brief. John.
Bonnie, thank you. Thank you for the update. Up next on the program, stuffing the debt market.
Investing in hyperscalers right now is like sitting down at a 3-star Michelin restaurant and you don't know how many courses are coming. The hyperscalers are punching above their weight here.
More courses. There are always more courses. Kate Hare of JP Morgan Asset Management joins us next.
Look at the more successful economies in the region. The key to their success is continuity. But the way our Constitution is written, it actually encourages a lack of continuity. And that's a problem. The terms for local government is 3 years. When I first became a congressman, it takes you a few months to learn the business. and to make your connections, to network, etc. If, for example, you are not particularly favored in the majority, passing a law in a year and a half is not that easy to do. After about a year and a half, you already hear that there's somebody in your district beginning to campaign and is going to oppose you in the next election. So you have to go back to your district to take care of that. And how much work do you get done?
Know how the market day started.
Find out how it finishes.
Public markets to private markets.
From the micro to the macro.
Covering retail, entertainment, the business of sports.
The supply chains, trade policy, how it all is impacting the U.S. equity market as we drive to the closing bell at 4 p.m.
A holistic approach to covering financial markets.
If it matters to your life, we're covering it. I'm Katie Greifeld.
And I'm Romaine Bostic, and this is The Close.
Live every weekday.
Only on Bloomberg. Context changes everything.
Asia is at the forefront of some of the world's biggest stories.
And we're here, where the action starts in Sydney.
And in Tokyo, get ahead as the global trading day begins.
The Asia Trade, weekdays only on Bloomberg.
It's a multi-trillion-dollar industry. We'll show you what's happening in ETFs like no one else. ETF IQ, only on Bloomberg.
The bounce this morning, up a third of 1% on the S&P, on the Nasdaq up by 0.7, on the Russell small caps up by a third. In the bond market, 2s, 10s and 30s. A light week of data. No Fed speak going into next week's Fed decision. 2 still close to 420, 418.51. Under surveillance this morning, stuffing the debt market.
Investing in hyperscalers right now is like sitting down at a 3-star Michelin restaurant and you don't know how many courses are coming. Right now, they're just adding costs, right? At some point, you cannot just keep on adding costs. If too much supply is coming, you're going to put pressure on everything else. The hyperscalers are punching above their weight here.
So here's the latest this morning. Wall Street preparing for the possibility of even more debt from AI giants. JP Morgan expecting hyperscalers to raise funds to help fuel $1 trillion in capex for 27. Kay Hare of JP Morgan Asset Management writing, AI is running 18% of total investment-grade supply year to date. It was 1/3 of that in 2025. Kay joins us now for more. Kay, good morning.
Good morning, John. Thank you for having me.
Is there some indigestion brewing, do you think, on this side of things?
Let's take a step back and think about the bond market, because I think people don't spend a lot of time, unlike us, thinking about the indices. And the bond indices are debt weighted. So the more debt that anybody issues, the larger their weighting in the benchmark comes. The other thing to think about is the bond market that supply is very lumpy. So if you look at a week like last week or 2 weeks ago, you get some indigestion. So as we just said, you've had $800 billion worth of capex expectations, $1 trillion worth of capex expectations. That's being funded in the equity markets, in the debt markets, so the loan markets, the securitized markets, the term loan markets. It's being funded everywhere. I think the issue in the bond market is it gets to be indigestion. So what is your expectation for issuance and then what actually comes? So you get a drive-by of $25 billion and people have to make room for that. And I think that's where you see the indigestion.
How do you determine the difference between indigestion and the start of true pushback, given the fact that right now we're looking at investment-grade credit spreads that average below 80 basis points? I mean, this is nothing in terms of a cushion of spread. So at what point do you start to say, there's something else going on here?
So I think it's important to take a step back and first off look at the fundamentals. So you've got corporate margins at 25-year highs, and this week, as John said, we're going into a heavy week of earnings this week and next week. What really is going to be important is what do earnings look like here? So in terms of the technical side, there are 2 aspects to that. The first is, we're talking a lot about the supply, but let's look at the demand side. We've had 12 consecutive weeks of inflows into investment-grade funds, so there's a lot of demand for this paper. And you're right, at 77 basis points, spreads are tight versus historical averages, but yields are quite attractive. So if you look at a week like last week alone, you had, I think, $45 billion worth of issuance. And look at the dispersion last week alone. There were no tech, hyperscale, or anything like that. I think deals were 4 times oversubscribed with 2 basis points of new issue concessions. But look now, a week later, The best performing deal is 10 tighter. The worst performing deal is 10 wider. So there's a lot of movement underneath. And I think what's important is on this AI CapEx is what are the returns on the CapEx going to be and who are the winners and the losers?
One thing that is increasingly stymieing a lot of investors is the idea that the average maturity on the investment grade index in the US is about 10 years, more than 10 years. I'm looking at it right now. And you're seeing issuance for things that are changing in real time. Every week it's a new story, whether it's what's going on with Kimi K3 or what happened with DeepSeek. How do you justify really incredible spend in a field that's changing so quickly that we don't know what it's going to look like in 2 years, in 5 months?
So a lot to unpack in there, and there's a whole range of maturities and distributions. As I said, the hyperscaler CapEx is coming in different markets. If you look at the high yield market, they're not actually materially different from the average index maturity, and we would rather look at duration than maturity, but we're not going to go down that rabbit hole this morning. But I think, you know, I just lost my train of thought there, but it's like, yes, you're right, but this concentration in the bond market, as I was talking about the index composition, you used to have banks are still the largest percentage. It's a matter of the supply and demand, and you're right, you've got to underwrite it. I think one thing that gives us comfort, though, is if you look at different periods of significant capital investment, so say the shale boom before, or the late 90s internet boom, at this point, CapEx is still running materially below cash flow. So you've got the cash flow to generate it. That's what gives you support. At some point, though, we are going to need returns on this CapEx. And at this point, though, I think the indigestion is really more, you get a lot of supply, you get a drive-by deal of $25 billion. I think we've had 9 deals year to date that are in excess of $20 billion. So you see, you've got to make room for that. You've seen that in particular, the high yield benchmark. But on a market value basis, I think we're looking at 3% of the high yield market is now CapEx, this hyperscaler AI, and it's a little over 4% in the investment grade. So in the broad scheme of the markets, I think quite manageable.
We've got 45 left. How does the extra supply and credit compete for demand with treasuries?
Yeah, it's a good question, and I think there are some concerns. Is this going to crowd out treasuries? I think I would look at it from a different perspective. The reason people buy fixed income is for the yield. And this is all offering additional yield. You're looking at north of 5.25% in investment grade corporate bonds. You're looking at north of 7% in high yield bonds. And so that's the opportunity here for retirees, for investors. You're getting yield. And that's why we've seen 12 consecutive weeks of inflows into investment grade corporate debt.
Kay, it's good to see you. As always, thanks for being here. Kay Herr there of JP Morgan Asset Management on the credit market. And just on the end there, just a nod towards what it might mean for treasuries.
Yeah, and right now the focus is on yield, and if you get extra yield, then that's better. And earlier this year, we were talking about how some of these hyperscalers might have better credit fundamentals than the U.S. government. So that didn't seem to be a concern. I guess that remains a question going forward.
Yield still elevated in the treasury market heading into next week's Fed meeting. Coming up next, we'll catch up with Peter Chia of Academy, Henry Trays of Veda Partners, and Ron Josie of Citi. The second hour of Bloomberg surveillance just around the corner.
Is about to start.
And you're already looking for that edge.
The opening trade brings you everything you need to know as markets open across Europe.
Let's talk about the significant risk transfers to find space in their balance sheet.
Hedging some of that risk.
You could look at it the other way. Obviously, this stuff is risk-weighted.
I would much rather be long than be short.
We're in a kind of sweet spot.
Very, very strong alignment.
3 revolutions in one.
I'm Guy Johnson.
I'm Anna Edwards.
And I'm Tom McKenzie.
This is your opening trade.
Every trading day, only on Bloomberg.
Some people would say that there's maybe a little bit of a bubble in AI. When you have companies with market caps of $5 trillion, you don't see any bubble there at all?
Whenever we have an acceleration in technology and people get excited about it, you have significant capital formation around new companies that are trying to capitalize on that opportunity. And, you know, we've seen this before through history, and you're seeing it now. It won't be a straight line. The opportunity set with AI is enormous. There will be winners and losers. And it's hard to pick the winners and losers now. And certainly a lot of the capital that's being deployed will not produce adequate returns, and a bunch of the capital that's being deployed will actually not produce any returns. But it's hard, it's hard to call the timing on these things. And the thing I'd point to just from a historical lens is in the fall of 1996, Alan Greenspan talked about irrational exuberance in stock markets, and the NASDAQ was at 1,300. And the NASDAQ peaked 3.5 years later at over 5,000. So, these things can go on for a long time, but ultimately, there are adjustments, there will be drawdowns, there'll be rebalancing, and just, it's hard to call it because the technology trend and the investment is real.
Technology is embedded in every aspect of our lives, and that revolution is playing out in real time. From finance to defense tech, AI to entertainment, from the road to the stars. Bloomberg is bringing you the stories of companies and people that are pushing tech to new frontiers and the politics reshaping global tech markets. I'm Ed Ludlow, live in San Francisco, and this is Bloomberg Tech. Every weekday, only on Bloomberg Television.
Key investors, top executives, global innovators. Join me for in-depth conversations with the biggest newsmakers on the day's top stories. Insight with Haslinda Amin, only on Bloomberg.
At 9:30 a.m., the market tells you what it's really thinking.
We beat the drum to the opening bell.
With deep analysis of the forces driving the price action.
Focusing investors on what really matters.
Where the money flows, which markets are changing.
Conversations with players shaping the narrative.
Innovative growth companies gravitate to NASDAQ.
It's not just like, let's buy the Mag 7 or AI.
That's a really compelling story.
This is where your trading day begins.
And this is Open Interest.
Only on Bloomberg.
Focus in the near term is squarely on monetary policy and what do we do with respect to inflation.
Growth looks strong. Inflation is decelerating.
The orthodox policy response to a supply shock of looking through it is probably right.
I am one of those people who believes the Fed is on hold. I do believe we will ultimately get cuts in 2027.
Interest rates are about at a reasonable place. The Federal Reserve should not mess around with them.
This is Bloomberg Surveillance with Jonathan Farrow, Lisa Abramowitz, and Anne-Marie Hordern.
Live from New York City this morning. Good morning for our audience worldwide. The second hour of Bloomberg Surveillance starts right now, and your price action looks like this. Here's the bounce, up a third on the S&P, on the NASDAQ 100, following last week's losses, up by 0.7% in the bond market. 2s, 10s, and 30s. 2s coming into this week still around 420, even with softer CPI, softer PPI heading into the Fed's next meeting. The why? Check out the commodity market. Crude, Brent, and WTI still elevated. Brent around 90, WTI around 82, unchanged on the session. The situation in the Middle East, anything but unchanged.
Yeah, and last week, crude prices up more than 15% on renewed an escalation in the Middle East. Now we're talking about much more active warfare. Discussions around possibly having a mediator come in and try to bring both sides back to the table. But where exactly would discussions go, given the renewed escalations, given the deaths of U.S. servicemen, and given the buildup of U.S. troops and supplies over in the region? Also, the fact that you've seen all activity through the Strait of Hormuz grind to a halt gives you a sense of just how much the pressure is ramping up.
And it's the Strait of Hormuz that they're fighting over at this moment, at least. The United States, you can see in all of the strikes that they're going after with the IRGC in Iran, is they are trying to degrade their ability to go after commercial shipping in the Strait of Hormuz. They want the Strait of Hormuz to be open. Well, when Iran comes out and says that they received, calls from mediators, they also talk about the fact that they want to fully exercise their sovereignty and prevent any security threats in the Strait of Hormuz, the exact opposite of the United States wants to see, and that is why we are living in this purgatory.
This is putting the squeeze on risk sentiment overall over the last week or so. Much more so, though, as being these moves in tech, chip stocks entering bear market territory, heading into this week right here. Tech earnings on deck. Intel on Thursday, Alphabet and Tesla coming up on Wednesday. The bar for these earnings sky high, and we have learned a lot about positioning and price over the last week with regards to incoming earnings.
Yeah, IBM was a big shot across the bow, and IBM also going to be reporting earnings later this week. A real question about their CapEx plans, especially given the Kimi K3 from Moonshot, the Chinese LLM that came out and really renewed focus on just how much capacity was actually necessary, whether it was really on the memory side of things or whether it was on the semiconductors that the likes of NVIDIA produce. A real question, though, about how long this could be sustained and whether there is overbuild for some of the newer models. Again, there's so many questions around how quickly this is moving and what this is going to look like in 6 months.
Nasdaq futures this morning higher by 0.7%. Coming up this hour, we'll catch up with Peter Chi of Academy, warning of further downside. Henrietta Trays of Vader Partners with attacks intensifying between the US and Iran. And finally, Ron Josie of Citi as tech earnings kick off the next test for the AI trade. We begin this hour with stocks and crude rising as Wall Street searches for stability. Peter Chi of Academy writing, many of the inflection points have demonstrated a clear direction to which way they are headed. But with everything going on, expect more downside for markets. Pete joins us now for more. Pete, good morning.
Morning.
What's the source of that downside risk for you this morning?
You know, I think it's rethinking of what's going on with the AI spend. That's a big part of it, right? Are companies going to continue to spend? Will we see any signs of slowdown? And at the same time, you know, we kind of talk about these moments out of China. I'm wondering if what we're starting to see is just a flood of cheap compute, right? Is China going to flood our markets like they did with trinkets back in the early 2000s? Have they built up enough compute? It's not as good as ours, I don't think, and you know, they distill it from our models probably, which helps on their costs. But the reality is they have the electricity grid, they have enough chips, and they seem to be able to flood our market. I would not be using Chinese compute, but a lot of people might. So that, to me, I hadn't really thought about that until in the last couple of weeks, and it's coming more and more in conversations. That's my concern, is real cheap competition from China, circa what we saw back in the 2000s, where they just flood our market and it slows down our build.
There's a whole body of literature on the so-called China shock from that time. If we have another China shock, what would it mean for the backdrop for the economy and for markets?
I think it would be awful. Just my best comparison right now is probably look at BYD Automobile in Europe. I was in Europe last week. I had to go check out one of the showrooms. They're interesting cars. They are now dominating sales in Germany, right? So they are eating away at stuff. Does that come to us? I don't think it should. And the other problem we didn't really mention is, you know, I think the concept of not in my backyard does not exist in China. I don't think anyone would say, oh, you can't build that here, like with any expectation that it wouldn't happen. And you're seeing that really grow in the U.S. I thought it might be a 2028 issue. It's coming quickly.
You said that the risk is that it would slow the build of compute in the U.S., which is kind of exactly opposite of what some people are expecting from earnings. They're expecting the market to potentially reward companies for reducing their CapEx spend on building out compute. Do you see it differently?
I think the companies that may reduce their spend and get rewarded, you know, the debt diet sort of companies, they might do well, but what's that going to do for the picks and shovels, right? All the companies that were flying into this. And again, I think it's very dangerous for the economy as a whole. For the last year or so, we've been looking at this kind of as a two-part economy, the non-AI part and the AI spend part. So if you get any slowing down on that, the construction that goes with that, all those things I think would really hurt the economy.
Right now, a lot of different analysts are trying to split up the Mag 7. They're saying the Mag 7's dead. There isn't such a thing anymore. The tech is being segmented into different segments, and you're seeing rotations through them. Is that a positive? Is that a negative? Is that a bear sign? Is that just a natural evolution where everything is AI?
I think it's a natural evolution. And look at Apple, for example, right? Apple did not invest a ton in AI, right? They kind of let the market develop. Their stock's doing high. I believe they're just off all-time highs. So the market's trying to figure out who's winning, who's losing, what's priced in. Again, I was really excited about earnings about 2 weeks ago until what we've seen. And I go back to Micron. Awesome earnings, right? Great guidance. 2-3 years of, you know, chips sales, all those things were right. Stock went up, and it's given it all back and then some. So I think people are now thinking about not this quarter's earnings, not even like next year's. Where are we headed 2-3 years down the road? And for the first time, I think there's some question. Will there be competition? Are people, even in the US, trying to create alternatives? And, you know, what we've seen in these sorts of cycles, you get these parabolic moves up. Anyone who's bearish kind of has to be quiet, duck their head, and all of a sudden, people can feel a little bit more comfortable. And I'm still waiting for more and more CEOs to say, we love AI, it's really helped our company. My sense is people are starting to feel some pressure on the token utilization. Everyone used to have these leaderboards, and the more you spend on tokens, hey, you're the best person here. Now people are, so what exactly do we get that? So I think we are due for a bit of a pullback. And some of it will come with allowing the more negative or concerned narrative to play through as well.
Well, we saw some of that concern when it comes to at least policy in the gubernatorial races for New Jersey and Virginia. It was all about electricity prices. This year, especially with the moratorium in New York, it's about data centers, not my backyard. How much of a political risk is there to this trade?
I think there's a decent amount. I think you're seeing kind of this not building it in my backyard is kind of step one. Again, there are lots of states that want this business. They do want it. But my bigger concern, and this is probably more down the road, is you could start seeing some sort of windfall tax, some sort of tax. You know, people, again, I hate the concept of universal basic income, but you're seeing this chatter about this in South Korea, and I could see some group of politicians saying, you know what? You guys make too much money, we're going to tax you, we're going to do something, and that would really be bad for stocks. And again, I think we need our data centers, we need this for national security, we should be growing it. I think the industry has to do a better job communicating the need and that they're good for us, and they have not done a good job. So I'd like to see this, but I think the risks are there and real.
I'm going to ask you a question based on the title of some research from Jonathan Krinsky of BTIG. Do you think a high correlation accident is brewing here?
I could see that. So one of my concerns is we've been talking to some people, and if you think about various factors, right? You have momentum, you have all these factors, and you know a lot of the really best hedge funds kind of run their positions based on these factors, and they're trying to organize it. And one of the sense I get is AI is starting to creep into a lot of these factors. So you think you don't have an AI exposure, but you do. And so all these things have become very correlated. And I would add that market structure to me is just awful. I hate all these triple leveraged ETFs. I think there's like 8 or 9 leveraged ETFs on SpaceX alone. It's only out 2 weeks. Like, why do we bother with single stock leverage? SOXL is a $20 billion triple leveraged ETF. You have 0-day expiration options, weekly options. So yeah, I think when this happens, it can happen really, really fast. We saw a bit of it last week. I think maybe we get a bounce. People are looking for their earnings, but the next wave, I think, could be fairly ugly. So I like that phrase, the high correlation train wreck or whatever.
Accident, potentially.
I didn't
question
mean to say train wreck.
Potentially, we've got to ask. Yeah, that's another way of looking at it too. Look, everyone is exposed to AI, even if they don't think they are, because you're either exposed to the spending directly or the wealth channel. Elisa was half joking, but she was right last week when you were asking the airlines whether they're an AI trade as well, because of the amount of spending coming from very particular places that are built off the wealth being created by all of this AI spending.
Where's the business spend coming from? It's coming from defense. A lot of it is tied to AI, as well as the financial sector, because everyone's flying around trying to get the business. At a certain point, even if it's not necessarily directly tied to it, everyone feels a lot better because stocks are going up. You also start to wonder how interconnected emerging markets are, say, to the United States in ways that they just haven't before, and how much volatility can be introduced given the lack of understanding of where we're going in the next few years.
So we get earnings, I think, from SK Hynix in the next week.
Yep.
And I was looking at the calendar, and I was thinking, okay, that's a risk event for US markets, isn't it? Earnings from a South Korean company. Now, a few years ago, that was absolutely unthinkable, but that's where we are.
Again, I think a lot of things have been tied in. Again, we're always going to pay some attention to South Korea, but we get a little bit more looped into this. And again, we have all these leveraged ETFs. The Koreans have all sorts of these leveraged products, right? And my one thing, I'm starting to pay a little bit of attention. If you kind of watch, you had, I would say, the really gambling sort of crowd loved crypto. They were in that sort of space. And it looks like they shifted their attention much more to the tech and AI build-out, quantum. And if that set of money pulls out, at the margin, that's a reasonable chunk of money, and you're starting to see some inflows into crypto again. So maybe people are going to reposition where they get their most bang for the buck.
Okay, so this all sounds super bearish. So help me find that hedge to that high correlation accident if it materializes. Where do I go?
Right now, I think you want to be a bit in Europe. I think you want to be in the companies that will, I know it's kind of scary to say.
No,
but
it's the anti-AI trade. It's hysterical. Carry on.
Well, actually, and it's also they're designed to build out their own things, right? I think just today I was coming in and Bloomberg Radio was talking about Bezos making an investment in a European AI company. So I think Europe is finally starting to get the joke again. They'll probably screw it up a couple more times, but they have to make their own things. They have to get their own electricity. Right? It'll be really curious to see what the new prime minister does in England. Like, I think they should be releasing BP. They should be doing these things with the North Sea. They should be really expanding their energy base. And I think Trump kicked the hornet's nest and said everyone's got to do more of their own thing and buy U.S. Yeah. I think countries are starting to think, yeah, we should do more of our own things and become vertically integrated. We're not going to buy as much U.S. So I think that creates opportunities, particularly in Europe. I actually think Canada's probably decent on that front. Carney's, I think, been playing tough, has been rewarded for that. So I would say, and even in the U.S., the grid needs to be built out. Even if we slow down data, I think anything that's, we've sold off a little bit in the electricity and the grill bill, I think that has to be done regardless of how the AI spend goes, so I like that sector as well here.
Pete, it's good to see you. Thank you, sir. Peter Chair of Academy. Speaking of the UK, we should hear from the new British Prime Minister, Andy Burnham, later this hour. Looking forward to that. Let's get you an update on stories worldwide this morning with your Bloomberg Brief. Vonnie Quinn has more. Hey, Vonnie.
Hey, John. Thank you. Moonshot AI getting ready to go public. Sources telling us here at Bloomberg it could seek a Hong Kong listing in as few as 6 months. The Chinese AI pioneer is wrapping up a fundraising round that could value it at more than $30 billion. Boeing is working through a supply bottleneck as it plans to ramp up production of its top jets, with hopes to make more than 40,000 planes in the next 20 years.
We're turning the corner. I tell my team we haven't quite finished turning the corner. We've got more work to do, but I am pleased with the progress so far. We're ramping up production across many of our product lines. Markets are very strong, so our backlog is very, very strong. So our story is really focusing on executing that backlog.
Shares of Boeing trading nearly flat so far this year. Spain are World Cup champions after defeating Argentina 1-0 in extra time. Substitute Ferran Torres scoring the decisive goal. Spain dominating possession, Argentina failing to make a single shot on goal in what may have been Lionel Messi's final game for the country. That is your Bloomberg Brief. John.
Hey, Vonnie, thank you. Thank you very much for the update. More from Vonnie later this hour. Up next, an escalating campaign.
We hit them very hard again tonight. This is a far bigger job that we're doing. We were doing a little job of stopping them from having a certain capability. Now we're just ending it. We control the strait. They don't control anything.
9 straight days of strikes. Up next, Henrietta Trays of Vader Partners.
Going to be the consequence for U.S. markets?
We are seeing modest gains across European equity markets.
Take a look at how we're faring when it comes to Asian markets.
Tune in to Bloomberg Business Week Daily.
We got to talk crypto.
From the magazine that helps global leaders stay ahead.
What's the conversation around your company?
Bringing you insight on the people, companies, and trends shaping today's complex economy.
Planning very big things.
A new level of premium.
Plus global business, finance, and tech news as it happens.
The floodgates of innovation are going to open up.
You can't fake passion. You either are or you aren't.
Bloomberg Business Week Daily, only on Bloomberg.
Good morning. This is Bloomberg Surveillance.
Welcome back to the opening trade.
It's Bloomberg Money.
This is the Asia Trade.
This is Wall Street Week. Welcome to Balance of Power.
You're watching Bloomberg Deals.
Welcome to Bloomberg This Weekend.
This is Bloomberg Television.
Later this hour, we should hear from Andy Burnham, the new British Prime Minister. Looking forward to that in the next 60 minutes or so. We'll hear from Lizzie Burden as well on the ground outside number 10 Downing Street. Look forward to that in the next hour or so. Looking ahead to this week, tons of tech earnings. Alphabet, Tesla, Intel on deck, and one central bank in particular in focus, the ECB. Now, a month ago, this wouldn't have been considered a live meeting, but this move in crude will get this ECB's attention, even if many believe it shouldn't.
Yeah, people are wondering whether the rhetoric truly has changed, because we have heard some people talk about the concerns about some sort of penalty to growth in Europe. At this point, given the fact that we saw more than a 15% move in crude, the fact that you've seen much greater moves in distillate products coming from the Middle East, and that suddenly we now have no traffic going through the Strait of Hormuz, will they feel the necessity to penalize their economy again?
Brent crude around 90 this morning, 88. I know which side of the debate you're on.
I mean, I
do. Around 82.
Is the market not saying the same thing? The market's saying, okay, September you'll move one more time and then you'll be on hold for the rest of it. If they were to surprise to the upside, do you think it would be a strengthening of the euro action, or do you think that it would be a sort of penalty with respect to growth expectations?
No, what you're saying is not original. Everyone agrees with you.
Thank you.
Everyone agrees.
It's not original. I'm going to sit back down.
No, everyone agrees with you. I'm saying everyone agrees
No,
with
it's true. This is like, you know, but at the same time, they're talking tough, so let's see if they come through.
Yeah, I think people would expect the more hawkish they get, the worse it gets for the European economy.
Correct.
Right? We are where we are. Okay,
Yes.
okay, we're done with that. Let's talk about energy. Under surveillance this morning, an escalating campaign.
We hit them very hard again tonight. This is a far bigger job that we're doing. We were doing a little job of stopping them from having a certain capability. Now we're just ending it. We control the strait. They don't control anything. We're ending any chance where they can have a nuclear missile.
So here's the latest this morning. The US conducting a 9th straight day of strikes on Iran following the deaths of 3 service members over the weekend. The Iranian Foreign Ministry confirming the receipt of mediator proposals earlier this morning. Bloomberg's Tyler Kendall joins us now for more. Hey, Tyler.
Hey, John, good morning. Well, even as we got signals from both sides that diplomacy is still an option on the table, this was a weekend marked by escalation. CENTCOM saying in a statement overnight that this latest wave of strikes by the U.S. was designed to degrade Iran's ability to target commercial shipping in the Strait of Hormuz, but to also, quote, swiftly punish the IRGC in response to the death of those American service members. And our own analysts at Bloomberg Economics say they now only expect this week to flare tensions further as observable traffic in the Strait of Hormuz appears to be at a near standstill today, according to new satellite imagery analyzed by Bloomberg News. And there seems to be new risks for vessels who had been transiting without their radars on, with the IRGC saying it halted at least 4 vessels over the weekend that had turned their transponders off, considered to be one of the safer ways to make it through the waterway. Now, we got this statement from Iran's foreign ministry earlier today saying that it is determined to, quote, fully exercise its sovereignty and prevent any security threats in the strait, seeming to indicate that they're not letting up their leverage when it comes to that, though did add that the diplomatic apparatus, in their words, had been active in the last few days. John, the U.S. Secretary of State Marco Rubio did confirm as much. He said that over the weekend, the U.S. received strong signals that Iran is willing to negotiate, but that there is a big split among the hardliners that want to keep fighting and the more moderates in the Iranian government looking for a deal.
Tyler, thank you. What does the off-ramp look like? Henrietta Trace of Vader Partners writing this. IRGC control of Hormuz is worth more to Tehran than a warhead. It is a weapon they can deploy at will and then deploy again. Expect escalation rather than resolution in the days and weeks ahead. Henrietta joins us now for more. Henrietta, good morning and good to see you here in New York.
Great to be with you.
What does a solution look like, given the quote I've just read from you?
I think that we are on day 9 of what will be a pretty expansive, protracted engagement on the military front. I'm discomforted, I guess is the word to use, by the frequency with which I hear administration officials and those in the sort of tertiary military space talk about boots on the ground, Carg Island, escalating militarily. The reality remains that the Port Authority of the IRGC is just simply unacceptable to the Western banking world. Whether you're an insurer or a tanker getting through, or JP Morgan trying to do business with any industry that wants insurance or wants to, deal in getting flow through the strait. So it's, as long as that's unsustainable and incompatible with the Western economy, we will be at war.
They're moving some more warplanes to the Middle East. We also have Secretary Hegseth and Joint Chiefs of Staff General Kane speaking to the Appropriations Committee tomorrow in Congress. Are we going to get more funding for this war?
Not anytime soon. And I think the timing is really important to watch, especially when you think about what the U.S. consumer or any consumer is going to be dealing with in gas prices. So the sequence of events is helpful to follow here. House members are going to be in session for the rest of the week. It's going to look like there's progress on getting Pentagon funding out the door, but really then they're going to leave for 5 weeks. The Senate is nowhere on the reconciliation bill. My odds of passage are 30% at best. The only reason I'm not optimistic, though, is because think about how much longer this war is going to escalate. To John's point, and sort of the military component that you're talking about is we're going to be in this until the end of August. J.D. Vance's, 60-day window is, August 20th, I want to say. So we'll definitely bump up against that. We'll have no stimulus from the Congress side, and then they'll come back in September. And if the war is still raging, gas will be $4.56 again, which is where we saw the president call off the war last time. And the single most effective way to get rates down was to stop the war. So as we're way out into September and even October and heading into the election, there's going to be optionality for a stimulus bill, for some funding for the Pentagon, maybe a gas tax holiday. Those are options that exist, but not for months.
But the House and the Senate are in session this week, and they won't together be back in session, to your point, till the middle of September.
Right.
Will they need to do something before September if we're dealing with above $4 a gallon gasoline?
That's a possibility, but I think you'd have to get up to $4.50 like this week in order to have them move, in order to cancel the August recess. They just don't do that. You guys know that as well as I do. They don't cancel the August recess. It's inviolable. So as long as they want to get out of town, they won't be doing anything.
So none of the War Powers Act or any of the potential or legislative constraints on what President Trump can do in Iran really comes into play when they're on vacation? Is that the issue, that essentially that's not even up for debate and potentially isn't even a constraint later on?
That's definitely the case right now. I mean, there's a couple events that are happening at the end of this week. The president needs to decide what to do on tariffs. So I find that that is important to be mindful of. I know the street is exhausted of tariffs. I'm sorry, I'm not. The tariff authority is going to be available to the president at the end of this week if Jamieson Greer has done his job correctly, because the Section 122 tariffs expire. So if you're mad at Spain, if you're mad at France for not sending enough anti-mine capabilities, or the UK or anybody, this is your opportunity to make a choice. Do you want to keep penalizing everybody the way that you're doing with Iran and go to effectively a tariff war with those nations and ask them to get involved in the strait, and whether it's peacekeeping missions or military missions, this is your opportunity, and he has that chance this Friday.
Is there a sense that President Trump will go hard on some of these tariffs at a time when the Iran war is escalating and he's looking for greater alliance cooperation to potentially fight back some of the IRGC actions in the Strait of Hormuz?
I think it's a glaring absence and has been since the war was announced. And the sequence of events is really fascinating to think through. I mean, the Supreme Court took away the president's tariff authority on February 20th, and we started bombing on the 28th. That is just so noticeable throughout the entire duration of this military war, the fact that the president hasn't been able to say, you will come with me to the strait, you will help me in the strait, unless, or else I'm going to tariff you. You know, we saw that through all of 2025. I don't like your digital services tax, boom, you get 100% tariff. Here, we have the same kind of thing, and he just doesn't have the authority. He will have that authority come Friday.
Doesn't everyone love Spain now? Because everyone hated Argentinian football for the last 6 weeks.
They did for a brief night, and then evidently, right? I mean...
We don't like Spain again.
You know, it seemed like President Trump even steered away from his dislike of Spain to stand there.
He got involved with it yesterday too. Yeah, sure.
He was really desperate to be on that stage.
Well, yeah, perhaps. But either way, putting differences aside to stand there and look at the trophy, hand out awards, rings.
Henrietta, it's good to see you. Thanks for being here.
Thanks for
dropping by. Henrietta Trays of Vader Partners. I think we've got some live pictures coming from the UK. We'll carry on tracking this for you. Just moments ago, it became official. Andy Burnham becoming the UK Prime Minister after meeting with the King Charles, asking the newly appointed Labour leader to form a government. He'll now make that short trip, approximately 1 mile from Buckingham Palace to number 10 Downing Street. When he arrives at number 10, we should have a brief speech from Andy Burnham, and we'll figure out what the future looks like for the UK economy through one thing alone, I think, in the next 24 hours, figuring out just who the next Chancellor of the Exchequer will be.
Yeah, how business-friendly will this administration be at a time when he really does represent the progressive wing, the 7th Prime Minister in 10 years, a time, how do you get a sense of stability given that backdrop?
Lizzie Burden on the ground at number 10 Downing Street. We'll catch up with Lizzie in 15 minutes' time.
weekday, Bloomberg puts the spotlight on a different aspect of global finance. Flows, funds, and the forces shaping markets on ETF IQ. The future of money with Bloomberg Crypto. The players behind major transactions on Bloomberg Deals. Rates, risk, and the cost of capital on Bloomberg Real Yield. And personal finance, retirement, and wealth management on Bloomberg Money. A different topic every weekday, only on Bloomberg Television.
When news breaks,
A redhead across the Bloomberg terminal.
Bloomberg has you covered.
Trump's global tariffs are struck down by the U.S. Supreme Court.
For all the context and clarity you need.
There's going to be now tons of tariff headlines until midterm elections.
Hear it first on Bloomberg.
Bringing you up-to-the-minute space news whenever and wherever it happens. I'm Ed Ludlow at NASA's Kennedy Space Center in Florida, and this is Bloomberg.
The opening about 2 hours away. Equity futures bouncing by a third of 1% on the S&P 500. On the Nasdaq, up by 0.8, following some pretty losses last week on the Nasdaq, down about 4% plus on the Nasdaq 100. Elsewhere, some relative outperformance on the Russell, only down by 0.5% this morning, higher by 0.4. Let's get you some single names, some morning movers. Yahara has more. Hey, Yahara.
Start with the chip stocks. They are rebounding this morning with names like Intel, AMD, and NVIDIA all higher in the pre-market. The rally, of course, coming ahead of a very pivotal week where we get tech earnings, Alphabet kicking things off on Wednesday, and it also comes after Chinese startup Moonshot had that AI breakthrough that reignited questions about whether these increasingly powerful models can be built with far less. But before those tech earnings take center stage, we've got to get through the popcorn and the pizza first, because we got Domino's earnings out this morning. Shares are up 7.4%, and this is an interesting one because it's one of the first gauges on the consumer during earnings season. The pizza chain beat revenue estimates and said order growth picked up during the second quarter, but it wasn't all rosy. Same-store sales were the weakest in more than a year, but so far investors seem encouraged by that order growth picking up. And we end on AMC. Those shares also soaring in the pre-market, now up 17% after a 1-2 punch of strong earnings and a blockbuster opening weekend for The Odyssey. The theater chain topped revenue and profit estimates. It also says that over 4.3 million people visited AMC worldwide this weekend, and it was AMC's biggest opening weekend for an R-rated film since 2024, and it even had to keep some theaters open 24 hours. John.
The stock is flying, up by close to 17%. So far this morning. Yahara, thank you. On our radar this morning, the US attacking Iran for a 9th consecutive day. Tehran retaliating with strikes on US bases across the region. Iran's foreign ministry saying it has received proposals from mediators. Elsewhere, the Trump administration vowing to rein in gas prices.
Gasoline prices today are more than $1 a gallon cheaper than they were 4 years ago under the Biden administration. And we'll do everything we can to drive them further down in the weeks and months ahead.
The national average for gasoline returning to $4 a gallon for the first time in a month. 9 straight days of attacks between the US and Iran helping to lift crude prices above $80 a barrel. And finally, the Secretary of State, Marco Rubio, confirming a September meeting between President Donald Trump and the Chinese leader is still on track.
We anticipate that the trip is happening in September. I have no reason to believe that they won't be coming. It's important. There will always be, when you have two big, powerful countries like the United States and China, there are always going to be irritants. There are always going to be things we don't agree on. But I think it's incumbent on powerful and important countries like ours to continue to talk and have a relationship.
Fresh tensions emerging between the nations after President Donald Trump accused the Chinese government of interfering with the 2020 election.
Yeah, and it's not just the U.S. side that is saying that these talks are set to continue. You're also hearing from the Foreign Ministry spokesperson saying that head of state diplomacy plays an irreplaceable role in providing strategic guidance to bilateral relations, and that there is still communication regarding this visit. How do you come up with the parameters for a relationship between these two nations at a time where tensions are clearly rising and rhetoric, clearly from President Trump, getting hotter and hotter?
Well, at the ASEAN summit where Secretary Rubio is going to be, he'll meet with his Chinese counterpart Wang Yi, and that will really set the groundwork, I think, what's going to be on the table in September. I think off the heels of what we learned yesterday from the Kimi K3 model, this AI narrative is going to dominate the summit, especially as Xi Jinping, when that came out, was presiding over a Chinese AI summit, and what they had is a new group of 30 countries to talk about AI governance around the world. Obviously missing was the United States.
This would be another China shock. You heard this from Peter Chi of Academy this hour, Bramo, talking about the kind of things that I know you're focused on as well. We could have a situation where China's exporting something super cheap at a time when America has spent a tremendous amount of money trying to pursue the same thing. If there is a vulnerability right now in the US armor, it is certainly the AI story for both the market and the economy alike, a vulnerability that we've seen China exploit in the last week and in the last 18 months multiple times.
Yeah, what Peter Chi was talking about was the export of cheap compute, the idea that they have all of these energy resources, renewable energy resources, nuclear energy resources, et cetera, that gives them the ability to power a whole lot more than here in the United States. And if they started to sell that more cheaply, particularly given the fact that they've got these open source models that are getting better and better, it raises this question of how many people would actually go there, how many people would actually use that, and what that would do to some of the investments in the United States. A lot of questions, unclear. A lot of people watching what we're going to see from earnings to get a sense of exactly what the CapEx plans are and how far ahead the U.S. actually is with some of these models.
Alphabet kicking off those earnings later this week for the hyperscalers. Investors, of course, looking for that justification for AI spending. Ron Josie of Citi expecting CapEx projections for next year to reach over $800 billion US, writing, "We believe this is by far the top focus into 2Q earnings, given continued AI demand and rising component pricing." Ron joins us now for more. Ron, let's get into those numbers. Are you seeing any market-based pushback that would lead to a rethink of CapEx intentions from some of the big players?
At this point, not really. I mean, that's the biggest question going into earnings, as we just talked about. You would think if there was more pushback, I think the equities would actually come back a little bit more than they are. Frankly, right now, we are waiting when Google announces on Wednesday, we're waiting for them to really reassert their strategy and where they want to go, meaning that we have delays on Gemini, on some of their models like Gemini 3.5 Pro. We've seen some issues where they're sort of falling behind on other things. And so what we really want to see is what are they going to do with all this CapEx that's being spent? And as you said, we just raised our numbers because we think there is a strategic asset involved if you've got the compute, if you've got the intelligence, and really the energy as well. And that's something that Google's really racing to have. So if you have those three, yeah.
I'm just going to jump in because different companies are doing different things with that compute capacity. And Meta's an interesting example of that. Just on Friday into the weekend, we had the New York Times leading reporting that they're looking potentially to lease computing power from its data centers to the likes of Anthropic. Do you expect to see more of that kind of opportunistic move from the likes of Meta and maybe others too?
Well, I think if you have, and I don't want to use the word excess capacity because I'm not too sure there's excess capacity out there. Everyone we talk to, everyone we sort of have conversations with talk about the term insatiable demand. The demand's there and it's outstripping the supply. With that said, if you're Meta, we've been a little bit delayed in terms of their personal superintelligence or Meta superintelligence strategy. And so if in fact they do have these 8 gigawatts of power, maybe going to 14 over the next year or so, and they have extra power available, I think they're looking around and seeing, well, maybe we can actually get some dollars back or subsidize some of the costs that we're doing with our capacity and compute that we've built out. So I think we do see more of this, assuming there's capacity available, and maybe Meta's the best one to do that simply because we're waiting for these new products to come out. And, you know, when these products come out, rarely is it a big bang where you launch and then you have demand that exceeds capacity. It probably takes a little bit of time to adopt it.
Is there any way that these hyperscalers in particular can show return on investment that would make an increase in CapEx beyond expectations worthwhile for the market?
Well, we're looking at two things, really. Really, if you're talking about Google here the next week or next couple of days, I think there's like three things that we're looking for. Of course, we're looking for Google Cloud revenue growth. We're looking as part of that, their backlog or commitments in terms of pretty much guaranteed spend over the next couple of years. And that's a number that's been growing incredibly strong over the past couple years, frankly, to help highlight what is the demand for Google Cloud and really the demand for AI. But then we have on the Google other side, which is Google Search. And we think Google Search can grow 17% this quarter. It's growing because of these AI investments, because of their investments in Gemini. And frankly, people are searching more. So if you're Google and even Meta for that matter, you're building on both and Amazon, you're building the consumer side, but then also have this massive opportunity on the B2B side. And that's something we're looking at as well, right? So that's the commitments, that's the revenue for Google Cloud, and that's, of course, the core Google Properties business.
Do you suspect, Ron, that we're going to see, or that we already have seen signs that truly Chinese tech companies have started to cannibalize from U.S. tech companies, whether it's in models, whether it's in compute, whether it's in international clients? I mean, are you getting any sense that that actually is coming to fruition?
Well, I think one thing that's absolutely coming to fruition is the fact that these open source models are now weeks or months away from the frontier models. And we are absolutely seeing a compression of timeline of new models being launched. And these models, these state-of-the-art frontier models, are second to none. And so what we're seeing for sure is the open source movement is absolutely catching up at a faster pace, which is certainly causing us and everyone on the street to say, okay, we're investing all these dollars in intelligence and compute and energy, yet for only to be copied down the road, or not copied, but frankly followed. And so that's going to be a key theme and topic, I think, on Wednesday and also into next week with Meta and Amazon numbers.
Ron, looking forward to the coverage coming from you and the team out of Citi. Ron Josie there of Citi, looking ahead to Alphabet and Tesla later this week. Alphabet, a very different story compared to where it was 12, 18 months ago. Their stock left for dead by some people. Big turnaround by that company.
And they've really gained market share on a couple of different levels. There is this question about Gemini getting pushed back, their latest model. Will it actually matter based on how people are using it? And really, how much will that affect their CapEx plans? I think that'll be really interesting. With Tesla, big question, when are they going to get taken over by SpaceX? I mean, that's the key question. Right. And how big is the premium going to be?
Maybe the only question. We've got some live pictures coming out of the UK for you just moments ago. Andy Burnham, the new British Prime Minister, until recently former Mayor of Manchester, meeting with the King Charles, asking him to form a government after accepting the resignation of Sir Keir Starmer a little bit earlier on this morning. Andy Burnham now making the very short journey from Buckingham Palace over to number 10 Downing Street. Approximately 1 mile, should take only a few moments. When he gets to the other side in front of number 10, we expect a brief address from the new Prime Minister. We'll start to talk about his outlook just a little bit more for the economy, and we start to find out who fills certain cabinet positions, and certainly for this programme, the Chancellor of Exchequer, very much top of mind. Lizzie Burden on the ground outside number 10 Downing Street. We'll catch up with our very own Lizzie in about 2 minutes' time. Before then, let's give you an update on news elsewhere this morning with your Bloomberg brief. Vonnie Quinn has more. Hey, Vonnie.
Hey, John. Oil erasing earlier gains after Iran's foreign ministry said it received proposals from mediators regarding its war with the U.S. Escalating hostilities in the Middle East, raising concerns over a supply crunch with global stockpiles, excluding China's, at a record low. Alibaba shares rising in the pre-market. The company releasing a preview version of its flagship 3.8 Max model, describing it as second only to Anthropic's Fable 5. The release coming after Moonshot launched Kimi K3 on Friday, which it said outperforms all rivals except for Fable 5 and GPT 5.6. President Donald Trump says the luxury jet gifted to him by Qatar will be taken out of service to be, quote, maxed out. The plane will get additional defensive capabilities. Trump says he plans to take the plane to his presidential library when he leaves office. And that is your Bloomberg Brief. John.
Vonnie, thank you. More from Vonnie a little bit later on in the programme. As I mentioned just a moment ago, the new British Prime Minister, Andy Burnham, making his way to number 10 Downing Street after meeting with King Charles just moments ago. Lizzie Burden is on the ground, where number 10 is set to receive the British Prime Minister in just a few moments' time. Lizzie, what are you expecting to hear from the man himself?
John, I've got to say, I feel at home in Downing Street right now. The throngs of Andy Burnham supporters behind me come with a lot of northern accents. This is, of course, the former mayor of Manchester. It has been a remarkably bloodless coup to become the Prime Minister. In fact, he is the 11th of the past 19 Prime Ministers to do so without an election. And he's the first since Alec Douglas home in 1963 to do so without an election, going straight from outside the House of Commons into that black door behind me. So they're all waiting to clap him in. We already clapped Starmer out. He made his resignation speech earlier. He said that Burnham's got his full backing, that he goes with a smile on his face, he goes with good grace, tried to tell us what his legacy is, trying to connect what he's done to what Burnham will do, getting Labour back into power. So now we're waiting to hear a bit more clarity on what Burnham's going to be doing as Prime Minister, and as you say, crucially, who is going to be his Chancellor.
Well, Lizzie, to that point, there was a line from the new Prime Minister going into the weekend. Andy Burnham said on Friday, make no mistake, I will be a pro-business leader of the Labour Party. We'll define that, Lizzie, in the short term at least, by who he chooses to be the Chancellor of the Exchequer. Lizzie, we have a decent idea of who it might be. Just run through that name for us.
Do you know what? We heard that all before when Labour were trying to get into power with the smoked salmon and prawn cocktail offensive. It looks like the front runner is Shabana Mahmood, and in comes the car into Downing Street right now, John. Andy Burnham arriving with a series of other cars coming from Buckingham Palace. We know that he's met the King already. He is already the Prime Minister. There's no lectern out, by the way, which is unusual because it seems that the self-styled King of the North wants to do this without a lectern, maybe without notes, and wander around with the microphone to promote this image of him as the man of the people. But he's just about to get out of the car. Here he is, you can hear the applause. Andy Burnham there greeting his many supporters, shaking hands with them. He's with his wife, of course, and we are expecting this speech. You asked me who his Chancellor is going to be. Shabana Mahmood, as I say, is the front runner. She is currently the Home Secretary. The appeal of her is supposed to be that she's a blank slate. In other words, she has no Treasury experience. Surely that's a worry for the markets. But in our Markets Live Pulse survey, Ed Miliband, the Energy Secretary, was the least market-friendly candidate. 5% voted for him. Shabana Mahmood only got 11%, so not much better. But the market very worried about the idea of an Ed Miliband chancellorship. Mahmood seen as somebody who gets the job done, perhaps more fiscally conservative, but we'll have to see. Burnham, though, in an interview last week with the former footballer Gary Lineker, was talking about the need to pay more when it comes to taxes. He also told the Times, though, that efforts to characterise him as a tax raiser were simplistic. So, given the fiscal bind that the UK finds itself in at the moment, where is he going to get the money to spend on all of the many pledges that he has made to differentiate himself from Keir Starmer? Because, of course, he's going to have to find things to spend on to justify why Britain needed a new Prime Minister. We know that he wants to invest in devolution away from the South. We know that he is going to put efforts into nationalisation. That won't come for cheap. But all the problems that plagued Keir Starmer will beset Andy Burnham as well. He's got to contain the welfare bill. He's got to reinvigorate productivity. He's got to overhaul social care. And he's got to cut immigration if he wants to fend off the threat of Reform UK and Nigel Farage. So it's a tall order on top of the things he wants to do. Another question, how is he going to relate to Donald Trump? Already, we know he's preparing to announce new drilling for oil and gas in the North Sea. Trump's already praised that. A question of whether Trump has overinterpreted what he's going to do. We know he's going to take public control of Thames Water, but What we've been reporting is that the economic forecasts on Burnham's desk today are going to be pretty bleak. Higher inflation, lower growth, higher interest rates. Oil maybe at $150 a barrel because of the Iran war. So it's a difficult situation, but look, this is a man full of optimism today. It's a moment he's waited for a very, very long time. And we're going to hear from Andy Burnham in just a moment.
If you are just tuning in, welcome to the programme. It's the handover of power in the United Kingdom from Sir Keir Starmer to the former Mayor of Manchester, Andy Burnham. Let's listen to the 7th Prime Minister in just the last decade in the UK.
Thank you. I have just come from Buckingham Palace, where I have accepted His Majesty the King's invitation to form a government. In doing so, I am acutely conscious that I am the 6th person in the last 10 years to walk up this street, the 7th Prime Minister since 2016, making this a moment for reflection and new resolution. It requires my generation of politicians to raise our game and rise to the new challenge. Britain needs to show the world that we can regain our stability once again. And that is our challenge, to make politics work, to make it work better. I know people at home are fed up with politics. I hear you, and I want to be honest with you. We have not been good enough, and we need to be better. We will be. We will make this moment a circuit breaker for Britain, bringing forward the biggest changes in the last 40 years. A new political model and a new economic model. In the 1980s, Britain took some wrong turns. Political power was centralised, economic power privatised, large parts of the country deindustrialised, and they still haven't recovered. Many feel as though they're still in decline, and they don't have the ability to turn things around. And that's why we will change politics, to make it more collaborative, more about problem solving than point scoring. And we will take power out of here and carry it into every postcode in the land so that they can do more. And in doing more, build a new economy where we put life's essentials back under stronger public control to make them affordable to you again. Reindustrialising Britain, using public procurement to back British industry. Later this year, I will bring forward a new plan for Britain, a 10-year plan, laying out a path from where we are now to where I believe we all want Britain to be, wherever we're coming from, whatever party we support. But I can do something to give people some breathing space now, some help with the cost of living. And I will set out some of those measures starting tomorrow, including how we pay for them. We will help more young people into work by changing the education system and giving them more support, more mental health support. And we will build more council homes. That is the fair and sustainable way to bring the welfare bill down, to meet our fiscal rules and to honour our commitments on defence to our international partners. We will help people to live well, building a more preventative state, investing in people's success rather than paying for failure. And that work starts now. I will soon go through that door behind me and issue my first instruction to end rough sleeping in our country. It's about putting the right values and the right standards at the heart of government. I will put the care of people at the heart of everything I do. I will give this my all, and I ask you all to pull with me. Let's build a new national sense of unity, of common purpose and positivity. Let us make this the moment when Britain starts to believe again, the moment we bring back hope. Thank you very much, everybody.
The new British Prime Minister Andy Burnham speaking outside of number 10 Downing Street just moments ago. As the Prime Minister suggested, it's a situation you're all familiar with by now. We've seen this many times. It's the 7th Prime Minister in a little more than a decade. It's on the edge of becoming routine, a routine that Andy Burnham would like to end. He's talking about a 10-year plan and regaining stability, ending this situation and becoming somewhat of a circuit breaker. On the ground outside number 10, Lizzie Burden. Lizzie, the new Prime Minister talked about a 10-year plan. He also talked about doing things sooner than now. What can we expect in the next 24 hours?
Yeah, he also talked about giving people some breathing space in the immediate term, and that he's going to set out a plan for that. We already knew that the cost of living was going to be a priority for Andy Burnham, but just think how that's gone for previous Prime Ministers, because of course, John, the cost of living is so tied to the international picture, where Burnham would prefer to focus on the domestic. There's not that much that he can do about outside inflation, so he could end up with a very, very hefty bill if this is what he wants to pin himself to. He has said that he's going to meet the fiscal rules. He reiterated that, and once again we got a reiteration of his commitment to devolution. So once again, a broad vision here, but still a little bit more of a sense of the timeline from the new Prime Minister, Andy Burnham there, who's greeting his supporters just in front of Downing Street right now.
Lizzie, thank you. Appreciate the coverage this morning. We'll allow you to take it all in. The next stop for that conversation, cabinet positions and who might fill what. The Chancellor of the Exchequer very much in focus. If you're just joining us, welcome to the programme. Equities near session highs by 0.5% on the S&P 500. Crude near session lows, some reporting just moments ago.
Out of Reuters, saying that mediators have passed the Iranians a proposal to de-escalate the war with the United States, a 10-day ceasefire. Let's see what the United States has to say about that.
We'll pick up on that reporting in just a moment. We'll catch up with Mike Parle of BlackRock, Colin Sebastian of Baird, Greg Deco of EY, and Ozan Taman of Deutsche Bank. The third hour of Bloomberg Surveillance is just around the corner.
World's most powerful investors don't ring a bell. They quietly reshape entire industries. This is the money shaping the world. The Dealmaker playbook, where power and billions of dollars change hands every day. From private equity and credit to venture capital and M&A, we bring you the inside scoop on the biggest deals and debates, plus exclusive conversations with finance's ultimate insiders.
Great scoop on this. You've been reporting about an activist investor coming up and trying to shake things up. What's the latest?
We've been hearing that there was going to be an activist at some point. The question was who?
There is a convergence of technology and national security.
The United States is a big country. We're playing in the Northeast. That's an economy as big as the United Kingdom.
This is a really interesting space to watch. We're expecting more consolidation. As this is Bloomberg Deals at Bloomberg Invest, I want to talk about the broader deal and M&A environment.
This is a moment in time. We'll see how long we're here. It's far too early to call.
There is an underinvestment in what's going on in private markets.
because everyone's looking for additional AI cloud capacity, and it's very tough to build.
Everybody wants to get things going, and the IPO market is just one symptom of that. It is an early indicator of what we're going to see in the M&A market.
Let's go to Scarlet Fu, who's taking a closer look at drone companies. With ongoing conflicts in the Middle East and Ukraine, there's renewed investor appetite for new names in the space.
Excellent reporting. I'm Danny Berger, and this is Bloomberg Deals. Every week, only on Bloomberg Television.
You know how the market day started.
How it finishes.
Public markets to private markets.
From the micro to the macro.
Covering retail, entertainment, the business of sports.
The supply chains, trade policy, how it all is impacting the U.S. equity market as we drive to the closing bell at 4 p.m.
A holistic approach to covering financial markets.
If it matters to your life, we're covering it. I'm Katie Greifeld.
And I'm Romaine Bostic, and this is The Close.
Live every weekday.
Only on Bloomberg. Context changes everything.
Anything we do in Africa is going to be more risky than the U.S. I think the approach we want to take is how are we being compensated for that risk? And one of those is obviously going to be a valuation question. In our minds, valuation was a lot more attractive in Africa, even if we adjust for some of those Africa risks that a lot of Western investors see. So yes, in a lot of ways, you take some of those models that, as I said, might be more asset medium or asset heavy. There might be some more inherent risks. However, if we're saying we're adding some risk because of that kind of model, but we're now solving a core problem as opposed to maybe a nice to have solution in Africa, that might actually offset it. Where if you're solving something that people really absolutely need and can't live without, in a way that then that's a lot less risky. So again, we'd encourage investors to have a less binary view. In other words, the US isn't risky, Africa is risky. That's going to lead to a lot of complications down the road.
The trading day is about to start.
And you're already looking for that edge.
The opening trade brings you everything you need to know as markets open across Europe.
Let's talk about the significant risk transfers to find space in their balance sheet.
Hedging some of that risk.
You could look at it the other way. Obviously, this stuff is risk-weighted.
I would much rather be long than be short.
We're in a kind of sweet spot.
Very, very strong alignment.
3 revolutions in one.
I'm Guy Johnson.
I'm Anna Edwards.
And I'm Tom McKenzie.
This is your opening trade.
Every trading day, only on Bloomberg.
U.S. jobs numbers are released. Bloomberg has the report under surveillance with crucial data and expert analysis at terminal speed. Nobody covers jobs day like Bloomberg.
All eyes, make no mistake, right now within tech are on AI and everything within that ecosystem.
The only thing more impressive than the performance of semiconductors has been that volatility.
Hyperscalers are punching above their weight here.
You are likely to see some unwind in momentum.
The choice is you stay involved or you fall behind.
This is Bloomberg Surveillance with Jonathan Farrow, Lisa Abramowitz, and Anne-Marie Hordern.
Live from New York City this morning. Good morning. For our audience worldwide, the third hour of Bloomberg Surveillance starts right now, and your price action looks like this. The bounce continues. We had some weight to it just moments ago. Equity futures up by 0.5 on the Nasdaq, up by 1 percentage point. In the bond market, yields look like this: 2s, 10s, 30s, 2 still around 420, just about unchanged at 418. This board is not unchanged. Crude, WTI and Brent rolling over just moments ago. We are negative on the session now by 1%. Brent at 87, WTI at 81.
Yeah, Emery mentioning that report coming out of Reuters talking about some potential 10-day ceasefire to revive an interim U.S.-Iran deal. Just earlier this morning, we were saying, where are the contours for any type of agreement, considering the fact that there seemed like a complete breakdown in both an escalation over the weekend, more ammunition and resources from the U.S. being moved to the region. That said, this is promising. And based on the market reaction, people looking for any sign of hope for some sort of resolution and taking it and running with it.
Leaning into the possibility that potentially we get 10 days of a ceasefire, potentially more commercial vessels can go through the Strait of Hormuz. But right now, it is just a hope. It's from the mediators, which have been working all weekend while the escalation was at really a heightened level. With 3 U.S. service members killed this weekend, the president is moving more assets into the region, according to a number of reports. And the Iranians are continuing to fire at things like desalination desalination plants in countries like Kuwait, really going after U.S. allies in the region.
This is potentially the uncomfortable new normal. We've heard that from several guests over the last several weeks. You have a situation that is very difficult to deal with, a messy set of negotiations, unworkable proposals followed by another unworkable proposal, punctuated by round after round of strike, and then the off-ramp appears. And maybe you take it, maybe you don't, perhaps you do take it, and then you end up in exactly the same position several weeks down the line. And now persistence, as you've indicated, persistence becomes its own problem. The longer it goes on, the more elevated energy is, and the smaller and smaller the cushion becomes for the backdrop for energy, and that becomes a bigger and bigger problem for policymakers the world over.
Yeah, people say, well, why should I get bearish? Why should I get bullish on oil prices based on what happened 2 months ago when the escalation was that much more present? But then there were the cushions of the stockpiles. Now those have been whittled down significantly, and the margins for error are getting smaller and smaller. So at a certain point, do you reach a break point when it comes to the actual amount, particularly of distillates available to a lot of different countries, potentially causing a seismic sort of sea change in the levels?
I said moments ago that crude was lower, and it's not anymore. It's just turned around. I want to handle this headline with a lot of care and be very careful with it, but I'll share it with you, that the Houthis have announced a sea navigation ban on Saudi Arabia. Now, the Red Sea, a key part of the story here, because yes, the Strait of Hormuz is blocked, but the Red Sea so far hasn't been disrupted, and a lot of energy is rerouted through the Red Sea. Now, calling on the Houthis was a threat of the Iranians for some time now, that headline crossing just moments ago.
And more headlines saying that the Houthis will impose this sea navigation starting today, on Monday. So that means that potentially, and this is potentially, we could see 2 choke points in the world cut off. One, of course, is the Strait of Hormuz, which pretty much you have a grinding halt when it comes to commercial vessels moving through that waterway, and then the Bab el-Mandeb Strait when it comes to the Red Sea. And this would be incredibly problematic for the global oil market because that has been a key source for Saudi Arabia to move product.
A massive release valve, a clear support for this market, the amount of energy that came through the Red Sea. If that's compromised, we've got a new problem.
The fear was that some of the affiliates of Iran would start to get involved, that the Houthis would essentially get engaged with this. They haven't until this point. This is a sign of further escalation, and at what point do we take that as the signal versus what we're hearing from the Reuters reporting? All of this still leaves us in the realm of rumor and lack of understanding of where we're heading, which is the reason why there's a lot of jitterness and unwillingness to take big bets. If you're an oil trader, what do you do with this? I mean, in the past 20 minutes, what do you do with this? Do you have conviction? Do you have liquidity in the market? I mean, this is something that has been incredibly challenging.
Brent this morning at 88, WTI around 82. Coming up this hour, we'll catch up with Mike Powell of BlackRock, with stocks shaking off geopolitical risk. Colin Sebastian of Baird looking ahead to Alphabet earnings. Great echo, calling for the Fed to stay on hold this year. We begin this hour with stocks rising as investors shrug off geopolitical risk, with energy still brewing in the background. Mike Powell of BlackRock writing, investors are contending with a much wider range of plausible outcomes around growth, inflation, rates and geopolitics than we've seen in recent years. Mike joins us now for more. Mike, good morning and perfect timing. It's good to see you.
Good to be here.
What's changed about this backdrop that leads to these wider range of outcomes?
Well, I think a whole bunch of things. I mean, one, just structurally, a lot more uncertainty around the macroeconomic backdrop measured over years. Wider range of outcomes on growth, on inflation, on geopolitics, on trade, all the whole list. But then you look, literally, whether it's weeks, days, hours, minutes, we see that illustrated again and again just in the lead into this section. I mean, I think if you look at what's happening in the Middle East, I think a couple of things are true. One, there isn't a satisfying path ahead strategically. The paths of escalation, none of those look satisfying. That's been clear for many months. The paths of diplomacy, similarly, don't look like they lead to anywhere particularly satisfying, and that's why I think we've seen this toggling from one to the other. Exactly to your point, Lisa, that's happening against the backdrop of a world where those cushions and shock absorbers that have prevented this from really spilling over the past many months are drawing thinner, and it leaves us in a pretty fragile place, and fragile in particular to news like what you just articulated around potentially the Houthis stepping in. That's been one of the dogs that hasn't barked in the many months since this conflict began. If it were to begin barking, that's maybe a shock that could shake some of this fragility.
We're dealing with this in real time, but let's go a few steps deeper. Let's say the dog starts barking. What do you think that would look like if the Houthis followed through on this threat this morning?
So, like Anne-Marie said, I think one of the things that's been really noteworthy since the start of this conflict is that the margins of adjustment proved to be more significant than a lot of experts forecast. That was true in terms of toggles around Chinese demand, toggles around U.S. supply, and the drawdown of global, both public and private reserves. But a key source of cushion has been finding alternative paths out of the Gulf for Gulf production, with the Red Sea being at the top of that list. So I think, all eyes need to be on whether or not those flows are still able to reach global markets out of the Red Sea. Again, conflicting signals this morning. On one hand, a suggestion that there's a de-escalatory path ahead. On the other, building on news this weekend around the Houthis that they may be stepping in. I think it just highlights that we need to kind of keep a very close eye, because again, that Red Sea path has been such a key margin for adjustment for global markets against a backdrop where those cushions are drawing down.
And you were in the White House the last time the Houthis did this. So what's the immediate policy reaction?
So I think the immediate policy reaction is to, observe, understand what exactly is being articulated here. But I do think that, the lesson of that experience is, as the lesson of the Straits of Hormuz has been, that it doesn't take a lot of military force projection to really slow or stop the willingness of commercial shippers to ship through sea lanes that are threatened. And so to me, that sort of highlights why it's important here that, against the backdrop of a lot of uncertainty, we find a diplomatic path that can de-escalate and reopen these sea lanes.
This is a direct target on Saudi Arabia. I thought that they have had better relations as of late with the Houthis.
Yeah, I mean, I think clearly, if you look at the past many months, I think, again, a big chunk of the reason why that dog hasn't barked since the start of the Iran conflict has been, a relatively stable relationship between the Saudis and the Houthis. I think that a lot of people have thought that might be coming under increased strain. Obviously, we've seen news in recent days to suggest as much. And again, kind of the past couple of minutes here highlight that may be coming to fruition.
Are you positioning for higher oil prices ahead than people previously expected?
I think what we're positioning for is a world that's going to continue to have a lot of variance around it. And I think to us, that means that whether we're looking at dispersion around technology in the AI trade, dispersion around outcomes in energy markets, dispersion around a range of different rates paths, including with respect to the Fed, variance, uncertainty, dispersion, these are just hallmarks of markets right now, and the global macroeconomic backdrop, which to us highlights and underscores the need for active management to be navigating these currents. And we've seen that play out in terms of the ability of alpha strategies to be really additive to portfolios.
If I were Jamie Dimon or Ted Pick and I were hearing what you're saying, I would say ka-ching, because that's going to keep my trading revenues very elevated for a very long time. Is this a tradable market or a trading market, not an investing market, because of all of these cross currents?
Listen, I think that the fact that we led with is, whether measured on minutes, hours, weeks, quarters, years, this is a market with a lot of variance in it. And that means that managers that can either navigate those currents and have a track record of doing so, or managers that can identify uncorrelated streams of return that can dial down a lot of this noise, those are especially valuable, which is, I think, why one of our core pieces of advice now for the past number of quarters has been the role that market neutral strategies have in a portfolio greater than normal, precisely because of this variance, precisely because of uncertainty around the global bond market picture, et cetera, et cetera. But this just, to me, highlights a sort of, the same advice we've been offering for a number of quarters continues to be kind of core advice now, as seen even in the past minutes.
The noise is deafening this morning, let's put it that way. Mike Powell of BlackRock, my thank you. Bring up the price of crude, Brent and WTI. It's unchanged on the session, but think of this as a tug of war with a lot of tension. And we're going nowhere right now, but the pulling is pretty vicious in either direction. There is a very bullish scenario for crude and a bearish scenario for crude. All of that in the last 60 minutes or so. The bearish scenario, a ceasefire proposal. apparently coming from mediators in the last 60 minutes or so. According to the Iranians, mediators have been working actively over the weekend. The bullish scenario for crude, and bearish for the situation across the Middle East, is this headline that crossed just moments ago that the Houthis are willing to impose a maritime blockade on Saudi Arabia.
What's fascinating is that people are treating these as equal, even though potentially the bullish position for oil is one that's coming more directly from the source, first of all, and second of all, is something that people have been scared of happening for quite a while. So again, this speaks to where the bias in markets is, which is looking for the off-ramp rather than to see the escalation that could potentially leave oil prices even higher than where they are now.
We're talking about 4 million barrels a day that Saudi Arabia has been using their east-west pipeline to their terminals on the Red Sea, mostly Yanbu, that they've been able to get product out to this entire crisis. It's been a lifeline. And also, to Lisa's point, coming directly from the source, we heard on Friday that this was a potential threat from the Iranians and the Houthis. And now it looks like they are trying to make good on that threat. Now, again, is this just a threat to potentially push back the United States in some of these attacks, or is this real? And if it is, that is going to be incredibly bullish for the oil price.
9 days of strikes between the US and Iran, and we're confronted this morning de-escalatory risk and escalatory risk simultaneously this morning, with Brent crude just about unchanged. Let's give an update on news worldwide with your Bloomberg brief. Vonnie joins us for more. Hey, Vonnie.
Hey, John. Yeah, just recap those headlines in a volatile session for oil, as you've been saying. They're all out in the last 20 to 30 minutes. Reuters reporting mediators are proposing a 10-day cessation of strikes between the US and Iran. And then shortly after that, we got the headline: the Iran-backed Houthis announced a, quote, maritime blockade on Saudi Arabia. Andy Burnham is the UK's new Prime Minister. Speaking at 10 Downing Street after meeting with the King, he said he will bring forward a new 10-year plan for Britain this year. He's expected to appoint his cabinet in the coming hours and days. The Odyssey winning the weekend box office, the film bringing in $124.5 million in ticket sales in the US and Canada. The movie, based on Homer's epic poem, stars Matt Damon, Tom Holland, and Anne Hathaway, among other stars. It received a critics' approval rating of 96% on Rotten Tomatoes. And that is your Bloomberg Brief. John.
Vonnie Quinn, thank you. Thanks for the update. More from Vonnie in about 30 minutes' time. Up next on the programme, the Morning Calls Plus, Colin Sebastian of Baird, looking ahead to earnings from Alphabet in just a few days' time. Live from New York City this morning. Good morning.
From the world of politics to the world of business, Joe Matthew and Kaylee Lines deliver news, insight, and analysis live 2 times a day, every trading day. Balance of Power at 1 and 5 Eastern, only on Bloomberg.
Technology is embedded in every aspect of our lives, and that revolution is playing out in real time. From finance to defense tech, AI to entertainment, from the road to the stars. Bloomberg is bringing you the stories of companies and people that are pushing tech to new frontiers, and the politics reshaping global tech markets. I'm Ed Ludlow, live in San Francisco, and this is Bloomberg Tech. Every weekday, only on Bloomberg Television.
The countdown is on. Everything you need to get the edge at the end of the market day. Get ahead of tomorrow's trading with The Close. Weekdays on Bloomberg. Context changes everything.
essentially, you know, what we've been hearing in recent weeks is that people think that there's a bit of profit-taking, momentum unwind, but that things are really more technical than fundamental in nature. And those are the kind of environments we want to step into and look for opportunities.
We were looking for a quiet start to the trading week. We haven't got one. That was Laurie Calvasina of RPC. Equity futures are positive, up 0.4 on the S&P. No problem there. Bounce back on the Nasdaq following losses of about 4% on the Nasdaq 100 last week, up by 0.8%. Not a big problem there, although there has been a problem in chips given the correction we've seen there into bear market territory as of Friday. In the bond market, 2s, 10s and 30s, yields just about unchanged. It looks snoozy, kind of is, up a single basis point at 420. But for crude, anything but a snooze. I know we're unchanged on the session, but the tension around the price of oil right now is sky high. Just in the last 60 minutes, the last 45, if that, we've had a proposal for a ceasefire on the table reportedly, and at the same time, we've got a proposal for real escalation.
Right, this could potentially choke off the Red Sea and the Bab el-Mandeb Strait, which has been critical for Saudi Arabia to move oil and other products because they haven't been able to rely on the Strait of Hormuz. They've been relying on their east-west pipeline. They've been able to get 4 to 5 million barrels a day out using these terminals. And the Houthis are saying that they will impose a maritime blockade on Saudi Arabia in retaliation for what they say is the kingdom's siege on the Yemeni capital, and they say the blockade is effective immediately. So
some big two-way risk to confront this morning in the energy market. Brent around 88, WTI around 82. That's the price action. Let's get you some morning calls. First up, Wells Fargo cutting its price target on semi, expecting the company to continue to beat and to raise. Your second call from Phillips Securities upgrading Netflix to buy, expecting earnings growth to re-accelerate over the long term. That stock hammered into the weekend and no bounce this morning. And your third and final call comes from Stifel, cutting its price target on IBM, citing its below consensus preliminary second quarter results. Took them some time. That stock is down by 0.6%. Forgive the snark. It's been a few days, though, hasn't it?
The market already re-rated that stock, and ultimately, a lot of people have already soured on that.
Losing about a quarter of its value in a single day. Let's talk about the next tech story. Alphabet kicking off big tech earnings on Wednesday. Pressure building on hyperscalers to justify some massive spending. Bloomberg's Ed Ludlow has a preview. Good morning, Ed.
Yeah, good morning, John. It's not necessarily just now the scale of spending that's being tracked. So through this week, Alphabet, but also Intel, where the spending's getting captured, right? The expectation for the Google parent is 20% top-line growth. They will be big in the commentary on what the trajectory of their capital expenditures are, but probably the first to give real evidence that something comes out the other side of that, that there is demand that is being met as a result of their infrastructure expansion. Intel's the other side of that trade, right? A big part of the bear market you reference, which was very short-lived, right? Basically the 16th through to the start of the morning session this morning was the anxiety around the Kimi K3 release. But it's not just necessarily that more efficient AI systems mean less hardware. There's a lot of optimism that in Intel's case, we'll see a lot of pace in revenue growth because their data center business, their foundry business is responding in real time to demand that's still there. That's the expectation for this week, though we had a little bit of a nervous weekend after the surprise release from Moonshot.
Without a doubt, a rocky Friday, that's for sure. Ed, thank you, sir. Looking forward to the show. Bloomberg Tech just around the corner, a few hours away right here on Bloomberg TV. Colin Sebastian of Baird writing the following. Google is continuing to show positive momentum with a range of AI-related products and services. Colin joins us now for more. Colin, welcome. I'll try and make this simple, but I imagine it involves a complex answer. If they increase CapEx intentions, if any of them increase CapEx intentions over the next week, is that a headline this market punishes or rewards?
Well, I think there could be a reaction to that initially, but really the key question isn't how much they're spending, it's the follow-through into revenues, margins, and returns. And Google's backlog, as we've seen last quarter, we think they'll reiterate that that is extremely strong. We'll see it in their core products. So it's really a balance of both the spending and the returns. And we think Google should deliver on both, even if they do tick up the CapEx guidance.
Is that enough, Colin? The idea of backlog, we've heard this continually, that demand continues to outstrip supply. Is that good enough if they don't show a commensurate increase in revenues that show that they can monetize this and charge their customers more?
I agree with you. No, I don't think that's enough. I think we need to see accelerating revenues in Google Cloud Platform for the quarter. We think it'll be the fastest growing of the hyperscaler platforms. expectations are higher, of course, just given the amounts of spend and the demand. But we do think we'll get that follow through with Google Cloud. And also the margins. The margins are a key point because that demonstrates the return on investment. And Google Cloud Platform margins should continue to be stable, at least according to our checks.
Does it matter that Gemini's latest iteration isn't available, or at least it was pushed back a couple of months? Or frankly, is this a feature, not a bug? The idea that it's sort of the less frontier-like models that they're able to offer at cheaper prices, but disseminate much more widely and gain traction, given the fact that Google search has continued to dominate. Is that something that you're looking for?
Well, we think there are going to be, fits and stops related to model releases, but at the end of the day, the model itself is becoming more like a commodity, and more of the value is becoming more of the platform and the applications. And that's part of what Google is offering, is a very strong platform offering, irrespective of the model strength. But it is something we track pretty closely because it is sort of core to the fundamental part of their AI initiatives.
Who do you think has the best model right now? Is it Anthropic?
I think according to enterprises, Anthropic is the leader right now in terms of adoption and usage. Although what we're hearing more broadly is that enterprises are becoming more cost-oriented, meaning they're using more of the lower cost, in some cases, the Chinese large language models, at least to start, to do experimentation. And then once they move into more production of workloads, that's when you see more stickiness, I think, with some of the closed-walled garden models such as Anthropic and Claude and OpenAI, et cetera.
Well, you mentioned the Chinese models. What do you know about them? Are you concerned about this Kimi K3?
Well, I think we've had these DeepSeek moments a number of times over the past 2 years, and it's really favorable in terms of the overall AI development, right? That there is competition, that there's global embrace of the technology, but clearly a lot of companies based in the US that are very dependent on their models, they need to remain competitive. And I think there is a difference between open source and there's a difference between some of the walled gardens and the security and the applications related to those. But we watch it very closely. Obviously, the initial indications on the new model are fairly positive.
Colin, Jan 25 feels like a lifetime ago. What's the biggest difference between then and now for you?
I think that the ability for companies like Google to demonstrate that AI has a very fast return on investment is probably the biggest difference. And we're starting to see that now play out, not just with Google, but with other companies, including Amazon and Meta. So I think it's a very exciting change, I believe, in the overall environment.
Colin, appreciate it. And looking forward to the numbers and your coverage of them. Connor Sebastian there of Baird on Alphabet with a 400 price target and an outperform rating on the name. They report on Wednesday. The following Wednesday, you'll hear from Microsoft and Meta. The following Thursday, so next Thursday, not this Thursday, you'll hear from Amazon and Apple. All stacking up for a big week for the big tech names.
Yeah, and the key question really is going to be how much dispersion is there going to be, because we're entering a phase of winners and losers. Scott Cronert of Citi saying that the Mag 7 is dead as a construct earlier this morning. So ultimately, who is going to be the winner? Who is going to gain cloud computing in terms of their overall pool of share of the pie? And who ultimately can pledge to continue to increase spending and justify it, but increase ROI that they can prove.
It's funny watching how Apple trades from day to day when these guys all get caught up in a bit of trouble.
Is this the uncorrelated trade?
Right. For those guys, sure, just not spend it.
I mean, that's their objective. They want to come in and win on the back end.
NASDAQ futures this morning up by 0.8%. Up next, we'll catch up with Greg Dacko of EY Parthenon, expecting the Fed to stay on hold for the rest of the year ahead.
At 9:30 a.m., the market tells you what it's really thinking.
We beat the drum to the opening bell.
With deep analysis of the forces driving the price action.
Focusing investors on what really matters.
Where the money flows, which markets are changing.
Conversations with players shaping the narrative.
Innovative growth companies gravitate to NASDAQ.
It's not just like, let's buy the Mag 7 or AI.
That's a really compelling story.
This is where your trading day begins.
And this is Open Interest.
Only on Bloomberg.
Asia is at the forefront of some of the world's biggest stories.
And we're here, where the action starts in Sydney.
And in Tokyo, get ahead as the global trading day begins.
The Asia Trade, weekdays only on Bloomberg. Bringing you the latest business news wherever and whenever it happens. I'm Scarlett Fu, reporting from America's biggest military shipyard. This is Bloomberg.
Tune in to Bloomberg Business Week Daily.
We got to talk crypto.
From the magazine that helps global leaders stay ahead.
What's the conversation around your company?
Bringing you insight on the people, companies, and trends shaping today's complex economy.
Planning very big things.
A new level of premium.
Plus global business, finance, and tech news as it happens.
The floodgates of innovation are going to open up.
You can't fake passion. You either are or you aren't.
Bloomberg Business Week Daily, only on Bloomberg.
The open about 60 minutes away. Equity futures bouncing back from Friday's losses. Two-day losing streak on the S&P. We're bouncing back by 0.4%. The weekly loss down about 1.55% through last week. On the Nasdaq, down more than that. On the Nasdaq 100, down about 4 this morning. Positive about 0.9. The chip sector having a really rough run of it. We're down about 20% from the highs of June. Only, what, 4 weeks ago?
Yeah.
It's a very, very big decline in a short amount of time.
Yeah, is it because of fundamental whipsaws when it comes to the expectations for the AI deployment, or is it because of SK Hynix and Samsung and leveraged ETFs and single name holdings in South Korea? I mean, ultimately, are we talking about just a highly technically challenged backdrop for some of these chip names, or are we talking about something fundamentally changing with respect to the way that models are forcing the hand of certain places? Like, in other words, DRAM versus some of the other capacities that NVIDIA specializes in.
It's quite interesting how well the market's ring-fenced the chip issue. To see that massive decline and a bigger weighting on the S&P 500, and then to see what's happened elsewhere. I think the bank sector's up for 7 weeks. KBW Regional Bank Index doing really nicely as well. Some of those banks trading at all-time highs, so it hasn't pulled down everywhere else. In fact, everywhere else is starting to pick up. In fact, Mike Wilson of Morgan Stanley, writing this morning, publishing in his Monday note that he's expecting more of that rotation in the weeks and months ahead.
And he's not alone, even with some people saying that small caps could outperform. A lot of this predicated on the idea that there still is a disinflationary force outside of, say, what we're seeing with respect to oil prices that potentially will allow the Fed to remain on hold and keep things in a place where you can see recovery in the rest of the universe. I would say that the financials have benefited from the whipsaws in some of the semi-names. It's not exactly ring-fence. It's benefiting from them because the trading revenues have been absolutely bonkers. But the key question is going to be, how long can the AI train continue to chug along with respect to financing? And if you do see that continue to evolve, the rest of the market can continue to feel some of the benefits, as we've seen from other sectors as well.
Huge profits at the banks. The IPOs are just going to be huge. We've had a record IPO already this year. Equity capital raises. Every time they come to borrow, these banks are making money. And every IPO we get, you've said it, you get the IPO and then you get the debt offering straight afterwards. So these banks will make more money off those same things. Let's talk about the bond market. 2s, 10s and 30s. 2s around 420. So last week after CPI, we said that's the sound of the door closing on a July rate hike. That meeting's not live anymore. And then I read the Beth Hammock statement on LinkedIn into the weekend, and I just thought, okay, it's not live for the market, but it might be live for a few policymakers on that committee going into that meeting.
Yeah, there is no conflict of the dual mandate that employment is just fine and inflation is a real problem. And she said for the first time in her tenure, and frankly, in her memory, she's hearing business leaders come to her and say, inflation's a problem, do something about it. Is she representative of a mainstream of Fed officials, or is she singular in her hawkishness? Ultimately, the market's been working with this and ultimately stagnant. I mean, what's notable is that amid all of the whipsaws that we see the MOVE index, the implied volatility in treasury yields going forward has been remarkably low. It sort of isn't this sense of uncertainty with respect to how big the moves are. It's sort of a stasis because of the push-pull that we see under the market. And that, I think, maybe is giving people confidence, even though we really don't know the path of travel.
We've been quite range-bound. The centre of gravity for the front end of the curve around 420. We're around 420 this morning. Switch on the board and get to the commodity market. Brent and WTI, what a mess it is in the Middle East. How do we sort this out? Brent this morning around 90. We breached that level just briefly in the last, let's call it 90 minutes. Just for the sake of conversation, in the last 90 minutes, we've had a proposal, at least a reported proposal for a ceasefire. And in the last 30 minutes, we've had the Houthis come out and say they're ready to shut down the Red Sea for Saudi Arabian shipping. Now, that's quite a headline if they follow through.
The oil market right now is at a fork in the road, and it's either going to be potentially an off-ramp with 10 days of a ceasefire. This is what Reuters is reporting as mediators have offered the Iranians, or it's going to be more escalation and a second choke point in the world for oil and oil products can potentially get shut off. If the Houthis decide to shut off Saudi Arabia's navigation, maritime navigation, that basically means that 4 to 5 million barrels a day on the high end could be taken off the market because that's how much they've been moving through their east-west pipeline. So right now, it seems like threats and reports, and we just don't know yet. But two huge catalysts.
Mike Pyle of BlackRock was talking about the wide range of outcomes that we have to confront, the two-way risk, if you will. Just think about it. If you get one headline, we could retest the post-war lows. You get the other headline materialize, you could retest the post-war highs very quickly.
So what do you do? I mean, how do you trade? And he's saying uncorrelated assets. What's uncorrelated to all of these different aspects? I mean, given the fact that ultimately everything's an AI trade, and ultimately when it comes to the consumer, everything is related to the cost of doing business and just how much inflation is going up.
Let's talk about some single names, some stock movers this morning. Yahara has more. Hey, Yahara.
Hi, John. Well, before we get to tech earnings later this week, we got to get through the bucket of popcorn first. We start with AMC. Those shares up 20% in the pre-market after a 1-2 punch of strong earnings and a strong opening weekend for the Odyssey. The theater chain topped revenue and profit estimates. It also says that more than 4.3 million people visited AMC theaters this weekend, and it was AMC's biggest opening weekend for an R-rated film since 2024. Turning to tech, we turn to this name. Iron shares are soaring nearly 10% in the pre-market. If you didn't know, this is an owner and operator of data centers for the likes of NVIDIA and Microsoft, and it says it signed $2.8 billion in new multi-year AI contracts, and because of those deals, it's raising its AI cloud revenue target to more than $4 billion, up from $3.7 billion. And we end on the chip stocks. They are rebounding this morning with names like Intel up 3% in the pre-market. After last week, the sell-off brought it into bear market territory. Now investors have a chance to reset with tech earnings. Alphabet starting on Wednesday, and the focus, of course, will be on AI spending after the Chinese startup Moonshot raised questions about whether these increasingly sophisticated models can be made with much less. But as we heard from our analysts, ultimately the deciding force may be whether these companies can prove a return on investment. John?
Yahara, thank you. Thanks for the update. So, for the Federal Reserve, the so-called blackout period begins. No Fed speak going into the Fed's next meeting. Many of you, I'm sure, are very, very happy about that you don't have to follow all these Fed speeches. I can think of one man that's even happier than all of you, and his name is Kevin Walsh, the Federal Reserve Chair, because he doesn't want much of that happening anyway. Mike McKee joins us now for more. Mike, good morning. Kevin Walsh, you, yourself included, I'm sure. We got a little bit of Fed speak going into the weekend. It was the Cleveland Fed president, Mike. It was Beth Hammer making a statement on LinkedIn, which I felt like for some people, Mike, maybe that meeting is live a week or so away.
Well, at least for discussions perhaps of dissents at the meeting. Wall Street doesn't think it's going to be a live meeting at the moment. I think we're doing this week backwards maybe because if you're on Wall Street, you kind of want to have a busy day Monday, Tuesday, Wednesday, so you can go to the beach early on Friday. But all the news for us this week is at the end of the week. As you just showed on the calendar there, we have jobless claims on Thursday, S&P PMIs on Friday, as well as new home sales. Now, none of those are really going to influence what the Fed is doing, but if you are on Wall Street, you need to have something to do, and so you'll be positioning yourself into the weekend. in terms of what the Fed is going to do. And you can see the volatility priced in for this meeting. It's been crazy with the war sending prices up and down and people's concerns about inflation up and down right now. We're not looking at much of a chance at all of a rate increase. But again, it is, as you mentioned, the Beth Hammock issue, Lori Logan, are those people going to be dissenting? If you do need something to focus on, I guess you can go see The Odyssey. That'll take up 3 hours of your time. Or you can worry about these things, and worry about means in the bond market, of course, trading. New tariffs on Friday are possible. The president's 120-day IEEPA tariffs run out. So is he going to impose new tariffs? Probably. The question is how much and on whom, and how will that play into the inflation picture? The FOMC meetings of July 29th, September 16th, and October 28th become interesting dates because the feeling is if this is not a live meeting, then maybe September, because they're not going to do October because that's right before Election Day, November 3rd, and that will become a big issue for the markets as we get closer and closer to that date. And now the president even has put a government shutdown on the calendar as a possibility for October 1st, and that'll be something else to keep in mind. So there's stuff out there, but it's just not this week that's going to be moving a whole lot. We'll be waiting for Kevin Warsh to come out next Wednesday and give us something to chew on.
If he comes out. And if we get
he comes out, that is true.
We'll see. We'll see.
I'm going to go down there and wait for him just in case.
Just in case. We want your coverage of the event anyway. Michael, thank you. We've all been talking about the prospect of them maybe not having a news conference.
I mean, he said unless he has something to say, he's not going to have a news conference. Is he going to set a precedent?
We'll see. Stay tuned. Or not. Greg Deco of EY Parthenon writing, we do not believe the July FOMC meeting will be a live one. Our base case remains that the Fed will stay on hold through the remainder of the year. Greg joins us now for more. Greg, good morning.
Good morning.
Hammock of Cleveland, Logan of Dallas, voting members, do they dissent in a week's time?
I think they dissent, but I think the Fed does not move. I think the Fed is going to be on hold through the rest of the year. The reason being that if you look at the inflation developments, even though patience is running thin amongst all on the committee, you are in this environment where you have some disinflationary currents that are likely to carry the way through the end of the year. Tariff pressures are past their peak. You're seeing there's still the effect, the pass-through of lower energy prices, even though we've seen this reacceleration in oil prices and gasoline prices, but there's still a disinflationary effect there. And then, very importantly, the labor market is not inflationary. Wage growth is still trending down towards 3.5%. That's not inflationary. That should not be a source of inflation going forward. There are risks, however, and I think that's very important to keep in mind. September, very much a live meeting, and the next meetings after that, October, November, and December, will also be live meetings. But I think the Fed will eventually end up on the side of not tightening monetary policy this year.
Do you think if we get those dissents that they compromise the leadership of the new Fed chair, or do they actually do him a little bit of a favor through the summer?
I think that's very important to keep in mind because during his testimony, 2 days of testimony, he said a lot, but very little in terms of his views on inflation, his views on monetary policy. He was cryptic at best. He did not say whether inflation was this number or that number, which for a Fed chair you would expect at least to express one view of a number, a gauge of inflation. He did not express any views as to whether he thought there was disinflation in the pipeline. He did not express any views as to whether the AI-led investment boom is inflationary in the short run. These are all topics that the Fed chair should be addressing. So I'm thinking that he's trying to hide in some ways behind the committee, and that even if the committee were to push for a rate hike in September, he might take that as a view of saying, well, actually, I was in favor of maintaining monetary policy, and I was not in favor of raising rates, but I did vote with the committee because that's the right thing to do.
Bill Dudley came out with a Bloomberg opinion piece where he said that the Fed should tighten at this point. He said there's little evidence that monetary policy is currently restrictive. Do you agree, particularly as evidenced by what we're seeing in capital markets?
I think you have to distinguish two things, right? You have to distinguish the real economy from capital markets. And when it comes to how tight monetary policy is, I think for some sectors, it is relatively strict. If you take us back to where we were back in March, before the onset of the conflict in the Middle East, you were seeing ongoing disinflationary pressures. We were heading towards that 2% target. So it wasn't as if there were inflationary pressures that were coming from strong demand and strong economic activity. When you look at capital markets, when you look at the equity market in particular, you are seeing a lot of forward momentum, which tells you that financial conditions are not restrictive. So I think you have to disentangle the two and depart from one view being tight for everything versus one view being tight for one thing versus the other.
The other aspect of Bill Dudley's point is that there's a credibility issue here for the Federal Reserve, that they can talk a big game, but if they don't execute some sort of action, then ultimately it will fall on deaf ears. Do you agree with that?
I agree with that. I mean, resolute commitment, as Chair Warsh said a few times, is not enough to convince everyone that there is the possibility of the Fed tightening. If you are really having that resolute commitment, you have to act upon your words. You can't just use words. And one paradox here is that Chair Warsh has been very critical of the prior Fed. He said that inflation has been a choice and that policy mistakes were part of the reason why we had a prolonged period of elevated inflation. If that is the case, then you have to act upon the higher inflation that you see, and you have to bring inflation back down towards 2% in a rather rapid way. The key question here is, does tightening help alleviate the demand-driven pressures? That's really the key question, because we have pressures from the supply side. The Fed can't really do much about the supply side pressures, oil prices, tariffs. They can't do much about that. The key question is whether demand-driven inflation from AI is something the Fed can address. I don't think higher interest rates detracts hyperscalers from investing and continuing to put that upward pressure on inflation. But if you do raise rates, you tend to tamp down demand across other sectors, and that's where you can get some disinflationary pressures. But does the Fed want to sacrifice other sectors in the meantime while you're seeing a lot of investment in AI continuing to drive inflation? That's really a hard trade-off for a lot of policymakers.
Greg, it's good to see you. Always is. Thank you, sir. Greg Dacko there of EY Parthenon, looking ahead to that Fed decision a week or so away next Wednesday. Let's give you an update on news worldwide this morning with your Bloomberg brief. Vonnie Quinn has more. Hey, Vonnie.
Hey, John. Thank you. Moonshot AI is getting ready to go public. Sources telling us here at Bloomberg it could seek a Hong Kong listing in as few as 6 months. The Chinese AI pioneer is wrapping a fundraising round that may value it at more than $30 billion. Gas prices are on the rise again. AAA saying the national average for a gallon of regular gasoline is now above $4. Energy Secretary Christopher Wright saying the Trump administration is trying to bring them down.
Gasoline prices today are more than $1 a gallon cheaper than they were 4 years ago under the Biden administration. And we'll do everything we can to drive them further down in the weeks and months ahead.
Wright also saying oil will continue flowing through the Strait of Hormuz with or without Iran's help. Vice President J.D. Vance and his wife Usha announcing the birth of their 4th child, a son named Alec Neal. This is the first child born to a sitting vice president in more than 150 years. Vance has advocated for Americans to have more children and has expressed alarm about the country's declining birth rate. That's your Bloomberg Brief. John.
Vonnie, thank you. Appreciate the update. Up next on the programme, we'll set you up for the week ahead. Plus, we'll catch up with Ozan Talman of Deutsche Bank as markets face what he calls a perfect pre-August storm. From New York City, you're watching Bloomberg Surveillance.
We've been scouring the frontiers of science and technology to help explain the difference between the next gold rush and whatever this thing is. And in season 2, we're upping the stakes. More danger.
Now that is some high-grade uranium mineralization.
We used to have a stable climate on this Earth. Right now, we do not.
More science.
We're pushing the envelope of technology in multiple directions. Software, hardware, chemistry, physics.
The cable is like very cold.
And more CEOs that can nail the photo shoot.
Hundreds and hundreds of billions of dollars are at stake.
While the problems are economic, the solutions are too.
And yes, we will be talking about AI.
There's a lot of humanoid hype out there.
But our future doesn't run on hype. It runs on innovation. Watch season 2 on all these lovely channels.
Every weekday, Bloomberg puts a spotlight on a different aspect of global finance. Flows, funds, and the forces shaping markets on ETF IQ. The future of money with Bloomberg Crypto. The players behind major transactions on Bloomberg Deals. Rates, risk, and the cost of capital on Bloomberg Real Yield. And personal finance, retirement, and wealth management on Bloomberg Money. A different topic every weekday, only on Bloomberg Television.
Key investors, top executives, global innovators. Join me for in-depth conversations with the biggest newsmakers on the day's top stories. Insight with Haslinda Amin, only on Bloomberg.
Join me each week on Wall Street Week for stories of capitalism from business, markets, economics, tech, and climate. More than what you need to know, it's what you need to think about.
I think we are due for a bit of a pullback, and some of it will come with allowing the more negative or concerned narrative to play through as well. When this happens, it can happen really, really fast. We saw a bit of it last week. I think maybe we get a bounce. People are looking for their earnings, but the next wave, I think, could be fairly ugly.
Something could be fairly ugly. Peter Che of Academy. Let's talk about the beautiful game just touching down in Spain. The Spanish national team and new World Cup champions. Rodri touching down with the World Cup in his hands just moments ago. The whole team getting off the plane following a 1-0 victory over the Argentinians yesterday in New Jersey. Can we stop calling New Jersey New York now? Are we done because the World Cup's officially over? Right.
I think that's fair. Although I don't know what the judges are going to say about that. But I will just say that ultimately, this is a group of people who have just had an incredible run. They make everybody look bad in their play, in their style of play. Have they slept? Are they just, have they just been celebrating nonstop?
I doubt it. What a run. What a defence as well. Conceding 1 goal the whole tournament.
Unbelievable.
It's crazy,
no shots on goal.
What a record. All. In a tournament, by the way, which averaged close to 3 goals per game.
This wasn't exactly a low-scoring game.
Right, and so in a tournament where you're talking about on an average per game, the highest scoring tournament since '82, for total goals, the highest scoring tournament ever, and of course the extra round of games contributed to that they only conceded 1 goal across all the games they played. That's bonkers.
They played a different kind of game, and I kept watching the passing, the camaraderie.
You enjoyed it, and I just found it suffocating.
I know.
But you know,
it's fascinating. Patience.
Right, they're very happy with themselves. Great news. What is it about New Jersey pretending they're New York sometimes, right? Newark Airport pretending that's New York.
New York City region.
Is that what they do?
Yeah. It's the tri-state area that weighs in.
It is a tri-state area airport, but it's certainly not New York.
Can I just say, putting the World Cup on the floor, what are you doing? Can't do that. Can't do that. What are they doing? Pick it up.
Yeah, that's kind of crazy. I feel like if it touches the concrete, it should have like a blanket.
Can you imagine if
something.
Trump did that? What people would say. Anyway, let's move on.
Apparently, they edited Trump out of their Twitter photo from the Spanish team or government. A million people sent it to me today.
Why wouldn't he just get off the stage? Come on, just let them have their moment.
Yeah, it had really nothing to do with the United States, besides that it was played here. He was part of the trophy delivery. That seemed to be enough, and then he was supposed to exit, stage left.
My producer remarkably informs me this is about it touching Spanish soil for this first time after the win, okay? Okay. A meaningful moment. Let's get back to the markets. Stocks rising ahead of a big week for tech earnings. Alphabet just a few days away. Ozan Tarman of Deutsche Bank was up all night celebrating Spain's victory. He joins us now for more. Ozan, good morning. It's good to see you.
Wonderful to be here.
What did you think of the game? What's your review?
Even the red glass. The right team won. The best team won. I like Messi, but too much negative football at the final.
Hard to disagree with that. Your market view, pre-August, was set up for something dicey. Why?
Because we're getting a little bit too carried away on the belief in carry, on the positioning. Maybe a bit like people believed in France too much. We do a TSMC, i.e. we don't rally too much afterwards. And we shake. I'm not too sure about that either, by the way. I think it will be a little bit in the middle. EM carry will do okay. Chop.
What's funny to me is that perfect storm on the upside is Nirvana, and the perfect storm on the downside is it might be a little shaky. I mean, is that notable to you in terms of positioning or how you're talking to people? There isn't a belief that you're actually going to see some sort of material drawdown in the story that has driven all economic growth, which has been artificial intelligence.
That's the third pillar. So we keep going between AI, Iran, and Fed. AI, right before Iran war, it was all deflationary, 50% of white-collar jobs will be gone. Now everybody, including my research, believes on AI inflationary. But all of a sudden, look who's outperforming. Apple is doing much better than NVIDIA. All of a sudden, it becomes more fashionable not to spend that much on the AI chips. Maybe Ben Affleck, after all, had some points. So, look, I think football, right? I think we're not even in the 70th minute or 6th to 7th inning of the AI boom.
Well, the second quarter, as we now say in football.
Oh man, yeah.
After FIFA's a big adjustment.
But when we do get too crowded, I think some of the cream will be taken out.
You're known on Wall Street for hosting these macro dinners around the world. Is there robust debate, or does everyone pretty much feel the same way about where the market is right now?
There's two more coming in New York now, but first I start with survey. Yes, there is. If anything, I think in June, with no disrespect, in one of my smaller ones, the peak of AI, maybe the bullishness I sensed there. Nothing can go wrong, AI revolution, etc., etc. So in New York, I expect that to be questioned a lot more. Some positions have been washed out a lot. When I last came here, like just 3 months, right around the Iran war, everybody and their brother believed in short US rates versus long euro. European doldrums versus, wars coming in, talking hawkish. We would go to 480s, 485s again. Did not work at all. Compared to US rates, European rates continue to sell off. Again, Deutsche Bank, blue tie, Spanish rate. Finally, John, Germany did do the infrastructure reform, at least pass it. So the good old Bund is staying at 3.15. So talking about pain, right? UK, similar, walking in with Rodri, walking with Burnham. So far, no trust rate. Chancellor there will be important.
Very.
EC paying a bit of a diet to the markets by going Mahmoud.
Ozan, it's good to see you, buddy.
Oh, we can go on and on and on.
We could all day. We will after the show is finished.
Exactly.
It's good to have us in the studio. Hey, Ozan Tarman there of Deutsche Bank. From New York City this morning, good morning to you all. Thank you very much for choosing Bloomberg TV. Tomorrow, here's your lineup. This is Bloomberg.
Everybody has a moment where they put into action all they've practiced, where they step up to a challenge and either succeed or fail. But what are those moments for some of the world's most influential leaders?
It was a rough and tumble world, and I thought, okay, I can rise up, I can play this game, and I did play the game.
It was great, and it was depressing, and it was disappointing.
My chair at the time sat down with me and said, succession starts now.
I'm Francine Lacroix, an award-winning journalist. For the last 25 years, I've interviewed world leaders, bank bosses, even fashion icons. I'm often asking about the news of the moment. But I've always been curious, who are these people as leaders? Join me for the podcast version of Leaders with Francine Lacroix. I'll start your week with conversations that explore what drives the world's most influential people, how today's leaders got to where they are, where they're going next, and how they've transformed their organization in the process.
Make decisions. A poor decision is always better than no decision.
You have to have truth tellers around you, and you have to be willing to listen.
You don't want to be setting strategy in the middle of a transaction, that's for sure.
Do it for the right reasons. Don't do it because of FOMO.
We'll also learn lessons which we can apply to our work and daily lives. Tune into the podcast version of Leaders with Francine Lacroix. Listen and watch on Bloomberg Television or wherever you get your podcasts.
Look at the more successful economies in the region. The key to their success is continuity.
But the way our Constitution is written, it actually encourages a lack of continuity. And that's a problem. The terms for local government is 3 years. When I first became a congressman, it takes you a few months to learn the business and to make your connections, the network, etc. If, for example, you are not particularly favored in the majority, passing a law in a year and a half is not that easy to do. After about a year and a half, you already hear that there's somebody in your district beginning to campaign and is going to oppose you in the next election. So you have to go back to your district to take care of that. And how much work do you get done?
Bringing you up to them in the news whenever and wherever it happens. I'm Chevrian in Seoul, and this is Bloomberg.
Happy Monday. We attempt to rebound this morning 30 minutes ago until the start of your cash equity trade. I'm Danny Berger.
And I'm Isabel Lee. Open interest starts right now.
Coming up on the show, China's moonshot is reshaping the AI race just as big tech heads into a critical earnings season.
Meanwhile, all whipsaws as traders weigh a possible ceasefire against escalating tensions in the Middle East.
Plus, Boeing maps out its next-gen jet. We're going to hear this hour from the CEO of its rival Airbus live from the Farnborough Air Show.
Let's look at some stocks, Danny. Happy Monday. We're so
Monday.
Glad you're back. There are a lot of stocks to look at because there are a lot of things happening. I mean, first, the tech trade higher today amid concerns that China is producing cheaper and more efficient AI models. On Friday, we saw the moonshot fears that replayed some deep-seek panic, and that's creating a new challenge because big tech companies are spending billions in AI. So this week, we'll hear from Google parent Alphabet, Tesla, and Intel, among others. But for now, you're seeing green on your screen. Micron higher by 4%, SanDisk higher in pre-market by 3.5%, and NVIDIA higher by almost 2%.
Yeah, we'll see how the market reacts to those Alphabet CapEx numbers. It's going to be really interesting and maybe very telling for this market if that rally can continue. Boeing also climbing, Isabel, in today's session. The CEO told Bloomberg that the company is turning a corner when it comes to supply chain hurdles. It's ramping up production, so it needs that. China's SMBC Aviation also announced an order of 100 Boeing 737 MAX jets, and Isabel will continue that conversation with the Airbus CEO later this hour.
Let's get back to China's disruption in the AI trade in recent days. For that, we're joined by Bloomberg Executive Editor for Global Technology, Peter Elstrom. So, Peter, how do you read this moment? Do you think that it's a DeepSeek version 2, or do you think it's something different? Because now a lot of the tech companies kind of had an idea of what DeepSeek could do, but this is moonshot, and maybe it's something new altogether.
Yeah, I think the tech companies in the U.S. in particular thought they knew where the competition was coming from in China, and this was a bit of a surprise. We had seen the DeepSeek moment last year, as you had talked about. There were some other players that were kind of prominent, including Alibaba, the e-commerce company that has a strong model in Gwen in particular. But then over the weekend, we got this news from Moonshot that they had introduced Kimi K3, which is a very powerful model. It outstrips most of the frontier models on many parameters, except for the two leading ones from Anthropic and OpenAI. So it's a very strong performer. It has 2.8 trillion parameters, which is sort of like equivalent to brain synapses. It's a very powerful model. And I think that surprised people that there was yet another Chinese company that was able to come and compete with the best from Silicon Valley on a number of parameters at cost that people really don't understand at this point. Many of these Chinese models are also open source or open weight, so they're much less expensive. They're offered very broadly. If you don't want to run them on somebody else's computer systems, you can run them on your own. Also, you can take the model and then run it so that can avoid some of the security concerns around Chinese models. But it is a very serious threat for some of these frontier models in the U.S. that had been planning on charging premium prices. Now there may be some pricing pressure on what they're able to charge their customers, and that may make it a little bit more difficult as we see OpenAI and Anthropic try to go public in the near future. Both of them want to get valuations that are above $1 trillion each. That may be a little bit more challenging today.
Right, and it challenges the whole CapEx thesis and the whole AI stack. Peter, Isabel made a really good point earlier when we were talking on our pre-show call, basically comparing the this to BYD. I mean, BYD, you have this Chinese technology that's just as good, as not better, than other EVs in the US, and it's cheaper. But notably, in America, you can't buy a BYD. Do we hear any noise coming from government officials about trying to curtail the usage of some of these Chinese models?
There are questions about this. I mean, you make a very good point. China has been able to compete in a number of different areas, not just electric vehicles, but also solar panels, steel, for example. So you do have some of these historic cases where in different industries, Chinese companies have come out, they've been able to do things at much, much lower prices. Yes, that is happening in AI models right now, and you've got a whole series of them. DeepSeek, Moonshot now, there's Minimax, there are others that are coming out with these less expensive models. And there has been some discussion about whether we should try to bar those companies from competing in the U.S. I think the challenge there is that you may be hurting American companies by forcing them to use more expensive models or less capable models. There are open source models in the US too, but I think when you look at the leading edge of open source right now, these less expensive models, they're really Chinese companies at this point. So if you take away a tool that companies want to use to be able to incorporate AI into their businesses, you may end up hurting American businesses that are not the AI leaders. So you may perhaps help the AI frontier companies, but you may punish other companies in other parts of the economy.
Peter, so interesting. Thank you for your coverage. That's Bloomberg's Peter Elstrom. Now, concerns around those cheaper AI models also come at an awkward time for Mag 7 companies reporting earnings this week. Investors are going to be looking for proof that billions in spending for AI are paying off. We're going to hear from both Alphabet and Tesla on Wednesday. Bloomberg Tech host Ed Ludlow joins us from San Francisco. Ed, what are the expectations?
Yeah, there will be a short-term focus on capital expenditure, right? Imagine if Alphabet says that CapEx in 26 will go beyond the $190 billion at the top end that it has already guided to. There would be a reaction in the moment on that. But right now, the thinking is very much that, like, look, overall, Google's revenue growth is 20%, its cloud business is 65%. And there's just a very quick move to see evidence that the spending results in something. Alphabet has a big backlog on the AI side and on the cloud side. So it's their ability to translate those capital expenditures to meet the demand and have really high top-line growth. And because this is Wall Street, right, in earnings season, bottom-line growth as well and how margins are impacted. With Tesla, you know, it's slightly idiosyncratic, but in aggregate, there is a very careful watch on not just the level of spending, but what it's being spent on, right, and what the AI story is with Tesla. In that case, though, you know, you'll know that I'm excited because this is the first Tesla call since SpaceX went public. Now Elon Musk is the CEO of two giant public companies. That's kind of interesting and slightly specific to them.
Ed, talk to us about the sentiment around these earnings, because I feel like these stocks are just priced to perfection. Even if they beat, they're punished. And then now, as Danny said, with this moonshot thing, it really comes at an awkward time. Any metric or any sentiment you're going to be checking out for?
Yeah, I mean, Peter did a really fabulous job of explaining something that's been incredibly complex, but also like the market has really changed its mind every 24 hours since last Thursday night. You know, initially, the fear was very efficient AI systems will require less hardware. This morning, when we wake up, the opposite is true, right? They look at the reaction to Communique 3 and also the news, frankly, big news that they had to pause subscriptions because their GPU capacity hit limits, to now be like, this is a massive driver of demand. On the inference side in particular. Alphabet's kind of analogous with that, right? You know, that they are still in a place where the market wants to see CapEx as a signal of demand, right? The hyperscalers are saying, we have to spend this because we're compute constrained. We need to build more compute in order to meet the demand that's out there. They also still want to see big beats on the top and bottom line. On the buy side expectation, it's very high. You know, move past the sell side, and that's the calculus.
Ed, thank you very much. We're going to be looking forward to tech at 11 a.m. this morning. That's the Bloomberg Tech host, Ed Ludlow. And Ed mentioned there the crunch for compute, the competition for it. This just out from the information that Google is set to plan on a new chip that would be more efficient. It's called Frozen V2. The employees working on the chip reportedly say that it could be 6 to 10 times more efficient than their existing line of homegrown chips. Again, trying to take away or at least relieve some of the pressure on the chip and compute shortage that Google has been facing. Let's now turn to the Middle East, where Brent is wavering after reaching $90 a barrel earlier. Reports that mediators have proposed a 10-day ceasefire between Iran and the U.S. The Iranian president says the country is in a full-scale war with the U.S. and its sovereignty over the Strait of Hormuz is non-negotiable. But at the same time, Iran-backed Houthi rebels say that they are imposing a naval blockade against Saudi Arabia in the region. Let's get the latest from Bloomberg Washington correspondent Tyler Kendall. Tyler, it is headline whiplash this morning.
It definitely is, and that latest one that you mentioned is going to be a stark escalation, Danny, as we get this confirmation from the spokesperson for the Iranian-backed Houthi militia group that they are planning to immediately implement this maritime blockade against Saudi Arabia. We should keep in mind the broader context here that we can't only see this through the lens of the U.S.-Iran war, that this is also related to a truce breaking down between Saudi Arabia and the Houthis from 2022. We've seen this exchange of fire between the two sides, but this is definitely the farthest that we've seen that specific thread go, considering that we know Saudi Arabia has been relying on that east-west pipeline to move supplies to the Red Sea to the tune of about 4.5 million barrels of oil per day. And last week, we did have Iran ask the Houthis to be ready to deploy assets to actually shut down that shipping route. So we knew that there was action in motion to prepare for this. So we'll have to see if it actually ends up getting imposed and what those ramifications are going to look like. Because Danny and Isabel, at this point, commercial traffic, at least observable transits, are at a basic standstill, according to new satellite imagery that was analyzed by Bloomberg News. And adding to the risk, it appears that vessels that are moving through with their transponders off are also being targeted. We had the IRGC over the weekend saying that they halted at least 4 ships that had turned off their radars completely. And keep in mind, that is the way that most of these ships had been trying to make safe transit through the waterway.
All right, Tyler, thank you very much. Bloomberg's Tyler Kendall in Washington, D.C. Let's get a check on markets, because despite that headline volatility, that back and forth, Brent crude doing a whole lot of nothing, just holding at $88 a barrel. It was at 90 earlier. S&P 500, that's up about 0.4% as the NASDAQ outperforms a bounce back after the worst week for chip stocks since Liberation Day as 10-year yields move higher by 2 basis points. Isabel, some of the movers on our radar this morning, we got some consumer popcorn and pizza. Domino's and AMC both reporting strong earnings for the second quarter, seeing steady growth that beat the average analyst estimate because everyone went to go see Oppenheimer in the rain this weekend.
I didn't.
I'm not Oppenheimer. Sorry,
no,
Odyssey.
Odyssey.
They're both Nolan, right?
Yes,
and start with
Nolan.
O's. So.
There was a meme that said, "I'm more afraid of people who went there at 7 a.m. than 3 p.m." Anyway, a data center operator, Iran, is surging after raising its annual AI cloud run rate revenue target to more than $4 billion.
And let's just get another check on Google, because again, we learned just moments ago, the information reporting that they're building a new server chip tailored for Gemini. The idea, make its AI models more quick and more efficient, which means the compute crunch is less of an issue.
And coming up, Boeing plans to make 40,000 planes in the next 20 years as it ramps up production. We hear from the CEO next. This is Bloomberg Open Interest.
Every weekday, Bloomberg puts the spotlight on a different aspect of global finance. Flows, funds, and the forces shaping markets on ETF IQ. The future of money with Bloomberg Crypto. The players behind major transactions on Bloomberg Deals. Rates, risk, and the cost of capital on Bloomberg Real Yield. And personal finance, retirement, and wealth management on Bloomberg Money. A different topic every weekday, only on Bloomberg Television.
Today's CFOs are reshaping the C-suite. Bloomberg's Chief Future Officer shines a spotlight on these dynamic leaders.
What's the skill set that you would advise every aspiring CFO to develop?
Psychology.
I think analytical skills are important. Obviously, you need to like the numbers. If you don't like numbers, then don't go into finance. It's sort of like a recipe for disaster if you don't like numbers.
Not only for the CFO, but also the company's management. That's a communication and the collaboration.
I spend a lot of time figuring out how to take the complex and make it simple, and then finding a way to be able to communicate that both internally and externally.
I think it's relationships, whether it's working with investors, bankers, with the senior management team, with the board. Having your head down is one thing as a finance person, but keeping your ears open is super important as well. And I think that all of that is what kind of builds out being a successful CFO.
Watch Chief Future Officer only on Bloomberg.
Bringing you up to them in the news whenever and wherever it happens. I'm Shevrian in Seoul, and this is Bloomberg.
What is going to be the consequence for U.S. markets?
We are seeing modest gains across European equity markets.
Take a look at how we're faring when it comes to Asian markets.
Now to high interest, a look at what's making headlines around the world. Andy Burnham has officially become the Prime Minister of the UK after meeting King Charles III. In his first speech after taking over the role, Burnham pledged to end the UK's political instability with a new economic model.
Later this year, I will bring forward a new plan for Britain, a 10-year plan, laying out a path from where we are now to where I believe we all want Britain to be, wherever we're coming from, whatever party we support.
Secretary of State Marco Rubio says Chinese President Xi Jinping's upcoming trip to America remains on track. His comments coming days after President Trump claimed that China interfered with the 2020 U.S. election. U.S. intelligence agencies have previously debunked these claims. And Boeing says it will need until the end of the next decade to bring its next-generation single-aisle aircraft to the market. Speaking with Bloomberg's Guy Johnson at the Farnborough Air Show, CEO Kelly Ortberg said the company isn't ready financially to launch the new jet. He also weighed in on the company's turnaround plan.
We're turning the corner. I tell my team we haven't quite finished turning the corner. We've got more work to do, but I am pleased with the progress so far. We're ramping up production across many of our product lines. Markets are very strong, so our backlog is very, very strong. So our story is really focusing on executing that backlog.
Joining us now at the Farnborough Air Show is Bloomberg's Guy Johnson. Guy, wonderful to see you, and I know you conducted that conversation. Did you get a sense that they were being a little bit conservative given that Airbus, who I know you're also speaking to in a few moments' time, seems to have a swifter timeline?
Yeah, maybe, but he's saying basically we need to get the finances in order. This is an incredibly expensive product that he's going to be producing, and hitting the market at just the right time is going to be the key for Kelly Ortberg. Yes, Airbus is maybe talking about a few years earlier in terms of the timeline, but the real question is, it's not really up to Airbus and it's not really up to Boeing. It's what the customers want, and they're saying at the moment what they would really like is actually the current aeroplanes that are flying now, that are having engine issues, etc., problems with the Pratt & Whitney. They want those to be fixed. They want those to work better before they're prepared really to push forward with the next generation of aircraft. Danny, the other thing as well is that there are huge order backlogs right now for both Airbus and Boeing in terms of the narrow body story. I suspect that both of those two companies would like to get those aircraft done and sold and out of the door before they maybe make that move on the next generation of aircraft. It's coming at some point. The timeline, actually, quite hard to tell at this point when that's going to be.
Guy, talk to us about the timing, because that's also tricky too. If you introduce the model too soon, some technology might not be ready yet, but if you introduce it too late, then you might risk ceding some of the lead to some manufacturers.
Well, the key issue here probably lies around engines, and that's the big debate that is taking place here at Farnborough, is what kind of engine are we going to see on the next generation of aircraft? GE, Larry Culp, would like to see an open rotor format. Looks like a kind of old school propeller on the aircraft. But we're going to wait and see whether or not actually the customers, the airlines, actually want that engine to be on the aircraft. Is it going to be worth it in terms of the benefits that are going to come through from that? So there's some really key decisions that need to be made in terms of the form factor, because if you've got a big propeller, you need to lift the wing up, you need to lift the whole engine up. So there's some really big decisions that need to be made. At the moment, nobody's quite ready to make those decisions. But yes, it is a big financial commitment. The technology needs to be ready. Everybody is looking for this decision to come at some point. Probably doesn't come at this show, but I have to say it's what everybody is talking about here at Farnborough, is when do we get that decision made? When does that new aircraft start to arrive? And will it be Airbus or Boeing that goes first?
Guy, we also heard from President Trump last week, who was announcing a new investment in the defense industry. And within that, he was praising Kelly Ortberg specifically. How has the relationship between Boeing, between Ortberg and the U.S. president been evolving?
Oh, it's been... The president has been absolutely instrumental in terms of the help that he has given Kelly Ortberg in putting Boeing back on track. So Kelly will have been in the job 2 years come August, and he's been able to turn around Boeing relatively quickly, in no small part because of the support that the White House has delivered for Boeing. That has been a big factor, and he recognizes it. He says it's less to do with the operational performance of what has been turned around at Boeing in terms of building the airplanes, but in terms of sales and getting commitments to new aircraft sales, the president has been absolutely front and center. So yeah, it's been a really tight relationship. It continues to be a tight relationship. The president sees selling airplanes as being one of the big ways he can deal with the trade deficit, and it looks like he's going to continue to provide that support for Boeing.
All right, Bloomberg's Guy Johnson, thank you for bringing us the latest on that sunny location. It seems like it's a fun day, and in a few minutes, we will return to Farnborough for an interview with the CEO of Airbus.
I think the UK hasn't had rain in like months.
No, Danny.
I know you look at them and you're like, why is Guy always standing in a sunny field for Farnborough when it's the UK? But I think they have
every weekend it's rained here in New York.
It's true. Well, at least they have a new prime minister now. Coming up, we're going to talk to Monetta's Ethan Devitt on the big week ahead for tech earnings. This is Bloomberg Open Interest.
up-to-the-minute geopolitical news whenever and wherever it happens. I'm Jennifer Zabasaja in the Lesotho Highlands, and this is Bloomberg.
Key investors, top executives, global innovators. Join me for in-depth conversations with the biggest newsmakers on the day's top stories. Insight with Haslinda Amin, only on Bloomberg.
The global economic playbook is being rewritten, and the levers of power are moving in real time.
To see where the world is headed, you have to look where the action is.
I'm Haslinda Amin in Singapore.
I'm Menika Doshi in Mumbai.
Welcome to Emerging the New Economy podcast.
Each month, we dive deep into how the world's most exciting rising economies are shaping the global future.
Join the conversation. Subscribe to Emerging on your favorite podcast platform today.
The countdown is on. Everything you need to get the edge at the end of the market day. Get ahead of tomorrow's trading with The Close. Weekdays on Bloomberg. Context changes everything.
Tech earnings this week will give investors a clear picture on AI spending and return on investment. Alphabet, Tesla, Intel, and IBM are among those reporting, and they come amid Chinese firms putting pressure on them with cheaper models that threaten to hurt the momentum in the AI trade. Alphabet's Google was already under pressure after delaying the release of its latest Gemini AI model due to underperformance. Let's discuss with Moneta Global Wealth Managing Director Ethan Devitt. Ethan, how important are CapEx numbers going to be from Alphabet? And do you have any sense how the market will even treat them?
Well, I would say that just like IBM got the bad news out of the way early, and now we've at least a preview of how investors are likely to behave when numbers are underperforming, I'd suggest with Alphabet, if there had been bad news to get out of the way, they would have done a similar path. So given they've not done that, I would now expecting that they're more in line with expectations. CapEx, I expect, will still be as expected because that is very little has changed in terms of these type of long-dated contracts. I think what is not clear, though, and there's tremendous uncertainty around that, is the return on investment point. I think we know that spending is still happening because of this arms race to get ready for what AI can do to productivity. I'm not sure that we have clarity about what the return on that token spend is.
Ethan, you described this as a potential SaaSpocalypse moment. Can you talk to us about the winners and the losers in this new era that we're entering?
Well, the SaaSpocalypse, of course, refers to the suggestion that many software companies would be undermined by the readiness of AI to essentially do all of those functions and circumvent the middleman. What we have seen, though, is an increasing concern on two fronts. One is around that middle layer. We've seen Satya Nadella, we've seen Alex Karp come out publicly and suggest that that giving away of company alpha is something that is very dangerous and that no company should wish to do. So that's now raising essentially the apparition that we will not have a wholesale SaaSpocalypse going on in that domain. What I mean, though, is the concern today regarding the Chinese companies taking the place of the frontier models in many, many functions. That, because of the massive underpricing that could then occur, that gap that would evolve, that could be the apocalyptic moment for many of these mainstream hyperscaler stocks.
Ethan, just 30 seconds, and we're going to talk about this more, but just quickly, does that mean you're avoiding some of these AI chipmaker hyperscaler names?
Well, I wouldn't say avoiding. We certainly are recommending at Moneta that our clients are keeping their weight, their index weight there, but we are definitely recommending taking profits and not necessarily the old investment warning, expecting past performance to be indicative of future performance.
Wise as always. Ethan, again, we're going to continue the conversation. A lot more to discuss here. Ethan Devitt sticking around through the opening bell, and ahead of that opening bell in just 4 minutes time, it is a market that's trying to bounce back after an ugly week thanks to a drop in chip stocks. So you do see the NASDAQ outperforming as yields move higher as Brent crude bounces around at one point at $90 a barrel and the price of gasoline in the U.S. above $4. We'll have your opening bell right after this break. World's most powerful investors don't ring a bell. They quietly reshape entire industries. This is the money shaping the world, the dealmaker playbook where power and billions of dollars change hands every day. From private equity and credit to venture capital and M&A, we bring you the inside scoop on the biggest deals and debates, plus exclusive conversations with finance's ultimate insiders. Great scoop on this. You've been reporting about an activist investor coming up and trying to shake things up. What's the latest?
We've been hearing that there was going to be an activist at some point. The question was who?
There is a convergence of technology and national security.
The United States is a big country. We're playing in the Northeast. That's an economy as big as the United Kingdom.
This is a really interesting space to watch. We're expecting more consolidation.
As this is Bloomberg Deals at Bloomberg Invest, I want to talk about the broader deal and M&A environment.
This is a moment in time. We'll see how long we're here. It's far too early to call.
There is an underinvestment in what's going on in private markets because everyone's looking for additional AI cloud capacity, and it's very tough to build.
Everybody wants to get things going, and the IPO market is just one symptom of that. It is an early indicator of what we're going to see in the M&A market.
Let's go to Scarlett Fu, who's taking a closer look at drone companies.
With ongoing conflicts in the Middle East and Ukraine, there's renewed investor appetite for new names in the space.
Excellent reporting. I'm Danny Berger, and this is Bloomberg Deals. Every week, only on Bloomberg Television.
Asia is at the forefront of some of the world's biggest stories.
And we're here, where the action starts in Sydney.
And in Tokyo, get ahead as the global trading day begins.
The Asia Trade, weekdays only on Bloomberg.
Bringing you the latest geopolitical news whenever and wherever it happens. I'm David Gura on the Salar de Uyuni in Bolivia, and this is Bloomberg.
Let's get this trading day started. You are watching Bloomberg Open Interest. I'm Danny Berger. A tough week last week gives way to a slight rebound this morning. It was the worst week for semis since Liberation Day. Isabel just pointing out to me moments ago that they're now in a bear market from their high, which was only a month ago in June. So S&P up 0.5%, NASDAQ up just under 0.9%, the Dow Jones putting in 0.2%. Down at the New York Stock Exchange, it is Coca-Cola. I'm going to be honest, they didn't have their feet up. They didn't put on their website who's ringing the opening bell, so this is a surprise to me. I don't know why Coke is ringing the opening bell, but they're all holding fun glass bottles, so good for them. That's cool. They're all going to be caffeinated. Down at the NASDAQ, Stars and CEO Jeffrey Hirsch, who's joined this program before, ringing the opening bell. They've been outperforming the small cap index and announcing and celebrating their new show, Fightland. I can't remember what it is, Isabel. I think it's like about boxers, but Jeffrey, when he came on, was pretty pumped about it and thinks that it's going to do very well.
It's probably about boxers because it's definitely not a rom-com. I only watch
Fightland. It could.
I only watch rom-coms.
Fightland could be about a couple that's like going through a divorce, you know, which I know is grim. Anyway,
that could be, but we just want happy ever afters here. And look at the green on your screen, Danny. Here are the stocks we're going to be watching. The tech trade is higher today amid concerns that China is producing cheaper and more efficient AI models. You see NVIDIA higher by 1.5%, Micron by 3.5%, and SanDisk up by 4.5%. Last week, Bank of America released their fund manager survey, and the most crowded trade is, guess what, long semi. So I think this is definitely a vulnerable trade, especially this week. It's going to create a new challenge for big tech stocks spending billions and billions on AI. And this week, we will hear from Google parent Alphabet, Tesla, Intel, among others, going to report earnings.
All right, let's talk more about that because we also learned that Google reportedly working on a new server chip which would integrate the blueprint of its Gemini AI model. Apparently, it's going to be 6 to 10 times more efficient, according to staff in this information report, make things more efficient with compute. So Alphabet, that is up 2% or just under 2%. This morning. We're back now with Moneta Global Wealth Managing Director, Ethan Devitt. Ethan, I want to pick up on where we just ended this, about what you're recommending to clients. Maybe you take a little bit of profits, you don't outright avoid it. It's kind of this difficult thing, though, because if we're in somewhat of a stage of a bubble, be it beginning or otherwise, you are really burned if you're not invested in during it. But if you're investing during it, then almost by definition, it's kind of a contradiction to try to hedge yourself or protect yourself when the thing bursts. It's difficult to do both at the same time. So how are you thinking about that, especially heading after a week where we did see a lot of the AI names, specifically semis, hit extremely hard?
Well, that's a great question, and it really gets to the core of what we coach clients to do. We speak about preparation and not prediction, and that is key because prediction is essentially a fool's errand. We know no more than the next person in terms of what's around the corner geopolitically or what Chinese AI model could completely erupt and sunder the current set of business models that we're looking at today. But when it comes to preparation, there's a few data points I'd like to bring up. One, you mentioned at NASDAQ, there was a small cap company. Small cap is having one of its best years since 2003. So finally a rotation into small cap, even loss-making small caps. That is really critical. It shows the level of risk that investors are prepared to take on and the level of trust that they have in small cap companies. So every portfolio should have that there. We also look beyond mere sectors such as large cap tech. We would also look at the infrastructure layer, the energy layer, the financing layer. Every single piece of this value chain, there should be exposure to that. And it goes without saying that we also believe in international diversification. So while the US is getting a lot of attention and South Korea got some attention, very concentrated market there, we also like to look at the European stock market. We think there's a lot happening across the Eurozone and the UK, and that it's important to get exposure there. And that will build the resilience, the preparation that really beats prediction any day.
Ethan, you mentioned small caps, and we know that small caps, even unprofitable ones, have been leading. Do you think that this is healthy risk appetite, or is the market maybe getting ahead of itself?
Well, there's an element of it needing to put the money somewhere. We know there's a lot of money in money market funds, over 8 trillion. There has been some profit taking clearly, as you mentioned, the semis last week, and profit taking just across the board in the large cap. So in this type of environment where inflation is pressing and the need to deliver an important inflation-adjusted return is still there, investors don't want to be in bonds, they don't want to be in gold, they don't want to be in Bitcoin, they have to be somewhere. So I'd say there's an element of having to spend it there. But it also suggests there is a breadth to markets now, which is so much healthier than the concentration we saw earlier. So I'm going to go with it being a sign of healthy risk appetite and not over-exuberance.
Yeah, you're sounding a lot like Mike Wilson this morning of Morgan Stanley. He put out a note very similar to that we are starting to see widening breadth. Perhaps part of that is just really high earnings expectations. We saw earnings save this equity market last quarter. We're expecting earnings to grow 24% just this year and then 17% on top of that in 2027. Ethan, is that a bar that we can reach or even beat?
It really depends. Clearly, that is an average number, and it's going to be very distorted by these gangbuster earnings that we're seeing coming out of the hyperscalers. Even Tesla is looking at an 18% growth rate. It isn't particularly compelling, and we can see that it's clearly not universal, this level of growth. So that is perhaps a high bar, but I will say that just like IBM has done, there is tremendous managing of expectations going on today, and I think that's really the no surprise doctrine is definitely what companies should be playing, and that will avoid any nasty surprises should they get to their earnings not being at that level of growth.
Ethan, I'm going to go back to Danny's question earlier. So if this big tech earnings season disappoints, do you see this as a buying opportunity, or do you see this as a chance to rotate out of the mega cap trade, which has been long crowded?
Yeah, I would say there should be healthy rotation at all times. Profit taking, rebalancing. It's hard to do when the momentum is on your side and all the headlines about the hyperscalers and about the massive demand, this vertical wall of demand that we've heard. But that type of rotation should be happening at all times. Would there be a buying opportunity? Only to the index weight, I would say, not to go overweight in this area. It is prone to uncertainty. As we mentioned, it's extremely difficult to model some of the trajectories. There are so many uncertainties. And even those at the frontier models themselves, who are very close to the coalface here, are admitting that they are dealing with essentially combinations, permutations that they cannot properly calculate. So let's stick with some of the known quantities, which is the demand for, say, compute, the demand for energy, and the demand for financing. Some of those, and healthcare too, some of those sectors that have proven fundamentals.
I mean, banks have done extremely well. I think the KBW Bank Index has now started to outperform, whereas it had been lagging for most of the year. That follows those big bank earnings, so it's up 15% so far year to date. Ethan, is that a trade you want to continue to follow?
It would be. I always believe in following the money, and clearly we know that we are running close. We see IBM have talked about choices that have to be made. Enterprises are choosing between hardware and AI today. When we have those choices, we know that there will be an area that perhaps they are running close to the bottom of that war chest, and they will need to do financing, and there has to be creative financing. And we've seen the investment bankers being very creative in this market. They're also benefiting from a high volume of trading, a lot of positive momentum from these individuals with their retirement accounts. So I would say all of that is pointing very much towards the banks. They're not overstretched, they're well capitalized, and I believe it is a very solid sector for the near term.
Yeah, some huge numbers, again, coming from last week. Big beats for the equities trading. Ethan, really wonderful to catch up with you this morning. That's Moneda's Ethan Devitt. Let's get a check on your equity markets about 8 minutes into your trading day. And we are moving higher, though there are more stocks moving to the downside than the upside, but that's because big tech is doing well. We are up 52 points this morning, 0.7%. Some of the stocks that are moving higher, NVIDIA helping to lead the gains. That on its own is adding 13 points to this S&P 500. That's followed by Alphabet, Broadcom, Micron. So the chip stocks, again, having a good day. Alphabet is up after that information story saying that they are developing more efficient chips to help with the cost of compute and the crunch for it. To the downside, Apple's moving lower, not by a whole lot. Meta, Microsoft, those are all moving lower. Netflix continues to fall after their earnings last week. And some of the more safer sectors, let's say, so consumer staples and healthcare are not having a good day. So it's a decidedly risk-on type of market. You can see that in the sectors. We'll have those up for you just a sec. So yeah, it is staples and healthcare. Those are some of the two worst performing. Energy falls as the price of oil has been bouncing around this morning, and infotech and communication services moving higher. Again, a lot of that is Alphabet ahead of their earnings as well.
It's really interesting to see, Danny, because last week tech was the biggest loser, and then now, I mean, they just bounced back from
yeah,
those
it is narrative ping pong that we're living through.
I like that narrative ping pong. Coming up next, we have the CEO of Airbus joining us live from the Farnborough Air Show as the plane maker gains an edge over Boeing in China. This is Bloomberg Open Interest.
Wanted to say, Primer is back. We've been scouring the frontiers of science and technology to help explain the difference between the next gold rush and whatever this thing is. And in season 2, we're upping the stakes. More danger.
Now that is some high-grade uranium mineralization.
We used to have a stable climate on this Earth. Right now, we do not.
More science.
We're pushing the envelope of technology in multiple directions. Software, hardware, chemistry, physics.
The cable is like very cold.
And more CEOs that can nail the photo shoot.
Hundreds and hundreds of billions of dollars are at stake.
While the problems are economic, the solutions are too.
And yes, we will be talking about AI.
There is a lot of humanoid hype out there.
But our future doesn't run on hype. It runs on innovation. Watch season 2 on all these lovely channels.
Technology is embedded in every aspect of our lives, and that revolution is playing out in real time. From finance to defense tech, AI to entertainment, from the road to the stars. Bloomberg is bringing you the stories of companies and people that are pushing tech to new frontiers, and the politics reshaping global tech markets. I'm Ed Ludlow, live in San Francisco, and this is Bloomberg Tech. Every weekday, only on Bloomberg Television.
Get your fixed income fix. Watch Bloomberg Real Yield around the world right here on Bloomberg. Context changes everything. From the world of politics to the world of business, Joe Matthew and Kaylee Lines deliver news, insight, and analysis live 2 times a day, every trading day. Balance of Power at 1 and 5 Eastern, only on Bloomberg.
Know how the market day started.
Find out how it finishes.
Public markets to private markets.
From the micro to the macro.
Covering retail, entertainment, the business of sports.
The supply chains, trade policy, how it all is impacting the U.S. equity market as we drive to the closing bell at 4 p.m.
A holistic approach to covering financial markets.
If it matters to your life, we're covering it. I'm Katie Greifeld.
And I'm Romaine Bostic, and this is The Close.
Live every weekday.
Only on Bloomberg. Context changes everything.
Time now for a top call. Some of the analyst action in focus this morning. First up, Philips Securities upgrading Netflix to buy. The analyst seeing an opportunity following the stock's recent sell-off on disappointing earnings. Next up, Stifel cutting its price target on IBM to $235, pointing to the company's preliminary second quarter sales that fell short of expectations. And finally, Goldman Sachs upgrading Urban Outfitters to buy. The bank noting upside to the stock as the namesake brand recovery boosts profitability.
Let's stay with the consumer, Isabel, because sandwich chain Jersey Mike's is looking to raise as much as $1.09 billion in an IPO. It's just the latest consumer-oriented company to join the U.S. listing rebound. For more, let's bring in Bloomberg IPO reporter Bailey Lipschultz. Bailey, I mean, it's pretty cool to get a sandwich-based IPO after everyone was so excited about, like, AI. I'm like, cool, real-world stuff is coming to this market.
It's crazy how quickly things shift, Danny, right? We were talking about record-setting debuts for SK Hynix, for SpaceX. Everything around the AI infrastructure build-out had been kind of roaring, and now we're shifting as that fades away into the background into some consumer names. So we do have the launch of Jersey Mike's. We are expecting potentially Cumberland Farms to launch its IPO process in the next day or so as well. So a pair of consumer companies looking to go public at a time where there's still very much uncertainty around the U.S. consumer.
So then how does Jersey Mike's growth strategy compared with other fast food chains? Because you did mention that they don't have as much of an international footprint as, like, say, Subway, which is why maybe that's why I know Subway.
Jersey Mike's is very much, or is only focused here in the U.S. and in Canada, but they brought back and partnered with with the founder of the company to expand in the U.K. So that's been their big pitch from an international perspective, is using their roots to build out the offering in the U.K. We were actually talking on our desk today about, like, okay, Danny, you spent some time living in the U.K. Does London really have a sandwich scene? California, where I'm from, doesn't have a deli scene.
It does, but it's like Italian sandwich. You know what I mean?
So
like
Jersey Mike's isn't Italian?
Do they have, no, but they're like American Italian. It's absolutely different, Bailey.
Do they have sad lunch?
No, there are good ones, but they also do have sad lunch. Yeah, there's sad British food. On this, I mean, look, Blackstone has taken this and, like, run with it. There's so much marketing. They've had Danny DeVito almost not just being a spokesperson for Jersey Mike's, but for Blackstone too. I think he was in their Christmas video. But they've only held this company for less than 2 years, right? I mean, that's a pretty quick turnaround to IPO it.
It's a very quick turnaround, and that's kind of been the pitch. The funny thing is, you go back to the acquisition, which closed in January of last year, was, okay, what's Blackstone's strategy? Because this is a company that, for all intents and purposes, could have IPO'd at the time, was the pitch from bankers. Now you bring in Blackstone, you bring in an experienced leadership team, the team that helped lead Wingstop not too long ago. They are pros. When I talk to folks on the buy side, they're excited about this company. The big question comes back to, how does the consumer stand up? Is the international expansion pitch going to come out to fruition? And then the big debate at the end of the day is, it's still a private equity asset. What does that overhang look like?
I love Danny's point earlier that this is one of the few real-world IPOs, because most of the time we talk about, and you've broken a lot of news on SpaceX, Anthropic, and OpenAI. Can you talk to us about the magnitude of this IPO and maybe just investor sentiment? Like, is it still exciting when it's not related to AI or data center?
It's funny because a year or two ago, if you said there's $1 billion IPO, we all call it a blockbuster deal. Now we have 86 billion or 26.5 billion. This is still, again, with Blackstone selling, with some of the investors selling, targeting a $1 billion IPO. That is still scale. This is a company that the equity value, according to the filing, would be around $8 billion. That's a big company relative to the Kava, which is kind of the best comp that bullish investors like to use because of the growth story. It's still a big company. It's in an industry that, for all intents and purposes, could continue to grow. Not quite as sexy as AI, but there still is kind of a pitch to be made for it.
All right, thank you as always for all things IPO and all things maybe sandwich. Bailey Lipschultz of the equity team at Bloomberg. Thank you for joining us.
Jersey Mike's.
I have not tried one. Let's have a field trip.
Yeah, we'll do a field trip. I like this idea.
Airbus continues to outpace Boeing in China. Fresh orders from Air China and Hainan Airlines, worth about $18 billion, add to the plane makers' momentum at this year's Farnborough Air Show. Bloomberg Guy's Johnson joins us now with the CEO of Airbus. Guy, take it away.
Thank you very much indeed. Yeah, Guillaume Faury is here. He is the CEO of Airbus. Nice to see you.
Nice to see you.
How's it going? Is the demand story looking okay at the moment? I've got a Gulf War that's getting worse. I've got an oil price that's at $90 a barrel. Any sign at this show that consumers are starting to get a little bit more cautious again?
Well, it's the first day of the show, and it started very strongly. We still see a very strong demand for our products. We have a backlog of more than 9,200 aircraft, and we continue to get fresh orders for our short distance aircraft, for the long-range aircraft. The Middle East crisis is actually fueling some demand because price of oil is very high, and fuel-efficient aircraft are in more demand.
Do you like the economy right now? Do you get a sense that what we're seeing at the moment is sustainable? Or are you starting to get a little bit nervous?
Well, it's a very complex economy. It's a very complex world, very fast-changing, very unpredictable. But we have more visibility than others with the backlog we have, with a very strong demand for transport, for commercial aviation, and with defense. So I think given the environment, we can't complain. We have quite a bit of visibility.
So you've got a really big backlog, particularly of the narrow-body aircraft. You'd like to produce more of them, but you're struggling. You've got well-documented engine issues. You and I have joked in the past about building gliders. You'd like to produce at rate 75, but you probably can't. So what rate can you produce at? What are you doing right now?
No, we have a plan to go to rate 75, and we are equipped. We have made the investment, and we have the support from the supply chain to get there. So there is absolutely no doubt, in my perspective, that we'll get to the rate 75. When we look at what we have achieved already in the first half of this year, we have increased by 15%, 1.5, compared to the first half of 2025. So we are progressing well. We are doing what we wanted to do, and we keep targeting around 870 aircraft for 2026. That is very consistent with the rate 75, rate close to rate 75 or at rate 75 for the end of next year.
Okay. I understand. A little somebody told me that tomorrow you're going to have an investor day and you're going to give some pretty aggressive targets in terms of deliveries. If I assume that is correct, that you are going to deliver those quite aggressive targets, do you think you're going to be through the Pratt & Whitney engine issues fairly soon? When do these issues, these supply chain issues, finally get resolved?
Well, let's not think that the Pratt & Whitney situation means that we have supply chain issues everywhere. That's not the case. As I told you, we are ramping up. It's the case on all our programs. We have given already targets in terms of rates for the 320, rate 75, for the A350, rate 12, for the 330, rate 5, and for the 220 as well. So we are on the ramp-up everywhere, but we are consistent. We're in line with our ramp-up objectives for this year, and we intend to continue to stay in line with our objectives. So delivering to our customers.
Let's talk about the story that everybody's talking about here at Farnborough, and that is, when does the next generation of narrow body arrive? I spoke to your friend in Seattle a little bit earlier on. He told me that Boeing's probably looking at the back end of next decade. Guillaume, can you get there first? Can you get to the market first with the next generation of aircraft?
We want to be going to the market in the right timing, when we're ready, when the technologies are ready. We have already said, and we confirm, that we want to launch the next generation single aisle in 2030 for an entry into service in the second part of the next decade. Okay, so that's a bit more than 10 years away, which in our time frame is almost tomorrow.
Yes.
So we're preparing the next generation of single aisle. It will come with a fuel burn benefit of around 25%, which is contributing to what we were discussing at the beginning.
Is that open fan rotor technology?
Well, we have to decide on a number of technologies. We are not at the point of deciding. That will be the next couple of years. And indeed, an important choice is whether we maintain the traditional now gear turbofan, or if we go for an open rotor, which has better fuel efficiency, but comes with other type of risks. So we are assessing those risks at the moment.
What do you think?
We'll see.
Okay.
We have to be fact-based.
Okay. Let's talk about jet fighters. Europe wants to produce a new generation of jet fighters. We have the FCAS program, which you were part of, and we've got the GCAP program. The FCAS program you're no longer part of. When do you join the GCAP program? When are you going to make that decision?
Well, it's slightly more complex, actually. We're still part of the Future Combat Air System. That is more than a 6th generation plane. But indeed, the 6th generation plane, as it was structured at the beginning, is no longer there. So we have to find a way forward to the next 6th generation fighter for Europe. At Airbus, we want to continue to be part of it, therefore your question. But again, FCAS is a broader thing. And the French president and the German chancellor have decided last week to continue to work together, for instance, on the the network, on the so-called combat cloud. That is so important for connecting the different things that will be flying in the air and in space. So FCAS is more than a plane, it's also a plane, and we have to find a way forward. Governments
so you're
are
still
working
part
on
of
it.
FCAS?
Of course, we're still part of FCAS.
So you will not, so you will stay there. You won't. I'm seeing your good friend over at Leonardo tomorrow morning. Do you think he's talked about the fact that maybe you could join the GCAP program?
Again, FCAS is a broader thing than the sixth generation fighter. We have to find a way forward for the sixth generation fighter. It's mostly the decision of governments to decide with whom they want to partner. We will serve that project anyway for Germany and Spain, as we are the industrial partner of Germany and Spain for the sixth generation fighter.
What do you think about, can Europe rearm without the Americans?
I don't think so. I think the Americans are allies of Europe.
Yep.
Europe wants to rearm. Europe wants to be more self-sufficient, and that's also what the Americans are expecting from Europe in NATO. And when it comes to the industry, we're supporting that effort. So I think Europe is not saying that they will, in the future, do everything themselves in defense, but they want to be able to do more by themselves, and a company like Airbus is contributing to this effort.
The UK's got a new Prime Minister today. What do you think the message should be from this show, from the defence industry, should be to that to Andy Burnham, the UK Prime Minister?
We wait and see, and we'll be discussing with the Prime Minister when the Prime Minister is appointed.
Okay, but do you think the UK, what are the priorities you think that he should be looking at?
Well, the priorities for the UK, I think, when it comes to defense, are similar to the priorities of Europe: better contribution to NATO, to the security of Europe, and the willingness and the ability to work through partnerships. Because defense is an industry that works at the right scale, and obviously Europe, the EU needs the UK and vice versa.
Do you think we can get to 5% defence spending?
Don't ask me, ask the governments.
I know, but you're the guy that's going to have to deliver some of that. Do you think...
I think it's really important that there is more money that comes to defense, and that's obviously part of the going to 3.5% or 5%. Yep. I think it's important that the money is well spent, and well spent in Europe means working together, collaborating. So we're really calling for collaborations that work when it comes to defense.
Guillaume, it's been a great pleasure, as always. Thank you very much indeed for your time here at the Farnborough Air Show. Guillaume Faury, the CEO of Airbus. Back to you in New York.
Guy, fantastic interview. Very interesting there with the need for independence when Europe comes to defense spending. Guy Johnson with the Airbus CEO, Guillaume Faury. A check on your equity markets this morning, just about 20 minutes into your opening trade. The NASDAQ continues to bounce after semi's worst week since Liberation Day, heading into a bear market from their high in June. The S&P 500, that's up 0.4%. Again, that rebound, you can see the Philadelphia Semiconductor Index up just 3%, just under thereabouts. It might be a make or break week with Alphabet reporting on Wednesday alongside Tesla. Brent crude, Isabel, it's doing nothing, which is remarkable given the headlines that we have gone. We've learned that, one, that they are trying to have mediators step back in and restart negotiations, and that the Houthis are trying to close the Saudis' passage through the Red Sea, and yet Brent's doing nothing.
Headline ping pong or headline whipsaw, as you said earlier, is really the definition of today's market. And I know we get big tech earnings next week, but I also know that we get the entire economy because we also have Apple, we have GM, we have a lot of AI companies, Tesla, IBM. So it's going to be an exciting week, and I'm excited to be here with you, Danny.
Well, I'm thrilled for it, Isabel. Speaking of which, in the next hour, Isabel and I are going to be speaking to Nomura's Andy Goldberg. He has his mid-year outlook on deck for us to discuss. We're also going to speak with Partner Group's Esther Piner. She has just raised a new infrastructure fund that beat out their last one, plus the CEO of ADI on demand for commercial and residential security. All of that to come, plus a metals conversation to round out the hour. This is Bloomberg Open Interest.
As an exchange, what can you do to make it more attractive to be a publicly traded company?
Talk to our customers. We spent a lot of time with our listed companies, listening to their concerns, particularly the offices of the CFO, head of IR, listening to their pain points, general counsels as well, and then act as an advocacy group for those companies to really focus on structured reform to allow a company to tell their story in the most efficient way possible and reward them for the good disclosures that they are making in the market.
Is there any sort of financial innovation that you could drive to get more companies to list? Tokenization has come up.
Well, we did announce our tokenization initiative earlier this year. We already built the technology, we've already done a variety of proof of concepts. It allows for instantaneous settlement, 24/7 trading. It importantly allows for the rights associated with a share to move into that electronic form, but is going to be a platform that runs in parallel to our more traditional exchanges.
When news breaks,
a redhead across the Bloomberg terminal.
Bloomberg has you covered.
Trump's global tariffs are struck down by the U.S. Supreme Court.
For all the context and clarity you need.
There's going to be now tons of tariff headlines until midterm elections.
Hear it first on Bloomberg.
Bringing you the latest business news wherever and whenever it happens. I'm Scarlett Fu, reporting from America's biggest military shipyard. This is Bloomberg.
ABC News. I'm Sherry Preston. The United States conducting its 9th round of airstrikes against Iran overnight, hitting a northwestern city believed to be home to underground missile bases. That, in addition to other targets as well, says ABC senior Pentagon reporter Louis Martinez.
When Iran started attacking commercial shipping in the Strait of Hormuz, the United States went after those locations where those attacks had been launched from. And we saw towards the end of the week an expansion of that going to other areas. We saw that they struck railway areas. They struck bridges that were near Bandar Abbas, that major port in southern Iran, right there on the Strait of Hormuz. And we know that President Trump met with his security advisors about possibly expanding the scope.
2 American service members killed in action have now been identified. They are First Lieutenant Tyler Feehan from Hawaii and Private Isabella Gonzalez of Texas. A 3rd service member, also believed killed in Jordan, has not yet been identified. Will the UK's 7th Prime Minister in 10 years be the one to restore hope to the British people? Andy Burnham sure hopes so.
Let us make this the moment when Britain starts to believe again. The moment we bring back hope.
He took over this morning after Keir Starmer stepped down. It's still not certain that the lettuce pulled from store shelves because of that parasitic bacteria is the exact cause of the Slichosopriasis outbreak. However, ABC's Elizabeth Schulze says the company in the middle of it is taking no chances.
Taylor Farms says that the FDA has not identified a single positive product that has tested positive for the parasite and that this recall is out of an abundance of caution. Last week, the FDA, though, did link the outbreak in 5 states to Taylor Farms' shredded iceberg lettuce that was sourced from central Mexico and supplied to Taco Bell restaurants. Taco Bell says that it has removed all affected products.
Spain's national soccer team has landed in Madrid. Big parade this afternoon in honor of the new winners of the World Cup. You're listening to ABC News. memorial service is being held today for Nolan Wells. The teenager found dead after a 4th of July outing with friends on a popular barrier island off of Mississippi. His mother, Christine Wansley.
You get these flood of emotions all at different times, and grief is so multi-layered. You know, one second I might be okay and I can talk about things and I can listen to his stories, and then the next minute I am falling apart.
Police are still investigating the circumstances surrounding Wells' death. It's not technically a precious metal, but ABC's Jim Ryan says the rising value of copper has made it a favorite target for thieves, and sometimes that means some difficult working conditions.
Take the case of Tangipahoa Parish, Louisiana, where Kentwood Police Chief Michael Calzaruni says thieves went to work one night.
There's about 880 feet of line, both fiber and copper, was taken off the poles.
Out in the parish,
this is 8 days straight without internet.
J.C. Watts and his wife both work remotely.
It was just a hard pill to swallow.
While AT&T replaces the stolen copper wiring, the Wattses have signed on with a satellite-based internet provider. Jim Ryan, ABC News.
Congo's health ministry says at least 930 people are confirmed to have died in the country's Ebola outbreak, which is the fastest growing on record. This particular strain, first discovered May 15th, has no approved vaccine and no known treatment. Number of confirmed cases at this point, more than 2,300. Sherry Preston, ABC News.
If you haven't...
This is Bloomberg Intelligence with Scarlett Fu and Paul Sweeney.
How do you think the Fed is looking at tariffs, the uncertainty of tariffs?
Let's take a look at the sectors and how they performed.
A lot of investors getting whipsawed every day by news events.
Breaking market headlines and corporate news from across the globe.
Could we see a market disruption, a market event?
Are people just too exuberant out there?
You see some so-called low-quality stocks driving this short-term rally.
Bloomberg Intelligence with Scarlett Fu and Paul Sweeney on Bloomberg Radio, Originals and the Bloomberg Business app.
Good Monday morning from the Bloomberg Interactive Broker Studio in New York City. We are streaming live on YouTube, streaming live at Bloomberg.com as well. Scarlett Fu and Paul Sweeney, this is the Bloomberg Intelligence program. Coming up, we're going to check in with Tyler Kendall, Bloomberg News Washington correspondent, get the top political stories, what's going on in Iran. Escalation seems to be the word over the weekend. Phil Orlando, chief equity market strategist at Federated Hermes, is going to join us to give us his thoughts on the markets. James Woolcock, Bloomberg UK politics reporter. We've got a new prime minister in the UK. Just went to meet the king this morning, and we had some comments from the Burnham. Some comments from 10 Downing Street this morning. We'll get the latest reporting there. Randall Williams, Bloomberg Business sports reporter. He was at the World Cup final game yesterday. We'll get his thoughts on the World Cup game. One team didn't have any shots on goal for like 100 minutes. I don't know how you go do that.
And they were basically gunning for penalty shoots. Penalty shots.
Yeah, I paid a little bit of attention. We'll see. But we'll get the latest reporting there on what's going on there. John Tucker is going to join us. I know he was wired to his screen, glued to his screen for the entire 200 minutes.
Were you? I was reading a book while watching it.
There you go, John Tucker, Bloomberg Business Flash.
Yeah, this Bloomberg Business Flash is brought to you by IBKR, trade election climate and economic outcomes with IBKR prediction markets right alongside your stocks and options. Earn interest on your position. Receive $1 per contract if you're right. And learn more at ibkr.com/predictions. Right now, the major averages, they're mixed. The S&P 500 up 24 points. The Dow down 50 points. And the NASDAQ 100 right now, 234 points higher. You have 7 of the 11 major industry groups in the S&P 500 up right now. It's being led by communication services, and that's home to Google parent Alphabet. Ahead of their earnings Wednesday, the information reported Google plans a new chip to boost AI efficiency. Now, the SOX, the semiconductor index was down 20% from its June 22nd high. This morning, we're seeing a bit of a rebound in chip makers. The SOX right now up just over 2%. Is this another DeepSeek moment? The Chinese startup Moonshot AI says it has a model that delivers performance as good as top-tier U.S. platforms at a fraction of the cost. Meantime, Lori Calvasina at RBC Capital Markets says stocks can push higher.
Bottom line, I think we're still in a very strong earnings environment. There could be some noise in this reporting season, but I still think we're on track, for a good move in the year ahead based on a strong earnings backdrop.
And with everything going on in the Mideast with Iran and the U.S. Brent, the active contract right now, that is higher, 88.18 a barrel. And yes, what did I say? 4.10 a gallon this morning at the Wawa on Route 36. Oh, here's one for you, especially for me, getting up at 2 o'clock in the morning. Up to 5 cups of coffee a day, safe for most adults, and may even have benefits for heart health. This according to new scientific statement by the American Heart Association. Downing between about 3 to 5 8-ounce cups of Joe daily linked to a lower risk
I was just going to say,
disease.
I mean, that'll give you the shakes.
Yeah, really. No, 2 cups, you know, that's about my max.
5 cups. So who drinks 5 cups of coffee a day?
Well, yeah. I could
People
name
get up at
some
2 o'clock in the
names.
morning.
I could name
Looking at you,
names.
John Tucker.
No, just two. Anyway, we check the markets and other stuff for you right here on Bloomberg Radio. I'm John Tucker, and that's your Bloomberg Business Flash. Good to see you guys, Scarlett and Paul.
Welcome back.
Good to be back.
I'm sure. What kind of rousing vacation John Tucker had, do you think?
I went to Charlottesville in Virginia.
You traveled.
I did travel.
Wow.
About a 6-hour drive.
Got out of
You
state of
seem
New
shocked
Jersey.
by this. Just a couple of nights, but it was
I thought there was going to be a lot of home repair on
there
the
was
agenda.
that too.
Okay.
Pouring a lot of concrete and stuff like that. But
Charlottesville, beautiful.
no, I had to go see Thomas Jefferson's Monticello.
Nice.
I've never been there before. Absolutely beautiful.
Yep.
And the
Fantastic
people are
spot.
very nice down there.
Yes,
so,
they are.
Hi, Charlottesville.
Wow. There you go. John Tucker, thank you so much. Appreciate that. Looking at the markets here, as John's just reporting some red and green on the screen here. Let's take a look at what's happening out there. Some stock movers today. We can do that with Bloomberg's Judy LaGrue. Judy, what are you looking at today?
Good morning, Paul. First, I'm looking at Domino's Pizza, ticker DPZ. The restaurant chain shares are rising as much as 8.6%, although right now they're trading at about 3.5–4%. The stock is on track for its largest price increase in over 18 months. And this is coming after the company reported second quarter revenue that beat analyst estimates. So that's a revenue of about $1.2 billion. And so for us, this takes special importance because Domino's is one of the first restaurant chains to report quarterly earnings. And for the company, the U.S. comparable sales growth fell to its slowest pace in 5 quarters. So we're looking at pizza as it compares to burgers or burrito bowls with respect to earnings. And so really interested in that. Domino's specifically, though, this morning experienced some technical difficulties with their earnings, and so their new date of their earnings call has yet to be announced, but we're definitely looking at Domino's Pizza this morning.
All right, good stuff. And you know what I did this weekend, Paul?
What?
I went to go see The Odyssey at an AMC theater.
How was it?
It was really good.
So
I
you
mean, even though it was
recommend?
3 hours and it was way too loud, it was really good.
Okay. Way too loud, but 3 hours, that's a big commitment.
I know.
Okay.
And I enjoyed every minute of it.
This is good to know because I'm a big Christopher Nolan fan. I just, anything, I'm in. AMC Entertainment, AMC ticker is what we're looking at as well. The stock is rallying as much as 19% this morning, although the stock is currently up about 13%. It is on track for its largest jump in 7 weeks. And this is coming after, similarly with Domino's, AMC Entertainment surprised analysts with better than expected second quarter earnings. Attendance increased by nearly 14% this quarter. And specifically this last weekend, 4.3 million moviegoers went to the theaters between Thursday and Sunday. Okay. And of course, definitely spurred on by Universal's The Odyssey, which topped expectations in the box office with a $125 million box office debut. And peers IMAX and Cinemark, IMAX ticker for IMAX, and Cinemark ticker CNK, also up on the AMC earnings news as well.
All right. LXP Industrial.
So this industrial REIT is really interesting news here. Ticker LXP. The shares are climbing as much as 5.3% on the day, currently up about 4%. The REIT is on track to reach its highest intraday price in over 4 years since May 2022. And this is coming after Brookfield Asset Management and Canada Pension Plan Investment Board agreed to buy LXP Industrial Trust in an all-cash deal valued at about $5.2 billion. LXP shareholders will receive $61.20 a share, and the transaction is expected to be completed in the fourth quarter. What's interesting here is that LXP really is focused on the industrial space, so around tenant warehouse and distribution investments. So an interesting space to watch there with respect to that real estate sector.
All right, good stuff. Judy, thank you so much. Judy LeGroux is a Bloomberg News reporter. And for more conversations like this, subscribe to our Stock Movers Reports, where we offer 5-minute audio reports on the biggest winners and losers in the stock market. Subscribe to Stock Movers on Apple Podcasts, Spotify, or anywhere you listen. You look at oil prices, and they're not doing a whole lot this morning.
Right.
Pretty much unchanged. So I can't tell based on oil prices action whether the situation in Iran is getting better or getting worse.
It feels like it's getting worse on the margin.
All right, let's check in with Tyler Kendall. She's our Bloomberg News Washington correspondent in D.C. Tyler, what's the latest with the resurfacing of hostilities between the U.S. and Iran?
Well, Scarlett, to your point, we got indications that both sides are open to diplomacy, but we really saw a weekend of escalation between the two sides. And then this new development this morning that there could be some more supply disruptions out of the region as the Houthi rebels, the Iranian-backed proxy group, now says that they will institute a maritime blockade against Saudi Arabia effective immediately. There is broader context here that we can't only see that through the lens of the U.S.-Iran conflict. This is part of a ceasefire between the Houthi rebels and Saudi Arabia from 2022 breaking down, though it does have some really big implications when it comes to supply, since we know that Saudi Arabia has been utilizing that east-west pipeline to get supply to market via the Red Sea to the tune of about 4.5 million barrels per day since the conflict began. It is very evident here that Iran isn't going to give up its leverage when it comes to commercial shipping, prohibiting supplies from getting to the market. Over the weekend, we saw the IRGC confirm that it halted 4 ships that had their transponders off, and that is pretty significant because ships' ability to turn off their radar and transit through the strait was considered to be the safer route to actually get these vessels to make a completed journey through. So there's just so much to watch here in terms of escalation. The U.S. completed its 9th consecutive day of strikes, which CENTCOM said was designed to degrade Iran's ability to hamper commercial shipping, but also added that it was to, quote, swiftly punish the IRGC in the wake of the death of those 3 American service members over the weekend. The total U.S. death toll is now at 17 since the conflict began in February.
And Tyler, that's kind of where I wanted to go. You mentioned the 3 service members that were killed over the weekend. How does that news resonate in Washington? I mean, because it feels like this war with Iran is just kind of flying under the radar screen for everybody. But then you get some news like we did over the weekend about there are real human costs here on both sides. How does that resonate in Washington?
That's a really good point. Of course, we saw an outpouring of support from lawmakers here in the nation's capital. We're starting to see it play out a little bit more in the U.S. Congress as lawmakers debate the future of supplemental funding for the conflict that the administration has asked for. And we've seen some members demand that they want more safeguards on how President Trump is conducting the war, given that American service members are being put at risk every day. At this point, we know that the administration is saying that they took the latest action in retaliation for Iran targeting these U.S. bases in these regional countries. We'll have to see how it ultimately develops from here. The White House says that they are committed toward diplomacy. That is an off-ramp that Washington would like to see. You had the U.S. Secretary of State, Marco Rubio, say that the U.S. is getting very strong signals from Iran that they do want to negotiate. And there was a slew of reporting this morning that perhaps there is a 10-day ceasefire offer being put on the table. That's according to reporting from Reuters. But Paul and Scarlett, you also had the Secretary of State adding, while they've gotten indications that maybe there is room for diplomacy, there also appears to be a very big split between the hardliners in the IRGC that want to keep firing, want to keep engaging with the U.S. versus those more moderate members of the Iranian government who may be more amenable towards reaching a deal.
Tyler, before we let you go, anything on the agenda this week in Washington that we should be on the lookout for? Very quickly.
Ooh. That's a good question. I would say, not related to the White House, but back to Congress on Capitol Hill, there is a whole slew of legislation that we're watching for that could be connected towards supplemental funding, towards the National Defense Authorization Act, the NDAA. Last week, Democrats essentially stalled it over the conflict in Iran, and now we are up against a very, very tight legislative window to get legislation over the finish line before we head into campaign season and closer to the November election.
All right, Tyler Kendall, thank you so much. Tyler Kendall is our Bloomberg News Washington Washington correspondent with the latest out of D.C. and a wrap-up of what we're seeing in the Middle East. Oil prices little changed on the day right now. WTI just slightly lower at $82.42 a barrel. Brent unchanged at $88.10 a barrel. This is Bloomberg.
Markets, headlines, and breaking news 24 hours a day at Bloomberg.com, Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
And I'm John Tucker, the Bloomberg Newsroom with this Bloomberg Business Flash. Right now, the major stock averages, they are mixed. You have Apple, Boeing, Sherwin-Williams, the paint company, leading the Dow lower right now. The Dow down 137 points. S&P 500 up 12 right now, paired some of the earlier gains that we saw this morning. And the NASDAQ Composite Index 92 points higher. That is up 0.4% right now. Google parent Alphabet helping give the S&P 500 a bit of a boost. They're going to report on Wednesday. Ahead of that, the information reporting Google plans a new chip to improve AI efficiency. Oil has been fluctuating. It is right now higher. Brent, the international benchmark, up just about 6 cents at 88.14 a barrel. Iran said mediators have been in touch with proposals on how to ease hostilities with the U.S. after, of course, several days of clashes. Again, Brent is at 88.16 a barrel. WTI up just a cent right now, but it's at 82.50 a barrel. And then Jersey Mike Subs looking to raise as much as $1.09 billion.
Hold on, New Jersey Institute, right?
Yeah.
Point Pleasant, New Jersey.
Point Pleasant.
Okay.
I think they're based now in Tinton Falls
Yes.
or somewhere around there. They plan to market about 43.5 million shares for $21 to $25 a piece. At the top end of the range, they'd have a market value of about $8 billion. So the ticker symbol is going to be, well, it is JMKE. And when they start trading, of course, we will be tracking that. Here's one for you. Maybe, just maybe, Mike McGlone is going to come back home for the first time on record. The Miami area is more expensive than New York City.
Really?
As the local cost of living soars, South Florida's Consumer Price Index has jumped 36% since 2019, according to figures.
But in terms of taxes, you can't compare.
All sorts of things. So who knows? But the weather's nice. We check the markets for you all day long right here on Bloomberg Radio. I'm John Tucker, and that's your Bloomberg Business Flash, Scarlett and Ball.
Yeah, I can tell you, Miami Mike is never coming back. He's done the whole Northeast thing. He's done. It was like day 2 of the pandemic shutdown. We said, "Where's Mike McGlone? He's not in New York. He's down in Miami."
He moved on.
Smart guy. All right, let's take a look at these markets here. Phil Orlando joins us, Chief Equity Market Strategist and Client Portfolio Manager, Federated Hermes, joins us here. Phil, I mean, that was the best second quarter we've had since 2020 when you look at some of the big indexes here. Now what do we do in the second half of the year?
Good morning, Paul. Thank you very much for having me back on the program. Yeah, we had a phenomenal run. S&P was up 20, NASDAQ was up 30. Easy come, easy go, I guess, to some degree. We thought we'd have a pretty solid first half of the year, and we're bracing for, a little bit of an air pocket here in the third quarter as we give some of those gains back. You've got a very unique set of circumstances this year in which we've got a Federal Reserve leadership transition in the midst of a mid-year election year. That combination has only happened 6 times before over the last 93 years. The markets responded exactly the same way every time, with a little bit of a summer, early fall air pocket. And then, throw the volatility and uncertainty of the Iran energy inflation situation into that mix. And, our best guess is that we're going to see some profit taking here from now until October. And hopefully we'll find our sea legs before the midterm elections and we'll end the year on a high note. But, what we've been telling clients is be prepared for some volatility here over the summer.
Be prepared for some volatility, certainly if you're exposed to the S&P 500, which is very top-heavy and tech-heavy. If you look at the equal weight index, however, that's faring better. Just over the last 2 months, the S&P 500 equal weighted index, which makes sure that every constituent is weighted the same, has a total return of 4.8%. Phil, that's compared with an 0.8% total return for the S&P 500. What does that mean about the dynamics within the internals within the stock market? This is a broader advance than it once was, isn't it?
You hit the nail on the proverbial head, Scarlett. What we've been talking about is a broadening out of this rally. And we thought that the bulk of the damage would be on the growth in the technology names that have gone vertical. And as this rally broadens out, we felt that the international names and the domestic large cap value names with the big dividends and the domestic small cap names, both growth and value, would fare much better. So just to give you an example, let's assume the market experiences a 10% correction over the third quarter and early part of the fourth quarter. The growth in technology names, in our view, might be down 20 or 30%. The small caps and the value names and the international names might be down 5%, with some of that decline being offset by much higher than normal dividend yields. So we think there's a clear differentiation here between growth and tech on the one hand and everything else Those companies are cheap. The growth is pretty good, and we think those stocks are going to hold up much better.
Earnings, we're getting into the teeth of second quarter earnings here. Phil, what are you looking for? What do you think the market's keying on?
Earnings have been terrific. I mean, our expectation here, second quarter, revenues up, 12% or so year on year, earnings up 24-25% year on year. That's comparable to where they were in the first quarter. There's nothing wrong with the revenues and the earnings. Now, from a growth and technology standpoint, those stocks may have gotten ahead of themselves in terms of enthusiasm, and that's why those stocks ought to probably experience a little bit of a reckoning here in the third quarter.
All right, Phil, thank you so much. Phil Orlando, as always, Chief Equity Market Strategist and Head of Client Portfolio Management at Federated Hermes, joining us from New York. Over in the UK, Andy Burnham has officially become Prime Minister of the UK after meeting with King Charles III. In his first speech, he pledged to end the UK's political instability with a new economic model. Take a listen.
Britain needs to show the world that we can regain our stability once again. And that is our challenge, to make politics work, to make it work better.
All right, let's bring in James Woolcock. He's our UK politics reporter joining us from London. All that sounds well and good, James, but any specifics, any ideas, given what Andy Burnham is coming into this office with, this position with, what might this new economic model entail?
Well, I mean, the words out of my mouth, Scarlett. It's all big picture stuff. Andy Burnham traces what's gone wrong in Britain back to the 1980s. He talks about Thatcherism and 40 years of neoliberalism being the root of all of Britain's ills. Again, that's big picture. What does that look like? We are yet to see. We are yet to know who his chancellor is, and that is the key thing the market is watching out for. There are two names in contention here: Shabana Mahmood, the current Home Secretary, and Ed Miliband, the current Energy Secretary. Short of a sort of rogue pick, that would illustrate if he's seeing something more on the left wing of his party or more on the right wing of his party, and that is what we are all waiting to hear. And it could come in the next sort of couple of hours or so, Scarlett. Then we can start to talk about taxes, fiscal policies, devolution. But in the moment, we know that Andy Burnham wants to be far more domestically minded. He talks about high streets, he talks about homelessness, he talks about rough sleeping, he talks about growth in every postcode. This, compared to Keir Starmer, who is very much seen as a prime minister who went abroad, is trying to refocus the agenda on what people in Britain see happening in their day-to-day lives. But as you've already pointed out, the big question is, can he actually do it?
James, if I were to stop the average person on the street in the UK and say, hey, what do you really want from this new PM? What do you think we'd hear?
I think you get two things, and this is kind of based off of polling. It's not just me sort of making it up. They would say, we would love to not be talking about this. They would love to be sort of ignoring politics. Keir Starmer had this great line a few years back where he says politics should tread lightly on people's lives. I think the problem has been for Keir Starmer is that it hasn't for the past 2 years. We've seen Donald Trump, we've seen Iran, we've seen a series of scandals culminating in Peter Mandelson, the former US ambassador, getting kicked out of office. And all that has meant that people in the UK can't switch off when it comes to politics. And the other thing is they want their wages to go up. They want real terms wage productivity growth. Now, they would call that more money. They would call that the cost of living. But in reality, we all know that is GDP, that is inflation, and that is productivity when we talk about Bloomberg and our audience here.
Okay, there's also another dimension to the PM job, which Andy Burnham may not have that much experience with, and that is foreign policy. I understand that he will be speaking with Ukrainian President Zelensky later on today. What kind of expectations are in store for that conversation?
Well, we know that Burnham is basically keeping on all of Keir Starmer's foreign policy team. So Jonathan Powell, the National Security Advisor, he's staying on. Doesn't mean the Foreign Secretary job will stay, but certainly all the kind of advisors and civil servants, they're all staying on. And we've sort of been told at Bloomberg, to read from that by Burnham's team, that they want to have the same approach. Now, it is interesting to see that that will mean a similar approach on, say, towards Iran and the US. We are yet to see on those big questions. But when it comes to approachment with the EU, when it comes to trying to have more of a productive, engaged relationship with China, that is what is currently being trailed as what we can expect. Scarlett, what I hesitate to say is when Andy Burnham has to go and meet these people, when he has to go and make these decisions, will that hold? we will see. So much is not yet known about this administration. 10 weeks ago, Andy Burnham wasn't even an MP. He was the mayor of Greater Manchester, and it was thought he hadn't got a hope of becoming Prime Minister. It is a measure of quite how much is changing very quickly in UK politics, that his dizzying rise has happened in the way that it has. So I've given you what we know. It could all change very quickly, as it has for Keir Starmer over the past 2 years.
James, Andy Burnham and his party, they have some pretty good support within Parliament. Just lay out how that looks for Mr. Burnham as he starts to engage with Parliament.
So look, in Parliament there are 650 MPs. If you have a majority in Parliament, you can do whatever you want in the UK system. You can make whatever laws you want as long as you can get the votes through, and the Prime Minister effectively has a free hand. There are some checks and balances, but not nearly as many as in the US. Andy Burnham has a majority, not of one, which is all he needs, of 166. That should give him godlike power to reshape Britain as he sees fit. I say should, because it's the same majority Keir Starmer has. The difficulty is all of those MPs are very individualistic. They have been very polarised by Brexit. They have their own areas to represent. And it can be quite difficult to get them all to agree. At least that's what Keir Starmer has found. 90% of those 400 or so Labour MPs gave Andy Burnham their nomination in the past 4 weeks of this election process. And so he should have pretty big amounts of authority. Again, I stress the should. The other big fly in the ointment here is as he starts to give these top jobs out, this is his moment of maximum political power in the next hours and days. As the top jobs go, there will be people who don't get the top jobs. There will be people who get sacked. They might not back him anymore. Yeah. They might start to tell people like me, journalists, what they really think of Andy Burnham, and that's when the power starts to ebb away.
Really, really well told. James Wilcock, UK politics reporter, joining us from London. He's our Bloomberg News reporter there. Fantastic to get his analysis here as Andy Burnham is now the new Prime Minister for the UK, promising a new economic model as he seeks to reassure Britons of his agenda. This is Bloomberg.
markets, headlines, and breaking news 24 hours a day at Bloomberg.com, Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
And I'm John Tucker in the Bloomberg Newsroom with this Bloomberg Business Flash. Major stock averages mixed right now. After last week's sell-off, the chip stocks attracting dip buyers. So the Philadelphia Stock Exchange Semiconductor Index, the SOX, right now 2% higher after it dipped into bear market territory. Among the standouts today, AMC Entertainment swinging to a surprise adjusted profit in the second quarter. They also said this year's shaping up to be the strongest at the box office since the pandemic. Shares of AMC right now over 13% higher. And what goes better with a movie than a pizza? Domino's, those shares up around 3%. Second quarter comparable sales performance viewed as better. I always like this phrase, better than feared by analysts. They're expecting a lot worse. Moonshot AI surprise release of a new AI model has certainly sent a jolt through markets earlier, but Colin Sebastian at Barrett Equity Research says, you know what? Increased competition isn't necessarily a bad thing. I swear he said that. But anyway, maybe we'll hear from him later. S&P 500, 21 points higher right now, up 0.3%, 74.77 on the index. The Dow Jones Industrial Average down 151 points. Maybe this rotation back into tech. The NASDAQ Composite Index 140 points higher. That is up 0.6%. And with all the tit-for-tat responses with Iran and the U.S., Brent crude right now, it's been fluctuating. It's lower right now, 87.84 a barrel, down 0.3%. And we check the markets for you all day long right here on Bloomberg Radio. I'm John Tucker. That is your Bloomberg Business Flash. Scarlett and Paul.
Hi, John Tucker. Thank you so much. We appreciate that. Scarlett Fu and Paul Sweeney with you. We're live here in our Bloomberg Interactive Broker Studio. We're streaming live on YouTube as well. Well, we're at the stage of this AI story in the marketplace where the market is definitely trying to find winners and losers. And one of the areas that the market is concerned about is software, certain areas of software, particularly software as a service. And that includes the next company here. The company is called Klaviyo, and the symbol is KVYO. The stock is down about 45% year to date. It's a customer relationship management company using technology there. Think something akin to Salesforce.com. We want to get the latest on how AI is impacting this company, this part of the software space, and we're pleased to welcome Surabhi Gupta, Chief Technology Officer, and the company's name is Klaviyo. Again, KVYO is the ticker. Surabhi, thanks so much for joining us here. Talk to us about kind of what you guys do at Klaviyo and how you're integrating AI into your business.
Yeah, thanks for having me. So Klaviyo is an autonomous B2C CRM. And we bring marketing, customer service, analytics, AI all under one umbrella. And it's all powered by our data. And we are building products and features to help our marketers be the best they can be. And we actually just launched Composer and Customer Agent to help with this.
Okay, so let's bring it down to how a consumer might interface with your technology, with your products. Your B2C platform, which means business to consumer, so the consumer does have some exposure. How might Paul, when he is buying something online, experience your work?
So we have 200,000 customers, and let's say there's Glossier, Away, Mattel, Tory Burch. If you as a customer, go and interact with any of these brands, you can get a very personalized experience. And the way you do this is because these brands work with Klaviyo, and we help with powering each of these relationships.
Is AI a friend or an enemy to you and your company and your software?
Oh, we're all into AI. There's a lot that we're using AI for. Even if we just take our Composer product, it's your marketer's right hand. The goal is to help you be as effective as you can. You have all these ideas of things that you want to build and experiences that you want to create, and we want to make that much easier for you. And AI is at the forefront of helping make this a reality.
So talk a little bit about consumer behavior and how that enables the use, the application of a lot of the AI tools that you are developing?
One thing that's really exciting about this wave is that AI is not only helping with what we build, but also how we build it. So when we think of what we build, we're able to build out these experiences much faster, right? And we're able to get out more ideas in the hands of our customers. And I look at the entire build process as significantly changing. We see the velocity going up a lot. We see that our engineers are able to ship these features and much faster. Now, you might say that, hey, like software engineering, writing code has become so much easier, but there's so many other parts of the software development lifecycle that we see that the bottlenecks move to, and we're working through all of those, and AI is helping us with massive velocity increases.
Are your customers, are they saying, hey, we need more AI more AI capabilities in our marketing promotion campaigns? Are they pulling that from you, or are you more pushing that to them?
Our customers are driven by growing their business. They want to help grow their brands. They want to help reach their customers much better. And that's what we are focused on. And when we create these products, when we show them demos of the features that we've built, they want those features. So the end goal for us is not that, hey, we're going to use AI in this way and convince you why it's important. We are going to build the best products that we can, and we believe that AI and these models have really unlocked the ability to create a whole new set of features that we can put in their hands. And that's what we've seen with Composer. We've put this in front of our customers. They've been using this to create their campaigns and flows. And when it works, it's magic. We've taken away so much work from them, and they can do the work that they're best at, which is coming up with really good ideas, and we can help make that a reality.
All right, Surabhi, thank you so much. Surabhi Gupta is Chief Technology Officer of Klaviyo. The ticker there is KVYO, joining us from Palo Alto, California. Also from California later this week will be a stream of earnings from some big tech companies. Alphabet is reporting, Intel is reporting, although it feels like the vibes, the sentiment is a little bit fragile right now, especially after IBM gave a warning that enterprise software budgets are being cannibalized by AI spending.
Yeah, I think that IBM news was really seismic for at least for the next several quarters, maybe a couple of years, for the overall IT spend here, the overall tech spend. It just feels like, and we heard this from Anurag Rana from Bloomberg Intelligence, they're spending, a lot of these companies are spending so much more on AI. Some of it has to be cannibalizing other budgets. And that's kind of what we're seeing.
Right. It's no longer a rising tide lifts all boats. There's very much, a zero-sum game happening. And that had been the fear, especially when we saw software shares sell off. But now you're starting to get evidence of that. And investors are going to be a lot more particular in terms of what they want to see from an Alphabet, from an Intel when they report results. For Alphabet, they want to see that the proof is there, right? They're going to get the returns in the cloud business that justifies the outlay, the spending on building out the AI infrastructure.
Right, and a couple of areas that I think investors look at is, we've seen you spend all this money on AI. We want to see the return. And how do we see the return? Well, it can be in faster revenue growth rates at the top line, or maybe improved profit margins. One or both of those, we need to see more of it and more consistent of it. And I think the companies that do that, they get rewarded, and those that don't, like an IBM, which says that it's impacting their top line, that's a real problem.
You also wonder, we've seen this with banks. Every earnings season, banks report their results, the banks overall, and then they go to and tap the debt market.
Yes.
A lot of these hyperscalers have already tapped the debt market. They're going to report results. We know they still need to raise more money. Do they go and tap the debt market again after these earnings?
Yeah, I don't know. I'm looking at some of these CapEx numbers from some of these hyperscalers and some of the other players in that tech stack, and man, they seem big.
Yeah, and, hundreds of billions of dollars, easily.
So I think a lot of the investors who bought some of these equity deals and investment-grade credit bond deals, I think they're of the expectation that they're going to see more issuance.
Yeah, definitely. It's crowding out a lot of the issuance in other markets because the Alphabets, the Amazons, they're looking to raise money, not just in the U.S. debt market, but in debt markets overseas as well.
Yep. Looking at SpaceX here, the stock down another 2% here today. We're $121. Remember the
Where did
IPO
it go
price?
public at?
$135. Yeah. First print $150. Got to 2 and change. here we are. We'll keep an eye on that. This is Bloomberg. Good morning.
This is Bloomberg Intelligence with Scarlett Fu and Paul Sweeney on Bloomberg Radio.
All right, Scarlett Fu, Paul Sweeney. We're live here in our Bloomberg Interactive studio, streaming live on YouTube as well. Spain beat Argentina yesterday 1-0. See, John, I know what I'm talking about. I can do the lingo.
I kept asking, why is the clock going up?
Yeah. Yeah, I don't know. A lot of going on there. Randall Williams, U.S. sports and business reporter here, joining us in studio. A hugely successful World Cup overall, wouldn't you say?
Yeah, I think FIFA's happy. I think Americans were happy. And I think that if you had to remember this tournament, you'll remember exciting matches up until the final.
Right. Well, what happened in the final game? I mean, how can a team like Argentina, with the greatest player in the world, not get a shot on goal for like pretty much the
whole match?
Yeah.
They didn't. I mean, they took 2 shots, and neither one of them were a shot on. I think there were 2 shots on goal. But listen, Spain was dominant the entire tournament. I believe they conceded 1 goal throughout the whole thing, and it was very clear that their skill level, the pressure that they applied to Argentina, just flustered them throughout the entire match. So much so that it never felt like Argentina was even advancing the ball into Spain's half of the field. And ultimately, it was really a matter of if Argentina could hold on to penalties, and they couldn't.
And they were frustrated at the end of the game as well, with a lot of pushing and shoving after the final whistle had been blown. What this particular World Cup really demonstrated was that because it was held in North America, it was bigger than ever before, more profitable than ever before. they want to expand that even further, don't they?
They'd like to expand it from 48 to 64 teams. Gianni Infantino has talked about it. I don't know if that's necessarily a good idea, just because although there are a lot of Cinderella stories, they will add more countries. Evidently, like you look at who the Final Four was and who the round of 16 was, it was still the larger countries and the more dominant soccer powers around the globe. We have not seen a true Cinderella story make it to the World Cup finals in a very long time. It's only 8 nations that have ever won it, and it's a 100-year existence. So I think it's fun, but if all these, these countries, these smaller countries go out in the round of 32 or the round of 64, then it's not so good.
Again, I think it was successful that the host cities did a good job, and I think they did a great job. I think the fans from around the world actually had a really good time. In the U.S., you see all the press reportings, and they love going to Buc-ee's and doing all the crazy stuff here in this country. Net, win-win, right? So that begs a question, will we get it again soon?
I think so. I think when you look at the schedule, we have 2030, which will be in Portugal, Spain, and Morocco. We have 2034, which will take place in Saudi Arabia. I think in 2038, the World Cup will likely be back here. I think it remains to be seen if that partnership will extend again between Mexico and Canada all over again, because the U.S. has more than enough stadiums, and we don't know who the president is going to be and if that person will want all of it to be in the U.S. But I think that if you're FIFA, of course you're going to be in a rush to bring it back here.
Yeah, Infantino definitely made an investment to make sure that his relationship with the president was as positive and as robust as could possibly be, to the point where in yesterday's ceremony where they were handing over the World Cup to the Spanish team, the president kind of stayed on stage for a little bit longer than you might have thought he would have.
I believe, and I have not confirmed this, but when they posted the pictures with Spain holding up the trophy, the video looks like President Trump is in it, but the photo does not. So I don't know if someone edited him out, but it was clear. It's always awkward when a federal official is on stage with people, unless he's one of them. That was not the Spain's president. And so President Trump, he was part of this. He made getting to the stadium hellish. That was the longest media line that I've ever stood in.
Wait, what time did you get to the stadium?
I got to the stadium around 10:30, maybe
for a 3 p.m. match.
Let's say 11. Let's say 11. I did not get into MetLife Stadium until 1:30. So I stood in line for 90 minutes.
And you're a media credentialed dude.
Yeah, exactly. So, and I had the bright idea, like, let me get there early. They're giving out some pins. I want the collector's edition pin or whatever. Didn't get it and got into the stadium just 90 minutes before the match after being there 4 hours early.
All right, so this is a feel-good story with the World Cup and FIFA. I got a potentially downer one. Major League Baseball, I'm of the opinion we're not going to play baseball next year, and that is not good. Give us the background there.
They have a lot of momentum on the field. You think about how the last couple World Series, Yankees, Dodgers, Blue Jays, a 7-game series and a 6-game series, but they are far apart on negotiations. Salary cap is a word that is allergic to the MLB Players Association, and that's all that the owners want to talk about. There's a lot of campaigning for the owners to try to get fans on their side. I don't know if that's going to work for the players, because ultimately you're not negotiating with the fans.
Correct.
You're negotiating with the players, and the players are smart. They're not just going to be like, oh yeah, the fans are on the owner's side, so we should do that. Like, I don't know that there's going to be a season. I'm not optimistic.
Are there talks scheduled? I mean, are they talking regularly right now?
They're talking regularly. Talks have not been called off, but when you have something that is just as critical as a salary cap that has not existed for baseball, and now you're trying to implement one, you're not going to get $300, $400, $500, $700 million contracts for players in these deferred payments if a salary cap is in place. And you think about what the MLB has said, which is these rules would require, a lot of teams to shed cap space. It would do what the NBA has done with the second apron and reallocate the talent across the entire league. But if an owner doesn't want to spend, an owner's not going to spend.
So is the goal here to create parity across the teams? Is that what the league wants?
Yes, because if you are a free agent, what is the first thing you should do? You should probably go talk to the Dodgers to see if they're willing to sign, and then go.
And then the Yankees.
Right, then the Yankees, and then see what other opportunities are out there. And the reality is, it's like if you are a free agent, why would you ever go talk to the Pittsburgh Pirates?
Yep.
They haven't paid their own pitcher.
All right, very good. Randall Williams, U.S. sports business reporter, joining us here in studio. Red headline crossing the Bloomberg terminal. Rachel Reeves resigns as UK Chancellor of the Exchequer.
Expected.
So we expect to see something. For our listeners in the U.S., a reminder, you can listen to us via satellite radio on Sirius XM Channel 121. Access the world's only global audio business network, coast to coast, 24 hours a day. Bloomberg Radio on Sirius XM Channel 121 is presented by Golden Crest Metals. Stay tuned for the latest market news and industry research. Bloomberg Intelligence starts the second hour right now.
This is Bloomberg Intelligence with Scarlett Fu and Paul Sweeney.
Concern about rising prices spooking investors.
What does renewables investment look like in the U.S.?
More tariff talk coming out of this administration.
Breaking market headlines and corporate news from across the globe.
The president wants lower interest rates. He wants a rate cut cycle.
How do you broaden out the AI play?
Are people just looking for something to worry about when it comes to China?
Bloomberg Intelligence with Scarlett Fu and Paul Sweeney on Bloomberg Radio, Originals, and the Bloomberg Business app.
Good Monday morning, the day after the World Cup final. This is Bloomberg Intelligence. We are broadcasting live from our Bloomberg Interactive Broker Studio in Midtown Manhattan. We are also streaming live on YouTube. Paul Sweeney, John Tucker, and Scarlett Fu here with you for the second hour of Bloomberg Intelligence. Coming up, we're going to be speaking with Bailey Lifschultz, talking about IPOs. Moonshot planning an IPO. This is after the Chinese AI company made a major breakthrough. Jersey Mike's also looking to IPO as well. $1.09 billion, another Jersey institution. Okay, we're also going to check in with Marianne Bartels. She's Chief Investment Strategist at Sanctuary Wealth to get her outlook on this market as we get into the heart of earnings season with the hyperscalers, Alphabet notably reporting later on this week. Aaron David Miller is Senior Fellow at Carnegie Endowment for International Peace. He will join us with the latest out of the Middle East. And Seema Shah, Vice President of Research and Insights at Sensor Tower, will talk to us about tech and what she sees with DeepSeek's IPO that is coming up. All right, first, let's get over to John Tucker for a check on our Bloomberg Business Flash.
All right, guys. Dip buyers stepping in after last week's sell-off. Semiconductor stocks getting this lift after the SOX index. It did dip into a bear market. At least fit the definition, down 20% last week. We're going to hear this week from, among others, Alphabet, Tesla, and Intel, world's biggest companies entering second quarter earnings season. The expectations continuing to improve, but the gains remain heavily concentrated. Tech and energy continue to account for most of the upward earnings revisions that we're seeing. And this all supported by AI demand and, of course, elevated oil prices. Communication services right now best performing major industry group in the S&P 500. That is home to Alphabet, up close to 3% right now. The information reported Google developing a server chip designed to optimize the Gemini AI model. Chip's called Frozen V2. I don't know where they come up with these names. Anyway, S&P 500, 12 points higher right now, pairing some of the earlier gains. 74.69 on the index. The NASDAQ Composite Index up 104 points, and the Dow down 173 points. That's a decline of 0.3%. Meantime, Peter Scheer at Academy Securities expecting more downside for markets.
You know, I think it's rethinking what's going on with the AI spend. That's a big part of it, right? Our company's going to continue to spend. Will we see any signs of slowdown? And at the same time, you know, we kind of talk about these moments out of China. I'm wondering if what we're starting to see is just a flood of cheap compute, right? Is China going to flood our markets?
Right now, Brent, the active contract, $88 a barrel. That is down just about 10 cents a barrel. I want to bring you these headlines. Andy Burnham, the new UK Prime Minister, says he'll use, quote, any flexibility within the UK fiscal rules. So I have no idea what that means.
Okay.
This comes...
That means optionality.
Well, isn't that a good thing? Why is that? Anyway, Rachel Reeves, of course, resigned as the chancellor a little earlier, and of course that was expected. Oh, here's one for you. You couldn't get away from these commercials during the World Cup, but it's giving Kalshi and its main rival Polymarket a chance to showcase how their friendly federal regulator, the CFTC, has allowed them to launch competitive betting products, successfully fighting back the state regulators who tried to shut them down in court. H2 Gambling Capital estimates that the prediction market activity was around 20% of all legal U.S. sports betting volume during the World Cup. So that far outpaces the traditional sports books. giving them a run for their money.
Yeah.
It's interesting.
Well, prediction markets are easy
Sports
to
books
understand.
in
The
Vegas
contracts.
they don't like soccer.
Oh, really?
Yeah,
Okay. Well,
they
maybe
don't-
that's part of it too.
Because you don't know what the timing is. So is it a 90-minute game?
I see.
Okay, they won. No, there's overtime. 3 minutes of overtime. Okay. You played it 3
They don't
minutes.
call it over. What do they call
lose.
it?
Injury time. Injury time.
Oh, yeah,
Or
it's
extra
just
time. And that 3 minutes that goes up on board, it could be 3 minutes and 10 seconds, 3 minutes and 30 seconds. It could be 4 minutes, 5 minutes. You don't know what it was. So you can't, the Vegas books are not
They
keen on
want
making-
certainty.
Yeah, so they don't take much action. They keep it very light because it's a scam from a betting perspective. John Tucker, thank you so much. Appreciate that. As always, Scarlet Fu, Paul Sweeney live here in our Bloomberg Interactive Brokers studio, streaming live on YouTube as well. As John was reporting, we kind of got red and green on the screen out there. Let's take a look at some of the stocks on the move today. And we're joined by Bloomberg's Matthew Griffin. Matthew, what are you looking at today?
Well, Paul, I've been watching Alphabet closely after that report from the information that's lifting the stock. It's really interesting, this reported name, Frozen V2, informal name, what that means. It's a reference to an idea that Google is considering, which is to bake the way their Gemini model works into the physical design of the chip. The goal there to help Gemini run more efficiently and ultimately, in the bigger picture, help the technology giant deal with a shortfall in AI computing. This chip would be separate from Google's existing AI chips, which are called TPUs. Those are already out there on the market. And the report says the company plans to deploy this new Frozen chip as soon as 2028. That, again, all from the information citing two people familiar with the matter. And the stock, ticker GOOGL, up nearly 3% this morning.
Okay, and of course, Alphabet will be reporting earnings later on this week as well. What's next on your list?
Another AI-linked name, Hut 8, they're sort of a data center computing company, up nearly 10% after the company announced a $9.8 billion deal for computing power at a Texas data center campus. That's a 15-year lease for 352 megawatts of IT capacity with the same tenant that already had a lease at the site. This company has pivoted from Bitcoin mining into data center computing. It's a familiar story. This rally, the latest sign investors are rewarding this kind of pivot. You actually even just look at this company. They have a majority-owned subsidiary, American Bitcoin, that still does crypto mining. Those shares down about 80% this year. Hut 8, that's ticker HUT, has more than doubled.
AMC, what do you got for us?
AMC, I've got another gainer for you, up about 16% now. That's ticker AMC after the movie theater chain reported second quarter profit that beat expectations. Their adjusted earnings about $321 million, excluding taxes and other items. Analysts were looking for about $203 million in adjusted EBITDA. Our colleagues at BI point out attendance was strong in the quarter. Free cash flow turned positive in the first half of the year. That's driving a lot of the trading. Also worth noting, though, Christopher Nolan's Odyssey had a strong debut over the weekend.
I saw it.
$125 million. Was it good?
It was good. 3 hours, but it was good.
I'm excited. Well, a lot of people did see it. Nearly $125 million at the domestic box office. BI says that's helping theaters end a period of soft attendance.
All right, Matt, thank you so much. Matthew Griffin is our Bloomberg News equities reporter. And for more conversations like this, subscribe to our Stock Movers Reports, where we offer 5-minute audio reports on the biggest winners and losers in the stock market. You can subscribe to Stock Movers on Apple Podcasts, Spotify, or anywhere you listen. We talk a lot about this younger generation of consumers, Gen Z, and how their spending is very different than, say, Gen X or boomers. Yep. They like to spend on experiences. I mean, they do buy some hardcore products. They're rediscovering things like landlines and Polaroid cameras. What does it look like when it comes to beauty products? What does it look like when it comes to that part of the consumer market? Let's bring in Lindsay Dutch. She is our BI senior industry analyst covering this sector, and she joins us now. And Lindsay, you and your team put together some research on what Gen Z likes, what they don't like. What did you find?
Yeah, hi Scarlett, thanks for having me. We ran our semi-annual beauty survey and we just got the results back. And in general, when you look at the market, it's a $120 billion market in the US. Demand is relatively soft for beauty. It kind of weakened a little bit over the past 6 to 12 months. It's sitting near lows, 2-year lows based on our series of surveys. But one thing that stood out was Gen Z. Gen Z tends to have more intensive beauty routines. A lot more of them use a lot of product compared to average on our survey. And their demand signals that I look at, which is, would you cut back on other things before beauty? How important is continuing your beauty routine? Are you trying new products? When I look at those types of indicators, Gen Z not only shows steady demand, but it actually seems to be improving, which is a pretty big contrast to what we're seeing in the broader market.
So Gen Z, I mean, they're very, very comfortable with buying pretty much anything and everything online. How about beauty?
Yeah, so Gen Z does show a high interest of shopping in-store. Our survey shows about 75% of that cohort prefers to shop in-store for beauty. They like to see the product. They like to test it out on their skin. So they are interested in that, but they do use online for discovery. So social media is very big for beauty and discovering new product. Gen Z, a lot of them do look there for inspiration. And one interesting fact, I ask a question about, what would inspire you to buy something that you were not shopping for? And Gen Z ranked seeing it on social media ahead of a discount on a certain product. More broader results were that, a discounted product would spur them to make that purchase decision.
So within your research, you also find that Gen Z leans into fragrance. How do you discover fragrance online?
Yeah, fragrance discovery is hard online, but Gen Z is fueling sort of a pickup in the fragrance market, and with this trend called fragrance layering, which is basically buying a lot of different products for scent. You can do lotion, you could do a spray, and sort of they mix them all together to kind of create their own personal scent. This is driving demand in the industry, and it's demand from mass brands all the way up to luxury. So it's something that we're seeing, and the survey results really sort of validated that. Ulta, who caters to the younger consumer, they're really looking to be a leader in fragrance, really expanding that assortment and trying to capture that demand.
Lindsay, thanks so much. Appreciate talking to you. Lindsay Dutch, she is Consumer Hardline Senior Analyst for Bloomberg Intelligence, joining us from Princeton via the camera down there. Lots of IPOs. That's certainly been the score for much of 2026. And we said the big investment banks reported earnings last week, and they were touting how much the deals they're getting done and how good their pipeline looks. And we got more still coming here. That's keeping our next guest very busy. Billy Lipschultz, Senior Equities Reporter for Bloomberg News. Moonshot AI. Oh boy, I'm afraid to ask, what is this thing and when is it coming?
You haven't heard of Moonshot AI?
No, I have not.
You are not? What? Really?
Really?
Oh my gosh. I mean, they moved markets on Friday. They're the reason that
Friday I was on the beach.
Oh, you do look like you got some sun. Okay, Moonshot runs the Kimi model. Kimi K3 was the latest.
The what model?
Kimi K3 is a AI.
Do I have to put that on my phone now? Next to Claude and.
Well, they're a Chinese company and they're open source.
No.
I think I know your answer there. But so this is a company that really burst onto the scene while you were on a beach enjoying the nice weather. That really kind of took the world by storm, I guess you could say. And very quickly, Bloomberg is reporting they are now eyeing a Hong Kong IPO in the next 6 months. So that would be a quick turnaround. Company is, according to our reporting, working to close a funding round at $30 billion valuation, so relatively small potatoes compared to the Anthropics and OpenAIs of the world. But it is pretty interesting just given how quickly the company, again, became, for some, a household name overnight, similar to that DeepSeek moment we had a few years back.
Yeah, and trying to capitalize on that excitement. It's a Beijing-based startup. It's held talks with China International Capital Corp and Goldman Sachs about working on an offering. The one part of the deals market that's been kind of sluggish is exits from private equity and exiting their investments and listing them on the public markets. Jersey Mike's is kind of in defiance of that if it actually does go through with an IPO.
Yeah, and we've seen actually Blackstone try to live up to their promises from Jonathan Gray that this was going to be the year of an IPO. They did take out Blackstone Digital, which is kind of an AI data center roll-up firm, and they also took out Liftoff, which is in the app space, but Jersey Mike's more of a household name. I think you've been to one of those.
Yes.
Okay, so you know Jersey Mike's. The company and their backers, including Blackstone, looking to sell up to $1.1 billion in this IPO, would value the company at about $8 billion. So that is kind of a big valuation relative to most kind of growing casual chains, if you will. The big pitch, at least when I talk to investors, is they look at the success from Cava. They look at Jersey Mike's. Jersey Mike's Blackstone asset, but they brought in the leadership team from Wingstop. So you have seasoned vets running the show. You have Blackstone, which is going to make a decent amount of money on this IPO. And then you also have the international pitch. They partnered with the Jersey Mike's founder to help lead an expansion in the UK. So fast growing, pretty darn good franchise model here in the US, international ambitions, and a private equity sponsor is what kind of.
And BlackRock owned this for about a cup of coffee. Let's be honest. When they bought this just a few years ago.
Blackstone closed the deal in January of last year.
Yeah.
So in terms of the turn, 1.5 years is fast.
Is awesome for them. I mean, and their IRR, I'll go do the math on the train ride home. But I'm going to guess our IRR is monstrous.
Yeah, it's a big return, and it's a big, again, a quick return in a time when people, to Scarlett's point, private equity hasn't been super active in getting these exits. The interesting thing is you step back when that deal was announced back in November of 2024, and consumer bankers were like, this is a company that could have gone public then. So then you bring in Blackstone. They do a little bit of private equity magic, but again, they bring in an experienced management team, get the operations where they want it in a quick turn, quick money, and at least when I talk to folks on the buy side, they like it.
And that is super important when they go out to raise the next fund, which is, when I was looking at private equity maybe 20 years ago, I was told pretty easy to raise money. It's really easy to invest money. It's really hard to sell,
right,
to get a good exit. And so the way you raise money is to say, hey, I'm generating returns. I'm getting exits, successful exits.
And they happen to be, I mean, Blackstone obviously is huge, but you're not overexposed to software, which is a good timing, because you talk to some of the folks at the Thoma Bravos of the world, and it's like, okay, well, you're super bullish on software. This is the opposite time.
Totally different narrative, right?
Yeah.
Very quickly, Bailey, is there anything new with Anthropic or OpenAI going public?
This week, Anthropic is meeting with some of the largest long-only investors. We put that out at the end of last week. So that'll be the formal starting, to my understanding, of testing the waters meetings, talking about what the size could look like, what the company looks like. Again, a lot of these funds own it, so they're meeting with Dario and team that they know. Yeah. But the big thing is this seems to be indicating that September-October timeframe is in play, whereas OpenAI, for all intents and purposes, is very much seen as a 2027 story.
And are we expecting activity to, once everybody gets back from vacation, September, kick back in? Is that kind of the plan?
we get a little burst with Jersey Mike's. People expect Cumberland Farms.
Cumberland Farms?
Yeah, they
I grew up with Cumberland Farms.
EG Group. Yeah,
Okay.
that'll be another big one.
That's a competitor to Wawa, John. So, I mean, you're a Cumberland Farms person, you're a Wawa person. I don't know how you go there.
Cumberland Farms is... No, I'm not going to characterize it because I'll get in trouble. But
I've never been there.
Wawa reigns supreme.
Wawa stands on its own. All right, Bailey, thank you so much. Bailey Lipschall is Bloomberg News senior equities reporter. He covers all of the IPOs out there, and he did that justice with talk about Moonshot planning an IPO and Jersey Mike's looking to IPO as well. From New York, this is Bloomberg Intelligence on Bloomberg Radio. We're looking at stocks for the S&P and the NASDAQ in the green.
markets, headlines, and breaking news 24 hours a day at Bloomberg.com, Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
And I'm John Tucker, the Bloomberg Newsroom, with this Bloomberg Business Flash, brought to you by Golden Crest Metals. Inflation, tariffs, and volatility have some investors turning to gold for stability. To get a free gold and silver information guide and learn how to add metals to your IRA or 401k tax and penalty-free, go to goldencrestmetals.com/guide. That's goldencrestmetals.com/guide. Seen a rebound in the chip makers, powering some of the Wall Street gains today. Alphabet advancing. The information reported Google working on a new server chip. Google shares right now, again, they report earnings Wednesday, up close to 3% in today's trading. U.S. gasoline prices at the pump climbing back above $4 a gallon as the Mideast conflict intensifies. By the way, it was $4.10 a gallon at the Wawa in New Jersey this morning. The billionaire Los Angeles Dodgers owner Mark Walters' sprawling investment empire facing scrutiny from U.S. prosecutors. They've been investigating potential financial improprieties at two of his insurance companies, as well as Guggenheim Partners. S&P 500 24 points higher at 7482. That's up 0.3%. The Dow down 100 points, and the NASDAQ Composite Index up 157 points. That's a rise of 0.6%. Remember the Liz Truss moment?
Oh, yeah.
For the UK?
The head of lettuce?
Yeah, it's not quite risen to that, but, you know, I was talking about those comments from the new UK Prime Minister, Andy Burnham, earlier. Gilts extending their declines. The price is down, so the yields are up. He said they will seek any flexibility, his words, in the government's fiscal rules. So that's led to concerns about, his administration going to add to the heavy debt load.
More spending.
More spending.
That's the concern, right?
That you don't have. So the bond moves show just how sensitive investors are to any hint that this new government could loosen the budget discipline in the UK. The 10-year gilt is up 8 basis points, so it's 5.03%. I think that's a pretty good explanation.
I think so. Yeah. I mean, he's talking about flexibility, which means he's keeping his options open. Of course, he has made promises about a new economic model and wants to kind of make sure that he addresses those early on.
I was going to say, he used the phrase rough sleeping to end that. And I'm like,
what's that?
What does that mean?
Had to Google that fastly on air.
That's a Britishism, rough sleeping?
Homelessness.
Yeah.
The homeless
people sleeping on the streets.
Yep.
Which is, laudable gold.
Had to Google that right while we were on the air. And I said,
clearly this was for a domestic audience and not for a global audience.
Yeah, maybe just the Manchester audience. I don't know.
So anyway, we check the markets and other stuff for you right here on Bloomberg Radio. I'm John Tucker. That's your Bloomberg Business Flash. Scarlett and Paul.
All right, John Tucker, thank you so much. We appreciate that. Scarlett Fu and Paul Sweeney live here in our Bloomberg Interactive Broker Studio, streaming live on YouTube as well. The only technical analysis I know is the RSI function, the relative strength. And you put it up there for the S&P 500, and it tells you the market's overbought with a reading of 70. It's oversold at a reading of 30. Where are we today? Right smack in the middle, 50. So buy them or sell them. I don't know. I think that means earnings are going to be important coming up here. Marianne Bartles, she is a professional investor, chief investment strategist at Sanctuary Wealth. Marianne, we're heading into the teeth of earnings here. The earnings estimates seem to be pretty darn solid, suggesting maybe some more support for this market. How are you looking at it?
So earnings are very important, and we always tell our clients what really drives stock prices are earnings. And you know that first quarter earnings came in substantially above estimates. Now, we do have high estimates for the second quarter, but we are looking for continued strong growth where we might actually be up another close to 30% year on year.
Okay, so that is the setup as we head into kind of the meat of earnings season. We've already gotten the banks done with and out of the way. And I know that, especially with the capital markets activity, the deal making, the IPOs, they reflect a lot of what's going on in the market. But is there any takeaway from the banks' results that you would apply to the rest of the market?
Yes, that's a really good question. Banks are really important to the economy. I call them the heartbeat of the economy. You want your banks really working and lending to really stimulate an economy. And the earnings power that we saw that came out of the banks and the price action is very bullish. It really tells us that the economy continues to grow and should continue to grow.
Outside, well, let's start with this one. What is kind of your AI call when you sit down with your clients these days? Because it has evolved a little bit from just buying, the big chip companies to trying to figure out other ways, derivative plays on AI. How do you think about that these days?
Well, this is an important week for the hyperscalers. A number of the big hyperscalers are reporting, and they're the spenders of capital, and there's been concern that they're not going to get the return that some investors think that they might be able to return. So I think watching the hyperscalers is going to be very critical this week. But the way we overall talk to our clients about AI is during the 2000 period, we really entered what we call the digital era. And we think for the next 100 years, what's really going to drive this economy and global economies is going to be technology and advancements in technology. And we're in that next generation. And it's not just AI, it's also blockchain, it's robotics. It's what we call Web 3.0, which is the next generation of the internet where you can read, write, and own. And we think this is going to continue to drive our equity markets, meaning technology and the semi-chips out into the end of the decade.
Marianne, I got to ask you about a sector outside of tech. The best performing sector so far this year is energy, up almost 30%. And this is a sector you continue to like.
That's correct. And I know there was concern when we did have the ceasefire with Iran that oil prices might plummet down to 40. We really don't see that. In fact, now we're seeing oil up in the low 80s. We think the best earnings this quarter are actually going to come from energy. At least that's the forecast. And we think the higher oil prices are certainly helping. But we think they are also entering what we call new leadership. Which would tell us that we're probably not going to see $40 oil. Now, when we look very longer term, oil, meaning WTI oil, trades in a range between 150. It overshoots on both sides, but we think we could probably trade somewhere around the 70s and the 60s over time. We think that's going to be great for corporate profits for the energy companies. So they're considered value, and we are recommending that our clients begin to diversify into value. And we do like the banks as value, and we continue to like energy as well.
Fantastic. Marianne Bartels, thank you so much. Chief Investment Strategist at Sanctuary Wealth, giving us her outlook for the markets there. She favors the energy sector. All right, let's talk a little bit about a group of companies that rely heavily on the energy sector, and that is aviation. Sid Phillip is our Bloomberg Chief Correspondent for Global Aviation, and he is over in the UK at the Farnborough Air Show, where Boeing is expected to really put up a big sales pitch there to win some orders. Sid, good to speak with you. Just kind of give us the lay of the land here as the Farnborough Air Show gets underway.
Thanks for having me, Scarlett. So for Boeing, this is obviously a very important moment. The previous Farnborough Air Shows haven't really panned out for the company because they had the incident with the door plug 2 years ago when the Farnborough Show was held last. And then last year at Paris, which alternates with Farnborough, Boeing largely sat out after the Air India 787 crash. So for Boeing, this is a sort of way to come back after 2 years of not really pulling any orders at these air shows. And also for the company, it's a way of sort of turning the corner on all its problems and being able to sort of look at the next phase of growth, looking at turning around the company and actually starting to generate cash again.
Sid, what's the update? What's the current status of Boeing in China? When will they be able to maybe start business there again?
So we're still looking on China to see when those orders will actually materialize. I mean, they came back from President Trump's visit to China with a bunch of orders, smaller than they expected, but still a significant amount of 200, 250 planes. And we're looking to see when that deal is actually going to be finalized. Today at Farnborough, not quite China, but SMBC Aviation Capital purchased 100 Boeing 737s. We also saw orders from the Philippines as well as Saudi Arabia's Riyadh Air. And so for Boeing, they're winning orders for their 737 MAX and their 787. Now we look to see when that big China order will materialize.
Meantime, Airbus, which is the big rival to Boeing, it's basically a duopoly here when it comes to aircraft manufacturing. It's getting a lot of demand from China, isn't it?
Airbus has. I mean, just yesterday, Airbus signed a 95 plane order from China. They've been sort of seeing record flows from China, including from the Chinese airlines for both the A321 narrow-body aircraft as well as the A350 aircraft, which is their sort of flagship wide-body aircraft. So China is sort of ordering a lot of Airbus planes, and they have been sort of. Airbus also, remember, has a production facility in China where they produce the A321. So it's one of their final assembly lines.
Sid, talk to us about India as a market. Where is it in terms of relative importance? What are they buying, and who are they buying it from?
So we've seen India buying a bunch of planes at previous air shows. We had that record order in Paris for Indigo's 500 plane order. We've had record orders from Air India. Now it's actually a question of putting that sort of those metal in the skies actually, and actually getting that aviation sector kicked up, because India is one of the world's biggest aviation sectors, and there is a lot of potential. I mean, both Airbus and Boeing have in their global outlooks flagged the potential of the Indian market. Now it's just a question of actually getting those planes in the air and getting those flying. I mean, obviously Airbus and Boeing have very long backlogs, and so it'll be a while before those planes are actually in service. But we will look to see when the Indian airlines, both Indigo and Air India, scale up their networks, especially their long-haul networks, because those are the ones that typically are controlled by airlines like Emirates and Etihad and Qatar Airways. They've made a massive business out of connecting traffic from India.
Sid, before we let you go, in addition to speaking with folks from the aircraft manufacturers and the airlines themselves, you also had a conversation with the FAA's deputy administrator and their role in monitoring Boeing. What did you learn from Chris Rochelow?
So we spoke to Chris Rochelow this morning, and he talked about how Boeing has been able to win back the authorization they had to certify planes before they deliver to customers. The FAA put out a statement on Friday saying that Boeing will be authorized again to issue those final checks and final sign-off on those 737s and 787s. They had lost that authority when we had those quality outages in 2024, and we sort of had that massive door plug falling out of the Alaska plane, and that uncovered a lot of quality issues at Boeing. And so since then, Boeing sort of had to scale back production. They've also had to depend on FAA for sign-off of every single plane that they make. In recent months, they've been authorized to ramp up production first to rate 42 and then rate 47 a month on the 737 MAX. And they've also been allowed to alternate with the FAA on signing off those planes. And so now the FAA believes that Boeing has enough to be able to actually sign off on those planes, and they believe that they have enough to get those planes certified.
All right, very good. Sid, thanks so much. Appreciate it. Sid Phillip, Deputy Team Leader for Global Aviation over there at Farnborough outside of London. That's where they buy and sell a lot of these planes between the aircraft manufacturers and the airlines on a global basis. Big ticket items are bought and sold there. Always highlight for that industry. This has been
markets, headlines, and breaking news 24 hours a day at Bloomberg.com, Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
And I'm John Tucker, the Bloomberg Newsroom, with this Bloomberg Business Flash. So you have the stocks of the chip makers rebounding a bit after the SOX index that dipped into bear market territory. The most active stocks in the S&P 500 right now, that belongs to Intel. That's up close to 4%. NVIDIA is up 1.8%. And then you have shares of Google owner Alphabet. They're gaining. You have this report the company's developing a server chip is designed to optimize the Gemini AI model. And as we get earnings this week from the likes of Alphabet, that's Wednesday, investors are going to want to see returns on the AI investments and toss this one into the mix. Ron Josie at Citigroup says there are these worries about Chinese copycats.
We're investing all these dollars in intelligence and compute and energy, yet for only to be copied down the road, or not copied, but frankly followed. And so that's going to be a key theme and topic.
Right now, the S&P 500, 22 points higher. That's up 0.3%, 7480 on the index. The Dow Jones Industrial Average down 126 points, and the Nasdaq Composite Index up 171 points. That's a rise of 0.7%. Brent crude pretty much unchanged right now, 88.08 a barrel. Maybe more importantly is the price of gasoline. It has topped $4 a gallon. That's according to AAA nationwide, and it kind of depends on where you are in the United States, what you're paying. Boy, I want to say don't try this at home, but apparently a lot of people are, singles in particular. They're using bots like ChatGPT and Claude to help them refine their pitches for dating apps.
Oh, no.
So this has led to a rise in what's known as chat phishing. The connection reflects the AI rather than the actual person behind the screen. So far, dating app companies, they kind of don't know how to deal with this, doing little to regulate AI written text on their platforms.
The old-fashioned way, John. Go out to a bar.
Yeah.
That's how you roll. Worked well for me.
Come up with a good one line.
Yeah, that's all you need.
Hey, what you drinking?
Yeah. Come here often?
He doesn't need no chat GPT for that. Jeez. Anyway, we check the markets and other stuff right here on Bloomberg Radio.
It's the other stuff that makes this show.
Yes, exactly.
I'm John Tucker. That's your Bloomberg Business Flash, Scarlett and Paul.
All right, John Tucker, thank you so much. We appreciate that. Scarlett Fu and Paul Sweeney, we're live here in our Bloomberg Interactive Broker studio in New York City, streaming live on YouTube as well. Here's a note from our next guest. He cites, in 1968, LBJ quipped about Vietnam. I feel like a hitchhiker in a Texas hailstorm. Can't run, can't hide, can't make it stop. Iran isn't Vietnam, but Trump has a no easy exit problem that is very similar. Our next guest is Aaron David Miller, Senior Fellow at the Carnegie Endowment for International Peace. Aaron, there are a lot of folks saying, I'm not really clear why we started this war with Iran, but we're in it. Now a lot of folks are asking, how do we get out of it here? How do you think a best case or a reasonable case scenario unfolds here?
Yeah, thanks guys for having me. I love Bloomberg. Look, I wish I had an easy answer here. And again, Iran is not Vietnam. It's a different problem altogether. But the basic decision making and how you extricate yourself from a war under circumstances that are advantageous and expand the U.S. national interest is unclear. I see three options. You can escalate, and by the looks of tanker refueling aircraft, advanced fighter aircraft that's being sent to the region, that's certainly a possibility. I don't think escalation, frankly, is going to change Iran's calculation on what is now the seminal issue, which are the Straits of Hormuz, right? Open on February 27, 28, now no longer free and unfettered. Second option is to walk away. And because I don't think this administration, this president, in the face of the most serious crisis of his foreign policy, can afford that. I mean, it would be a legacy-defining issue if, in fact, the straits remain closed as a consequence of a war of choice. And third, of course, is negotiation. And I still believe that both sides, despite the escalation in the last week, remain open to the possibility. The problem, of course, is how to find the right balance of interests that would allow the Trump administration and the Islamic Revolutionary Guard Corps that are running the railroad in Tehran to walk away with a win. And right now, no trust, no confidence. The negotiations today have been performative. You can't do these on the back of a cocktail napkin. You can't do them on a cell phone. You can't do them through intermediaries. You got to be there with experts and expertise. And you need the time and space. So those are the three options. I go with the number three.
Right.
How we're going to get there is hard to know right now.
Do you see both sides, Iran and the U.S., committed to that kind of detailed sit-down negotiations where they are really committed to working out something rather than announcing something quickly on the back of a cocktail napkin?
Yeah, I mean, Scarlett, I think you broke the code here. And again, I've worked for Republicans and Democrats. So let me be very clear to you and your listeners, I voted for Republicans and Democrats. But when the President of the United States deploys his son-in-law and his best friend, Steve Witkoff and Jared Kushner, even deploying the Vice President, to tackle the three most difficult conflicts among them in the international arena, Russia-Ukraine, Israel-Gaza, and U.S.-Iran, you can't operate that way. So you really do need authoritative negotiators. You need a strategy, and you need teams who understand what the issues are. And also, as my former boss James Baker would say to you, each side has to figure out a way to walk away with a win. This can't be I win, you lose. And I think that's the problem that we face. Right now, I cannot outline for you any agreement that would reopen the straits and keep them open on terms that are acceptable to the Islamic Revolutionary Guard Corps, and particularly the Guard Corps Navy, which has a vested interest in controlling the straits, and the Trump administration.
Is there any reason, Aaron, to believe that this regime in Iran is anything but secure? Is there any reason for the U.S. to pursue that tack to try to, I don't know, foment some uprising?
I mean, I think that's how we got ourselves into this problem. We had a briefing from the Prime Minister of February 11th, and the Director of Mossad, David Barnea, that basically talked about the opportunities for regime change, and a president who's prepared to embrace them. There's not a shred of empirical evidence to suggest that this regime is in danger of fracturing, cracking, or frankly faces any opposition from the 90+ million Iranians who are just trying to get by.
What about the regime of Benjamin Netanyahu in Israel? National elections are set for late October. Is his future secure? And if for some reason his party does not do well in the elections, could that be an opening for some movement on Iran and U.S.?
I mean, right now the Israelis had a pretty big impact on how the war started. They are not going to have an impact. I'll say this without hesitation or reservation on how the war ends. As far as Benjamin Netanyahu is concerned, he's on trial for robbery, fraud, and breach of trust in the Jerusalem District Court, 5 years in running. If he doesn't maintain himself in power, he faces the possibility of either a conviction or alternatively a plea agreement that would end his political career. Israel needs, and again, I mean, as an analyst, I would say, I'm not an Israeli, I don't play one on TV. Israel needs new leadership. And in fact, Netanyahu's governed Israel 15 out of the last 17 years. And I think, I'll take a flyer here, I think it's certainly plausible, more than plausible, that next year at this time, or even by the end of the year, Israel will have a new government.
Interesting. All right. Aaron, thank you so much. We always appreciate getting a few minutes of your time during these uncertain times, certainly. Aaron David Miller, Senior Fellow at the Carnegie Endowment for International Peace, joining us from Washington, D.C. via Zoom. Again, it feels like there's no real momentum for any change in the status quo as it relates to Iran. And I wonder, just from a domestic political perspective, does President Trump and the administration want that heading into midterms? I don't know.
Well, oil prices kind of reflect all of that, right? Because they're not doing a whole lot, even with the resumption of attacks on each other and talk perhaps of some kind of meeting, not moving.
Coming up.
listening to Bloomberg Intelligence with Scarlett Fu and Paul Sweeney on Bloomberg Radio.
Scarlett Fu, Paul Sweeney. We are live here in our Bloomberg Interactive Broker Studio in New York City. We're streaming live on YouTube as well. All right, let's go do AI. I got it on the phone, people. I got my little window set up with my AI apps there. I got ChatGPT, I got Claude, and I got Gemini. And I also threw in Reddit there because the kids tell me I got to start doing some more stuff on Reddit. So that's kind of how I am. That's my world. But there's a lot more going on out there. And our next guest tracks it. Seema Shah, Vice President, Research and Insights at Sensor Towers. We heard another company, IPO, DeepSeek.
Yes.
Talk to us about DeepSeek, because that rocked the AI world, I don't know, a year ago, because they came out with a pretty good AI product at a much lower cost. Talk to us about DeepSeek.
Yes, so in January of 2025, DeepSeek came out. It's the Chinese-owned, Chinese-based AI chatbot, and basically it ramped up on downloads, about 170 million downloads in 2025 alone. Wow. Is, as you mentioned, significantly cheaper for many of the tasks that people ask it to do. So one study I read that for a basic intelligent task, it would cost 2 cents versus 2.75 for some of the other models. So just to put that into perspective. But what has happened since then is that downloads have subsequently declined. This year, in year to date, it's only been downloaded 34 million times and only 2 million times within the US. So there could be a number of reasons for that. One might be the fear of security. The servers are based in China, so there might be questions about national security and the security of the information if people use it. So that's one of the options, as well as other products such as ChatGPT and Claude ramping up their features and functionality.
So it seems like on these AI tools here, whether it's a Claude or a Gemini, they iterate so often, right?
Yes.
And they make material jumps in quality and capabilities. How do you guys track that? How do you guys track, like, who are the big ones, who are the good ones? How do you guys do that?
So based on our data, we have a proprietary first-party panel. So we keep track of every time an app is downloaded, every time someone opens an app, how long they spend on the app, the number of sessions. Similarly, we also have website data where we also track when they go on these sites, as well as we started keeping track of the percentage of ads that are seen by ChatGPT users. So we also have advertising data. So we have a wide breadth of different data sets that we look at and combine to figure out what we think is happening in the space. And so we don't keep as much to figure out if version 1 is better than version 3. It's just more about, are they getting more engagement? Are they getting more users, and what's driving those changes?
I think most tech companies, in my experience, they have this fear in the back of their minds that a couple of kids in some garage in Palo Alto are a day away from putting me out of business, coming up with something better mousetrap. I know we feel that way here at Bloomberg, and that's kind of what drives you forward to continue to innovate. In this space, it really seems like it, because it feels like we're on the wild west of this. We don't know where this technology is coming from. At least I don't. It's coming from everywhere. And it's going at such a rapid pace. As an IPO investor, I'd be like, you want me to put all my eggs in your basket, knowing that tomorrow there could be some kid who comes out of somewhere in the middle of the world? That's kind of how it is out there, it seems like.
It is, but there are definitely leaders in the space. So when you look at total active users globally, ChatGPT is over 55%. Gemini is also, I would say, 45 to 50%, very high. The other players, while they are growing, are significantly smaller. And the way, Gemini has a lot of advantages. It's in your Android operating system. They can connect to Gemini without going to the app. So it's probably even understated versus the active users that we show. ChatGPT is sort of the first mover advantage, first app to reach 1 billion MAUs in the shortest amount of time. ChatGPT has sort of become the Google word, right? And so when you think about B2C customers, I think a lot of people first start out using ChatGPT, and for an average user, they probably don't see much difference between any of them. Whereas Claude has rapidly grown and seems to be more focused on enterprise. 70% of their users' time spent is on the web, right? So maybe you get a split versus B2B and B2C. But while the other players are growing, they are very small.
And isn't the cost of it, if I want to an enterprise and have Claude used by my employees, I got to pay for that, right?
Yes, you get tokens. So when you ask a task or when you have a task, it requires some sort of payment in the token. And then also in the back end of this is a lot of energy to
Right.
do these calculations. So it's an expensive endeavor. And that is the benefit that DeepSeek has, is that it is much cheaper. And there are US companies testing it. Again, because of national security and whatnot. I mean, you're allowed to use it here, but we'll see how well it's adopted in certain Western countries.
So just in terms of the timing of potential IPOs, I guess Anthropic is the first one we think we might see.
They have mentioned it. Anthropic owns Claude, OpenAI for ChatGPT, and now DeepSeek said maybe early 2027. I think a lot of that depends on how the market goes, how we see SpaceX perform, just given its exposure to AI and Grok. I think that will be market dependent, but I think they certainly would all like to go public.
Absolutely. Well, I'm looking at space exploration, SpaceX, kind of a quasi-AI play, to say the least. That's certainly what they pitched.
Yeah.
I don't know. It went public at $135, went over 200. We're now back down. We're 123, so we're below the IPO price and below the first print at 150. So we'll see how that plays out.
Yeah,
Seema Shah,
exactly.
Vice President,
Thank you.
Research and Insights for Sensor Towers here. For our listeners in the U.S., a reminder, you can listen to us via satellite radio on Sirius XM channel 121. Access the world's only global audio business network, coast to coast, 24 hours a day. Bloomberg Radio on Sirius XM channel 121 is presented by Golden Crest Metals. Stay tuned for the latest market news and industry research. Your top stories and global business headlines are coming up in just a moment. The S&P's up 28 points. The Dow's down 130. The Nasdaq's up 200. That's about 0.8%. 10-year Treasury yield, you're getting 4.59% on your 10-year. WTI oil unched at $82 a barrel.
From ABC News, I'm Michelle Franzen. The war with Iran continues to escalate. U.S. soldiers killed in Friday's Iranian strikes at a U.S. base in Jordan have been identified by the Pentagon as Private Isabella Gonzalez from Texas and First Lieutenant Tyler Feehan from Hawaii. The third U.S. service member is presumed dead but missing. ABC's Martha Raddatz is in Amman.
Video circulating online appearing to show projectiles falling over the base, some intercepted, but others making a direct hit. Sources telling us one of those strikes hit a housing containment unit, raising questions among some military experts about Iran's capabilities, despite the administration saying the Iranian military was decimated.
In Britain, Andy Burnham was ushered in as the new prime minister after Keir Starmer was pressured to step down earlier. ABC's James Longman is in London.
Andy Burnham has a huge challenge ahead of him. There has been a lot of political instability here. He is the 7th prime minister in just over 10 years.
A memorial service taking place in Mississippi for Nolan Wells, the 18-year-old who died during a July 4th holiday boating trip with friends. Here's ABC's Aaron Katursky.
The funeral is open to the public. What his mom has called a party to celebrate Wells's life is by invitation only. And she has also called for calm, a day free of protest over the case, just to focus on her son.
Further testing is needed in the cyclosporiasis outbreak. The FDA says the one sample of Taylor Farms lettuce that tested positive for the parasite was a false positive. Taylor Farms says the recall continues out of an abundance of caution.
Last week, the FDA, though, did link the outbreak in 5 states to Taylor Farms' shredded iceberg lettuce that was sourced from central Mexico and supplied to Taco Bell restaurants. Taco Bell says that it has removed all affected products.
ABC's Elizabeth Schulze. In New York City, federal officials say a man is in custody after setting off an incendiary device outside the federal building. You're listening to ABC News. Andrew and Tristan Tate, known online as the Tate brothers, were arrested Saturday night in Miami. British prosecutors bringing new charges of rape and sex trafficking against the controversial influencers, according to U.S. and U.K. authorities. ABC's Patrick Reevell has more.
The Tate brothers now face 59 charges in the UK, including multiple counts of rape, multiple counts of alleged assault, as well as human trafficking, and as well as allegedly making indecent images of children and extreme pornography. These are obviously very serious accusations, which the brothers deny.
British police say that there are 7 alleged victims in the UK. It's not technically a precious metal, but the rising value of copper has made it a target for thieves.
How you doing? When a police officer spotted a man in a reflective work coat walking along the West Seattle Bridge with armloads of insulated copper wire, he was suspicious.
What is really going on here, man? I told you I was up here working for him. Working for who? What should you like?
Gregory Wayne Galetsik was arrested on charges of posing as a city employee and stealing about 100 feet of wiring from the light poles on the bridge. Some of the lights are still out almost a month later. Galetsik failed to appear at his arraignment. A warrant was issued for his arrest. Jim Ryan, ABC News.
An epic weekend for The Odyssey. Christopher Nolan's adaptation of the epic poem took in $264 million worldwide. Michelle Franzen, ABC News.
Live from Washington, D.C., this is Balance of Power with Joe Matthew.
Diplomacy is back as gas returns to $4 a gallon. Welcome to the Monday edition as markets try to rationalize the whole situation right now with Iran after a weekend that saw 3 Americans die, attacks on civilian infrastructure from both sides, and Houthis threatening to blockade Saudi Arabia. But there is talk of diplomacy and a new proposal for a ceasefire that we'll discuss with Bloomberg's Tyler Kendall, with insights from retired Army Colonel Wayne Sanders from Bloomberg Intelligence. Congress is back in town with all of 4 days until summer recess. We'll talk about whether they can get anything done with Nathan Dean this hour, and we'll have analysis from our political panel. Rick Davis and Jeannie Shanzano are with us, and so is Charlie Pellet. Let's get to Wall Street first and check on the markets. It's a funky-looking trade here, Charlie.
Yeah, I was just about to say the same thing, Joe Matthew. We are looking higher on the S&P 500 index. Down day for the Dow. We got oil in flux. Here also looking at developments out of the Middle East. But right now, the S&P holding on to a gain. Chips are rallying. S&P higher by 32 right now, up by about 0.4%. The Dow, however, as I mentioned, in the red right now, with the Dow Industrials down 112, a drop there of just about 0.2%. NASDAQ up 224 for the NASDAQ Composite Index. That is a gain of 0.9%. Down day as well for the Russell 2000 Index of small cap shares, lower now by 0.1%. All of this with the SOX, the Philadelphia Stock Exchange Semiconductor Index, rebounding up 2.6% right now. The VIX below 18 and the 10-year at 4.58%. Gold flat on the day, 4,016 the ounce, while West Texas Intermediate crude bouncing around, now lower by 0.7%, 81.91 a barrel. Brent 87.76 down now by 0.4%. Bottom line, though, Wall Street very much focused on the latest headlines out of the Middle East. Iran says mediators have been in touch with proposals on how to ease hostilities with the U.S. after several days of clashes. Stephen Cook is senior fellow for Middle East and Africa Studies at the Council on Foreign Relations, and he was a guest this morning on Bloomberg Surveillance.
While the United States and Iran are firing on each other, third parties are trying to put together some sort of diplomatic agreement. At the moment, it doesn't seem as if the president is truly interested in a negotiation. He wants to make a point after these 3 or 4 American service people were killed, but he is always open to negotiation, regardless of what he says.
Stephen Cook of the Council on Foreign Relations. Chip stocks higher, as I mentioned. NVIDIA up 1.7%. Broadcom up by 3.4%. Micron up by 5.6%. Intel, which reports this week, up by 4.2%. That, Joe Matthew, is a Bloomberg Business Flash.
All right, Charlie, thank you. Hope you had a great weekend, and he'll be back in just about 15 minutes with more on the Monday trade. Yeah, we're just getting back to business here after an interesting weekend in politics. It was a very difficult one when it comes to the war in Iran, and we'll have a lot more on that in just a moment. On this 20th of July, wow, summer is halfway over. Are you kidding me? Thank you for meeting us, whether you're on vacation, driving an Uber, or somehow getting a break from work here on Bloomberg Radio. Streaming live on YouTube. You can always watch the radio on TV by searching Bloomberg Business News Live. And if you've got the Sirius XM, it's channel 121. But of course, you're already listening to us. As we put the pieces back together in a president of the United States who's back home from the Meadowlands, did you see him on stage last night with Spain, the country he wanted to cut off all ties with? Seems they're getting back into his good graces after winning the World Cup, and we'll have more on that. As we begin with the situation in Iran, and breaking news from U.S. Central Command, just as Charlie was talking, CENTCOM says U.S. service members aboard amphibious assault ship USS Boxer support flight operations day and night from the Arabian Sea as CENTCOM enforces the naval blockade against Iran. As of July 20, here's the count. The U.S. military has redirected 7 commercial vessels and disabled 1 as the blockade, at least against Iran, stands. But we have a lot of news to pick through from the weekend because, as I mentioned, this was tough. There were a lot of headlines directing us to all-out war, with 3 Americans dead. The Kuwaiti military said it was responding to drone attacks from Iran after the president said Sunday night CENTCOM launched another wave of attacks. I think this was 9 days straight now. The president talked from the tarmac, actually, as he was making his way back from the World Cup. Listen to what he said.
We hit them very hard again tonight. This is a far bigger job that we're doing. We were doing a little job of stopping them from having a certain capability. Now we're just ending it. So it's really not the same thing. What we're doing now is we're ending any chance where they could have a nuclear missile.
So there you have the latest round. It ended about 10 o'clock last night, and we'll be curious to see what happens today with now reports of a potential diplomatic breakthrough. Reuters is suggesting there's a plan on the table or proposal for a 10-day ceasefire. We'll see if that's real and if it goes anywhere. As we now realize, at least based on reporting from the New York Times, and we'll talk to the colonel about this, that with these missiles getting through to Jordan and Kuwait and other areas, it may be that Iran is finding its way to more effectively route around our air defenses. Let's bring them both in. They're both with us right now. Bloomberg Washington correspondent Tyler Kendall here in our Washington bureau, and retired Army Colonel Wayne Sanders, senior defense research analyst at Bloomberg Intelligence. It's great to see you both, and thank you for starting the program with us here. Tyler, let's start with what we know. 3 Americans have died, which is something that we have to remind ourselves of. And I know that there could be a 4th based on remains that they are reviewing right now. What's the president said about this so far?
At this point, CENTCOM has confirmed those deaths, but said that they, quote, swiftly punished Iran with the wave of strikes that we saw over the weekend, that they say were also designed to degrade Iran's ability to threaten commercial shipping. It was a weekend that was marked by escalation. It's, of course, incredibly significant as the total U.S. death toll related to the conflict in Iran has now reached 17, potentially 18 as we wait further updates. But it was also a weekend where both sides seemed to signal an openness to diplomacy, which was interesting. We heard U.S. Secretary of State Marco Rubio saying that the U.S. received very strong signs that Iran wants to come to the negotiating table, but that the issue is the split among the hardliners that want to keep fighting and the more moderate members of the Iranian government that may be a little bit more open toward reaching a deal. But what we have to temper this with, amid the reporting that there seems to be maybe a proposal for a short-term ceasefire, Iran's foreign ministry put out a statement that I think really encapsulates the moment we're in. On one hand, they said there was diplomatic activity this weekend, but on the other, they said that they remain their sovereignty over the Strait of Hormuz, which is the exact scenario that we're in.
Prompting the president to once again say, we control the strait. Colonel, we saw an exchange of attacks from both sides against civilian and military structures, desalination plants, energy targets, bridges. Does that put this conflict in a different phase in your eyes?
Yeah, I think it absolutely does. I think, we talked about it before in terms of both sides are trying to create a strategic level of center of gravity pressure on the other one so they could bring them to the table and then reach some type of agreement. After the ceasefire was in place for so long and now being able to come back, both sides right now are actually increasing not only the intensity of the strikes, but also where those targets are actually taking place. And so you see that with what Iran is doing against some of the Gulf partners beyond just going after the UAE, which was a favorite target prior to the ceasefire, and now, like you said, going after Jordan, going after U.S. military bases, and targeting U.S. and not just some of the Gulf state partners that are supporting the U.S. So you're starting to see that. And then on the U.S. side of the house, you're starting to see where the targets have actually changed, and it's not just standard military targets that you were going after, but also some of the additional facilitation areas that you're looking at. Like you said, desalination plants are one of the ones we talked about before, as well as bridges and potentially even up to power plants.
The flurry of attacks, writes the New York Times, and losses they have caused are a sign that Iranian forces not only still have ample missile stocks, but have also become more adept at evading U.S. air defense systems. When you saw that video, those two missiles touching down in Jordan in the middle of the night, what did you think?
I think the biggest thing there that I took away from that was the U.S. had to be able to take a lot of their air defense capabilities and prioritize based off of where they thought the most likely areas of attacks were going to be. Okay. And so from that, I think that Iran did, take the U.S. a little bit by surprise in terms of where those were actually going to be. Wow. But now what you're going to see is that secondary side of that. Right now you're seeing the escalation piece of this. I really break this down into three different things. I bring it into power, partners, and pressure. Those are really the three biggest ones. Iran does still have power and capability, which they have been able to show. Now, how deep those stockpiles actually are is unknown, and that's a piece that I think CENTCOM and Fifth Fleet probably have a better understanding as to what they have. And then on the partner side of the house, you are seeing some Iran tied to the Houthi portion for their side of it, and then pressure is what they're actually pushing onto Saudi Arabia, as well as everything that you're seeing inside of the Strait of Hormuz. The U.S. side, putting it on the same piece, is the U.S. is still ready to fight, and they still have the ability to swiftly, right after that took place, within hours, CENTCOM had already struck back against Iran, and they're going to continue to strike back. I think right before this, we heard one of the guests talking about the fact that there is an area in which, President Trump knows, he has to be able to answer swiftly for the deaths of Americans that have taken place from these Iranian attacks. So he's not going to just let go of this and be like, okay, diplomacy is the first answer. But he also understands the long game in this, and so he's going to take that balance right now.
Amazing, Tyler, to see crude oil prices actually lower for the most part today, despite this news about Saudi Arabia, especially. That's a kind of a new level for our conversation. But gas is rising, and it's back above $4 a gallon. If you're the president of the United States here, the political calculation is unavoidable in a midterm cycle.
We often talk about $4 a gallon being that political threshold where the psychology around it for voters really starts to ramp up. I'm curious to see what sort of messaging we get from the administration recently when it came to gas prices. President Trump has previously accused big oil companies, saying that he wants investigations, even though we know that it often takes time for retail gasoline prices to change, in part because you have to trickle it through the supply chain, and that takes longer. Keep in mind, a lot of these are independent gas station owners who have to think about their own margins when they set the price that you and I pay at the pump. Just last week, we had confirmed that the administration was trying to think about steps for lowering prices in the general energy market, such as extending that Jones Act waiver. I'm curious to see if we get another debate about the federal gas tax getting suspended.
I'm amazed that it went away, to be honest with you, but I guess a little relief in gas prices will do that. Now that it's back above $4, just wait. Colonel, I'm looking at a story from AFP, Agence France. Iran fighting a full-scale war with the United States, as President said Monday. The declaration coming as its Yemeni allies, the Houthi rebels, threaten to expand the war further, as we discussed the blockade of Saudi Arabia. Will we continue to get language out of both sides of everyone's mouth? Full-scale war, open to diplomacy. This is what we're hearing from both countries.
Yeah, absolutely. I think when you look at leverage as a national power and you have your diplomatic side, you also have your information side. So they're going to get everything they possibly can out of that information perspective in this aspect. It allows them to be able to stretch out what they believe their power base is and actually say, okay, not only am I going after the 20% of oil passing through the Strait of Hormuz, but also the 12% coming off of the Red Sea as well.
You hopeful for a 10-day ceasefire?
I'm very hopeful, but
we'll see how realistic it is.
President Trump is.
Well, that's right. Absolutely. Colonel, thank you so much. We're glad to have you back in the Bureau. Colonel Wayne Sanders, Tyler Kendall, the best of Bloomberg to get us rolling here on the Monday edition of Balance of Power. Thank you for being part of it. Nathan Dean's on the way in next as Congress comes back.
It's 12:20 on Wall Street. We do check markets all day long here at Bloomberg. Oil is lower. We're seeing a bounce for chip makers. The Dow lower, the S&P, NASDAQ, and the NASDAQ 100 index all advancing. S&P right now up 35 at 74.92. That is a gain of 0.5%. Dow Industrials lower, down 0.2% right now, while NASDAQ is up 229 points for the NASDAQ Composite Index. That is a gain of 0.9%. The NASDAQ 100 Index up now by 1.2%. We've got the SOX rallying 2.6% now, a VIX just above 17, and a 10-year currently yielding 4.59% with a 2-year 4.22%. Gold down $4 the ounce, little change there. 0.1%, 4,012 on the precious metal. Crude, a retreat now down 0.6%, 82.01 a barrel. Brent, 87.96 barrel of Brent down by 0.2%. AAA tells us gasoline prices at the pump back above the $4 a gallon mark as the Middle East conflict intensifies. Among some of the oil majors today, we're looking at gains for ExxonMobil up 0.8%. Chevron currently higher by 1.1%. ConocoPhillips up by 1.2%. Again, recapping, the Dow lower, the S&P, NASDAQ, they are both advancing with the S&P up by 0.5%. For on-demand news 24 hours a day, subscribe to Bloomberg News Now wherever you get your podcast. I'm Charlie Palatacho. Matthew is a Bloomberg Business Flash.
All right, Charlie, great to see you, sir. The voice of Wall Street and the New York subway will be back in about 20 minutes' time with another read on the markets here. Strange to see crude oil lower. There's some things I'll never understand as the Houthi rebels now threaten a blockade against Saudi Arabia and crude's lower. We're at war with Iran. Massive disconnect in the market on so many of these issues. As we had determined in our opening segment, though, gas prices just keep on rising. $4 a gallon now, national average, which is not the headline that the president was looking for. Big thanks, by the way, to Colonel Sanders. He's been out of the office for a minute. Great to get him back. And Tyler doing her thing on balance of power. It's a great program here on Bloomberg and indispensable at times like these to really bear down on what's happening in Washington, and in this case, on Capitol Hill. You might not believe what you're about to hear. We're down to 4 days. That's it. You've got 4 days to finish all of your work because August recess is looming. By the way, next hour, right around now, we'll be spending some time with Mike Flood, Republican congressman who's still celebrating the housing bill that the president decided not to sign. But the Rules Committee is going to get behind closed doors about 90 minutes from now, and that's usually when the fighting begins, right, in the House. 4 days remain. This is like the setup for a game show. Imagine The Amazing Race, House Edition. You've got 4 days. You've got to vote on the NDAA. You need to get a clean CR, a budget resolution to the Pentagon, a quasi-ban on stock trading, and you need to get home to have some town halls and run for re-election. This is why everyone's talking about a potential government shutdown. Maybe not Nathan Dean. I don't think he's got odds on that. We get together with Nathan every week at this time, every Monday. He is the senior U.S. policy analyst at Bloomberg Intelligence, the man that terminal users call for advice on what in the world is happening in Washington, because a lot of investment decisions are based on this wackiness. Maybe you're one of them. You ever call Nathan? We just bring him on the program here every Monday, and he's with us now. Nice to see you, sir. Welcome back as always. Summer recess is about to start. Instead of me picking through all of these items that I just mentioned, will they get anything done?
Well, one of those 4 items is going to get the wrath of President Trump if it doesn't move forward.
Okay.
It's not going to be the NDAA. It's not going to be the clean CR. It's not going to be the votes on the other thing. It's going to be getting through the reconciliation deal.
3.0.
3.0, because that's the one thing that President Trump has been saying for in regards to his Save America Act.
Yes.
Now, when it comes to the reconciliation deal, it's up to $95 billion. We've been explaining to our clients this morning that it just opens the instructions. This isn't a vote that says, look, now the House has passed this.
Right.
But it's $60 billion up to the Department of Defense for munitions tied to Iran. So think RTX, Northrop Grumman, those defense contractors that are tied to munitions. It's $11 billion worth of farm aid. Now, when it comes to the farm aid in particular, look for a one-time boost to like CF Industries or Mosaic for planting and seed, not really heavy machinery here. Okay. Most of the farmers that get this aid, they're going to pay down debt. So a lot of this isn't even going to go to companies. But what we're telling our clients is we're at a 30% chance of reconciliation, because even though Speaker Johnson can get it through this week, there's a number of reasons why the Senate's going to have issues with it. And the Senate ultimately is going to look at it and say, you know what, we're going to do whatever we want to do anyway. And that's not going to be until September.
Not till September. Okay, so to your point, just like that on cue, pretty amazing, James. President Trump on Truth Social a short time ago. Thank you to our great speaker, Mike Johnson, the House Budget Chair, Jody Arrington. We've got a call into him, by the way. And the members of the House Budget Committee, who he lists, for launching an effort to get as much of the Save America Act as possible in a budget bill. That's the one we're talking about with Nathan. Along with aid to our incredible farmers, our funding for our military. We need voter ID, identification, proof of citizenship, and hopefully no corrupt mail-in ballots. I'm asking all House Republicans to vote yes this week on the budget resolution, which is an important first step towards getting a budget bill. It's almost like he was just listening to you. Kind of amazing. House Republicans must unify, he says, and fight for the Save America Act. So he doesn't use the word because no one really knows what that is. This is the reconciliation plan. If you put Save America in there, what does the parliamentarian say next door in the Senate?
Well, there's two versions of Save America that you're talking about.
Yeah.
It is the Save America version that President Trump wants. That doesn't get through the Senate parliamentarian. The Senate parliamentarian is going to look at it and say no. And then Majority Leader Senator John Thune's going to be, are you going to get rid of the Senate parliamentarian? And he's going to say no.
We tried that.
Yeah, we've tried that. So that's the version that President Trump wants. But there's up to $10 billion in this instructions to incentivize states to implement Save America Act through grants. That potentially could get through, but that's not what President Trump wants. And so are you going to give red states more money to implement Save America Act when these states can do it on themselves already? Right. But when you have blue states saying we're not going to implement Save America Act, that doesn't really help President Trump with his goals. So ultimately, whether or not, if whatever version gets through the House this week, if it gets through, it's probably going to be the one that President Trump likes.
Okay. Sure.
With everybody knowing that the Senate parliamentarians
it's a
going to
wall
throw
in
it
the
out.
Senate.
Yeah.
Gee whiz. All right. So this is a riot. I'm not even sure what to ask you about here because he's talking around this a little bit, launching an effort to get as much of the Save America Act as possible in a budget bill. So he's already climbing down here, is he not?
Yeah. Oh, yeah, absolutely.
So he knows how this ends.
Look, I mean, there is nobody that I've talked to, or anybody, client or Washingtonian, who thinks that the Save America Act has a chance of passage this year. You're not getting rid of the filibuster.
Yeah.
They're not going to implement a talking filibuster. They're not even going to get rid of the Senate parliamentarians. So the only path I see here is this idea of paying out grants, which is a budgetary issue, potentially could fly with the Senate parliamentarian. So I think that's the best case scenario that President Trump's hoping for.
So let's look at some of these other things we talked about. NDAA doesn't pass this time?
So the
Or not yet?
NDAA, the NDAA from an investment point of view, the House one is somewhat irrelevant. The biggest issue, I mean, look, obviously if you're a defense contractor, you care about the spending. Sure. But it really comes down to the Senate version because you need to know, A, what is the amount of money that the Senate is going to appropriate? Is it the 1.15 trillion? And also the Section 815 of the Senate vision.
I'm glad you mentioned this.
This is the provision that says that if you're a contractor, whether you're Sodexo and you're offering food services or Bank of America because you've got an ATM somewhere on an Army base, if you're a contractor with the Department of Defense, you need permission from the DOD to offer stock buybacks and dividends. And that is why the Chamber of Commerce and 39 other organizations sent a letter to the Senate saying, get that provision out of here. We don't like this.
I'm really glad you mentioned this. We talked about it a little bit last week, but I didn't realize this has been framed as no buybacks for defense contractors, right? When you hear Elizabeth Warren say, you can't be out there enriching yourself in the stock market or enriching your shareholders, you need to use the money from the contract to make the best product you can. That's different than Bank of America's got an ATM on your base or Sodexo's doing the catering. Do we know that those companies will be involved?
I'm sure right now there is a staffer over in the House or in the Senate who's listening to us right now saying that's not how this was supposed to be written up.
But it is.
But based off of my interpretation of that language, that's how it's written up.
Are you getting phone calls about this?
Not yet. I mean, this
is a big story for the Bloomberg audience.
Yeah, I mean, like, it's one of those things where, they call it drafting errors. You read this stuff. Is this truly a drafting error?
You can drive a truck through it.
I'm not exactly sure. And so, we'll see how this plays out. But the thing that we are telling our clients on this, and we did have a call about it this morning, is the one thing is we got time. Yeah. Because even though the fireworks right now is on the House side, Senate side's not addressing this right now. Senate still has a couple more, they still have some time before they go on the August recess. So we'll see what happens there. But ultimately, when it comes to all these bills, they got to get it done by the September 30th. And if not, what do? They kick the can.
And that's still your expectation over a shutdown.
Yeah.
Is that right?
Yeah. I mean, when it comes to the shutdown, the Democrats had a little bit of an issue with the shutdown earlier this year when they rejected the clean CR, but they didn't pay a political price. And so I think from the Democratic perspective, what I'm looking for as we go into September is what is the issue that the Democrats can hang their hooks on to try and better themselves in the midterm elections. If an issue pops up where a shutdown will actually better themselves into the election, then I think you have a shutdown. But absent anything else, just a clean CR, I think they kick the can.
Wow, it's really something. The buyback issue is fascinating to me, and I'm guessing that this will need to, because it's not new. The president's talked about this before. The fact that it's actually being codified in a law now, I guess, is raising some questions. After this, everybody goes home to raise money and run for re-election, right? I mean, you've got the government funding issue to manage. They'll solve that in your view through CR. Stores closed otherwise?
Well, the one
called
thing,
the Clarity Act?
That's it. It's like, that's the one thing that I'm putting myself out there. I'm saying I'm out of consensus on this. So if you go to Kalshi and you go to Polymarket, the event contract's saying 38 to 32% chance of passage this year. I still think there is a chance that they can get this done. Because if I'm a crypto platform like Coinbase, I want a deal now. I don't want a deal in 2 years when the Democrats potentially control the House of Representatives. If I'm a bank, I want a deal now, because if I don't get a deal, then the crypto platforms can do essentially work under a very friendly regulatory environment for the next 2 years. And if I'm a lawmaker, even one of those moderate Democrat lawmakers, I want a deal now, because the Crypto Political Action Committee money is a serious thing. And whether they're going to help me or hurt me or combat me or support me. So, you know, if a deal does come together, it'll come together quick. But if not, I don't think you get a deal until after the Trump administration.
So that would be this week or next, is what you're saying?
Yep.
That would be a big deal, Nathan. That, I guess, is why you're saying you're out of consensus.
Yep.
Is it the ethics language or the stablecoin deal that's holding this up right now?
It's not the stablecoin. It's the ethics language, and it's language bringing crypto up to traditional finance in terms of Bank Secrecy Act, anti-money laundering.
Okay.
Now, there was a story about President Trump's family involvement with crypto. That did not help. And for what it's worth,
the financial
Democrats,
disclosures didn't either.
No, exactly. And so what happened here is I think the Democrats said, look, we're going to take that issue and we're going to push for more language here. Senator Warner said over the weekend that the language just isn't there yet, and they're not negotiating. So ultimately what happens here is Senator Thune will have to make the decision. Am I going to hold a vote, or yes or no? And if I hold a vote and put the Democrats on record, that's a really tough thing for them to face.
Wow. Boy, this is going to be a heck of a couple of weeks here. And boy, Congress will keep us guessing, I think, is one thing we know. I've been hearing about Lou Malnati since you came on last week. I got to get a freezer full.
We got to do Giordano's 2 blocks south of us.
All right. Yeah. Tell me when. I'm there. The great Nathan Dean. Find him on the terminal and online. I'm Joe Matthew. This
It's 12:40 on Wall Street. We do check markets all day long here at Bloomberg. Oil is fluctuating. Brent crude now higher, up by 0.3%. West Texas Intermediate crude does remain lower, down 0.1%. Oil bouncing around. Chip makers are surging, and stocks are mixed. The S&P 500 index is gaining. Now it's 74.88, up by 31 points, up 0.4%. But the Dow lower by 91. Dow Industrials down 0.2%. NASDAQ is up 0.8%. The NASDAQ 100 index up now by 1%. The Bloomberg Mag 7 index is gaining 0.6%. The SOX surging 2.4%. And we've got the 10-year currently yielding 4.59%. Gold, little change, down 0.1%, $4,012 the ounce, while West Texas Intermediate crude, as I mentioned, lower now by 0.1%, $82.40 a barrel. Traders are grappling with a barrage of headlines around the Middle East. Iran says mediators have been in touch with proposals on how to ease hostilities with the U.S. after several days of clashes. Henrietta Treyz is Director of Economic Policy at Veda Partners. She told us this morning she is not looking for a quick resolution.
The reality remains that the Port Authority of the IRGC is just simply unacceptable to the Western banking world. Whether you're an insurer or a tanker getting through, or JP Morgan trying to do business with any industry that wants insurance or wants to, deal in getting flow through the strait. So it's, as long as that's unsustainable and incompatible with the Western economy, we will be at war.
Henrietta Treyz of Veda Partners interviewed on surveillance. Alphabet shares up now by 2.5%. Alphabet will be reporting on Wednesday. Alphabet's Google is said to be developing a server chip designed to optimize its Gemini AI model. That's according to the information, citing sources. Again, Alphabet shares gaining now by 2.5%. Recapping, S&P 500 index is now higher by 0.3% for on-demand news 24 hours a day. Subscribe to Bloomberg News now wherever you get your podcast. I'm Charlie Pellet. That Joe Matthew is a Bloomberg Business Flash.
Appreciate you, Charlie Pellet. He'll be back at the top of the hour, 1 p.m. Eastern Time, with more on the markets as the new prime minister gets on the line with President Trump. We're just hearing from the 7th prime minister in a decade in the UK, Andy Burnham, on the horn with Donald Trump, and headlines are crossing the terminal. He invited President Trump to Manchester, outlined the UK's commitment to securing shipping in Hormuz, and underlined a commitment to defense in the call with President Trump. Unclear if he's going to accept that invitation, and if he does, will he fly the old Air Force One? There's news about that today. The one that Qatar gifted the president, the Boeing 747 with the new color scheme, the one that he took to Turkey and had to leave behind on some security concerns. They put him back in the old Air Force One, the baby blue Air Force One that actually has countermeasures that this airplane apparently does not have. So the luxury jet donated by Qatar, he says, will be going back into the shop and, quote, maxed out, unquote, suggesting it could get additional defensive capabilities. A reporter asked him about this, said, this plane doesn't have anti-missile defense systems on it. Why are you flying it? And he said, it's got a lot, but as I understand it, in about a month or so, they're going to send it to have it be maxed out. It'll take about a month, he says. It's unclear if that timetable is accurate or when the plane's going to go back into the shop exactly. The fact of the matter is we probably shouldn't know anything about any of this. And that's why the White House was trying to crack down on the New York Times reporters who were chasing it. Thanks for being with us here on the Monday edition of Balance of Power. He went up to New York yesterday to the World Cup match. Did you see him? He was up there in the suite with Jay Carney, which was kind of strange. Claudia Scheinbaum is sitting next to the First Lady. There you see it if you're with us on YouTube. The still photo from the game. We can only show you the stills, right? Because I guess Fox owns the World Cup. How about Johnny with the sneakers and the suit? Anyway, the president had it planned that he would go deliver the trophy here to his favorite country of Spain. Knowing, of course, that this is an event, the World Cup, that is something that was a big deal to him. He stood on the stage as they lifted the trophy and the cannons of gold confetti were shot in the air as Gianni Infantino tried to usher Trump from the stage. He gave him the old touch on the arm. He even ran over there. He was trying to pull him aside. Trump wasn't having any part of it. He stood right up there, clapping, in some cases looking around as if he was a member of the team. I said Jay Carney. He used to be the press secretary. Mark Carney, you know, the Canadian prime minister is who I meant. Imagine the conversation they had. The president was asked about what they discussed. He said their need to stop wildfires. Canada, quote, should pay us some damages or something, he said, or we should do some tariffs, unquote. Let's bring our panel in. This actually isn't what I wanted to talk to Rick and Jeannie about, but I'm guessing they saw the last match. Bloomberg Politics contributors Jeannie Shanzano, our Democratic analyst, democracy visiting fellow at Harvard Kennedy School's Ash Center, and Republican strategist Rick Davis, partner at Stone Court Capital. You couldn't blame him, could you, Jeannie, getting up there on the stage after all that work, getting the World Cup to Washington? He looked pretty good, didn't he?
Oh, yeah, Joe. I mean, he's being accused of, like, crashing the presentation ceremony, photobombing it. FIFA had to, like, in their social media feed, if you saw, they had to, like, crop him out so it wouldn't be like Donald Trump and the team behind him. You know, it was pretty rich. But let's face it, Joe, Donald Trump, he did this in 2025 at a FIFA event. He does it now. Just imagine if the U.S. had won this thing. I don't think any of those players would have been up there. It'd all be Donald Trump.
He would have taken that thing home. He just wrote about it, Rick. He's on Truth Social. The World Cup turned out to be a spectacular success. I want to thank all of those involved, he says, in particular, our great law enforcement. He calls out Andrew Giuliani, the young and dynamic Andrew Giuliani working for the government, and the fantastic president of FIFA, Gianni Infantino, a job well done. Look, the memes speak for themselves, Rick. There's one up there where he's taken the medal on the closing scene of Star Wars, standing next to Chewbacca. The fact of the matter is, the World Cup was a success for the U.S., wasn't it?
Yeah, I think so. I'll leave it to the rest of the world to decide. But everything I have seen, the weight of it all is people had a great time. Gianni Infantino and FIFA made a fortune in the U.S., exceeded their expectations by over $2 billion, is what I'm reading in the press. That's a lot of money. And Donald Trump got everything he wanted. I mean, he had a really flat kind of 250 celebration, but he doubled down on the FIFA tournament and World Cup, and I think he got exactly what he wanted. He get to stand on the stage looking like a winner. And even though I must admit, there was a part of me that was really rooting for Spain just to see if that would repair some of the transatlantic damage that had been done between the two countries. So no offense, Argentina. Love Argentina. But, you know, you got to have something skin in the game if you're going to sit there and look at a sporting event for 2 hours and see 1 point scored.
Well, how true. God, yeah, there's a lot there. Interesting, Millet, you know, you'd thought was in the box with President Trump, Jeannie, but he said he had watched all the other matches on TV and he's superstitious. He didn't want to come here to change anything. I guess maybe he's rethinking that now. But, you know, for a global view of America, this was an interesting experiment, right? You see these Europeans posting about Buc-ee's and Bass Pro Shop, flipping out about air conditioning in a stadium. Is there some greater, longer-term benefit, PR benefit for the United States after what we just saw?
There absolutely is. I mean, that's what we kept hearing throughout the competition was the positive sort of reviews that the United States was getting for a lot of things, but leaving out, though, of course, Joe, the politicians and the politics, that didn't go over so well. But the American people, all the amenities that they have to offer, that was all great. Now, one thing you and Rick have not weighed in on is how well did we do with that halftime show? There was very mixed reaction to that halftime show. A lot of big people, you know, it was sort of a hodgepodge of things. And the other thing is, I don't know if I would say Donald Trump's a winner. Somebody said it was 84 decibels of jeering and booing for Donald
Oh,
Trump.
man.
So I don't know if he could take that as a win, but the United States, absolutely.
And ranch dressing, as Seabass reminds us. I've never heard so much about. Is it really that hard to get ranch dressing? Can I maybe start an import-export company on that? So, look, we've survived World Cup. I was seeing ads for the F1 race or whatever it is that's coming to town. The fact of the matter is, we actually need to get something done in Washington. This isn't like the new Las Vegas. And, Rick, this is our last chance. There's 4 days left on Capitol Hill before August recess. And the big question right now is, can anything get done? Will the president see Reconciliation 3.0 at least get out of the blocks? What do you think?
You know, I think the mood in Congress is so sour that people just want to leave. Normally you see like this excitement that like there's pressure building up to get something done, deliver before you go home for this long 5-week recess. I remind you, 5-week recess. And there doesn't seem to be any of that. I mean, the Senate's asleep. Everyone's watching politics and FIFA, the British Open. I mean, like you can talk to a member and, you know, the fact that you had legislative demands wouldn't even come up this last weekend, right? I mean, it's just, you know, they're phoning it in. And this has been a do-nothing Congress to begin with. And I think they're going to end this session, you know, in the next 4 days with, you know, accomplishing just that, nothing.
Wow. Well, I'm guessing that Jeannie is going to agree with you on this. Jeannie, unless the president can strong-arm a couple of Republican votes when it comes to the Save America Act, how does anything get through?
Yeah, I mean, he's not going to be able to change that. I think the most that they could potentially do on that, and in his statement that he just released today, it looks like he sort of is recognizing what is clear to all of us. It's not going to get through the way he wants, is that maybe the second version of this bill could have some shot where it's grants to the states and they can push it through. Obviously not what Trump wants. The other version, what he really wants, is of course not going to happen. But I think we will see a CR, and I think we should see a CR. That I think we'll see. But in terms of the ban on stock trading, in terms of the Clarity Act, in terms of Reconciliation 3.0, the NDA might have a shot, but all of this seems dead on arrival because of the calendar and the fact that these folks are not going to be together again, the House and the Senate, till September, mid-September, and nobody wants to talk or focus on anything but the election. So that's the be-all and end-all, but gosh, I hope we get a CR out of all of this at the very least.
That would be, I guess, would be pretty nice. Rick, you know, there was a time when the housing bill was something that, and it did get through. The president didn't sign it, but it did become law. And then there was the Clarity Act. There was a period of time in which this appeared to be a bipartisan exercise, and that is eroded in part because of the president and his family's involvement in the crypto industry. Nathan Dean was just in here putting 30% odds on crypto getting done by the end of this year. Do you share any optimism over that, or is that on the junk heap as well?
Well, if it doesn't pass, people are going to look in the mirror and say, they just spent over $200 million in this election cycle out of the crypto industry trying to influence members of Congress, and look what they got. So I think that the pressure isn't so much being felt by people who are running for re-election about the president's family's involvement in crypto. It's a very practical political consideration. How much money are these guys spending to either defeat me or to elect me? Because that's what's happening on the ground. I mean, that is an immense amount of money being funneled through mostly Republican super PACs to try and bend the will of Democrats to let this go through. And if it doesn't happen and the Democrats win at least the House, I wouldn't hold my breath to ever have it happen.
That is incredible. With just 30 seconds left here, Jeannie, do you agree when it comes to the crypto money? Because, you know, what's right behind it is the AI money that we're going to be seeing used and already is being invested in this campaign.
Yeah, I agree. And, you know, I think it would have been tough even if Lindsey Graham was there and he wasn't directly involved in it. But now that he's not, it gets even tougher, I think. So his loss across all of these bills in the Senate, I think, is going to be felt viscerally by this White House. He was sort of the White House whisperer in the Senate, and his loss is tremendous on all of these fronts.
Well, I can't wait to hear from Rick and Jeannie on the latest geopolitical news. There's a lot to talk about from a deadly weekend in Iran, and the president is speaking on Truth Social about it today. Rick Davis and Jeannie Shanzana will be back in our second hour, which starts in 5 minutes, only here on Bloomberg.
From Washington, D.C., this is Balance of Power with Joe Matthew and Kaylee Lines.
Iran says the mediators are now stepping in. Welcome to the Monday edition as Qatar and Pakistan try to lower the temperature after a weekend of intense fighting that saw the deaths of at least 3 Americans. I'm Joe Matthew alongside Kaylee Lines in Washington. Kaylee, there's talk now of a new 10-day ceasefire on the table, but it's certainly not in place yet.
No, and we haven't heard from President Trump about that prospect. In fact, what he most recently warned about on Truth Social is that Iran will pay for the deaths of those service members you mentioned many times over. Not necessarily rhetoric that looks like it's trying to cool down the temperature. Interestingly, though, oil not seeming to reflect too much more of a geopolitical risk premium, even as the Houthis say they are going to shut down the Red Sea to Saudi Arabia.
Yeah, it's amazing to actually see lower oil prices in the face of these headlines. But gas keeps creeping higher. We're at $4 a gallon. For a national average, said to be the threshold that is obviously not good news for this administration or Republicans running in the midterm cycle. Kaylee, we've also got breaking news today as we explore the news from the Middle East. The Paramount Warner Brothers deal has been temporarily paused by a federal judge. That was a redhead on the terminal just a minute ago.
Yeah, and it's affecting the stock. Paramount and Warner Brothers are both lower. Warner Brothers down about 2% right now, and we'll have a further check on those prices with Charlie Pellet in just a moment. But I would remind our audience, we just spoke with the Attorney General of California, Rob Bonta, last week, who led a coalition of a dozen attorneys general in filing this lawsuit, looking for this temporary injunction to delay effectively the closing of this merger so that they could carry on their antitrust lawsuits in the courts.
Yeah, so the grind continues. We'll be following all the affected stocks throughout the day with what is a brand new story here. And we'll have analysis coming up from our political panel. Rick Davis and Jeannie Shanzano are with us. And looking ahead to an important conversation later on this hour as the president of the United Nations General Assembly sits down with Bloomberg. Our own Romaine Bostick will be holding forth in a little bit.
Yep, looking forward to that conversation with Annalena Barbach, just like I'm looking forward to this market check from Charlie Pellet up in New York. Charlie, we'll turn it over to you.
Thank you very much indeed. Let us recap and reset. You guys brought us the headline. It bears repeating. Paramount Warner Brothers deal has temporarily been paused by a federal judge. The deal put on hold for 14 days. You recall states were suing to block the deal. They allege this transaction would harm competition for film and cable TV distribution. They're asking for a temporary restraining order to block the merger for at least 28 days. Today, the judge said 14. Shares of both companies are trading lower right now. Paramount Skydance down by 1%. Warner Brothers Discovery is moving lower as well, down 0.7%. But again, the headline breaking moments ago, the Paramount Warner Brothers deal temporarily paused by a federal judge. We'll bring you more details as they become available. Right now, we do have U.S. equities trading higher with the S&P up 14. That is a gain of 0.2%. Stocks are getting a lift from chip makers. The oil rally is continuing now. WTI, Brent, both advancing. The Dow Jones Industrial Average, however, trading lower by 168 points, down 0.3%. To be sure, S&P up 0.2, NASDAQ up 0.5%, and the Bloomberg Mag 7 index up now by 0.2%. The SOX, the Philadelphia Stock Exchange Semiconductor Index, trading higher by 1.7%. A 10-year at 4.60%. Gold, little change, $4,011 the ounce, down $5, down 0.1%. And crude has been bouncing around, back in the green right now. WTI 82.57 a barrel, up by 0.1%. Again, repeating our top story. Moments ago, we learned that the Paramount Warner Brothers deal has temporarily been paused by a federal judge. Shares of both companies are lower, 1% drop right now for both Paramount Skydance and Warner Brothers Discovery. Stay with Bloomberg for the latest on this developing story. I'm Charlie Pellet in New York. Kaylee and Joe, back to you now in Washington.
All right, Charlie, thank you so much. As Charlie mentioned, it is a temporary pause for that Paramount Warner Brothers Discovery deal. The judge in that case has set a hearing on a longer block of that deal for August 3rd, 2 weeks from today. And of course, that's a story we'll continue to follow for you here on Balance of Power and on Bloomberg TV and radio, just as we continue to follow the updates from the Middle East. As we mentioned at the top of the hour, we saw deaths of at least 3 more American service members in Jordan and Iraq yesterday. In Jordan, of course, the 2 died due to an Iranian attack on U.S. military facilities. There in Iraq, it was a service member who was trying to disarm a downed Iranian drone. So we have more service members who have died, at least 17 now, as a result of this conflict. And Trump, the president, as we mentioned, is suggesting Iran will pay for that many times over, even as he signals that he still wants to pursue the ambition here, which is a non-nuclear Iran. This is how the president framed things yesterday.
We hit them very hard again tonight. This is a far bigger job that we're doing. We were doing a little job of stopping them from having a certain capability. Now we're just ending it. So it's really not the same thing. What we're doing now is we're ending any chance where they could have a nuclear missile.
But of course, they continue to fire ballistic missiles, conventional weaponry, and we also know that the Houthi rebels, which of course take direction from Iran, are now threatening a blockade of Saudi Arabia. That's why we've seen crude oil tip higher. We were actually lower a short time ago, and futures are pointing to higher prices with gas, not just gasoline, but diesel as well, pointing higher. We want to spend some time with Tyler Kendall, getting the latest on all of the headlines that have been moving from Iran, and our political panel is standing by as well with their take on things. Tyler, thanks for coming over to spend some time with us here. This is a tough spot, and the president does not seem to be climbing down from some of the harsh rhetoric, saying that he's now directing Pete Hegseth and what he calls his Department of War to make up for the deaths of these at least 3 American service members. So the prospect of a 10-day ceasefire seems like it might not be here yet.
Right. At the moment, it appears that we are pointed toward escalation, which is really what this weekend marked. Serious escalation, as you're both outlining. The total U.S. death toll now reaching 17 service members since the conflict started back in February. And we're seeing it escalate on both sides. As you mentioned, Joe, we now have this reporting that the Iranian-backed militia group, the Houthis, are looking towards a maritime blockade of Saudi Arabia. We can't only look at that through the U.S.-Iran war lens. We do know that this is also part of a ceasefire between Saudi Arabia and the Houthis from 2022 breaking down. But obviously, Iran has been backing the Houthis. They told them last week to be prepared if the U.S. hits energy infrastructure, that they should be ready to totally close down transit when it comes to that other oil route through the Red Sea. So it feels like both sides are now ratcheting up the pressure, even as we got indications and signals from both sides that maybe they would be open toward diplomacy. Secretary of State Marco Rubio saying that the U.S. got strong indications from Iran, but then this statement from Iranian Foreign Ministry earlier today saying on one hand there was diplomatic activity in the diplomatic apparatus was the word they used, but also that they have sovereignty over the Strait of Hormuz and that's not going to go anywhere.
Which, of course, is a major problem for the United States, but it's also a problem politically for the president that gasoline prices are on the march higher, once again north of $4 a gallon on average across the country. Are there any levers that the president can pull short of saying something positive on Truth Social to try and talk the markets down here? Do we have more wiggle room in the SPR, Tyler?
We were talking about this last hour on balance of power. There are a few different levers that we know the administration has already been thinking about, including our Bloomberg News reporting from last week that we could see an extension of that Jones Act shipping waiver, which essentially tries to make it cheaper and easier to move crude oil around this country. President Trump has previously threatened investigations into big oil companies. Lowering gas prices quickly gets really tricky because we know that it takes so much time to move the refined product through the supply chain. And we have to keep in mind that a lot of gas stations are independent and they have to factor in their own margins when they buy during a supply shock, and it may be harder to bring those prices down that we pay at the pump more quickly. But $4 a gallon is really that political threshold that we talk about a lot. So we'll see what the administration says from here.
Pretty interesting to consider. We're just hearing, by the way, from White House Press Secretary, the president will attend the dignified transfer tomorrow evening at Dover Air Force Base, and we are still waiting for confirmation on what could be a 4th American death. As the president says, this is a very sad situation, but also one that will be avenged. Tyler, with all of this in mind, what does the president have going on today? Is he doing anything public-facing? I see a lot of closed events on his schedule. After the primetime address to the nation last week, you'd think that we might hear from him.
Right. We'll have to see if any of these events open up, but I don't believe anything is public right now on the schedule, at least at this point. He has been posting on Truth Social, as you mentioned, this renewed threat that we got within the last hour, also commenting on other priorities, including when it comes to the potential reconciliation package that may or may not be getting through the House this week. But of course, that includes, in some regard, funding for the Pentagon related to the conflict in Iran. We have seen now 9 consecutive days of strikes, and CENTCOM has been giving us updates. I believe the update today was 7 ships so far have been turned around and redirected amid the naval blockade in the Strait of Hormuz. Feels like our eyes have been more trained toward the Pentagon's updates at this point than President Trump's.
Well, and of course, we'll hear from the Pentagon tomorrow as the Secretary of Defense, Pete Hegseth, and Joint Chiefs of Staff Chair Dan Kane will be testifying before the Senate Appropriations Committee as they ask for more money from Congress. Bloomberg's Tyler Kendall, our Washington correspondent, thank you so much. And just to reiterate the news that Joe mentioned a moment ago, the White House Press Secretary Caroline Leavitt did confirm that the president will be attending the dignified transfer of these 3 dead American service members tomorrow at Dover Air Force Base. And it's on that note we turn now to our political panel. Rick Davis and Jeannie Shanzano, Bloomberg Politics contributors, are with us. Rick, of course, Republican strategist and Stone Court Capital partner. Jeannie, a Democratic analyst and democracy visiting fellow at Harvard Kennedy School's Ash Center. Rick, unfortunately, this is not the first dignified transfer that the president has had to attend since Operation Epic Fury began. And I wonder if you see his options here as either one in which he has to back down or one where he has to inherently escalate and therefore risk more American service members' lives.
Yeah, look, there's always an option on the table just to walk away. The president has even mentioned that through the course of this, 5.5-month conflict. But nobody really takes that seriously. The reality here is the rest of these options are very limited for him, and that's to do what he's doing, which continue to escalate in order to de-escalate at some point in time. And of course, that goes up and down every day. Or to really maximize pressure, which means probably putting boots on the ground, which is another horrible option for the president, but one that has to be considered and has been. And the reality, though, is expect more dignified transfers when you start putting troops in harm's way on the ground in Iran. So it's a difficult situation, and I think the Iranians are taking full advantage of that. They know that by putting pressure on Donald Trump's base, by having higher gas prices, by putting people in harm's way, by killing U.S. service members, by harassing our allies in the region, that all of that is a weight that they think will crush Trump's resolve and get a deal that is advantage to them. And I think that's the biggest fear everyone in the region has, is we're just not playing in Donald Trump's verse with too many good cards in this deck right now.
Well, the mediators are raising their hands, Jeannie, according to Iran, with a 10-day ceasefire apparently on the table here. A proposal realizing that the MOU didn't last very long here. But Marco Rubio, the Secretary of State, was also speaking in terms of the potential for diplomacy following a very violent weekend. Here's what he said.
The only reason why the U.S. is conducting strikes is against assets of Iran that are being used to attack global commercial shipping. The Straits of Hormuz are international waterway, and they continue to launch against ships in that international waterway. Other countries should join us in this effort.
So Qatar and Pakistan, who are the main intermediaries here, see a return to U.S.-Iran positions pre-July 9 as a first step, according to the official Iranian Students News Agency, Jeannie. Fighting over control of the strait began that day. Is there any way to turn the clock back at this point?
You can't turn it back. Hopefully the 10-day ceasefire is something that can be implemented, although the concern there is, of course, you give the Iranians time to build some of their weaponry. And that's what we've seen when we've had pauses in the past. And this is something that the president, when he was speaking last night, he continues to say that Iran is badly damaged. They've lost everything militarily. He says it over and over again. And yet, if that's the case, how does Iran still have the capacity to fight the greatest military in the world? How can they still be lashing out at our Gulf allies? How can they still be killing service members, two of whom were identified as a young 25-year-old man from Hawaii and a 19-year-old service member from Texas, and the other one, I didn't see the identification on that, and potentially a fourth. This is the big question, though, everybody is asking. When public opinion polls, the Washington Post last week, 69% of Americans say this war is being badly managed by the president, badly handled. Why does he continue to say that their abilities have been decimated? if in fact they keep hitting us to the point where this thing is escalated and we're losing service members. The messaging on this has been problematic from the start, and this is where he is losing the American public in addition to the increasing price of gas and oil and everything else.
I just want to mention, Rick and Jeannie, some breaking news that's just crossing the Bloomberg terminal. We, of course, have a new prime minister in the UK, and Andy Burnham, and he's starting to assemble his cabinet after the resignation of the old Chancellor of the Exchequer, Rachel Reeves. We now have named a new UK Chancellor. John Healey has been picked by Prime Minister Burnham to be the next Chancellor of the Exchequer. This, of course, follows Joe Burnham's remarks when he took the position, talking about how he's going to be looking for more fiscal flexibility where it is available. Spooked the bond market a little bit with gilt yields going higher, and it's going to be a question of to what extent John Healey is looking to execute that kind of flexibility, what kind of decisions he would like to make as he is going to be the next Chancellor of the Exchequer in the UK.
Yeah, pretty interesting development here, having spent time in a number of different positions after Keir Starmer's election, was appointed Shadow Defense Secretary. He's kept very strong relations with leaders here in the U.S., including folks from both the Trump and Biden administrations, and is said to be pretty close with Pete Hegseth. So this is an interesting development, and one that will be followed up by more as he tries to build the cabinet here.
Yep, and we'll have more on this throughout the day for you here on Bloomberg TV and radio. But Joe, you mentioned Pete Hegseth, and that's what I wanted to ask you about, Rick, is the Defense Secretary will be testifying in the Senate tomorrow before the Appropriations Committee as he tries to make the case for the supplemental funding the Pentagon has requested, of course, a $1.5 trillion defense budget. How much more difficult is his job tomorrow, knowing we have more service members who have just died in the Middle East?
Yeah, it'll certainly make it a more somber occasion in the Senate, and it'll be a difficult task to convince the senators that the money is being well spent, in the sense that we're not winning. And there's nothing like a politician sitting there listening to a defense secretary, and the first thing they want to know is, are we winning? It's going to be hard to answer that question with any credibility at this stage. And in a process, we're exhausting quite a bit of equipment and man time that is not going to be easily replaceable. So I expect it's going to be a difficult time with Secretary Hegseth and Joint Chief Chairman Kane, and I think it'll add to the confusion that already exists between a massive budget request, as you point out, Kaylee, for $1.5 trillion for the Defense Department, and a generous amount of money in the Reconciliation 3.0 to support the war. It's a lot of money flying around, and nobody's really got their hands on it.
It's a lot of money flying around, and I wondered, Jeannie, what will be Democrats' posture tomorrow? I think it's fairly predictable, but you know that Pete Hegseth is showing up with his own Oppo research and actually enjoys the fight with lawmakers who are criticizing him. Does that change the way Democrats manage their time?
I don't think so. And it is just reprehensible, because we are talking about servicemen and women. We are talking about a military engagement and a war of choice that was badly managed, badly thought out, badly conceived from the start. And he's going to show up, and I'm sure you're right, with a log of Oppo research he could try to use against any member of Congress. That is reprehensible. We are not in a good position vis-a-vis Iran. What he should be talking about is what we can do to turn this thing around. What is the strategy this administration is going to utilize to do that? And throwing a $1.5 trillion at it is not the answer. And so I think we're going to hear Democrats press him on what this is needed for and what is the strategy, not to mention the fact that they have not come to Congress to vote on the war. And that is something that they have experienced as a real, I think, lost moment to have a conversation with the people in the United States about what we're even doing there.
Great conversation with our panel today. Bloomberg Politics contributors Jeannie Shanzano and Rick Davis. Thank you both so much for the insights, and we'll let you know as more news develops with the war with Iran. We get back to another and unrelated breaking news headline that popped shortly after we came to air, with the Paramount Warner Brothers deal now suddenly on ice after a federal judge temporarily paused Paramount Skydance's $110 billion takeover of Warner Brothers Discovery. We've got some time right now with Bloomberg's Chris Palmieri, who's joining us, our senior editor, entertainment team leader, with us live from World Headquarters in New York. Chris, thanks for jumping on here. The judge has scheduled an August 3rd hearing. What will happen that day?
I believe it's a consideration of a more long-standing injunction on the merger. This was a temporary one. And then perhaps then setting a date for trial, which is, Paramount's going to want to move as quickly as possible. Just to put this into context here, this deal's already been approved by the Justice Department. It's widely expected to get the blessing of regulators in Europe this week. So they were poised to close this, as soon as, Thursday. And this puts all of that on hold. And just to really further up the pressure, if this deal doesn't close by the end of September, Paramount has to pay Warner Brothers shareholders potentially hundreds of millions of dollars a quarter in essentially late fees. So there's a lot riding on this court case.
Well, certainly so. And when we talk about the states had requested this injunction, yes, but their wider case that this deal is going to be harmful to competition. Chris, do we have a sense of whether or not that is likely to hold up in court on the merits?
Well, I think when this case was first filed, there was a bit of a relief among investors that it wasn't a stronger case. The state's attorney general decided to pick on just sort of a couple slivers of the potential market. The market share of the combined movie studios, and in particular the blockbuster films. It's a very unusual approach. There's so much consolidation in this deal, if you think about it. Merging two giant streaming services, Paramount Plus and HBO Max, merging CNN and CBS News, and consolidation in news business. And so there was definitely a feeling that this wasn't as bad a case, for Paramount as it could have been.
Would all of this pushback from the attorneys general and other critics of the deal have taken place if Netflix had won?
Yes. There was an active group of people, including Paramount itself, arguing that Netflix was also a very anti-competitive deal. In that case, obviously, huge consolidation of the streaming businesses of Netflix and HBO Max and that. So, I think this would have been a hot potato no matter who bought it.
Either way.
All right. Well, the effort for Paramount Skydance to buy Warner Brothers Discovery right now, at least, is on pause, according to this judge. Bloomberg's Chris Palmieri, thank you so much for hopping on as we deal with the breaking news that is having a market impact. Warner Brothers Discovery shares right now down about 1.5%. So let's get a check on that. Everything else that's moving in the markets now as we turn back to Charlie Pellet up in New York. Hey, Charlie.
Hi, thank you very much. Let's recap and reset. If you're just joining us, a federal judge has temporarily paused Paramount Skydance's $100 billion takeover of Warner Brothers Discovery. WBD trading lower by 1.4%. Paramount Skydance down now by 1.3%. Joe mentioned Netflix. Netflix shares down now by 1.7%. Out of the United Kingdom, just getting word that John Healey has been named UK Chancellor of the Exchequer. That word from Downing Street. U.S. stocks right now, we're looking at a Dow that is lower by 200 points, down 0.4%. S&P up 0.2%. NASDAQ Composite Index higher by 0.5%. We're seeing oil bouncing around. West Texas Intermediate crude flat on the day right now, 82.51 a barrel. Brent 88.48, up by 0.4%. But the big market story today, the surge in semiconductors. Right now, the SOX rebounding by 1.9%. A 10-year 4.59%. Spot gold 0.1% lower at $4,000.11 on spot gold. And again, crude bears repeating up now by 0.2%. Recapping, S&P up 0.1%. I'm Charlie Pellet. Joe and Kaylee, that is a Bloomberg Business Flash.
All right, Charlie Pellet, thank you so much. Tracking the latest in the markets, we're tracking the latest from President Trump, who said on True Social earlier this hour that Benjamin Netanyahu will not be arrested in any shape or form while in the United States of America. This, of course, follows the New York City Mayor, Zohar Mamdani, floating the idea that New York's legal department is looking into the notion of arresting Prime Minister Netanyahu when he's in New York for the United Nations General Assembly in September. It underscores, obviously, the political sensitivity around the issue of Israel and the war in Iran here at home. But it is one that, of course, is going to be front and center when the United Nations gathers in just a couple months, of course. And I'm pleased to say that joining us now for an important conversation with Bloomberg's very own Romain Bostic is the President of the United Nations General Assembly, Annalena Baerbock. And we'll hand it over to Romain now, live in New York. Romain.
Thank you very much, Kaylee. I am here with Annalena Baerbock, of course, the president of the 80th session of the UN General Assembly. As we speak right now, this week, we are expected to start to get those straw polls to potentially select the next Secretary General of the United Nations. Do we have any sense about the 6 candidates and what you, as president, would like to see in terms of what their priorities should be over the next 5 years?
The next Secretary General will not only be the face of this unique multilateral institution, but it will also decide on whether the UN will play a relevant role on peace and security, but also on embracing the chances we have in an interconnected world about global governance structure, on AI, for example, on lifting millions out of poverty. And as you said, currently there are 6 candidates, 4 women, 2 men. So far, there has never been a female Secretary General in 80-year history of the United Nations. So it's really a decisive moment and an important decision also by member states to decide which person represents 8 billion people best in these challenging global times.
Well, let's talk about those 8 billion people. Prior to the 2015-2016 campaign, this was a relatively opaque process, the selection process. That opened up a little bit about 10 years ago, and under your leadership as president of the 80th Assembly, you have tried to make things a bit more transparent, having the candidates come out and give these interviews well in advance of the actual selection process. Are those people, the 8 billion people out there, do they actually have a say in this to some degree or another?
They are represented by their member states, by their governments, by their ambassadors here in New York. However, we also know that in the modern times, power lies also in communication around the world. So if there's now the saying out there, for example, that 2 years ago, member states agreed by consensus that it should be this time really female candidates, because otherwise those 8 billion people, or at least 4 billion, half of women and girls, would question if an institution built on human rights, on equality, was not capable of finding a woman again. This will have a total different debate than it had 10 years ago when we didn't really have the power of social media. So now, as we're having this town hall meeting on Thursday coming up, live streamed by Bloomberg, we will have the chance also that people hear about what's going on, because frankly speaking, most of the people probably don't know that the Secretary General process is ongoing. But this will be also a power game, frankly speaking, between the Security Council, upon which recommendation a person will be nominated. But in the end, it is the 193 member states in the General Assembly representing 8 billion who take the final decision.
But those 5 permanent members of the Security Council, which includes the U.S., obviously, as well as Russia, China, France, and the U.K., they do have an inordinate amount of power to be able to say, this is the person that we want. If they put someone on your desk who maybe you do not think is appropriate, what options would you have to push back on that?
In these challenging times, in my personal view, it's always how you define power. Obviously, being a member of the Security Council, a P5 member, you would say, well, it's up on us to recommend somebody. Yet, if you define power, that in the end, the General Assembly has to agree, and if the General Assembly, so the member states, make very clear, it is hard for us, for example, to vote on a person who is denying climate change. If we just had a couple of weeks ago a joint resolution in the General Assembly about the member states' responsibility of fighting climate crisis, because it's one of the key drivers for more conflicts and crises around the world, so it's a peace and security issue, then power shifts. Because if there would be a proposal, for example, where a person would face a situation that he or she is not sure whether she will make the majority in the General Assembly, then obviously everything changes. And this is unique about this process, because as you mentioned, before it was behind closed doors, there was no television reporting about it, there was was no social media asking questions. So where does a person stand on peace and security or women's rights, for example? But we have had also in the history a situation that, for example, when Kofi Annan was finally elected, the African states made very clear, because it was their turn, if this is not an African person being proposed, we don't even take a vote on, back then it was him.
Yes.
Yeah. So this time it could be also very clear that member states are saying, we agreed 2 years ago that we should nominate women. How would we explain back to our constituency afterwards we could not find a woman? You cannot say, well, there was no competent woman out there in the world if you have 4 billion candidates. Right. So this is also a question about the credibility of the General Assembly. So also a signal to the Security Council, right, if they could propose only a man, or if they would decide then, okay, we propose a man and a woman, which never happened before, that there were 2 persons.
I am curious, though. I mean, some of the members of the Permanent Security Council are also some of the biggest ones that are in arrears to the United Nations. You've had to cut the budget. You've had to adjust. The United States is at least several billion behind. China, last time I checked, had not made its payments for the year. Is there a sense here that this is a permanent cycle where we are going to see nations either not pay what they are obligated to, or to delay those payments?
We are in a very critical moment, and this is why the current Secretary General, Antonio Guterres, has rang the alarm bell that we will face a liquidity crisis. Again, my philosophy is, in every crisis is a chance, because when we faced this situation that we could not pay for peacekeeping at all anymore, beginning of July, member states came together. I invited all of them and said, we have to change our financial rules. For example, we had this very frankly speaking, ridiculous rule that you have to pay back money which was never collected in the first place if you did not spend it. So if the US didn't pay, obviously the US could not, the UN could not spend it, and we changed this rule. So we see at the moment that under pressure, the vast majority of member states understands that the UN is the life insurance for most of the countries in the world, and under pressure we can reform. But this will be the key new task for the next Secretary General, to drive forward this reform, but also make clear to member states, especially the big P5, if you do not pay, you could even lose your voting right in the General Assembly.
But some of the reform measures that have been in place right now have, I don't know, either intentionally or unintentionally been conflated with austerity.
Yes.
Is this an austerity move by your part and the parts of the other leaders, or is this sort of a temporary pullback, adjusting the finances until you get the other countries to pay up and pay on time?
Neither. This is about leadership and taking up the responsibility by those who believe that we need the United Nations. And I always say, no single day would the world be better off without this United Nations, besides all the shortcomings. Because we just spoke, you came here by plane. You would not enter a plane if there would not be the UN, because it's also responsible for safety in aviation. We would not be possible to fly around the world if it would not be the World Health Organization having fought with member states on fighting COVID together. So at a moment where, as you said, there are certain actors who would really like to destroy this organization, it's a self-interest that we reform it, because it was built 80 years ago, and some of the mechanisms obviously do not work like in 1947. So we have to change this. For example, the issue, how many resolutions do we have? We have more than 40,000 mandates yearly in the UN. We have 27,000 meetings. So this part of the reform, which I'm driving forward together with the Secretary General, this is what we need to protect the United Nations. On the other hand, we should not allow cynics to weaponize this unique reform which we need to destroy the house from inside out. And this is why, for me, in the reform, it's so important to make clear that the UN was founded always on 3 pillars: peace and security, sustainable development, and human rights. And to those who argue now we should do less on sustainable development because this would be saving money, I would always say, well, this is not the foundation of the United Nations, because the founders knew after the Second World War, without sustainable development, you will just enter the next war and crisis.
Madam President, really appreciate you being here. We have to leave it there. Thank you very much.
Thanks a lot.
Joe and Kaylee, back to you.
All right, our thanks to Romaine Bostic, joined by Annalena Barbach. And of course, you can, on Thursday, July 23rd, catch Romaine as he moderates an event specially put on and produced and broadcast by Bloomberg Television at 5 p.m. Wall Street time. All of those candidates that they were just discussing to be the next UN Secretary of General will be gathering in the UN General Assembly Hall for a live debate that will be moderated by Romaine. Again, that's Thursday, July 23rd, and we're very much looking forward to that. But Joe, of course, we still have more coming up on this Monday. In just a few minutes, we're going to be joined by Republican Congressman Mike Flood of Nebraska, as he and his colleagues in the House have a pretty long to-do list and not a lot of days to get it done with recess approaching.
I think 4 is the real number there. It's crunch time on Capitol Hill. Once again, here we are. As lawmakers get back to it today, to Kaylee's point, we're going to spend some time with Congressman Mike Flood, the Republican from Nebraska, will be with us. This is the voice of the Main Street Republican Caucus. And it'll be fascinating to hear what he has to say about reconciliation and some of the other agenda items that we've been talking about. Megan Scully from our Congress team will join us, too. It's all ahead right here on Balance of Power, only on Bloomberg.
It's 1:40 on Wall Street. We do check markets all day long here at Bloomberg. A federal judge in Oakland has temporarily paused Paramount Skydance's $110 billion takeover of Warner Brothers Discovery. The judge today ordered the companies to hold off on consummating their deal for 14 days. Paramount and Warner Brothers had hoped to close this deal as soon as July 22nd. California and 11 other states did sue to block the Hollywood mega merger on July 13th. Warner Brothers Discovery shares, they're down by 2.5%. Paramount Skydance right now trading lower by 0.9%. We are looking at an update barely now for the S&P 500 index. So right now the S&P is up 6. That is a gain of under 0.1%. The Dow lower by 235 points on the industrials, down 0.4%. Both NASDAQ and the NASDAQ 100 index are gaining. The NASDAQ 100 index up now by 0.6%. NASDAQ Composite Index up 0.4%. This with the SOX pushing higher by 1.6%. 10-year at 4.59% with a 2-year 4.22%. Spot gold down 0.2%. 4,010 the ounce on spot gold, while crude bouncing around. WTI up 0.4%. 82.85 a barrel on WTI. Iron shares are surging after the data center operator raised its year-end AI cloud annualized run rate revenue target to more than $4 billion. That's up from $3.7 billion, following the signing of $2.8 billion in new multi-year contracts. Iron shares, they're surging by 20%. And Alphabet's Google is developing a server chip designed to optimize its Gemini AI model. That's according to the information citing sources. Alphabet, which reports earnings on Wednesday, up by 1.9%. Recapping, S&P up by 0.1%. Balance of power continues now. Back we go to Washington. Once again, your hosts, Joe Matthew and Haley Lyons.
All right, Charlie Pellet, tracking the markets. Thank you so much. I'm Kaylee Lyons alongside Joe Matthew here in Washington. This is Balance of Power, where, of course, we follow the balance of power here in the U.S., but around the world as well. And the balance of power is changing in the U.K., or at least those in power are changing. It's still the same Labour Party at the top of the U.K. government, but now a new Prime Minister in Andy Burnham, a new Chancellor of the Exchequer in John Healey, which was announced earlier this hour, and now a new Foreign Secretary has just been named. Ed Miliband, Joe, will be serving in that role in this new cabinet. And of course, he will be charged with liaising with the likes of Marco Rubio, one would imagine, but European governments as well, as we just had headlines crossing that the new Prime Minister, Andy Burnham, also has spoken with the EU Commission President Ursula von der Leyen this afternoon and has invited the Ukrainian President Volodymyr Zelensky to the UK at the earliest opportunity.
Spoke with President Trump today as well and invited him to Manchester. We'll see if that happens. And if so, which jet the president's going to be taking as the gifted 747 for Qatar goes in for enhancements, as he says.
It's going to be
maxed out. And we'll see if they can get that done in the better part of a month with more air defenses to be added to the new jet. We've got our eyes on Capitol Hill here at home. Of course, Kaylee, with only 4 legislative days until the August recess and a boatload of work to do, beginning with Reconciliation 3.0. And that's where we start our conversation with Megan Scully. Before we hear from Congressman Mike Flood, he's going to be in our studio in just a moment. Megan leads our Capital Influence team here at Bloomberg in Washington. I don't know, Megan, I mean, I could read the list. NDAA, a CR that the Speaker has ready to roll here to avoid a government shutdown, the supplemental by way of reconciliation. House Rules Committee is going to get underway here in about 15 minutes. Will that lead to anything actually getting passed before everyone goes away?
It's going to be a busy week, certainly, in the House. And, you know, they are motivated to get a lot of this done before leaving for 5 or 6 weeks for the August recess, which is basically sort of a crucial final sprint before the midterm elections in November. You know, I think of all the things that are likely to get done, there does seem to be bipartisan consensus around a continuing resolution, one of these stopgap spending measures that would essentially avert a government shutdown when the fiscal year ends on September 30th and keep the government open until about a month after the midterm elections. No party benefits from having a shutdown right before an election, so there does seem to be consensus there. There are other areas, though, that are going to be trickier. The defense authorization bill, of course, that usually gets bipartisan support. But due to efforts to attach voter identification legislation to that, that is becoming certainly a flashpoint. So now Republican leaders are trying to attract fiscal conservatives and others hardliners within the GOP to support that bill by attaching extraneous measures, assuming that Democrats will vote en masse against it. There are other issues, including a stock trading ban that used to be a bipartisan effort and is now it appears that it's mostly a Republican or perhaps a Republican-only measure, due once again to efforts to attach voter ID legislation to that, as well as concerns among Democrats that the new legislation does not have enough teeth for actual enforcement.
Well, and on this voter ID idea, Megan, we did hear from President Trump about this on True Social today. He thanked a number of members of the House, including the Speaker, for launching an effort to get as much of the Save America Act as possible in a budget bill. He goes on to mention different components: voter photo ID, proof of citizenship, and hopefully, he says, and this is a quote, no corrupt mail-in ballots. How much of that is actually possible inside of budget reconciliation?
Well, it's not really, at least within the Senate, where the parliamentarian has to rule whether something comports with very strict budget guidelines that allow this chamber to pass it without being at risk of a filibuster. So essentially pass it by a simple majority, by 51 votes. So the Save America Act, as it's written now, it would not likely comport with these budgetary rules because it is not budgetary in nature. Now, the Reconciliation 3.0, as we're calling it, it does have some grant programs in there for voter ID efforts. So that would presumably make the cut for the rules, I would think. Of course, this is up to the parliamentarian. But the overall bill is a policy bill and not a budget bill. So, and it's unlikely that it would make it, and it certainly would not get 60 votes, which would be needed to overcome a filibuster.
All right. Bloomberg's Megan Scully, who leads our Capitol Influence team here in Washington. Thank you so much. And I'm pleased to say joining us now in our Washington, D.C. studios, Republican Congressman Mike Flood of Nebraska, who chairs the Republican Main Street Caucus. Congressman, welcome back to Bloomberg TV and Radio. It's nice to see you in person.
Thank you very much. Megan was right on top of all her reports there. Well, I can leave now, right?
Yeah, well, she outlined that you have a very busy week, as does the rest of your colleagues in the chamber. Are you going to get all of this done in 4 days?
It is a very big week, and it's a very important week because, as you note, we are back in our districts for recess. I have a town hall next week. We've got things planned, and so if we can pull this week off, it will be a major victory for House Republicans and our Speaker.
What's number one for you? Is it getting this reconciliation bill off the launch pad and finding a home for Save America?
Well, I think I have two shared number one priorities. Okay. One would be passing a continuing resolution tonight. Okay. The House of Representatives planning to fund the government before the election because a shutdown is not in America's interest. Mm-hmm. And then number two would be the Reconciliation 3.0. My guess is it'll be hard to get that much further down the street on NDAA because there's a lot of other provisions that we're considering.
You get a CR tonight, though. That's entirely possible.
Yes. I mean, I'm hopeful we have the votes for it.
That would be a big story.
On reconciliation, obviously $95 billion in spending, no offsets for this. And you mentioned that you had a town hall earlier this month, and you'll have one coming up next week. At that town hall, you were asked by an attendee, why do you support Trump when he adds to the debt? This would add to the debt, right? Why not include pay-fors?
Well, first of all, most of this money is to replace our munitions. Mm-hmm. It's in our national security, given our military operations in Venezuela and the Middle East. And second, if we were to go the route of a regular supplemental with 60 votes in the Senate, we would be doing a deal with the Democrats somewhere north of $400 billion. I'm absolutely sure of it. And so this does what we have to do in that it replenishes our munitions. There's aid to agriculture, the SAVE Act, and then there's a couple other minor things, but ultimately, I think there's a debt ceiling discussion happening, but ultimately...
That again.
Yeah, welcome back. Ultimately, all of this comes together, and I think this is a lot less expensive than it would have been. And by the way, last year, we cut $2 trillion out of federal spending for the first time in, decades.
Defense Secretary and the Chairman of the Joint Chiefs will be on the Hill tomorrow testifying about the budget request for the Pentagon. It's not just the supplemental, if we're even still calling that anymore, but when you talk about the need to replace munitions, the President says we need $1.5 trillion, not only to fund operations, but to replace everything that has been fired, not just in this conflict, but in Ukraine, of course, in helping to protect Israel. There's a lot there. How difficult will it be for the Secretary and the Chairman to make that argument? And do you think that this number will land somewhere near 1.5 trillion when you put these bills together?
No, no, I do not think
What's a realistic?
I mean, I think a realistic target for what we need military-wise, what we want and what we need are two different things, right? Okay. Would be like $350 billion. But, you know, the White House and the House leadership, they've decided to embark on this path with reconciliation. I think they've got $67 billion in there for the armed forces, $11 billion for agriculture. That is really the first step of many. And plus, after November, you know, we're going to find out what the next step is. There's even talk, and this is remote, of a reconciliation 4.0. Yeah, right. I don't know how possible that is given the financial year and everything, but there is a conversation about it.
I guess got to cross the first bridge you get to first. You mentioned the aid to farmers.
Right.
We've seen a few rounds of aid that has to go to the agricultural sector. Is that to you, Congressman, a failure of the president's tariff policies? Is that this is now required? You need to subsidize Americans?
Well, the reality was, you know, Mexico wasn't buying our white corn under Joe Biden. We were entering a kind of a dark era under the Joe Biden terms. So commodity prices aren't where they need to be. Certainly, fertilizer is one of the inputs that's driving a lot of the stress in ag. So the $11 billion is helpful. I think ultimately, Jamison Greer getting more markets for our soybeans, our corns, our grain, all of that is in our interest. And I hope we're close to something more with China.
The analysis from Bloomberg Intelligence on that farm money is that a lot of it, if not all of it, will be used by farmers to pay off debt. For instance, you might not be buying John Deere right now because you have to manage your own finances. Does that mean that there'll need to be another turn here? There'll be another tranche of money for farmers down the road?
Well, I think it's maybe inaccurate to say just for debt. If you're 62 years old and you've got equity, you're in a much different spot than a 43-year-old farmer with a lot of debt. The 43-year-old farmer is managing operational debt, probably going to go through a renewal cycle here in the next 3 or 4, maybe the next 6 months. All of that will come around, and hopefully we see, uptick in soybeans. We have been watching those prices very closely.
Yes, right.
Well, and you mentioned fertilizer prices. Of course, that has become perhaps more acute due to the closure of the Strait of Hormuz and difficulty getting vital ingredients to fertilizer out of the waterway. It's still an active conflict zone as we speak, and of course we had 3 more American service members die over the weekend. How much more difficult does that make your job in talking to your constituents and trying to explain why it is that these individuals lost their lives, why we still find ourselves mired in the Middle East when the president initially said this would just be a matter of a few weeks?
Well, remember, we're talking about a regime that has vowed death to America. If I've said it once, I've said it 10 times. If they get their hands on a nuclear weapon, if they get their hands on a dirty bomb, they would not hesitate to use it on U.S. soil. They have proven that. They are martyrs, essentially. The people that stepped in after the leadership earlier this year was eliminated, a new round stepped in. So I think President Trump has to deal using force to people that have been using force on us. I still think the president's position and a great majority of us in Congress want to find a solution that's long-term. We've been close a couple of times. It's a very complex region, but I think that's the president's focus.
We spent some time reviewing your town hall of July 7, which is why Kayleigh mentioned one of the questions you were asked. You're not the only one, but you are part of a smaller, maybe shrinking circle of lawmakers that continues to hold town hall meetings, have face-to-face conversations, at times difficult ones, and we salute you for that.
Thank you.
I'm wondering if you plan to do more, and why isn't everyone acting like Mike Flood?
Well, I do 3 a year, and I'm going to have one coming up next week in Lincoln, which is the biggest city, probably the bluest city in my district.
Yeah.
Nothing gets better if we don't talk to each other, and you certainly understand that in the media. Listen, I've had town halls with 10 people show up because, there just isn't that emotion there. Now there's a lot of emotion in the air. There's a lot of opinions on both sides.
For sure.
I think it's good just to show up, and I hope more people do it in the future.
Well, it's an example for your colleagues, Congressman. It's great to see you. Mike Flood, Republican from Nebraska's 1st District. He chairs the Republican Main Street Caucus. That should give you a sense of the debate that we're walking into. What's going to be a doozy of a week on Capitol Hill, Kaylee.
Yep, it's going to be a very busy couple of days, and of course, we'll continue to keep you updated on the progress today on the late edition of Balance of Power at 5 p.m. right here on Bloomberg TV and radio.
This is Bloomberg Business Week Daily, reporting from the magazine that helps global leaders stay ahead, with insight on the people, companies, and trends shaping today's complex economy, plus global business, finance, and tech news as it happens. Bloomberg Business Week Daily with Carol Masser and Tim Stenivek, live on Bloomberg Radio, television, and Bloomberg Originals.
And a very good afternoon, everybody, across Bloomberg platforms. Welcome to Bloomberg Business Week Daily. Carol Masser along with Tim Stenivek. He is back. We missed you on Friday.
I missed you guys. I was trying to find some nice air.
And?
Didn't find it.
And you went upstate a little bit,
Yeah,
right?
Western New York.
Yeah.
It was actually,
More across?
Yeah, it was really worse than here.
And it was worse.
Yeah.
Because it did start to feel like things getting better.
Yeah,
Like
and
you could see the sun, you could see some skies.
we should note, even though things are better here in New York City, they're not better around the country, and certainly not in Canada. So keeping an eye on everything happening as a result of those fires.
And it's something we're going to keep a watch on throughout the week because it certainly isn't going away. If you look up, you pull up a fire map across the country. That to me makes me a little unsettled.
Well, you know, it's a good segue. We weren't even planning on doing this, but just a preview to what we're going to be talking about at about 3:40 on Bloomberg Business Week Daily. Alastair Marsh is going to be joining us, and we're going to talk a little bit about the sort of climate black swans that banks are starting to risk out as a result of climate change and what could happen.
Isn't this what ESG was supposed to be about? Environmental, social governance factors that financially could impact things. I know it feels no heart because it's a financial impact, but it's the reality, right? Things are different in a world that is getting warmer, and these climate change events are more extreme and more often, right?
Yeah, I'm not arguing with that.
All right, happy Monday, everybody. All right, coming up this hour. First of all, something you pointed out, interesting. It's on the Bloomberg. Bearish bets across U.S. stocks are surging to a record in the face of market gains, reflecting anxiety about the staying power of a rally. So this is something we're thinking about all day today, but really throughout the week too, as we start to get earnings and some other things. We'll see where stocks go. Also ahead this hour, wait a minute, or so says a federal judge who temporarily pauses the deal between Paramount, Skydance, and Warner Brothers Discovery. Our Chris Palmieri, lucky for us, on the East Coast, so he's going to be in studio.
Yeah, Warner Brothers Discovery shares down about 4% as we speak. Plus, maybe a new 10-day peace deal is coming.
Maybe,
we'll see.
Maybe.
Yeah, the latest on the U.S.-Iran war that's nearing a 5-month mark, and what might be the most impactful in the 1,000 days of war and upheaval that reshaped the Middle East?
It's a bigger deal, right? And we know that. Hey, also we're going to get into why the U.S. dollar smile now looks like a smirk. We're going to do that. And then it feels like we've seen this movie before. We're going to tell you about the alchemists tapping insurers to unfreeze private markets. Yes. Transparency, regulatory oversight, all these things feel familiar.
Also feeling familiar, Charlie Pallett. He's standing by in the Bloomberg Business Week studio with an update on today's trade. Hey, Charlie.
Well, hello there, Tim. Welcome back, and good afternoon, Carol. Here's what's going on. Got to begin with the big story right now. We're talking about Paramount, Skydance, Warner Brothers Discovery. If you're just joining us, let's recap and reset, because a federal judge in Oakland has temporarily paused Paramount's $110 billion takeover of Warner Brothers Discovery. The judge ordered the companies to hold off on consummating the deal for 14 days. Paramount and Warner Brothers had hoped to close as soon as July 22nd. As Carol mentioned, our Chris Malveri is in New York. He'll have more on this story coming up in just a moment. Shares of both companies right now. We do have Paramount Skydance actually turning around from earlier losses. Paramount Skydance now higher by just about 0.1%. Warner Brothers Discovery, though, moving lower by 4%. We've got the Dow in the red right now, down 140, drop there of 0.2%. S&P 500 index higher, which means that stocks have halted back-to-back losses. We've got chip makers bouncing. That perhaps the big market story today. NASDAQ up 0.5%. NASDAQ 100 index up 0.7%. And the SOX, the Philadelphia Stock Exchange Semiconductor Index, up now by 1.8%. Spot gold down $10 the ounce to $4,006, right around that 4,000 number. Right now, gold is down 0.3%. West Texas Intermediate crude 82.86 a barrel, up by 0.4%. The 10-year, by the way, 4.59%. Chip stocks surging. The SOX, as I mentioned, up 1.7%. Nvidia up 0.9%. Broadcom up by just about 3% right now, and shares of Micron up by 4.4%. Carol and Tim, lots going on. We got you covered. That is a Bloomberg Business Flash.
You always do. All right, Charlie, thank you. We'll be back to Charlie later on this hour. Well, certainly top of mind today. A federal judge temporarily paused Paramount Skydance's $110 billion takeover of Warner Brothers Discovery. The judge in Oakland, California, ordering the companies to hold off on consummating the deal for 14 days. Paramount Warner Brothers hope to close, though, Tim, as soon as July 22nd.
Yeah, shares dipped initially. Warner Brothers Discovery shares are still lower, down 3.8%. Paramount Skydance shares, they were down earlier in the session as much as 2%, but down now.
A little bit higher.
A little bit higher right now.
Just a tad.
Yeah.
All right, so let's get to it. What do we need to know? Why is this happening now? That's what makes me wonder. Bloomberg News senior editor and entertainment team leader Chris Palmieri, usually on the West Coast, in the heart of Hollywood, out there in L.A., joining us here, as we said, in New York City. What do we know about this, and why is this happening now?
Well, just to put a little context here, they were very close to closing this. The Justice Department approved the merger. EU is expected to announce something on Wednesday. They're going to have a deal and green light it. So Paramount was hoping they could actually close this week, and so the attorneys general who've been sort of threatening action finally did sue, and so now this is a potential problem because. Anything past September that Paramount doesn't close, they have to pay Warner Brothers shareholders millions of dollars a day until they get it done, if they get it done.
What's the whole? If they get it done, are we really saying that?
Well, I think the market's reaction indicates that something will happen, that some sort of agreement will be reached. I think that might be a face-saving move for the attorneys general, certainly for Paramount as well.
What's the sticking point here?
Well, there's a lot of people, particularly in Hollywood, who really object to this. I mean, we're combining two, legendary movie studios, two giant operators of cable TV channels, two news divisions, CBS and CNN, two giant streaming services. So this is if this isn't antitrust, I mean, what is, right? I mean, this is a major consolidation. Now you get into the question of how much market share do they have? And this is one of the things that I think people were a little surprised that the suit wasn't stronger. They really decided to focus on the movie business, and they couldn't even get a 30% market share for the combined studios. So I think there was a feeling that the case was not as strong as it might have been, and this is kind of like almost a relief for investors. Yeah.
So could any chance Netflix come in at this point, Chris? And would this be a deal that would more likely pass regulatory muster?
Well, we can go on and on about Netflix right now. They're sort of in a lot of trouble. I mean, their stock really began to head south last year when they initially were interested in Warner Brothers, and they haven't really overcome this idea that what were they thinking, So I can't see them coming back at this point. Yeah.
So this deal does get done? I mean, we know they want to do it as soon as July 22nd. Is that likely to happen, or is it just maybe...
Definitely not July 22nd. So I think the next is a hearing to determine whether the injunction that's just a temporary one now goes at least through the end of trial. Now, remember, the attorneys general are asking for a trial date next year. So, that's potential trouble for Paramount. And they're gonna fight every step of this the way. They're going to fight the injunction. They're going to fight... I think they're... Macon Delverham, their chief legal officer, suggested could go to the Supreme Court.
But I mean, if it goes to the Supreme Court, is there? I don't know. It's hard to say with this Supreme Court, but is there sort of precedent for something like this? I mean, it's a challenge to actually answer that, given that we're in a different era than we've ever seen with media right now. And, if you were describing this 10 years ago, I think there would be huge issues. But yeah, it's not like that anymore.
And by the way, Macon Delverham, who is the antitrust chief in the first Trump administration, who argued that AT&T should not be able to buy Time Warner, and he lost that case. Of course, now he's in favor of Warner Brothers consolidation. But I think, most to your point, the Trump administration is seen as pretty pro-merger.
Yeah.
In fact, we heard the FCC commissioner on our program here recently saying that. He was talking about all the deals he's greenlit. He's got some final say in the Warner Brothers deal as well. But this is.
Yeah. And he was at the UFC fight on the White House lawn.
I know.
Yeah, we could go on and on about all the relationships with Paramount and the Trump administration, for sure.
So saving face may be what it's all about, like you said, too. All right, Chris Palmieri, thank you so much. So excited to have you here. Bloomberg News Media and Entertainment Team Lead Chris Palmieri joining us here in our Bloomberg studio. Hey, a developing story, so we'll continue to watch this one in terms of Paramount Skydance and what happens next. But so too developing and ongoing, if you will, between the U.S. and Iran, of course, is there at war. We see oil prices swinging between gains and losses, traders reacting to a worsening of the Middle East conflict and attempts to bring about a pause in the war. Let's get to it, and let's go to our Bloomberg News D.C. Bureau and to Bloomberg Economic Statecraft Lead. He is Chris Kennedy. Chris, feels like since this war began, and certainly when it went on longer than shorter, we've had reports about President Trump being bored over this war, that he couldn't care if peace negotiations collapse. Where is the president and his team on dealing with this situation? Where is it? High up on the priority scale? Give us, what are you guys hearing?
Well, it's hard to know what the president is thinking about on a day-to-day basis, but where we are right now, 9 straight days of U.S. strikes on Iran increasing the pace of retaliation on its neighbors, but also on Jordan. I think the longer this goes on, the bigger a priority it will be for the White House. So far, I would say the response in global oil markets has been relatively modest, but the buffers that we saw, kick in over the past few months are wearing thin. That includes U.S. strategic reserves. It includes, China's pause on buying. We don't know how long that will last. And we're seeing additional pressure on global oil markets from Ukraine's continued campaign against Russian energy infrastructure assets. So if it's not a super high priority at the moment, I think it will become one as long as this continues.
Chris, about an hour and a half ago, the president out on Truth Social saying every time Iran kills an American soldier, they will pay for that killing many times over. The directive has been passed on to Secretary of War Pete Hegseth. It continues to go on. We've seen this president make threats, many threats in the past that haven't necessarily been followed through on. And I'm just wondering about the weight of his words right now in this conflict and what they mean, not just to Iran, but to the world.
Well, certainly it doesn't bode well for the idea that we could be, on the brink of another ceasefire. 10 days is what's being discussed in the media. Iran and the U.S., so long as they're actively fighting each other, there's going to be, no way that we're going to get to something resembling what we saw during that brief period where the MOU was in place. And we've seen that Iran has not responded well to these sorts of threats over time. So, we've seen a few different incidents that unfortunately led to the deaths of service members. I think there was an unexploded ordinance that was trying to be dealt with, and then there were some more deaths that were the result of direct attacks. So we'll have to see how the president responds and how Iran responds over the next, few days.
Who are the lead negotiators, Chris? I mean, I did see the Secretary of State there at the the World Cup final, along with the president.
I just lost audio.
Oh, okay. Chris, you can't hear us? Nope. Okay. So obviously talking with our Chris Kennedy, Bloomberg Economic Statecraft lead, talking about certainly the war. We mentioned some of the headlines. We mentioned that oil prices have been moving around because there are, some questions about whether or not we're seeing a worsening of the Middle East conflict and attempts to bring about a pause in the war. Yemen's Iran-backed Houthi rebel group said it would impose a ban on maritime traffic from Saudi Arabia, a potential threat to the Red Sea shipping route. Chris is back with us, Chris Kennedy, Bloomberg Economic Statecraft lead. He's in our D.C. bureau. Stuff happens. It's a Monday. So, Chris, who's leading the negotiations, for the United States at this point? I think of that, the president and certainly the Secretary of State there at the World Cup final. But I'm just curious, who's leading the cause here and who's leading what happens perhaps next in terms of the U.S. response?
That's a great question. At this point, I think we're waiting to see what materializes from this supposed plan being proffered by Qatar, and Pakistan is in the mix, and I think they'll get to the point where you might actually see some additional involvement from perhaps it's going to be Secretary of State Rubio, perhaps the Vice President, or Witkoff and some of the other actors that have been engaged throughout the process. But at this point, I think we can safely say that there are no active negotiations, and the next few days will tell how much movement there is on these most recent proposals that we're hearing news of.
And yet, as Carol mentioned, no clear direction for oil prices. It does seem like the equity market is kind of shrugging this off. I know we're talking about a global conflict here, but we're Bloomberg. We talk about markets too, and we look to markets for the way that people are thinking about conflicts. It seems like the market's kind of shrugging this off.
There's been so much back and forth on this, and I think commodity traders are hesitant to make big bets one way or the other while things are so uncertain. I can say that Bloomberg Economics, we've been looking at what we expect now for inflation in the global economy, and this most recent flare-up has lasted long enough that we do see higher inflation most likely by the end of the year. And if things devolve, we could actually breach 5%. And then in terms of the real economy, we already are seeing the impact. Diesel prices are above $5.10 a gallon now in the U.S. Gasoline prices just breached $4 a gallon for the first time in since peak war. And so the reality is that consumers are being hit.
Yeah, that's for sure. All right, Chris, thanks so much. Just getting us up to speed in terms of what we're hearing, certainly from the White House and from the government when it comes to the war. Chris Kennedy, Bloomberg Economic Statecraft Lead, joining us from our DC bureau. All right, the war, the AI spend, the impact of it all, the Fed, Chair Kevin Warsh, there's a lot coming at us. All of these things and more are what investors are keeping an eye on. And I gotta say, when we were thinking about this segment with our next guest, there was something we wanted to kind of layer on top of that, and that has to do with AI and its impact, Tim, on the economy.
Yeah, it stayed with us. It's something that Dr. Doom, as he's called, also known as Nouriel Roubini, told Tom Keene and Scarlet Fu on Bloomberg Money on Friday.
Okay, unfortunately, no audio.
The Kremlins are here on this Monday with the audio.
Listen, I'm exhausted this Monday, so I am like feeling it too. Here's what Nouriel Roubini had to say, though, and said this to Tom Keene and Scarlet Fu on Bloomberg Money. The problem is going to be that with AI, eventually we're going to have a long-term permanent tech. Unemployment is going to happen only slowly, but is it going to happen in the next 20 years? So even if you increase the retirement age, the problem is going to be a large chunk of the population is going to be replaced by AI and robots in the next 25 years.
He continued to say, so increasing retirement age is not going to be a solution. It's true that with higher potential growth, that ratio tends to fall because it's debt to GDP. So our fiscal condition is not as bad as it would be in a situation where growth is lower, but that at some point we have to do something. Eventually, we need some form of universal basic income for everybody while they work, and once they retire, we're already on the way to that.
We will need some form of universal basic income for everybody. And this reminds me of a conversation we had with a real estate developer who was talking about housing in the future and saying some of the development that they were thinking about is with keeping in mind that at some point people are going to be living on universal basic income. And it just kind of struck us. I think it was in the context of AI and all of that. That, of course, was Nouriel Roubini with the Bloomberg Money team, Tom Keene and Scarlet Fu on Friday. I'm curious to see what our next guest has to say about all of what is going on and what it means also for the U.S. dollar, always closely watched in terms of the health of the U.S. economy and markets. Back with us is Jayati Bardwaj. She is head of FX strategy over at TD Securities, joining us here in studio. It's a lot. What is most important here? And AI being transformative, geopolitics being transformative, maybe already is. Do you agree with all of that?
I think you're absolutely right. There's a lot being thrown at us in terms of markets, and in trying to think of how should markets price all of that, to me, it's all about the sequencing. I think getting the sequencing right is very imperative in understanding how markets will trade it. Like, let's start with AI, for example. In AI, unfortunately, you will be only in a realization trade in the near term, where unfortunately you will not know how much it boosts productivity. You don't know. Currently, it's inflationary right now. Even theoretically, so many economists, including Fed Chair Warsh, will tell you ultimately AI is disinflationary. But clearly, in the near term, it's inflationary first because of all of the CapEx investment move, all of the spending going in that direction. What I mean in terms of a realization trade is that clearly there is a global race for AI. You will see models, make old models seem, deem more expensive, not being able to match in terms of computational power.
Like we saw recently in terms of China, we talked a lot about last week.
And this morning as well.
Yeah.
So in this realization trade, there will be a lot of winners and losers. There will be a lot more volatility across the world in terms of equity rotation. And at the same time, you're seeing front-end rates volatility because of the complications of US and Iran. And now, what is the Fed signaling? Is the Fed signaling that interest rate curve path in the US should be higher because of AI, or is the Fed signaling that we will react more bluntly to inflation?
On the inflation front, we just had an interesting conversation with Chris Kennedy, our Bloomberg economic statecraft lead, and he made the point that the Bloomberg economics team says that if this conflict continues to go on, we could see inflation at 5% at the end of the year. And he referenced diesel prices be above $5 a gallon. I saw it all on the highway yesterday when I was on the road for 8 hours, $5 and above for diesel everywhere I went in New York State. Do you think that's possible to see inflation above 5% at the end of this year?
Potentially, but that would require a material escalation in the geopolitical front. And for what you were just talking with the previous guest, markets to trade it as a serious escalation. Because markets are currently trading this as, this is escalate to de-escalate, because this is a midterm election year. I don't think people are buying into the fact that any of this escalation is actually really aggressive, given that the war is extremely unpopular in the US in a midterm election year where Trump's approval ratings have already taken a hit. Nobody's buying into the argument that this is real escalation. So you would need to...
And yet, it continues to drag on and on.
The helpful factors have been that the US has been exporting a lot more and that China has curtailed its demand, has been dipping into its reserves, which is allowing both sides to continue into this negotiation. I think Iran knows that its leverage is maximum just up until the time before midterm elections, which is where Trump will care about this the most, and they're utilizing it, and so is the US trying to push them back on it.
Your notes, you write that the US dollar smile now looks more like a smirk. What does that mean? What do you mean?
I wish it was as healthy as your smile, but the dollar smile is a very talked about concept in FX where they say that the dollar rallies on the ends of the smile, where either the US growth is exceptionally strong compared to the rest of the world, or on the other tail scenario where the US growth and global growth look increasingly look deteriorating. So it's that smile that we try to measure. So given the US economy is resilient, growth has been going up well, the Fed is expected to start hiking interest rates soon, but the dollar is, strengthening, but really struggling to rally here. Any dollar move higher meets with a clear ceiling here, because the dollar now needs a lot more boost and a lot more significant outperformance compared to the rest of the world for the dollar to keep rallying. I have this one interesting chart I flagged to clients where you can see that in AI inflows into US equity markets in the last couple of months have skyrocketed. Like equity inflows into the US is a straight line up. Historically, that used to be a good predictor of the US dollar, but that's a straight line up. The dollar is like a small bump higher. And there's a clear dissonance and there's a break in traditional correlations here.
So does the dollar catch up at some point?
It depends upon if the world can fall back in love with the dollar being the safe haven or not. That has been the biggest driver of FX markets since the current administration took place, which has been the hedge dollar trade, where the global investors are still buying equities, still buying US treasuries, but none of them are wanting to hold the dollar exposure associated with those assets, and nowhere close to how they used to do that pre-end of 2024.
Maybe this is really stupid, but they're dollar-based assets, right? So shouldn't the dollar be equally going up? That's
absolutely
it's
true.
Kind of a clear, easy correlation.
So when foreign investors buy US assets, they have the option of hedging their currency exposure or not. And as hedge ratios went up on the US dollar, buying US equities no longer translates into a one-on-one demand for the US dollar. Because while you're buying US assets, you're hedging all of that exposure, so you're no longer long the US dollar. And that was a big move that we saw all of last year, that massive move lower in the dollar and higher in euro. That was the birth of the hedge dollar trade. So I think that's a very important question for markets to see if you can go back to, the pre-Trump distortions, or do markets have this fragile relationship with the dollar or not?
Interesting stuff against everything else that's going back. Great start to the Monday. Thank you so much. Jayati Bardwaj, she is head of FX strategy over at TD Securities. Coming up, we're going to get into a little bit more on the US-Iran war, but really the 1,000 days of war and upheaval that have reshaped the Middle East. We're going to get to that in just a moment. First up, though, let's get back to the market trade and to Charlie Pellet.
All right, thank you very much indeed. Let's recap and repeat our top story. Federal judge in Oakland has temporarily paused Paramount Skydance's $110 billion takeover of Warner Brothers Discovery. Right now, we've got Paramount down 0.2%. Warner Brothers Discovery lower now by 3%. Chip stocks are rallying. The S&P 500 index higher by 14, up 0.2%. The Dow in the red by 0.3%. The Nasdaq 100 index up 0.7%, with the SOX, the Philadelphia Stock Exchange Semiconductor Index, up now by 1.7%. 10-year 4.59%. Gold down $11 the ounce, holding right around 4,005 now, down 0.3%. An advance for crude. West Texas Intermediate has been swinging between gains and losses. 83.06 a barrel right now, up 0.7. Brent crude up by 1.3%. 0.3%. Oil stocks are advancing. We've got ExxonMobil shares pushing higher by just about 1% right now. Chevron up 1.4%. ConocoPhillips shares, they are gaining now by 1.2%. I mentioned the chip names. The stocks up 1.6%. NVIDIA now up 0.8%. Broadcom higher by 2.7%. Micron is rallying 3.5%. Intel up by 3.5%. Carol and Tim, that's a Bloomberg Business Flash.
All right, Charlie, thank you so much. Well, this war in the Middle East, we've talked about it at the top of the hour, involving the U.S. and Iran, of course, but also many others in the region. You know that. But it didn't necessarily, well, the U.S. and Iran, it did begin on February 28th, but it's kind of just the latest chapter, so our team writes, in more than 2 years of conflict unleashed in the wake of Hamas's assault on Israel that laid bare how the Middle East that existed before the attack on October 7, 2023 was long gone.
As Carol mentioned, so notes a recent Bloomberg Big Take that we wanted to share with everyone. With more Bloomberg Economics geoeconomics analysts focusing on the Middle East, Dina Esfandiari with us from Geneva, Switzerland. Dina is the author of New Order in the Gulf, The Rise of the UAE, and co-author of Triple Axes, Iran's Relations with Russia and China. She holds a PhD in the War Studies Department at King's College in London. As we mentioned, the U.S. conducting a 9th straight day of airstrikes on Iran. Why, Dina, should we be focusing on the longer array of actions and conflict to tell the story of a changing Middle East?
Because this is a region that has been filled with turmoil for as long as I can remember, and beyond that. And the last 2-3 years have only worsened the instability that the Middle East has seen. As we outline in the piece, after October 7th and the war that Israel led against Gaza, everything began to change. Alliances were reshaped in the Middle East, partnerships changed, new wars erupted, new violence erupted, and unfortunately, none of that looks like it's going to be resolved anytime soon.
Why? Is it just because it's been in conflict, this region, for so long? Does the U.S. attack have some role? Like, why are we here at this moment in time, Dina?
An understandable question. And honestly, I could probably write another PhD on the answer, but in order to shorten it, I think various factors. I think foreign players, including the United States and others like Russia and China, have played a role in it. I think players within the Middle East have done very little to improve their situation. I think within countries in the Middle East, governance has been a real issue, which at times exacerbates both domestic crises and regional crises. Honestly, I could go on. Economic issues, the fact that many of these countries are exporters of oil, that they're rent-dependent countries. None of these factors have helped. And the tensions that have erupted in the last few years, really, they've exacerbated these problems. And again, there is no path right now to resolving any of them.
So it raises the question about the U.S. role in the Middle East right now, and what exactly the end game is for the United States. And, you know, far be it for me to ask you to get inside the president's head and give us a prediction there, but I think a lot of people question the idea of a clean and quick end to at least the U.S. involvement with Iran. Is that fair to say?
Absolutely. U.S. war goals have been changing since the war with Iran erupted. Initially, it was about regime change. Then it turned into degrading the Islamic Republic's capabilities. Now it's become opening a strait that was open before the war broke out. So it's really unclear what President Trump's objectives in this conflict are, but I think for now, those objectives have become very limited, and they are primarily focused on the straits. It needs to be open. It needs to not be under Iranian control, and that is exactly what the Iranians are contesting.
Wait, that was how things were before the end of February.
That's right, but they signed an MOU, a ceasefire of sorts, where they promised to continue negotiations to resolve some of the issues that plague their relations, including Iran's nuclear program. But they didn't even get that far because within a few weeks, Both sides had a different interpretation of the implementation of the MOU. The Iranians thought that the US was acting in bad faith by not implementing it properly, by, for example, opening up an alternative route in the Strait of Hormuz close to the Omani shore. And the Iranians felt that this was going against the MOU. And so they went forward with ensuring that they would be able to establish a clear red line. And that red line was that the Strait of Hormuz belongs to Iran and Iran must control it.
Dina, speaking of lines, you guys write in this story, Israel has become another fault line, and the relationship between the Gulf states shifted from neutrality to hostile, according to Bloomberg Economics. I mean, you know, you talk about alliances with Israel and others not. Where is Israel in all of this, and how much are they, I don't, you know, their role in kind of creating kind of where we are today?
Well, I would argue 3 years into a regional war, almost 3 years into a regional war, Israel is much worse off than it was at the outset. Before October 7th, there was a wave of Arab normalizations occurring with Israel. The UAE and Bahrain had already normalized, and there was real talk of Saudi Arabia, the crown jewels of normalization, also establishing ties with Israel. Now, a few years later, that is absolutely off the table. Saudi Arabia, even if it wanted to, even if the crown prince wanted to go ahead with normalization with Israel, he wouldn't be able to do it simply because domestically it is so taboo right now. And that really speaks to how the region views Israel, the populations, Arab populations in the Middle East view Israel, but also some of the leadership of the Gulf Arab states who now see Israel as a threat equal to, if not superior to, Iran, because it is enabled by the United States in a way that Iran just simply isn't.
So what fixes this? Diplomacy, war to the bitter end, or nothing? You know, I did, in a silly mood or just, I don't know, thinking about, oh my gosh, you know, reading the headlines this morning, a poll on X, and I'm like, does it just kind of keep going on for a little bit longer? Does the war end soon, or is it the forever war? Like, I don't know.
Honestly, I think right now we are on track towards this becoming the beginning of another forever war. Both sides are being very stubborn in terms of ensuring the respect of their red lines, in terms of shaping the negotiations. So they don't want to return to the negotiating table until those red lines have been established and the other side understands them. And neither side seems to want to de-escalate. And of course, the only way to end this really is through diplomacy. More war will not resolve anything. It may destroy infrastructure, it may destroy capabilities, but at the end of the day, it will only give more bitterness, more anger amongst the leadership of the countries that are facing this kind of war, and ensure that they rebuild and this all restarts again.
And not scientific. I'm looking at my X poll. It was one day, but I respect everybody who responded. It was U.S. and Iran over soon, 13%. Continues to take longer, 42%. Forever war, 45%.
Wow.
So, Dina, they agree with you.
Dina, what happened to the Iranians who, in February, the president thought would rise up and would sort of lead a new government, or at least show that there was some sort of resistance movement that would help to make a transition toward a country that at least this United States government wants to see?
Well, they've been distracted. They've been distracted by facing incoming bombs and missiles for the better part of the last 2-3 months. That will ensure that the Iranian population doesn't focus on the shortcomings of their government, but rather on the fact that they are facing war and they are facing a dire economic situation and unemployment and hopelessness. So their attention has been refocused on something else. The other thing that's happened, and this is pretty normal for a wartime situation, is that war has allowed the Islamic Republic's leadership to regain control of the streets. Under the guise of war, they have reestablished checkpoints throughout the country. They have reestablished some control, ensuring that people no longer come out and demonstrate. So expressions of discontent have really been quelled, which means that essentially what this war did was buy the government time.
I'm looking forward to your next PhD paper because I am curious to see where this all goes. It's just pretty amazing. And just even also to see shifting U.S. sentiment when it comes to something like Israel. There's a lot of great statistics and research in this piece. Dina, we knew we wanted to talk to you, so thank you so much. We know it's later over there in Geneva, but thank you so much. Always, always appreciate your time. That, of course, is Dina Esfandiari. She is geoeconomics analyst. She focuses specifically on the Middle East, so highly recommend to you check out this story by our team. It was a Bloomberg Big Take, and it is on the Bloomberg and at Bloomberg.com. She, of course, is with the Bloomberg Economics team, joining us from Geneva.
Hey, coming up next, Wall Street alchemists are tapping insurers to unfreeze private markets. Have we seen something like this before?
Familiar.
Does it?
Feels it.
It's 2:40 on Wall Street. We do check markets all day long here at Bloomberg. S&P, little change. Semiconductor stocks are rallying. Oil is higher, but we got to begin with the big business story today. That involves Paramount Skydance and Warner Brothers Discovery. Federal judge in Oakland has temporarily paused Paramount's $110 billion takeover of Warner Brothers Discovery. The judge ordered the companies to hold off on consummating the deal for 14 days. Paramount and Warner Brothers had hoped to close this deal as soon as July 22nd. You'll recall that California and 11 other states sued to block the Hollywood mega merger on July 13th. Shares of both companies are trading lower. Paramount Skydance down now by 0.3%. Warner Brothers Discovery lower now by 3%. Stocks have halted back-to-back losses as chip makers bounce. Right now, the S&P barely up by half a point. The Dow in the red by 278 points, down 0.5%. S&P just turning lower by 1 point now. NASDAQ holding on to a gain of 64 points, up by about 0.3%. Semis are advancing, well off session highs, but the SOX, the Philadelphia Stock Exchange Semiconductor Index, up now by 1.3%. We've got the 10-year yielding 4.59% with a 2-year 4.21%. Gold down $11 the ounce, down 0.3%. And West Texas Intermediate crude, it's been bouncing around, but WTI up by 1.2%, 83.49 a barrel. Brent 89.44, up by 1.5%. Deal news: Tempus AI, it's a technology company developing AI for the healthcare industry, has agreed to buy Personalis. It's a fellow biotech company focused on cancer testing. Shares of both companies are lower. Right now, we got Tempus down by 7%. Personalis trading lower by 13.1%. For on-demand news 24 hours a day, subscribe to Bloomberg News Now wherever you get your podcasts. Carol and Tim, that is a Bloomberg Business Flash.
All right, Charlie, thanks so much. Hey, a story that caught our attention this morning about a product that bundles stakes in private credit funds into a bond with a target grade of A2 from Moody's, backed by a rare kind of insurance.
Is it like a nesting doll?
It's exactly. Bink, 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 but not every nesting doll maybe should get an A2 rating.
Okay, it's a rapidly evolving realm of fund finance where creative bankers and advisors devise ways to unlock cash tied up in private assets. It often creates investment-grade debt that can be sold to insurers and pension systems.
Yeah, it has an oddly familiar feel to it, but we're not saying everything oranges, maybe it's not oranges to oranges. But it does have us wondering what could possibly go wrong here, Tim?
Well, to talk more about their reporting, and it's a Bloomberg exclusive, the story, today's Bloomberg Big Take. Scott Carpenter is here with us. He's a Bloomberg News credit reporter. He's here in the studio. Also, in the Bloomberg LA bureau, Davide Sceluzzo. He's Bloomberg News chief correspondent for Private Capital. Big welcome to both of you. Scott, you're here with us, so I'm going to give you the first one. What is going on here? Walk us through it.
Sure. So private credit funds and private equity funds need cash. They've been slow to sell investments. That's a story we're all probably familiar with. This is one of the innovative ways that they're doing it. It's a universe called fund finance. They take shares of these funds, they put them into special vehicles, they issue bonds. So you're turning equity, the shares of the funds, into debt. In doing that, you enable a lot of investment into the fund, and that's exactly what they want. They need a new source of dollars.
Sounds perfect.
He said innovative.
Davide, come on in on this. Tell us about a specific deal that kicks off this story that UBS is up to.
Yeah, we've reported about a deal that UBS has proposed, similar one that Partners Group has executed already, where on top of everything that Scott just described, we have an insurance policy written by Nationwide that insures the majority of that transaction against losses. And what that does is it boosts the rating all the way up to A2. You know, these deals typically either are not rated, or if they're rated, they would get a mix of like BBB, single B ratings. So the insurance policy is what really turbocharges this transaction and gives it a much higher rating, allowing other insurance companies on the other hand to buy it more easily.
All right, so grade A2 from Moody's, the bundling, all of it. And yet you guys write in the story, quote, yet potential buyers needed only a few moments to flip through the presentation and realize, Davide, it was no routine deal. What did they see?
Yeah, I think the insurance wrapping, as this structure is called, is still quite rare in the world of fund finance. So you see a lot of transactions where there is the slicing and dicing in different tranches. Very few where a majority of the transaction gets a single A rating, like in this case.
Okay. Yeah, go ahead.
What could possibly go wrong, Scott? No, help me out here. I'm being silly and funny because I've lived through, we've all lived through the great financial crisis. And we just want to be smart here. We already, when we talk private credit, a lack of transparency. Now, those who issue private credit said, listen, you know, there are good private credit issuers and there are those who don't. And there are those who really are only going to get involved in really smart deals. So I don't know. There's so much money sloshing around that says to me there's going to be a lot of deals that don't deserve that top rating or that rating of A2.
Sure. Yeah, a couple of things. For one thing, it's important to point out this deal was only a proposal, and so we don't know if it sort of reached conclusion, and actually Moody's and Nationwide say they did not have anything to do with this. So this was a proposal.
Okay.
What it shows you is there's an appetite for it. And they're doing different things. The other thing is, the purpose of this is to bring in insurance investors. There is a ton of insurance money out there right now. A lot of people are retiring, and they're buying annuities. That cash needs to be invested in something that's investment grade. This allows you to turn something into debt and then get it investment grade. That's the goal. Are there parallels to pre-crisis? This is a big question. It comes up a lot in structured finance, which is an area that I write about. And I would say it's worth paying attention to. And there are people that look at this and, you know, have some concerns, but there's a lot less of it going on than before, specifically the insurance stuff. Yeah, go on, sir.
Well, I was going to say, you say it's worth paying attention to. I'm getting a comment from somebody listening or watching right now. He says, this sounds wild to me only in a bull market, he argues. Is he right that it's wild?
It definitely shows you something that people are innovating. They really, really want to connect these two universes. On the one hand, you've got the funds that need cash. On the other hand, you've got the insurance companies that have cash. You need to connect them, and that's the financial engineering that's happening.
Okay, so Davide, come on back. Is this about investors chasing a good investment or about an investment chasing investors because private credit issuers need to put money to work?
I guess you could argue it's a little bit of both. You can make a case that financial markets are there to distribute kind of risk and returns to investors who are willing to take it. So the point of structured finance and securitization is to do that and allocate risk. I think one issue that people have highlighted here is that if there is a proliferation of these deals and all of a sudden Nationwide is taking a lot of exposure in this type of transactions, they're actually creating a connection between two parts of the financial system that wasn't there before. So if something were to happen to Nationwide and their credit rating that has nothing to do with private credit or private markets, and they get downgraded, all of a sudden, all of the issuances that they have wrapped would get downgraded as well.
Carol, you always remind us about the rating agency's role in this stuff.
Is there the same?
You always bring that up.
Is there the same conflict of interest potentially?
The conflict of interest with you want to get business. You know you have an incentive to.
That's a yes.
Well, I mean it's there. I mean the ratings agencies, of course, have different divisions, and so in theory they're insulated from that. But I suppose it's an open question.
What do you think? We just got to wrap up in just got about 30, 40 seconds, Scott. You know, in doing this story, you and the team, what do you think our audience who listens to us talk about private credit day in and day out, what should they be kind of watching out for or take away from this, just quickly?
Whether we see the innovations continue to push into these new directions. I mean, this is not completely out of the blue, like we had seen this before. We're seeing more of it. We're seeing more of an appetite. So if we see continued more of the risk-taking in this area, in fund finance, that's something to pay attention to, for sure.
Davide, 10 seconds. Is UBS going to do this deal? Have you heard anything from them?
We've been told the deal is still in progress, and yeah, we'll have to see over the next few weeks and months. These are transactions that typically take a very long time to put together, so it's not surprising that it hasn't quite crossed the finish line yet.
Davide Shaluzzo, Bloomberg News Chief Correspondent, Private Capital, and of course Scott Carpenter, Bloomberg News Credit Reporter. Check out this story. It is on the Bloomberg and at Bloomberg.com.
This is Bloomberg Business Week Daily with Carol Masser and Tim Stenovec on Bloomberg Radio and Television.
It is Bloomberg Business Week Daily. That's Carol Masser. I'm Tim Stenovec. It's Monday, July 20th, 2026. We got a big week of earnings coming up, Carol.
Alphabet, Tesla.
Yeah, the list goes on.
I think I heard Tom Keene cite some statistic in terms of how many companies are reporting this week. Jess, how many companies? 86
this is why
20% of the market cap.
This is why we have Jess Men here.
Next week's the biggest week. Next week's a third of the